Yes. Good morning, all. Yes, we'll be starting with the marathon of cost and management accounting. Sir, basically, at what time it starts, sir? Morning 8, as you guys know. Yes. And at what time it ends, sir? That I don't know. To be frank, even I don't know. I mean, because as I'm planning to cover 100% of the coverage, so I'm planning, if at all it takes some time, we might extend it also. Okay. So that's the thing. So, sir, are you going to complete, revise all the chapters, sir? Yes. I'm going to revise all the chapters. Sir, what about those nice chapters, sir? Which are those nice chapters? Standard costing, marginal costing and all. Everything will be covered. Okay. Sir, what is, like, how it is going to be there, sir? Order. Very simple. We'll start with the basics, whatever is required, only so much, because now I can't tell what are the advantages, disadvantages and all those things and all I can't. So, I mean, time is also not there for all those things. So, we'll be starting with few basics, how much ever is required, so much. Later, we'll be going through cost sheet, material costing, labor costing, overheads ABC, cost accounting system, job costing, batch costing, unit costing. Yes, all these things we are planning to complete today. Whereas, and also might be JPBP today itself. Whereas remaining 4, process, service, marginal, standard, that we might do, like we are going to do it on tomorrow. Okay, so first half it will be process and service, second half it will be standard, marginal. First half it is process, service and budget and budgetary. Okay, fine, right? We can start then. Yes. So, sir, are we going to solve the questions? The answer is we are not going to solve the questions. However, we are going to discuss the questions. Which questions are we going to discuss, sir? We are going to discuss the ICAI study mat illustration and practice questions which are different, or which you have to discuss. That kind of questions we are going to discuss. Okay. So, sir, what about those special questions which are there in the RTP or previous year paper, sir? Guys, that will be discussed separately. I mean, that I'm going to upload as a video. Okay, separate video. I'm planning for that, like around 50 questions from all the chapters which are very important. That questions we might take and we might do. Okay, that one thing. So, sir, you are not going to discuss about that questions at all? The answer is no, nothing like that. Nothing like that. We are going to discuss what are the special treatment in those questions in the marathon itself. Okay. For example, if you take costing, cost sheet, there are few adjustments which are not there in the study mat, but in the examination it has come already. That kind of adjustments are there. Those things we'll see. Okay, no worries. First, now we are starting with introduction to cost and management accounting. Shall we, guys? We are online. No, that won't be available. That will be there in the YouTube only, no? So, guys, what do you mean by cost? Cost is nothing but, sir, any amount of expenditure incurred or attributable to specified article, product or activity. Whatever the expensive incurred, that itself is a cost. For example, if you take ArivuPro as an example, now here they will pay them a salary, they will pay us a salary, they will incur rent, they have to pay for furnitures. All these things are cost. Okay, so your cost is nothing but the amount of expenditure incurred or attributable to any specific product or activity. What do you mean by costing, sir? Costing is nothing but, guys, technique of ascertainment of those costs. Technique of finding out those costs, that we call it as costing. Whereas accounting for those costs, keeping the count of those costs, that we call it as cost accounting. And application of cost and cost accounting principles, methods and techniques, that we call it as cost accountancy. What do you mean by management accounting, sir? The accounting which is done to help the management in decision making, that we call it as a management accounting. Which means, try to understand guys, in the cost accounting, in the financial accounting, wherever it is, other accounting, it will be purely number based, quantitative figures. Whereas when it comes to management accounting, you are not only going to give the quantitative figures, you are giving quantitative as well as few qualitative informations also. That is, you are going to give them theoretical informations also. That is your management accounting. For example, our company's financial tells, boss, in Pakistan, if you go and trade, you are going to make so much profit based on the forecast. But at the same time, qualitative, you guys also know, can we go and do it in Pakistan? Is it that easy? No. So for a management, only numbers are not enough. For a management, along with the quantitative information, we need qualitative information also. So few objectives are there, functions are there. Kindly go through those things. And who are going to use this, sir? Internal users as well as external users, and all these things. Few things like, what do you mean by cost object, guys? Cost object is nothing but anything for which a separate measurement of cost is required. For example, now ArivuPro people want to know how much is the cost of running a foundation batch, how much is the cost of running a inter batch, how much is the cost of running a finals batch. Now that is your cost object. That is the particular thing, anything for which separate measurement of cost is required. That is what? Cost object. Whereas cost unit means to which the cost may be ascertained or expressed in terms of what? For example, sir, 1 kg of mobile, how much it cost? Does that make any sense? 1 unit of mobile, how much it cost? Is that making sense? Yes. How much is the fees for CA Inter, who is for the students who is of 70 kg weight? Does that make any sense? Per student, how much? Does that make any sense? So try to understand, cost unit is that in what terms you are expressing the cost in. Fee in kgs, fee in liters, fee in per student, per service provided. If you go to hospital, it is per patient, like that. So now that is your cost unit. That is, it is the unit of product, service or time in relation to which cost may be ascertained. That is your cost unit. What do you mean by cost driver, guys? What do you mean by cost drivers? Cost driver is nothing but, guys, any activity which is responsible for the incurrence of the cost. Any activity which is responsible for the incurrence of cost, that we call it as cost driver. That we call it as cost driver. Basically, electricity. How the electricity charges will be determined, or on what basis it will be there? On the basis of how much electricity you use. Now the usage of electricity is a cost driver. Got it? So basically, cost driver is nothing but activity which is responsible for the incurrence of the cost. For example, faculty cost. On what basis faculty cost will be there? Number of batches they take or number of hours they take. Now the batches or hours are the cost drivers. That is what leads to incurrence, the activity which leads to incurrence of the cost, that we call it as what? Cost driver. What do you mean by responsibility center? Responsibility center is nothing but we are determining or we are dividing the organization into different responsibility centers and giving the managers with a different responsibility and holding them responsible for any deviations from the target what we have given to them. That is, generally we divide it into 4. Cost center, revenue center, profit center, investment center. Cost center, revenue center, profit center, investment center. What do you mean by cost center, sir? Guys, here the managers are least concerned about what we are making in terms of revenue. They are concerned only and only about, boss, how much cost I should incur. For example, let's say ArivuPro again. Let's say ArivuPro. Now, ArivuPro people want to know that, or ArivuPro people given some people a responsibility. Boss, faculty cost should be so much, rent should be so much, electricity should be so much. Now they are least concerned about, boss, how much fees I am charging to my students, am I making profit or no, is my students are coming to class or no. They are least concerned about that. Their concern is only and only, boss, how much cost I should incur. Got it? So we will give them target. Cost should be only so much, boss. Now they should make sure the cost is, whatever the cost incurred is well within that particular limit. That we call it as cost center. Whereas few centers will be given with revenue targets. See, production comes under cost center. Whereas your sales team, your marketing team, we have given them a target of what? We have given them a target of achieving the sales, achieving the revenue. Now, they are your revenue center. They should make sure whatever the targeted revenue is given or revenue target is given, that has been achieved. Whereas profit center, that is mixture of cost center and revenue center. For example, if you take the Reliance Industries Limited, now if you take Reliance Jio as one center, now Reliance Jio is responsible for the incurrence of cost. At the same time, they are responsible for generation of revenue. So the difference is nothing but profit or loss. So usually top management will be held responsible for this. That is, they are held responsible for the incurrence of cost as well as generation of revenue. Now that center we call it as profit center. And also there is one more center called investment center. Here what we will do, sir, here we'll ask our team, boss, listen, I'm giving you so much amount, I'm expecting 20% return. I'm expecting how much return? 20% return. You invest wherever you want, but make sure whatever 20% we want, we are able to achieve the target. That is your investment center. That is your investment center. Hope it is clear. Okay. So guys, how we can classify our cost into? We can classify it on different basis. See, cost is same. Cost will be same cost. It's not a different cost. However, the classification will be done on different basis. For example, half glass of water is there. You can tell half glass full, half glass empty. Water is same, no. Glass is same, no. But you are telling from the different point of view. Same way, cost will be same only. Cost will be same only, but on different basis you are going to tell it on as a different cost. For example, on the nature of element. Guys, on the nature of element, we'll divide the cost into three: material cost, labor cost, other expense. Material, labor, other expense. Now, material means what, sir? Whatever the physical object we use in producing something, in providing service, that expense we call it as material cost. Whereas, whatever the human resource we use, whatever we pay to the human resource in bringing that product or giving the product to the customers, now that is labor cost. Any cost other than your material and labor, that we call it as other expense. That we call it as other expense. Now, guys, material could be further divided into two: direct, indirect. Labor also further could be divided into two: direct, indirect. Other expense also could be further divided into two: direct, indirect. Now, guys, what do you mean by direct, sir? Which you can trace it, or which you can directly attributable in the final product. That thing we call it as direct material. You cannot trace it in the final product, sir. That thing we call it as indirect material. For example, let's say we have given you guys a study material. Okay, we have given you a printed study material. Now, per printed study material, per student, one study material will be given, easily traceable per student. Now, that is your direct material. At the same time, if you see, there is a calculator here, there is a water bottle here, there is a tissue here. Can you tell it in terms of per student how much? How many tissues I am going to use to teach the batch of 100 students, to teach the batch of 200? Is it directly attributable? Is it? No. Now, this is also physical object only. That is also physical object only. But this cannot be traced. That can be traced in the final product. So, that is your direct, whereas the other is your indirect. So, material, labor, expense, which other expense, which can be directly traced in the final product, are directly attributable in the final product, attributable to the final product, that we call it as direct material, direct labor, direct expense. Where you cannot do that, that we call it as indirect material, indirect labor, indirect expense. Whereas, guys, this direct, we call it as a prime cost. Important cost, that is prime cost. Prime means important. So, we are going to call it as prime cost. Whereas indirect material, indirect labor, and indirect other expense, that we call it as overhead. Now, this overhead could be further divided into factory overhead, admin overhead, selling and distribution overhead, research and development overhead, like that. That is, that indirect material, indirect labor, indirect expense relating to factory how much, administration how much, selling and distribution how much, research and development how much, like that. So that we call it as factory overhead, admin overhead, and selling and distributions. That is on the basis of nature or element. By function, sir, that is whatever the cost is relating to production, that we call it as production cost. Whatever the cost is relating to administration, that we call it as administration cost. Whatever the cost is related to selling cost, distribution cost, research cost, development cost. Now, these are on the basis of functions. Sir, are those two costs are different? The element as well as functions, we have taken different costs. No. Are those costs are same or different? The answer is same. Same material, same labor, same other expense. But it is classified in different basis. For example, direct material is required for production, direct labor is required for production, other expense is required for production, which is direct in nature, plus factory overhead, which is relating to factory, is required to production. Now these things we call it as production cost. As simple as that. We are not going to divide on the basis of direct material, direct labor, direct expense. But how much ever the cost we incur to produce the product, that we call it as production cost. Whatever the cost we incur to administer, that we call it as a administration cost. Sir, on the basis of variability, guys, we can divide it into three. Fixed cost, variable cost, and semi-variable cost. Fixed cost, variable cost, semi-variable cost. Sir, what do you mean by fixed cost, sir? Cost which won't change along with the change in the production up to some extent. Of course, no. For example, let's say one student is sitting in this class. Rent is same. 100 students are sitting in this class. Rent is same. Now, 1000 students are sitting in class. Hey, 1000 students, how can you make them sit in this class? That time automatically we have to go for new classroom. New classroom means extra cost. However, will it vary along with the output production? No, it will be same up to some level of activity. That cost we call it as fixed cost. The cost which vary along with the output, that we call it as variable cost. Semi-variable cost is what, sir? The cost in which variable portion is also there, fixed portion is also there. Cost in which variable portion is also there, fixed portion is also there. For example, have you guys been in this, like, have you traveled in this auto? Yes, how the auto works, there is something called as meter. Of course, generally they won't use it, but wherever they use, how it works, 30 rupees to some distance, let's say 2 kilometers. You go for 100 meter, you have to pay them 30 rupees. You go for 2 kilometers, you have to pay them 30 rupees. After 2 kilometers, for each and every 50 meters, 100 meters, the price keep on changing. Now, that is your semi-variable cost. That is your, got it up. Now, sir, if it is a semi-variable cost, how to segregate the cost between semi-variable as well as fixed? I mean semi-variable, how to segregate between fixed and variable? Fixed and variable, very simple, guys. Generally they will tell, if it is a slab base, they will tell up to 50%, 10,000 rupees, 60 to 70, 10% increase, 70 to 80, 20% increase, 80 to 100, 30% increase. Now that is slab. What you should do, if at all your production is falling somewhere between 50 to 60, 10,000 plus 10%. Production is falling somewhere between 60 to 70, unless and until they tell 20% of the previous cost, you should consider the base cost as the cost for that computation. What you should do, you should take 10,000 plus 20%. If at all your production falls somewhere between 80 to 100, then you should take it as 10,000 plus 30%. Now that is on the basis of slab. That is on the basis of slab. Okay. One more is what, sir? Guys, they will give two different level of activity, 2-3 different level of activities, and you have to ascertain on that. Before that, sir, how to identify whether it is variable, semi-variable or fixed? Guys, fixed means total amount will be same, but per unit amount will be what, increases or decreases along with the increase in production? See, let's say rent of this class was 1 lakh. Let's say 100 students are there. Now, how much is the rent per student? 1000. Now the students will become 200. Rent will remain same, but per student how much it will be? So always remember one thing, along with the increase in the production, fixed cost per unit will keep on decreasing. Because numerator remains same, denominator keeps on increasing, automatically what happens to the cost? decreases. Got it? That is your fixed cost character. When it comes to variable cost, guys, per unit it changes. Sorry, per unit it won't change. However, total changes. For example, per unit it is 200 rupees. Now you are producing, let's say 1000 units. 1000 into 200, 2 lakh. If at all you are producing 1500, 1500 into 200, 3 lakh. Which means, try to understand, your total is changing. Total is changing, but per unit it remains same. Total is changing, but per unit it remains same. That we call it as a variable cost. So these are the characteristics of variable cost and a fixed cost. Keep this thing in mind. That is, 1. Fixed cost, total won't change, but per unit changes. Variable cost, per unit it won't change, but total changes. For example, if I take this, let's say there are 3 costs. I will take the cost name as A, B, C. Name of the cost is A, B, C, and units. Here it was 1 lakh. One lakh 50,000, 1,50,000, and 2 lakhs. Okay, units. Cost, first case it was 10 lakh. Second case it was 15 lakhs. Third case it was 12 lakhs. Okay, now here unit got changed. In the first case, units got changed, let's say, to 1,20,000 units. Cost is rupees 10 lakh. Second case, unit got changed to 2 lakh. Cost is 20 lakhs. Okay. Third case, unit got changed to, let's say, 3 lakhs. Cost is around rupees 15 lakh. Now my question is, out of this cost, which is fixed, which is variable, which is semi-variable? The first cost A, that is fixed. Why? Because when the units sold were 1 lakh, that time also it was 10 lakh. When the units sold became 1,20,000, that time also it was 10 lakh, which means per unit it is changing, no doubt in that, but total remains same. Can I call this as a fixed cost? Yes. Going to B. Guys, which cost it is? Is the fixed cost? The answer is no. How you know, sir? Very simple. First total was 15 lakh. Now the total became 20 lakh. Which means damn sure this is not a fixed cost. Then which cost it is, sir? Check. In the first scenario, how much was cost per unit? Rupees 10 or 100? 100. Oh, sorry, 10. 1,50,000. 10. Rupees 10 per unit. Second scenario, 10 per unit. What is the moral of the story? Boss, total is varying, whereas per unit remains. Total is varying, per unit remains same. This is called as variable cost. Now going to C. Guys, when it was 2 lakh units, the cost was 12 lakh. When it was 3 lakh units, cost was 15 lakh. One thing is very simple here, it is not fixed. It is not fixed. Now we have to check, is it a variable or no? How to check it, sir? How much is per unit here? Rupees 6. How much is per unit here? 5. Which means, if it was a purely variable cost, what would have happened? If at all it was a purely variable cost, then per unit the cost would have remained same, that is 6 rupees only. But here it is falling, which means this is not variable, this is not fixed, this is semi-variable, or you can call it as semi-fixed also. Okay. Now, sir, in this scenario, let's say now they asked, we are producing 3,50,000 units. What is the cost of this? First case, whether it's 1 lakh, whether it's 120, or whether it's 350. End of the day, if it is well within the limit, the total cost will be 10 lakh only fixed cost. Variable, 10 rupees per unit, straight away I can tell it as 35 lakh. What about semi-variable cost? I have to segregate fixed and variable. How to segregate it? Very simple, guys. Listen. Will you guys agree if I tell in this 12 lakh rupees there is a bit portion of fixed, bit portion of variable? Will you guys agree if I tell in this 15 lakh also there is a bit of a fixed factor, bit of a variable factor? Yes. Now my question is, let's say in this 12 lakh, 10 lakh was fixed. Let's say 10 lakh is fixed. In this 15 lakh, how much will be fixed? 10 lakh only will be fixed. Able to understand? When it was 2 lakh, in the 12 lakh, fixed portion was 10 lakh rupees. When we produced 3 lakh unit, when the total cost became 15 lakh, still 10 lakh itself will be fixed because fixed cost won't change. Then here the cost is changing only and only because of variable cost. Very simple logic it is. Here the cost is changing only and only because of what factor? Variable factor. So can I tell that change in the cost, that is 15 lakh minus 12 lakh, rupees 3 lakh. Correct? We are incurring this rupees 3 lakh just because we are producing 1 lakh extra units. Earlier we were producing 2 lakh units, we used to incur 12 lakh. Now we are producing 3 lakh units, we are incurring 15 lakh. Now the 3 lakh we are incurring because we are producing 1 lakh extra units. So can I tell something like this? Variable cost per unit is rupees 3. Variable cost per unit is rupees 3. Can I tell like this? So always remember one thing. How to determine the variable cost unit, sir? Change in the cost divided by change in the units will give you variable cost per unit, but sometimes they will give it in a slab basis also. Keep that thing in mind. Now, if they give so many percentage increase, that is slab based. If they give only 2 levels, they don't tell anything, that is like this. Variable is there for each and every unit. Now this. Okay, sir, fine. But how to find it out for 3,50,000, sir? Very simple. We found out variable. Now that let's apply to level 1 or level 2. For which one shall we apply? Anything is fine. I can apply to 2 lakh units or 3 lakh units. Where shall I apply? 2 lakh shall I apply? Now listen here. What is a total cost means? Total cost means fixed cost plus variable cost. At the 2 lakh level activity, how much is at 2 lakh level capacity, how much is my total cost? My total cost is rupees 12 lakh. Correct? Yes, is equal to, do I know the fixed cost? I don't know the fixed cost, that I took it as example. Variable cost how much, sir? Per unit how much? 3 rupees we calculated, which means for 2 lakh units how much? 3 into 2 lakh. So fixed cost is 12 lakh minus 6 lakh, which will come to 6 lakhs. Now to determine the cost for 3 lakh 50, very simple, sir. Fixed cost of 6 lakh plus variable cost of 3.5 lakh into 3. that is rupees 10.5 plus 6, 16.5 lakhs. 16.5 lakhs is the total cost for your how many units? 3,50,000 units. Hope it is clear. This is how you have to segregate. So what you should do, guys? What you should do? You should segregate the fixed cost and the variable cost. Change in the cost divided by change in the unit. If you do, you will get to know how much is variable cost per unit. That you apply to any given level. You can segregate between fixed cost and variable cost. Then for the given level, you calculate how much is fixed cost, how much is variable cost. Please, got it? On the basis of controllability, whichever the cost is controllable by the manager, that we will call it as controllable cost. Which cost you cannot control, that we call it as a uncontrollable cost. Cost which you can control, that is cost which you cannot control, that is normality. On the basis of normality, guys, you can divide the cost into normal cost, abnormal cost. Normal cost, abnormal cost. Now, normal cost, always remember, that should be forming part of your cost of production or total cost. Whereas, abnormal cost, you should not charge it to production, guys. You should write it off against costing P&L. You should write it off against costing P&L. Okay, sir, what do you mean by cost? Normal cost and abnormal cost. Guys, normal cost means cost which you cannot avoid, which is to be incurred. That is normal cost. Abnormal cost is what, sir? Cost which you could have avoided, but you didn't. For example, your vehicle is there. You are a truck industry, or you are in that business, truck business. Your truck is there. Can you avoid a road tax? No. Now that is normal cost. Can you avoid a penalty due to either overspeeding, not wearing seat belt? You can avoid it or no? That you can avoid. Now that is abnormal cost. The cost which you can avoid, that is normal cost. Cost which you cannot avoid, that is abnormal cost. And cost for decision making, there are a lot of costs like opportunity cost, discretion cost, all those things. Just go through it once, okay, for a MCQ purpose. These are the different costs, and these different methods of costing or techniques of costing, all those things we are going to see along with the different chapters, because that itself are the divided into different chapters. Okay, fine. With that, we have completed chapter number 1, and now we'll straight away go to cost sheet, one of the important one. And few people are asking, sir, what about the notes? Notes I have to decide, not yet decided whether to share or no. And sir, how many hours this class will take? I already told it to you guys. Starting is 8, evening at what time I will close depends on at what fast our things will get over. But I request you guys to bear with me to whatever the extent I take, because you never know. Let's say you guys tell, sir, leave. I will tell, no, I won't. And I might do one sum. And imagine the same thing comes in the examination. That half an hour extra what you sit, it worth. Okay. So these are the certain things which you are going to look into. So guys, fine. Now we'll go for the cost sheet. We'll take a break of 5 minutes and we'll start with cost sheet. Okay. Yes, you want example for explicit and implicit cost. Explicit cost means out of pocket cost. That is actually what you should pay. Whereas implicit cost means it is not actually going out of your pocket, but in costing that also will be treated as a cost. Because in costing we are not going to treat only the whatever we pay as a cost. whatever we give up, like opportunity cost, that also will be treated as a cost in a costing because for making the decisions. So explicit cost means cost which will go out of the pocket, rent, electricity, etc. Implicit cost means cost which won't go out of pocket but will be considered for decision making, like your proprietor salary, what he is giving up. For example, I was doing some job, now I start my business, I will give up that salary, no, that opportunity cost, notional, that is implicit. Fine. Now we are starting with the cost sheet, guys. Now we are starting with the cost sheet, one of the important one, very important. That is cost sheet. What do you mean by cost sheet, sir? What do you mean by cost sheet? Guys, cost sheet means nothing but a statement in which we are going to show the different costs. In costing, one thing you have to remember, few people face costing as a difficult subject, feel costing as a difficult subject. Costing, they feel difficult subject, only the reason is in your accounts you have a format. This side debit, this side credit. Liability is asset. But when it comes to costing, there is no particular format. There, based on the answer, you have to decide what to use, which format to use. So they feel costing is difficult. So always remember how to decide the format, sir. You should know exactly what answer you want. Based on the requirement of the answer, you should structure it in such a way that you will arrive at the answer. Okay. Now, what do you mean by cost sheet, sir? It is a statement. It is a statement in which costs are presented in a systematic manner and which will help in ascertainment of the cost for the period. Okay. So it is a statement in which costs are presented in a systematic manner. Systematic manner means generally on what basis we will do it, sir? On the basis of functions. We are going to classify the cost in cost sheet as a functional classification. Okay. Now period means, sir, is it 1 year? The answer is no, need not be. Is it month? The need not be. Which means that depends from management to management what they are expecting, boss. They want a cost sheet for a year, yearly cost sheet. They want it for week, daily. Depends from management to management. Now, cost sheet could be divided into major factors like prime cost, gross factory cost, cost of production, COGS, cost of sales. Now, gross factory cost or factory cost is also known as gross works cost and works cost. Gross works cost and works cost. Now, sir, what do you mean by prime cost? Sir, prime cost I already told you, no. Direct material cost, direct labor cost, direct expense. Guys, what we paid or what we incurred? What we incurred during that period. Payment is, we are least concerned about it. What we incurred matters here. So it is not direct material purchased. It is about direct material consumed. Direct material consumed. Direct labors incurred, direct expense incurred. Now, overheads, as I already told you, whatever the indirect material, indirect labor, indirect expense relating to the factory, that we will classify as a factory overhead. Whichever is relating to the administration, that we will call it as a admin overhead. Whichever is related to the selling and distribution, that we will call it as selling and distribution. Now, to the prime cost, if at all you add your factory overhead, will arrive at gross works cost. To the prime cost, if we add the factory overhead, where do we arrive at? Gross works cost, gross factory cost. For the gross factory cost, if we add the cost of opening WIP minus closing WIP, sir, why, sir? Hey guys, you know one thing. Expense or cost of that period should be matched with the revenue of that period. Correct? WIP means work in progress or work in process. which is not yet completed. Now that cost, can you compare with the revenue of last year? For example, few things were there. Not yet completed in the last year. Can you take the cost of that to compare it with whatever the revenue we made in the last period? Revenue is relating to sold units. Is WIP sold? The answer is no, which means this you can't compare. So what you will do, last year you wouldn't have considered it as a cost. You would have reduced it from the cost. But are you going to incur that cost again in the current year? The answer is no. Where, for example, half is already completed. For other half, we are going to incur the cost, not for this one. But however, that will be sold during the period. So that should be matched with the revenue. So what we will do, last year's closing WIP, that is current year's WIP, will add it to cost of the period. And this year's closing WIP, as it is cannot be able to sold during the period, that we are going to reduce. From the cost. That is, we'll add the opening WIP, we'll reduce the closing WIP, we'll arrive at a factory cost or a works cost. And cost of production, guys, what we are going to do, sir, we'll take the factory cost. For that, we'll add the research and development if it is related to production, quality control cost, admin overhead cost, and if at all any scrap recovery is there from the finished goods or from the defectives, that we are going to reduce from the cost. In which stage we are going to reduce, sir? From the cost of production. While arriving at cost of production, we'll arrive at a cost of production. For the cost of production, as I already told you, whatever units got produced last year only but not yet sold, that is sold during the period, the revenue is there during the period, so that we are going to add it now, add it to the cost of production of the period. That will give you cost of goods available for sale. From that, if you reduce what is not yet sold, that is closing stock of finished goods, will arrive at cost of goods sold. For that, if we add the admin overhead, which is general in nature, not related to production. If it is related to production, that should form part of your cost of production. Whereas if it is not related to production, that we will call it as general. So we'll add the admin overhead, general in nature. Selling and distribution, we'll get the total cost for the period, or we'll get the cost of sales. Now, sir, how to ascertain the direct material consumed, sir? Guys, whatever the cost incurred, bringing the material from our vendor's building till our godown, not after unloading in godown, that cost won't be treated as your material cost. Keep that thing in mind. So whatever the cost incurred from our vendor point till it reaches our godown, everything will be known as material cost. Listen, opening stock of raw material was there. For that, we'll add a cost of purchase. Cost of purchase means what, sir? Whatever we pay to our vendor plus taxes, provided when you are going to treat the tax as tax expense, when the ITC is not available. If the ITC is available, why will you treat it as cost? For example, now ArivuPro people told you, madam, you have to deposit 2000 rupees. Okay, you have to deposit 2000 rupees, and when our marathon gets over, we'll give you back the 2000 rupees. Now my question is that your cost? Because you are getting a refund of it. So one thing you have to understand here, what? If at all the reimbursement is there, refund is there, that is not your cost. In ITC, what happens? Now you pay tax. In future, whenever the sales happens, you can withhold some amount, which means that is as good as government giving you refund. So when the ITC is available, then don't treat it as a cost. If the ITC is not available, then only treat it as a cost. Now, in the purchase price, already tax is included, but the ITC is available. In that time, what you should do? Reduce the cost. Cost is not included, sir. ITC is not available. Tax is not included in the purchase price. ITC is also not available. Then no adjustment only. Whatever you have done is correct. Sir, cost is included. ITC is not available. Fine. You included it. Correct. You treated it as cost. No, sir, cost is not included, but ITC is not available. Then add it to the cost because that is your cost. Got it? Scrap recovery of raw material. If at all raw material, any scrap is there, if you recover any amount from that, I mean, that should be reduced. That I told you already. But yeah, coming to purchase price, you got transportation cost, freight, transit insurance, loading, unloading, etc. From that, if you reduce the trade discount, guys, discount are of two types if you know. Trade discount, cash discount. What do you mean by trade discount? Discount which is given for purchasing it in bulk. At the time of purchase only they are giving you discount. Now if you open Flipkart, let's say this iPad, that might show 35,000 rupees, 5,000 rupees off, 30,000 rupees. Now at the time of purchase itself, you guys know that there is a discount. Now your cost is not 35,000 for iPad. For iPad your cost is just 30,000. One more is cash discount. That is discount given for the prompt payment. Discount given for the prompt payment. Payment within some time. Within given time. That is your cash discount. Got it? But the cash discount, is it related to purchase or related to payment? So whenever you are computing the cost of purchase, please ignore your cash discount. Don't add, don't reduce. Got it? And container charges. Container charges. That is, for example, they are sending us in some container. That container cost us, let's say, rupees 500. Now they are like, boss, if at all you send it back to us, that is returnable container, we will give it back to you 400 rupees. Now how much is my cost of container? 100. For the cost, I should take only 100 because although I spent 500, I am getting 400 as refund. Sir, what if it is non-returnable? Then whole 500 is your cost of container. As simple as that. So you should take net cost of container. Sir, administration overhead. Guys, admin overhead could be related to two. That is, one is related to production, related general in nature. Related to production means add it while arriving at COP, whereas general in nature means add it while arriving at cost of sales or total cost. And sir, how to decide whether it is administration overhead is general or administration overhead is related to production? Guys, very simple. Very simple. If at all it is related to production, they will tell few things like admin overhead is 20% of direct wages, admin overhead is 150% of factory overhead, admin overhead is some percentage of factory cost. That is your related to production, or in question they will only tell related to production. Sometimes they won't tell anything, or sometimes they will be like related to sales so much, 20% of sales, 20% of cost of goods sold, which means here they are talking about sales related, which means not production related. Then you should treat it as general. Got it? Scrap recovery. Guys, there are two types of scrap recovery. It could be scrap recovery of raw material or scrap recovery of goods in the production. If at all it is related to raw material, what you should do? Reduce it from where? Cost of purchase of raw material. There only you should reduce. While arriving at direct material consumed, there only you should reduce if it is relating to raw material. If at all it is related to somewhere in between the production, like defective scrap and all, in that scenario, reduce it while arriving at guys, packing cost is there. Packing cost are two types. Primary packing, secondary packing. Primary packing means what, sir? To keep the product in a good condition, whatever we incur, that is your primary packing. For example, toothpaste. The tube what they give in the toothpaste, that is required to hold the paste. No doubt in that. Yes or no? Now, that is your primary packing. That is your primary packing. Whereas, for the marketing purpose, outside the toothpaste, they will give one box. So that our distributor will arrange it in a box, like retailer will arrange it nicely. So customer's eyes will directly go at that box. That is for a marketing purpose. Now that is secondary packing. So now primary packing what to do, sir? Secondary packing what to do? Guys, primary packing to be added to the cost of production. Whereas secondary packing, as it is market related, while arriving at cost of sales, you add it there, or you can treat it as part of S&D also. That is also fine. You can treat it as part of S&D, or you can show it as a add it with cost of sales. Interest or finance charges, sir. Guys, interest or finance charges very important. If the question, if they tell it is a equity based, then that is relating to capital and all, general in nature, pure financial item, just ignore. Don't consider in the cost sheet. If they tell relating to the loan taken or relating to the borrowed fund or a non-equity fund, not a capital, borrowed, it will be relating to running the day-to-day organization. So that will form part of your cost sheet. Sir, in question they didn't tell anything, sir, whether to take it as a equity or non-equity, sir. In the question, if they don't mention anything, better ignore it. Better ignore it. No, sir, I want to consider it, then give assumption and come. It is assumed that it is a non-equity fund. It is a non-equity fund. If the question they particularly telling non-equity, then you should take interest in the cost of sales. If at all it is equity based they are telling, then you should ignore it. If they are not telling anything, then it is your call, what you want to do. And whenever you consider it, where you are going to show, sir? We are going to show it in the cost of sales as one more thing, interest on the borrowed funds. Pure financial item will be there, sir, like income tax, donation, dividend payment, dividend receipt, all these things that won't form part of your cost sheet, because costing is concerned about determining the cost of the product. So while determining the cost of the product, those costs which are not going to add any value to the sales or cost of production, that should not be considered. Got it? So pure financial item should be ignored. Sir, what about direct expenses? How to remember which are the different direct expenses? There is a code word, guys, trash DP. Basically, you know this Nibba Nibbi. You know Nibba Nibbi? You don't know Nibba Nibbi? You don't know Nibba Nibbi? Nibba Nibbi are those people, those couples who are in relationship or cringe. Huh? Not you might be single. I'm telling those couples who are cringe. Mela babu ne tana taya, whether my baby had food, good morning, all those nonsense people will be there. No, a cringe people, Nibba Nibbi. Now, imagine Nibba Nibbi fight happens. Fight between whom? Nibba Nibbi. What Nibbi will do? What Nibba will do? Nibbi will do one story, nice story. Relationship is that, relationship is this, nice status. You have seen, no, your friends doing that. What Nibba will do? Nibba will take out his DP. Correct? That is the first thing they do. Fight, take out the DP. Then the other person should understand, okay, this person is angry. Don't know what is wrong with them, but still. Now, remember what Nibba did? He trashed his DP. He took out his DP. So, trash DP. Sir, T means what, sir? Technical know-how. If you pay anything to the technical know-how, that will be treated as direct expense or royalty payment. relating to production. If you pay any royalty related to production, that will be treated as direct expense. A. Amortization of molds, patterns and patents. Yes. Specific software. If at all you are incurring any cost on the specific software which is related to that particular product, job, that is, yes, H. Higher charges of your machine, equipment, etc. Specific equipment, specific machine, when you spend, when you pay the higher charges, that is your direct expense. D. Drawings, designs, particular drawings, particular designs, not the drawing department. Drawings, designs, when you pay for the drawings or designs, that is D. P is what? Power, fuel and steam. When you incur any expense as power expense, fuel expense, steam expense, that is your direct expense. So direct expense is nothing but trash DP. T is what? Technical know-how. R. Royalty. A. Amortization of mold, pattern and patents. Yes. Specified software relating to the particular job. H. Higher charges for a specific equipment or machineries. Not everything. Higher charges of a vehicle used by the managers, administration. How is that even related to production? Can you trace it in the final product? Higher charges of specific equipment or specific machinery. D. Drawings and designs. P. Power, fuel and steam. Sir, factory overhead, sir. Factory overhead. Guys. How many of you use Insta here? You use Insta, you don't use Insta. Good. Now let's say, in the month of December, if you see, or in the month of November, there was one trend going on in the Instagram. Remember? They will go and keep the mic in front of few girls and they will be like, who is the red flag? What name? Guy's name. Which guy's name? By looking at a name itself, you will get to know it's a red flag. Or you get to know is a playboy. Usually we used to get two answers. One is Karthik. Correct? One is Karthik. The next one used to be Aditya. Adi. Okay. And imagine Aditya is a DSLR camera. Adi is DSLR. Now, A means what, sir? Amortization of jigs, fixtures and tools, etc. D is what, sir? Drawing department's salary, drawing department's expense. D. I is what, sir? Indirect employees. I is not indirect employees. I is insurance. Insurance on whatever is there in the factory. Adi. One more I is what? Indirect employees. One more S is what? S is stores and spares. That is consumable stores and spares. T is what? Depreciation on whatever you have paid insurance on the depreciation. S is what? Service department costs. That you will understand later part. And always remember, pollution control, engineering and maintenance will come in which one? Factory overhead. Keep this thing in mind. Engineering, maintenance, pollution control. It won't be treated as a quality control. Quality control is different. Pollution control is different. So engineering, maintenance and pollution control, if they give in the examination, you should treat it as a factory overhead. Got it? Done. So one more L is what? Lease rentals for your building, machinery, etc. R is what? Repairs and maintenance of plant, machinery, factory, etc. Uninstalled because of exams. Very good. Done. Now, sir, sometimes in the cost sheet itself, they will ask to find your cost per unit. Now, to find out the cost per unit, you should divide it by the units. Now, to divide it by the units, how many units you should take, sir? Guys, try to understand. Starting from the direct material consumed till the cost of production, you should consider units produced. After cost of production, add opening stock. For that, consider opening stock, closing stock, units of closing stock, COGS. From the COGS, S&D, AOH, total cost, you are going to divide it with the units sold. After COGS, it is units sold, not the units produced. Units sold, not units produced. That is what, sir. Cost to be considered, units to be considered to compute the cost per unit. And there was some important point in my mind, I forgot. Special examination adjustment. Closing stock valuation. Guys, always remember one thing. Your closing stock is there, no? Closing stock. How you are going to value? See, you are going to use the FIFO, first in, first out, which means you are going to treat whatever was there opening stock, that is sold. So whatever is there in the closing stock, that everything is related to the production. So what you are going to do, you are going to take the cost of production divided by number of units produced. You will get to know how much is the cost of production per unit. That if you multiply it with the closing units, you will get a closing stock value. You will get the closing stock value. Cost of production divided by number of units produced. If you divide, what you will get, sir? Closing stock value. Yes, with that we have completed our cost sheet. But as I already told you, from the examination questions, if at all anything extra is there, I am going to tell you guys. In the cost sheet, few extra things are there. What are those, sir? One, sometimes we'll hire the machineries. In examination, what they do, you know? They will give factory overhead is 100% of direct wages, let's say. In the examination, they give factory overhead is 100% of direct wages, and they will give higher charges of machinery, brackets, indirect. Now, listen here very carefully, guys. Factory overhead, whatever you compute, let's say direct labor is 10 lakh. Now the factory overhead also will become 10 lakh because factory overhead is absorbed at 100% of direct labor. Now factory overhead also will become 10 lakh. But keep one thing in mind. Now the total factory overhead is not just 10 lakh. Total factory overhead will be 10 lakh plus that higher charges what you are paying to machinery. And some more time what they will do, you know, higher charges of car, which is used by the general manager. What expense it is? Admin overhead, because that is related to administration, not production. Okay. How much is the higher charges, sir? Let's say higher charges is rupees 1 lakh. Higher charges for the period is how much? 1 lakh. Now what, sir? Now listen very carefully. Listen. Company is also reimbursing a diesel cost of rupees 50,000. They are telling RCM applicable for this reverse charge mechanism. In GST, there is something called as reverse charge mechanism. No, RCM is applicable at, let's say, 5%. Now, how much is the total cost? All you have to check is whether for RCM input tax credit is available or not. If it's available, then we are going to ignore that RCM part itself. If at all it is not available, then should we treat it as our expense or no? Guys, whether the tax is FCM or RCM, FCM means, I'm talking about where the credit is not available. FCM means, let's say he is my vendor. I pay tax to him. He will pay to government. End of the day, I paid. RCM means I will buy service from him or I will take goods from him and I will pay to government also. I paid him a value. Let's say I paid him 1 lakh rupees. On that 18,000 rupees GST I should pay to government. End of the day, that is also my cost only. Whether I pay it or whether he pay it, does that even matter? So always remember, RCM point has nothing to do in the relating to cost. Whether it's RCM or FCM, boss, one thing is clear here. What is it, guys? If at all you paid it, if at all ITC is not available, it is your cost. Now, in this RCM, let's say your ITC is not available. Now, this 5% should be computed on what, sir? Not on just a higher charge of 1 lakh, guys. As you guys are reimbursing 50,000 rupees, you should calculate it on 1,50,000 only. You should calculate it on what? 1,50,000 only. Is it clear? So always remember, RCM shall be calculated or any tax shall be calculated when the expense is there, reimbursement is there. Assuming they raise the one invoice for both, we are going to calculate for total into RCM percentage. One thing. This is one of the two adjustment I told already. One is relating to that factory overhead. Whatever they give extra, that is extra to that whatever you calculate. Don't consider that it is already there in that 10 lakh rupees. No, that is something extra. One. This is two. And one more examiner's favorite adjustment is defective treatment. Guys, there is some defective. To rectify that, you incurred 10,000 rupees. 10,000 rupees you incurred. Now, that cost of rectification, where we should add? Cost of that rectification, where we should consider or where we should add? Guys, that cost of that rectification of the defective should be treated as a factory overhead. So you should add it to the factory overhead. Cost of rectification of defective, you should add it to the factory overhead. If you sell your defective, then that should be reduced from the cost of production and this should be added to your factory overhead. Done. This one adjustment. And one more thing. Carriage inward on the goods purchased. What you are going to treat? You are going to treat it as cost of purchase. While arriving at direct material consumed, that time only we are going to treat it as cost of purchase. Correct? Guys, now let's say this goods is returned to our vendor because of the non-suitability. Now our vendor telling, I am not even going to pay you a single rupee towards transportation. Which means now this goods, whatever we purchased, that we have to carry. So that will be called as carriage outward of the goods purchased. Hey, try to understand. Generally, if they give only carriage outward, that means that will be relating to sold units. That will be treated as S&D. Because why someone will give a transportation service? To increase their customer base, advertise themselves. However, that is carriage outward. But sometimes, whatever the goods you have purchased, when you are sending back to your supplier, that time what you are going to do, sir? You are going to incur cost. Now, sir, should I add it to the cost of purchase? Then I should treat it as a factory overhead again. Even carriage outward relating to goods returned, raw material returned, that should be treated as a factory overhead. Keep that thing in mind. Okay. And one more is engineering, maintenance and pollution control. Guys, pollution control will be treated as your factory overhead. Whereas quality control will be treated as your while arriving at cost of production. Hope so many points are clear. These are the important points to be kept in mind when you are preparing for an examination. And now we are going to see one question from the cost sheet. Not much, one is enough I feel, because let's not waste much time in this particular thing. And also you guys also, previous day of examination, you should not be anything left in the cost sheet chapter to study. Cost sheet chapter and all don't keep for the previous day and all. Please try to understand. Cost sheet don't keep for previous day. I will show it in the study mat. I say material only. There is one last illustration. No, illustration number 3. In that question only, almost everything is covered. Almost all the entries are covered here. We'll see one by one. Shall we? First, raw material purchase. Where it should come, sir? It should be treated as a direct material consumed. Correct? GST paid on the above purchase 18%. Eligible for the ITC. Ignore. Freight inwards. Direct material consumed. Wages paid to factory workers. Direct wages. Contribution towards employee PF and ESI. If at all it is relating to these direct workers, we are going to treat it as again direct wages only. Production bonus paid to factory workers. Direct wages. Whatever you spend to your employees of that category, that will be treated as that cost. Royalty paid for production. Direct expense. Amount paid for power and fuel. Direct expense. Trash DPP. Power, fuel and steam. Amount paid for the purchase of molds and patterns. Life is equivalent to 2 years. What you should do is, guys, this 8,96,000 is there, no? That you should amortize it for 2 years. And where you are going to show it? Direct expense. Molds, patterns, patents. Job charges paid to job worker. That is, certain things we might not be able to produce. So what we will do, we'll give it someone to produce. Now, that will be relating to this particular job only. Now, that will be direct expense. For example, IPL. Guys, BCCI can do everything? No. Now, let's say DJ. In the ground, DJ is required. Now, the DJ, BCCI is not going to incur all those speaker expense and all. Let's say they will tell those guys to incur. They will pay the job worker, that is DJ. Now that is directly relating to match. Now that job charges paid to job worker is direct expense. Store space consumed, factory overhead. Adi is DSLR in that. Depreciation on factory building, factory overhead, office building, administration overhead, plant and machinery, factory overhead, delivery van, selling and distribution, salary paid to supervisors, factory overhead. Why, sir? Foreman supervisors will be there in the factory. If they are managing the administration work, they won't be called as supervisors, they will be known as managers. Repairs and maintenance for plant and machinery, sales office building, selling and distribution, vehicle used by directors, administration overhead which is general in nature, insurance premium on plant and machinery, factory overhead, factory building, stock of raw material and WIP, factory overhead. This is not stock of raw material and WIP. Insurance on stock of raw material and WIP. Expenses for the quality control check should be added while arriving at cost of production. Salary paid to quality control staff, correct. R&D relating to production process, cost of production. Expense paid for pollution control, engineering and maintenance. A. Direct expense or factory overhead? Factory overhead. Okay. Now, expense paid for administration of factory work. Admin overhead but related to production. Salary paid for functional managers, production control. Administration overhead, production. Finance and accounts, administration overhead, general. Selling and marketing, selling and distribution overhead. Salary paid to general manager, administration overhead, general. Primary packaging, cost of production. For redistribution of finished goods, selling and distribution or cost of sales. Secondary packaging it is. Interest for non-equity fund, cost of sales. Auditor's fees, administration overhead, general. Legal advisor, administration overhead, general. Fees paid to independent directors, administration overhead, general. Performance bonus paid to salary staff, selling and distribution. Opening stock of raw material, direct material consumed. WIP, while arriving at a factory cost from the gross factory cost. Finished goods, while arriving at a COGS from the COP. Accordingly, amount realized from the selling of scrap generated is 86,000. What you should do? You should reduce it from the reduce it while arriving at cost of production. It should be reduced while arriving at cost of production from the factory cost. Got it? Yes. And the thing which I told now. Here, like this, few questions they might give, where that one sales question is there now. Like this. TV sponsors, gift item, etc. This is also one of the important adjustment before going to exam. Just see this and go. But here majority of the students will do mistakes. One is gift item. Sometimes they will tell rupees 120 per dozen, which means for each and every unit sold you are going to incur gift cost of 10. For 12 it is 120, which means for 10 it is, for 1 it is 10 rupees. That one thing will be there. And here prices, generally prices, first prize, second prize, third prize, usually that will be 1 in numbers. But when it comes to consolation, it might be 3 in number, 4 in number, or 5 in number. In our examination mindset, what you will do, first prize 25, second prize so much, so much, so much. This also only 5,000 will write. No, 3 consolation prizes are paid. So the year expense is 15,000. Okay. And TV program also. You should check for what they have given, whether for a month, whether for a week, whether for a year. Sometimes what they will do, TV channel sponsorship program paid, let's say paid 20 lakh rupees for a month of 4 weeks. Now, if you are computing for a month, then you should not divide it by or multiply it by 4 and all. Because whatever they have given is an expense for a month only. But they have told that it is for a weekly basis. That's it. So that is one of the important one. Please keep that thing in mind. And here, that thing I told now, GST RCM without credit. See, here you should calculate it on 88,000. Got it? Calculate it on 88,000. So these are the few adjustments which you should consider. While preparing a cost sheet. I hope cost sheet nicely you guys were able to revise. Correct? Something is happening now. I know that you might not have revised it anytime like recently. That's fine. We'll try to keep it as simple as possible. Okay? And anyhow, cost sheet we should not spend much time also. So that's the thing. Tiffin break, this fast, this early. You want break now? No, later. Or we'll do one thing. We'll take a break now. We'll take a break of 25 minutes. Okay. And we'll proceed with the material cost. Yes. Now, we'll be starting with the next chapter revision, that is material cost. Cost of any physical object consumed during the production or related to production, it is known as material cost. Material cost could be two, guys: direct material cost, indirect material cost. Direct material cost means what, sir? Cost which can be traced in the final product, or cost which can be directly attributable to the final product in an economical feasible way. That is your direct material cost, where the cost of the material which cannot be traced in the final product directly, or cost which cannot be attributable to the final product directly, that we call it as indirect material cost. And controlling of the material usage, issue and procurement, that thing we call it as material control. See, material control means what, sir? Controlling of usage of material, procurement of material, and storage of material or issue of material, all those things. Sir, why the material control is required? Why you should have a control over issue of material? Why you should have control over usage of material? Why you should have control over procurement of material? Guys, one, when you have control, then only you can control the cost. So optimization of the material cost is possible. And imagine some material is required, you didn't keep the control over it. Now when it is required, that time you realize that, okay boss, that material is not with me, automatically production you should stop. So to minimize the interruption in the production process, better to keep the control over material, on time completion of orders, reduction in wastage. That is, when you have control, then only the reduction in wastage happens. If you don't have control, what you will do? You will use according to your wish. For example, let's say you are cooking something in kitchen. Chop the onions. When mom is there, how the chopping onions will take place? Proper cut, only the first layer will go out. Yes, only we are there, cut it boss, outer layer, 2-3 layers you take out, waste. Now when the mom was there, control was there, automatically reduction of wastage. But now mom is not there in the kitchen, cut it, throw it. That is, there is a lot of wastage. And you will be having proper information regarding what material we have, how much we can produce, all those things. What are the elements of material control, sir? Purchase of material is one element. Later receiving of material. Later you should inspect the material. After that store the material. After that issue the material for the production. After that stock audit. And records you maintain. Based on that you do the audit, stock audit. Okay. Sir, generally how it works, sir? Material thing. Guys, first, based on the demand, based on the sales requirement, our engineering department or a planning department will plan how much exactly material we need to produce so much. Okay. So accordingly that they will send it to production department. Now production department, they just told what material you want, at what rate, how much quantity you want. Now production department actually want that material, no. Will it be with them? The answer is no. Where it will be? It will be in the stores. So what they will do? They will raise one document called as material requisition. They will raise a document called as material requisition. First what they will do? Planning department will raise a bill of material. In that clearly it is mentioned how many units to be produced, what to be produced, what to be consumed, in what quantity. Based on that, production department, once they receive, they will check what inventory they got, what inventory they want. Based on that, they will send a requisition or request to our stores department. That is, boss, I need these units of this quantity. That is in the material requisition note. Now, what stores department will do? Now, stores department will check whether they got that material in the stores or no. If it is there, great. If it is not there, they should purchase it, no. So who will purchase? Purchase department will purchase. So they will send a document to purchase department to purchase few materials called as purchase requisition note. Now purchase department, they can go and buy from anywhere. The answer is no. What they will do? First they will call for a tender. Boss, we want these units of this quantity. Whoever is interested in supplying those units, kindly tell us. with your prices. So they will send a prices. We call a tender, and our supplier will send a prices, quotations. Now, once we receive the quotations, we'll select the best one out of that. Not only based on cost, also based on the company from which we are receiving. Quality, all those matters. Now, once we receive the quotation, then straight away we are going to raise the purchase order based on that quotation. We received quotation. Based on that, what we will do? Based on that, what we will do? We'll raise a purchase order, and purchase order means what quantity of what we want to our selected vendor. Now our vendor will send the goods to us along with invoice or delivery challan. At the same time, he or she will send one more copy. Our supplier will send one more copy of invoice to our team, cost accounting department. Now, once we receive it, we are going to inspect it. If we accept it, then we are going to send a goods received notes to our cost accounting department telling that yes, whatever our supplier is claiming invoice, that is correct because we have received that goods. Okay. Now, if at all we didn't like it, then we are going to send it back. That is material return notes. And at the end, how much material we have, that information and all we are going to give. Material abstract. Then we are going to make the payment to our supplier. This is how your purchase process or procurement process works. There are few treatments should be done in the material. Those are discount. Guys, discount you can divide it into 3. Discount you can divide it into 3. What are those, sir? 1. Trade discount, quantity discount, cash discount. Guys, trade discount means what? When you are purchasing in bulk, they are going to give you some discount. That is trade discount. Quantity discount, they will tell, boss, if at all you purchase so many units, for example 10,000 units, then I am going to give you 5% discount. Quantity discount means it's not something like they are going to send you less quantity of goods. No. They will give you some target. Boss, if at all you purchase 10,000 units at a time, then I am going to give you extra discount of 5%. Directly related to purchase or not directly related to purchase? Directly related to purchase, that we will call it as quantity discount. And as trade discount and quantity discount both are directly related to production, that discount cost should be reduced from the cost of purchase if it is not yet reduced. Basically, that is not our cost anymore. Correct? Whereas cash discount is discount given for the prompt payment. So that what you should do, sir? Ignore. Sometimes we will receive a subsidy. So subsidy is one kind of income. So whatever cost we showed, from that you should reduce the subsidy amount. Taxes and duties, you should check whether refund is available or not available. FCM or RCM, that doesn't matter. Only thing matters is whether ITC is available or ITC is not available. If the ITC is available, please ignore it. Don't consider it as a cost. If at all it is already considered as a cost, please reduce it. No, sir, ITC is not available, then treat it as a cost. If at all it is not yet treated as a cost, add it to the cost. I already told you once. Penalty, demurrage, fine, detention charges, etc. Please don't add it to the normal cost. It is an abnormal cost, so treat it as a abnormal cost. And what you should do to the abnormal cost? Charge it to costing P&L. Other expenses like sometimes transit insurance will be there. Commission of purchase will be there. Brokerage will be there. Freight inward and all will be there. And toll charges will be there. All these things I told you, no. From the point A, from our supplier's point till it reaches our godown, whatever the cost we incur, which are non-refundable in nature, everything is your cost too. Clear? Cost of container, just check whether it is returnable or non-returnable. If it is returnable, what we should do, sir? What we should do if it's returnable? Net amount should be added to cost. Returnable means ignore. Non-returnable means? Returnable means, guys, net amount should be added to cost. That is, whatever we don't get refund as. For example, We paid 500. We got 400 back, which means 100 is our net amount now. So 100 we should add it to our cost. If at all it is non-refundable or non-returnable, then whatever you paid, entire amount shall be added to the cost. Entire amount shall be added to the cost. Clear? See there, from the warehouse of the vendor, that loading and all will be there. Those two guys are loading there to the truck. So the truck charges, everything will be there. That will come to our warehouse. Warehouse we are going to unload. That will also be there in our cost. But after it reaches our go down, then it should be ignored. Correct. It should be ignored. So all normal, non-refundable costs are to be added to the cost of purchase. Normal, okay, not abnormal. If the abnormal is there, that should be charged to the costing P&L. Correct. Now, sir, how to treat the normal loss and abnormal loss? Guys, always remember, normal loss means loss which you cannot avoid, which is due to inherent nature of the goods, and which cannot be avoided. That is your normal loss. Whereas abnormal loss means other than normal loss. That is, you could have avoided it, but you didn't avoid. Road tax, can you avoid? No. Penalty for not wearing helmet, can you avoid? Can. Now try to understand. Normal loss means incurred due to inherent nature of the goods and which cannot be avoided, whereas abnormal loss means loss other than normal loss. Sir, how to treat it, sir? Guys, normal loss should be added to the good units and apportion it only to the good units. Okay, good units means what, sir? Input minus normal loss. Whereas abnormal loss, charge it to costing P&L. Sir, full amount should be charged, need not be. What we are going to do is, we are going to check how much is our abnormal loss. From that, we'll reduce if any scrap recovery. Then accordingly, we'll find out cost. Scrap realization is there. Sir, related to normal loss, reduce it from the total cost while computing the cost per unit. Whereas if it is related to abnormal loss, credit it to costing P&L or reduce it from the abnormal loss and the balance abnormal loss, charge it to costing P&L. Sir, can you tell one example? Listen here, I'm not going to tell that why, what and all. I'm going to tell you how to treat the normal loss, how to treat the abnormal loss. Let's say 1 lakh units you are purchasing by paying rupees 10 per unit. 1 lakh units you purchase by paying rupees 10 per unit. Now, actually, you got 88,000 units as a final product. Whereas, normal loss anticipated due to inherent nature of the goods was, let's say, 5%. How many percentage? 5%. So, if at all you guys were careful enough, then the loss would be just 5,000, not whole 95,000, just 5,000. Now, in this scenario, what we should do, sir? And scrap recovery, rupees 1 per unit. So, you can recover rupees 1 per unit. Now, listen here very carefully. Total cost is how much, sir? 1 lakh into 10. 10 lakh. Minus, guys, you should reduce only and only scrap recovery from the normal loss. Okay, because abnormal loss, what you should do, sir? You should credit to costing P&L. You should not add it to or reduce it to cost. So how many normal loss units were there? 5,000 units. 1 lakh into 5%. And how much we are recovering? 1 rupee per unit. Divided by how many units we introduced? 1 lakh units. In that, normal loss is how much? 5,000. So may I know how much is 995,000 whole divided by 95,000 is 10.47. Now, relating to good units, normal units, which you actually produced is, cost is 88,000 into 10.47. How much it is? 9,21,360. Whereas abnormal loss is there. No, abnormal loss. How much is abnormal loss units? Guys, try to understand. 1 lakh was there. In that 5,000 was normal loss. So how much was supposed to be there? 95,000 was supposed to be there. But actually you got how much? 88,000, which means 7,000 is a abnormal loss units. So abnormal loss units are 5,000 into, 7,000. 7,000 into rupees 10.47. How much it is? 73,000. I think due to rounding off or something. Rounding off was there. Normal numbers. For the first one also normal number. 9,21,360. Check total of these two. How much it will come? No round off. How much it will come total? 9,94,000. It should not happen. 10 lakh minus 5,000. That is 9,95,000. Divided by 95,000. How much it is? Their round off is there. No? Because of that round off, other 500 or 600 difference is coming. That's absolutely fine. Sir, in examination, for how many digits we should round it off? Guys, always remember amount unless and until they say take it to the nearest rupees, always and always you round it off to the 2 digits decimals. You should round it off to 2 digits decimals. Clear? Now this is how you should treat it as this is how you should treat the normal loss, abnormal loss as. Now abnormal loss is 73,290. In this 7,000 we are able to recover 1 rupee per unit. That is the scrap recovery from that. So it is 7,000. So around 66,290 rupees we are going to charge it to costing P&L. We are going to charge it to costing P&L. This is how we are going to do it. Hope it is clear. Clear? So whenever the normal loss is there, what we should do? Come on guys. We should take the total cost minus scrap recovery from scrap recovery from normal loss. Normal loss units whole divided by units introduced minus normal loss units will get the cost per unit. That only should be applied to the good units. That only should be applied to the abnormal losses. And after applying that to abnormal losses, if any scrap recovery is there, that should be done what guys? Reduce from it and balance, charge it to costing P&L. Charge it to costing P&L. Always remember, charge it means you should debit it to costing P&L. Credit it to P&L means income. You should credit it. Clear? These are the things you have to remember. Hope it is clear. Treatment of normal loss, abnormal loss. Is it clear? Again, don't worry. Again, we are going to see the same point again in our process costing. Okay. What do you mean by abnormal gain, by the way? You thought you will be able to produce 95,000. But, let's say you produce 97,000. You are expecting to produce how many units? 95,000 units. But actually you produced how many units? 2,000 units. Extra you produce. No. That is your abnormal gain, sir. Abnormal gain, what we should do, sir? Again, after adjusting the scrap recovery, see, normal loss, what we did, scrap recovery, we took it as 5,000. But actually scrap was just 3,000. We showed 2,000 extra there. That should be reversed. First against abnormal gain, balancing figure, we are going to take it to costing P&L. We are going to credit there. However, if you didn't understand this point, don't worry. Abnormal gain, again, we are going to see it in the process costing. This is the treatment of the abnormal loss and scrap recovery. Hope it is clear. Now, sir, what are the duties of the storekeeper, sir? To keep the general control over stores, safe custody of materials, maintaining records, stock audit and reconciliation, issue of material, maintaining adequate level of stocks, initiation of purchase requisition. All these are the works of whom? Storekeeper. Basically, the one who takes care of the stores. His duties are what? One, normal control over stores he should keep, no doubt in that. And he should keep the safe custody of all the materials. He should maintain all the records. He should audit the stock once in a while and reconcile it, issue of materials, and maintaining the adequate level of stocks and initiation of purchase requisition. I told no there procurement, production department will ask us through material requisition. Now material requisition, as per that, if we don't have enough goods, what we should do? We should purchase. To purchase, can store guy can go and directly purchase it? The answer is no. He should raise a request to purchase department. Now to raise the request to purchase department, storekeeper should raise something called as, some document called as purchase requisition. Good. Sir, what are the different stores records? Sir, different stores record are, guys, bin card, stock control card, stores ledger. Bin card, stock control card, stores ledger. What do you mean by bin card, sir? In front of the bin or in front of the stock, whatever we are maintaining, we'll keep one card telling that what stock is there in this, how much quantity is there. That's it, nothing else. What will be there? What stock will be there, how much stock will be there. That is your bin card. Whereas your stock control card is all about same like bin card only, but here it will be boss opening, how much was there, how much we purchased, how much we issued, how much balance is there in quantity. Stock control card will have what and what and what and what? Opening stock, how much was there, how much units we purchased, how many units we issued, and what is the closing. It's there in this particular stock bin. Okay, that is your stock control card. But your stores ledger is all about, guys, just like a stock control card only. Here the best part is, you guys are not only going to record in terms of quantity, in terms of rupees also you guys are able to record it. You are recording in terms of rupees also. That is, you will record input, opening, how much was there, how much we purchased at what price, how much we issued at what price, how much is closing at what price, what is the value. So that is your stores ledger. Is it clear? Is it clear? Now, inventory control. You can control the inventory by setting the quantitative levels, by relative classification, by ratio analysis, by physical control. I repeat, you can do it by setting up quantitative levels, relative classification, ratio analysis, physical control. Now setting quantitative level means you are going to set few levels, like boss, at what time I should place the order, how much I should place the order, maximum how much I should keep all the time, minimum how much I should keep all the time, average how much I should keep all the time, danger stock level how much I should keep all the time. Like this, we are going to set the different levels. That is known as by setting the quantitative levels. We are going to discuss this quantitative levels. Shall we proceed? Give me a minute. So by setting the quantitative levels, like we are going to set few levels. For example, one, reorder level. Guys, here I am not going to explain. I will explain what reorder level is. How did we arrive at a formula, that I am not going to explain, because then that won't be a marathon, no? Correct. I expect those things at least you guys would have already understood. If not, you should watch the regular classes. That's the thing. Yes. Now listen. Reorder. Guys, reorder level means very simple. Sir, when we should place the order? Reorder level means when we should place the order. That is your reorder level. Guys, for that, we have two formula. One is max into max. What is max into max, sir? Maximum consumption into maximum reorder period. Sir, here in this question, where the ICI can play is reorder period they will give in terms of weeks. Consumption they will give in terms of days. Reorder period they will give in terms of weeks. Consumption they will give it in terms of days. What formula tells? Maximum consumption into maximum reorder period. What students will do? Consumption 500 to reorder period 1500. Then marks will be dumukku. That only. Correct? Because one is in terms of days, one is in terms of weeks. Always remember, in costing that should be standard. Time what you take should be standard. Either you should take it in days or either you should take it in weeks. Now, sir, we'll do one thing, sir. We'll convert the consumption into weeks is better, or converting the lead time into days are better. Conversion of lead time into days are better. Because as a week, we know it is 7. Yes, 7. As a non-CSK fan, I won't prefer 7. Not like that. 7 is a number. If you divide something with 7, you will get in decimals, unless and until it is a multiplier of 7. 6 by 7, you will get some random this thing. Correct? Instead of that, you convert that into days, no? Then it will be fine. Now, maximum consumption into maximum reorder period. Reorder period is also known as lead time. Reorder period is also known as lead time. That is, from the date of placing order till we receive the order. From the date of placing order till we receive the order, how many days gap is there? That thing we call it as reorder period, also known as lead time. Guys, you should keep in mind, in examination they might ask something like this. What is it, sir? They will give one stores ledger kind of thing to do the stores ledger. If you guys know stores ledger, great. I assume you guys know. Now, how it will be there? They will give purchase order date, goods receipt date. In the same stores ledger, they will even ask you to calculate the maximum stock level, minimum stock level, all those stock levels also they will ask. Sir, using stores ledger, you will be able to find out how much you consumed in that period. Divided by those, you will get to know how much on an average you consumed. Correct? 1. But lead time, how we will get to know, sir? Guys, purchase order date, goods receipt date, the difference will be there, no? That will be your lead time. Sir, purchase order date is 10, goods receipt date is 20. What is the lead time? 10 days or 11 days? Which day? 10 days or 11 days? How many days? Guys, always remember, either you are going to include the order date. If you don't include order date, then include your goods receipt date. Don't include both or don't exclude both, which means if you include 10, don't include 20 while calculating. If you include 20, don't include 10. Just don't ignore 10, 20 both. No. So it is 10, 11, 12, 13, 14, 15, 16, 17, 18, 19. 10 days is a lead time. Like that, they would have given so many purchase orders, so many goods receipt things. You just check what is the maximum, what is the minimum. At least two they will give. One is maximum, one is minimum. Calculate for every purchase order how much is the lead time. In that, select the maximum lead time, select the minimum lead time. Clear? Now, that is one of the examination point of view, one of the important adjustment which is not there in your study material, however, which is there in your RTP. Okay, as I told you, that thing will be coming as a separate video. However, I'm just giving you idea about it now itself. Okay, because if I do it now, I will be doing it in urgent manner. That question, if it is special also, you won't feel it's special, because by the time you understand that special point, we will be in the next question. Instead of that, let's take a time. You will get videos of it. All the chapters, special questions. Around 50-60 questions might be there that you have to go through before going to examination. That is, if at all they decide to give the paper tough, then that video will come to help. Above average, that video will come to help. Sir, below average, marathon will come to help. Which means from A to Z, everything is sorted. Like that it is. So that videos you will get it. Okay. Now, reorder level, when to place an order, that thing is known as reorder level. It is maximum consumption into maximum reorder period. I told you, if they give a stores ledger, how to ascertain the reorder period. Okay, that too in RTP they have asked 2 times, like 2 RTPs that question was there, that kind of question. However, in 1 RTP the solution is wrong, 1 RTP it is proper. But days calculation you understood, no? Consider the day of placing the order, exclude the day in which you receive the goods. So from that date to that date, that is maximum into maximum. Or guys, reorder level, that is when to place the order, that could be ascertained by considering minimum stock level also. Sir, what is minimum stock level? Guys, minimum stock level means minimum how much I should maintain it all the time. I should make sure that my stock won't go less than that. Minimum I need so much, boss. By hook or crook, I need so much minimum. I have to maintain that. Sir, if it goes less than that, will that be a problem? The answer is no. It's just a red flag. That is, boss, your stock is going less than your safety stock level. Less. So what you should do? You should keep it all the time above the minimum stock level. So the stock level which we expect to maintain all the time, minimum stock level, that we call it as minimum stock level. Sometimes they interchange the term minimum stock level with safety stock level. But always safety stock level is not minimum stock level, but sometimes they will use that. By looking at the question, you will understand whether it is safety stock level or whether it is minimum stock level, like that. Okay, because one more safety stock question is there, crazy question, where each and every student will struggle. That we will discuss today, that we will solve today. Peace. Okay. Now, that is there in your ICA module only. I think illustration 7, 8. The table is there, no? Tires question. Tire. Illustration 7. I don't know why it is happening 7. On playground though it is not happening. Stadium. At least in study material it is happening 7. Correct, no sir? You are a Dhoni fan. By looking at your face I can understand. ICA is Dhoni fan. Correct. Old institute, no. If you know, you know. Pure. Blood also is red. You're in Tamil Nadu, so hey, Tamil Nadu, come to Chennai. Chennai, half of my class students are RCB, other half are CSK haters. Ah, nice, no? Very nice. We took the wicket, no boss. If he was there, that way, if that was there, then everything will happen, no, as per our expectation. No worries. Come back. Now, guys, how to ascertain the minimum stock level, sir? Reorder level low minus average consumption into average reorder period, also known as average lead time. Minimum consumption, minimum stock level are not same. Consumption is different, stock level is different. Now, again. Reorder level is what, sir? Maximum consumption into maximum lead time. Whereas minimum stock level is what, sir? Reorder level. See, stock level will be somewhere like this, sir. If it is a stock level, somewhere here minimum will be there. Somewhere here reorder level will be there. Somewhere here max will be there. Somewhere here average will be there. Somewhere here danger level will be there. So here you are in reorder level. So to arrive at minimum, whether you should minus or plus, sir? Minus. So reorder level is nothing but, minimum stock level is nothing but reorder level minus average into average. Average into average. Using this formula, we can write one more formula for reorder level. That is nothing but minimum stock level plus average into average. Yes. So we discussed three formulas here. Come on. One. Reorder level is equal to maximum into maximum. Reorder level is equal to minimum stock level plus average into average. Minimum stock level is nothing but reorder level minus. Correct? Now, maximum stock level is what, sir? Up to how much stock you can maintain, or maximum how much stock you can maintain. Hey, sir, maximum we can maintain how much ever we want, no. Hey, if you want to maintain more and more, go down should be bigger. If the go down is bigger, biggest, then the rent also will be most taste, correct? So at the same time, if the go down is there, insurance should be there. If the insurance is there, you have to take loan and all to fill the inventory. The holding cost will be more, no? Inventory carrying cost will be more, no? So better you will be having some restriction as to maximum how much I can keep, sir. If I keep more than that, that is dangerous. In that scenario, what I am going to do is, I am going to take it as a reorder level plus the reorder quantity minus minimum consumption into minimum lead time. What is it, guys? Reorder level will be there. We will place the order. The quantity of the material, how much we place the order for, that is reorder quantity. At which level we order is reorder level. So by standing at reorder level, how many units we have ordered? Reorder level plus reorder quantity minus minimum into minimum. Minimum into minimum. Minimum consumption into minimum lead period or reorder time. That will give you maximum stock level. Come again, we have discussed few formulas here. Reorder level is nothing but maximum into maximum or minimum stock level. Minimum stock level minus or plus average into average. Where minimum stock level is nothing but reorder level minus average into average. Maximum stock level is reorder level plus reorder quantity minus minimum into minimum. Now, average stock level is somewhere between minimum and maximum. To ascertain this, you got two methods. One, sir, consider maximum stock level, consider minimum stock level. Maximum stock level plus minimum stock level divided by 2 is average stock level. Or one more thing you can do is, how much is the minimum stock level? plus half of reorder quantity. Half of reorder quantity. Sir, when to use which one, sir? Depending upon question to question. When to use what? Depending on question to question. So guys, danger level means what, sir? It will be below your minimum stock level. But I told the minimum stock level means it won't be a problem. But it is just a red flag. Now, after that, there will be one level called as danger level. Guys, danger level, once we reach that, then that is not a red flag, that is a siren. What do you mean by that, sir? We might end up not having any stock for the production. So danger level, what we will do is, we'll stop the issue for the normal production. We'll issue it only and only to the emergency production. Okay. So in that scenario, what is the formula, sir? If at all question is talking about average consumption, then it is average consumption into emergency reorder period. If the question is talking about minimum consumption, minimum into emergency reorder period. Okay. Average or minimum into emergency reorder period. Emergency reorder period means in case of urgency, we are going to get it from the nearest vendor. No, that nearest vendor, in how many days he will satisfy our order. That is your danger level. That is your danger level. Is it clear? So we have discussed few levels here. Last time I am going to revise all the formulas. Concentrate reorder level is the level at which you should place the order at. Correct? When you have so much quantity of material, you have to place the order. All these things are in quantity, not rupees. Keep that thing in mind. Now, what is the reorder level formula? Maximum consumption into maximum reorder period, or minimum stock level plus average into average, whereas minimum stock level is minimum how much we should maintain. That is reorder level minus average into average, whereas maximum is all about reorder level plus reorder quantity minus minimum into minimum, whereas average is minimum stock level plus maximum stock level divided by 2, or minimum stock level plus half of ROQ, whereas danger level is where the normal production issue will be stopped, only emergency issues are made. So it is either the minimum stock level or the average stock level into reorder period of the emergency purchase or emergency reorder. And what is ROQ? Reorder quantity. Come on. The quantity, how much you place the order at. Now, sir, how much we should place the order, sir? What is there, sir? Guys, try to understand. If you place less number of orders, ordering cost will be less, I agree. Every time you place the order, you have to pay the transportation charges, you have to pay the ordering cost, you have to prepare the purchase order for that extra cost. Like that, cost will be there. That will become less. I agree. But at the same time, now my question is, if you carry more and more and more, you have to borrow more money, less money. More money. More money means more interest, less interest. If you are carrying more inventory in godown, you have to take a bigger godown, smaller godown. Bigger godown, bigger the rent, smaller the rent. Bigger rent. Like this, few expenses will be there, no? That will become more. Sir, then do one thing, sir. One order, only one unit. Go down itself is not required, sir. That is the case. How many orders do you have to place? Too many orders. Too many orders means ordering cost will be more or less. So you should be able to find some balance between carrying cost and ordering cost. That is holding cost and ordering cost. Now that balance thing we call it as economic order quantity. That order we call it as economic order quantity. That is size of an order in which ordering cost and carrying cost together will be minimum. Guys, I'm not telling ordering cost is minimum and carrying cost is minimum. I'm telling together it will be minimum and equal. What are you talking, sir? Guys, buffer stock is extra stock kept for some additional orders. Where were we? Economic order quantity. Now, EOQ, economic order quantity, is basically, boss, what is the give me a second. Together it will be minimum. Where the cost will be together it will be minimum. Sir, no video. Yes. So, if you place, what I was telling, together it will be minimum. Because to make one thing minimum, the other thing will hit the maximum for sure. For example, if you take ordering cost, minimum ordering cost could be achieved when the order size is more or number of orders are less. At the same time, minimum carrying cost could be achieved when the order size is less, which means both are snake and mungus. Both cannot be minimum together. Both cannot be maximum together also. Which means somewhere when they are equal, those will be minimum. Together it will become minimum. And at EOQ that will become minimum. And the formula for EOQ is square root of 2AO divided by C. Sir, how did you arrive at this formula, sir? Regular class. That you have to derive the formula and all. You should take total cost, carrying cost is equal to ordering cost. And I will just show it here for example. Ordering cost is equal to carrying cost. Ordering cost means what, sir? Number of orders into ordering cost per order, correct? Carrying cost is half of order size into carrying cost per unit per annum. Now, number of orders is nothing but total requirement. I will take it as A divided by order size. That will give you number of orders into ordering cost is equal to half of order size into carrying cost. Now, if the ordering cost goes that side and this 2 comes this side, it will be 2A into OC is equal to OA square into CC. OA square is equal to 2AO divided by C. If I take OS as O and CC as C, and to eliminate this square, both the side I should do the square root, then this will get cancelled. Order size is equal to 2AO by C. This is how you will arrive at a EOQ. Now, what is EOQ? Square root of 2AO divided by C. That is your EOQ, economic order quantity. That is size of the order at which total of carrying cost and ordering cost will be minimum. And examiner's favorite thing, what they will do is, one they will give discount, one more they will give EOQ. They will be like whether better to go for EOQ or better to go for discounted offer. That you have to decide. Decision making questions, few questions are there. I will go through it once. Don't worry. And while computing annual cost, sir, what and all you should consider? You should take the purchase price. What is purchase price, sir? Annual requirement into how much you are paying for that. Ordering cost, that is number of orders into per order how much. Carrying cost, guys, be very careful here. Half of not annual size, it is order size into carrying cost per unit per annum, not per month or per day. Sir, we are carrying, for example, in a year you need 10,000 kg, sir. Okay. So we are carrying how many kgs? 10,000 kgs, no? Then why you are taking order size, sir, not the, let's say order size is 1000 units. Why you are taking 1000 units, sir, not 10,000 units? Hey, in one order, how many units I am placing the order for? 1000 units. In my go down, how many units will be there? 10,000 units will be there or 1000 units will be there? 1000 units will be there. So you are carrying how many units? 1000 units, not 1 lakh units or 10,000 units. I know my annual requirement is so much, but why I will carry so much? I will carry something less only, no? I will carry 1000 units only, no? And that too, 1000 units will be there the day I place the order. Slowly it keeps on reducing. It will go to 500, less than 500 also it will go. Till you restore it, replace the order, it will be less. Now, how much I should take, sir? That's why I don't even take 1000. I will take half of 1000 as the answer. That is, more than 1000 was there for few days. More than 500 was there for few days. Less than 500 was there for few days. That will get set off, which means I'm going to take half of order size. So carrying cost computation is half of order size, not the half of annual requirement. Whereas EOQ, square root of 2, 2 means 2 only, square root means square root only. Whereas A means annual requirement of raw material, not the finished goods. Sir, raw material consumption is there, raw material to be purchased. Both are there, sir. Which we should consider? Annual raw material purchase. Why, sir? Because EOQ is all about purchase, not how much you consume. EOQ is all about purchase, not how much you consume. Sir, okay. Opening stock, closing stock is not there. That you ignore, sir. They have given minimum consumption per day, maximum consumption per day, average consumption per day. In a year, 360 days they have given. Only this much they have given. How to ascertain the average annual consumption, sir? I should take average consumption into 360 days. I will get to know how much is my annual consumption. I should take average consumption into 360 days. What I will get, sir? I will get annual consumption. Into O means what, sir? Ordering cost per order. Divided by C means what, sir? Carrying cost per unit per annum. Got it? Carrying cost per unit per annum. So EOQ is square root of 2AO divided by C. How to ascertain the annual cost? Purchase price plus ordering cost plus carrying cost. One thing you guys have to remember here, unless and until there is a discount, always and always EOQ itself will give you a benefit. Unless and until there is a discount, EOQ only will give you a required benefit. Keep that thing in mind. Got it? Sir, but here when comparing, you should be very careful. One with the discounted price, one with the EOQ. Now EOQ and all, you will take normal price only. But one with the discounted price, purchase price, you should take the price after discount. Carrying cost per unit per annum. They generally give it in terms of percentage. Let's say carrying cost per unit per annum is 20%. That you should apply it on purchase price. So for EOQ, carrying cost per unit per annum will be different. Let's say 100 rupees. 100 into 20%. 20 rupees is a carrying cost per unit per annum for EOQ. Whereas if they are giving 10% discount, then carrying cost per unit per annum for the one more the order size is 90 into 20%. That is after discount. Okay. In that time, you should compare by using a table. Purchase price, ordering cost, carrying cost. That anyhow, if you see few questions, you will understand. Stock out is what, sir? Stock out is the situation where you won't be able to meet the required number of orders. That is stock out. Such stock out now, sir. What's a big deal in it? There is a very big deal in it. What do you mean by that, sir? Guys, if you do the stock out, your customer will come to you first. He will tell stock is not there. Will your customer goes home back? Or they will go to our competitor? Once they go to our competitor, if they like our competitor's product, what they will do? They will not come back, which means we are losing our potential sales, which means we are having a stock out. Now that kind of cost is known as stock out cost. That kind of stock is known as, got it up? Got it up? And that illustration 7 is there. We'll do it. Okay, not now, but after this, all the revision of the concepts, we'll go through each and every illustration of this particular chapter. Okay, you don't expect me to be going slow also. At the same time, if you don't understand, please let me know. I'm not telling like I will go very fast. I hope you will be able to understand it. Now, inventory control on the basis of relative classification. Here, on the basis of the nature, we are going to classify. That is, one is ABC analysis. ABC analysis means what, sir? Guys, we are going to classify our inventory into 3 categories. A category, B category, C category. A category is that kind of inventory which is very much in terms of value, huge in terms of investment. But control wise, you need very less control because only few units are there. Unit wise, it takes around, like size wise, it is 10% of your total inventory. Generally, it's not the hard and fast rule. It should be 1070 only. No, generally, it will be 10% of your quantity, but 70% of your value, investment. Whereas B category, it is piece, value wise also 20, quantity wise also 20. Whereas C category, investment wise, you are going to invest just 10% of your value of total inventory. But order size wise, control wise, it will be there for 70%. If you go to gold shop, gold, small portion, huge value. Water bottles, what they are going to give you? Huge in size, small value. Back stock, what they keep? B category. Normal price, normal stock. So this is ABC analysis. AB costing is different, ABC analysis is different. Keep that thing in. Next is fast, slow moving and non-moving. Here we are going to use based on the inventory turnover. That is how many times our inventory is getting empty and refilled. That is inventory turnover. Fast moving means more inventory turnover. Slow moving means less inventory turnover. Non-moving means generally inventory turnover itself won't be there. We will be keeping it for the disposing it off. So where the control should be more, control should be there for the fast moving. Because if that goes empty, then we will be losing certain things. Vital, essential and desirable. Vital means, guys, very essential. Without this, you can't produce at all. Essential is required, but if it is not there, quality of the product will get spoiled, but production continues. Desirable, if it's there, good. If it's not there, also fine. Biryani, chicken biryani, which means you are vegetarian. Very good. Chicken biryani. Chicken is vital. Without chicken, can you do the chicken biryani, madam? Can you? No. Whereas essential is certain items. Let's say that leaves what they put. Spices is required. Otherwise, it will become veg pulao. That is essential. Sorry, vital. Essential is they put some leaves, no? Some leaves they put. Now, that leaves are, if it's there, great. If it's not there, taste will vary. But biryani you still can produce. Desirable means close, all those things. If it's there, headache only. If it's not there, fine. If it's there, use it. If it's not there also, it's absolutely fine. Now that is vital, essential and desirable. High, medium and low cost. Here in ABC, what we did, we took both into consideration. That is quantity as well as value. Both we took into consideration. Whereas high, medium, low, here only price we will take into consideration. High price, more control, medium price, medium control, less price, low control. High, medium, low. Here only prices we will consider, not the size of the inventory and all. Sir, inventory control using a ratio analysis. Inventory turnover ratio will use, that is cost of material consumed divided by average inventory. Cost of material consumed divided by average inventory. Guys, cost of material consumed means what, sir? Opening stock of raw material plus purchases plus direct expenses minus closing stock. Opening stock of raw material plus purchases plus direct expenses minus closing stock, whole divided by average inventory. Average inventory means what, sir? Opening stock plus closing stock divided by 2. Opening stock plus closing stock divided by 2. The more the inventory turnover, the more the fast moving it is. Less the inventory turnover, less the fast moving it is. Sometimes they will ask how many days inventories was held. For example, inventory turnover, let's say you got it as 10 times. What do you mean by that? In a year, or I will take it 12 times. In a year, 12 times inventory got changed, which means how many months once it got changed? 12 months divided by 12 times. 1 month once it got changed, which means we held the inventory for almost a month and we changed it. Now, this is how you are going to calculate average holding period. Okay. So, the more the inventory turnover, less the holding period, that means fast moving it is. Done. Physical control, how you are going to keep? Sir, there is 2 bin system. What is 2 bin system? Material will be kept in 2 bins. Okay. Now, first, from this bin we are going to issue. Now it became empty. Here we start issuing from the next bin. But now once we start issuing from this bin, we'll place the order for this one. By the time it comes empty, this will be there. Then we start again using this. By the time it becomes empty, this will be there. Like that. So once we complete one bin, by the time we go to next bin, we'll place the order for this. Just like your gas cylinder in home. 2 cylinders are there, let's say. It won't look like cylinder, but still. 2 cylinders are there. Now, one cylinder got empty. Will you wait this to get empty, or you will immediately place the order for this? Got it, huh? That is your 2 bin system. And system of budget. That is how much we should use and all, that we are going to keep a track of it. And perpetual inventory record. What do you mean by perpetual inventory record, sir? Guys, perpetual inventory record means you are going to keep the record on day-to-day basis. I mean, every moment based. You are not going to physically check in the godown all the time. You will keep a track of it. For example, you go to pharmacy, medicals. You gave let's say you give prescription. Are they going to go and check in the racks where the tablets are? What they will do? They will check and they will tell handwriting, I'm unable to understand. They will just type it in the computer. They will clearly get to know how many tablets are there, in which rack it is there. So they will go, they will get it to you. Once they raise the bill, automatically in their system, that unit, how much ever they raise the bill, that will get reduced. So earlier, before issuing tablet, if it was 10 tablets, now if they issued 6 tablets, then the balance will automatically become 4. Got it? Now, that is your perpetual inventory system or records. Continuously, you are keeping a track of. When you receive, you will record how much you received. When you issued, you will record how much you issued. Balance will be there, of course. But there is one problem here. Purely it is based on your records. Let's say, what is your name, sir? Kabil. Kabil. Now, Kabil works in that medical. Okay. In that medical, Kinder Joy, Harry Potter version is there. Okay. Now, his baby wants Kinder Joy. He will call him. He will tell, of course, baby, anything for you. Now, what he will do, he will take the 2 Kinder Joy from there. He will take 2 Kinder Joy from there. He taking 2 Kinder Joy is not a problem. The problem is he didn't inform the owner, which means he didn't purchase it. He took and went. Now, in system, whether Kinder Joy, let's say 20 Kinder Joy was there. In system, how many Kinder Joys will be there? 20. But actually, now to avoid this, once in a while, we should go and check our physical inventory also. That is known as continuous stock verification or stock verification. Or we also call it as inventory taking. Sir, how you should value your inventory, sir? Before this, there is one thing called as just in time, JIT. You know what is just in time? Just in time. What is just in time? Zero? Zero inventories in store. What do you mean by that? Yes. Based on the units to be ordered, how we are going to keep it is basically this works with a very good system. You should have a proper system over it. Your supplier should be there in this, your customer should be there, everything. There is something called as demand pull system. What you see is demand push. That is, they will give advertisement, you and go into ask in shop. By then in shop it is available. But generally B2B how it works is demand pull, which means first you should place the order. Based on that they will produce. Now when they want to produce, that time our supplier should be ready to send the inventory on time. Just on time. Not before, not later. Exactly when it is required that time. So because of this, you don't have to keep the stock of inventory at all. Because of that, you can reduce a inventory carrying cost. How you can reduce wastage? Wastage cannot be reduced using JIT. But you can reduce the inventory carrying cost because you are not carrying inventory at all. There is no need of go down only. Why? Whenever is required, your supplier is sending it to you immediately. Which means you and your supplier should be located very near. Now that is your just in time. Exactly when it is required, it will come, where we are going to keep our inventory carrying cost as minimum as possible. Now, valuation of inventory. How you are going to value your inventory, sir? How much we should value our closing stock at? Guys, you should check whether inventory are interchangeable in an ordinary course of business, not interchangeable in the ordinary course of business. Not interchangeable in the ordinary course of business means what, sir? Let's say 4 of us wearing specs. Now if I mix all the specs, can you identify which specs is yours? Ordinarily, can I interchange it? No. Now at that time I can go for specific identification method. Let's say I paid 2000, she paid 3000, you paid 5000, he paid 7000, sorry 8000. Now if I take this, it is obvious that this is 2000. You mix, you do whatever you want. That is one. Ordinarily interchangeable will be there. That is, everything is same. You can't identify which came first, which went first. In that scenario, we are going to use either FIFO, either LIFO, either simple average or weighted average. FIFO, LIFO, simple average, weighted average. FIFO means what, sir? First in, first out. First in, first out. See, this is assumption, not actual sense. This is purely the assumption. Whatever we received first, that went first. This is assumption. You might have sent whatever you received last also, that also you would have sent, but still that is assumed as whichever came first, that only went first. Actually, you need not to do that. Whichever you received first, actually you need not to send it first. First in, first out means which you received first, you sent it first. That's the assumption. LIFO means last in, first out. That is which came last, that went first. Average method means you are going to compute the average of only prices and you are going to apply it for issues. Weighted average means, guys, you are going to consider quantity as well as value. You are not going to consider just prices. You are going to consider prices as well as quantity. Okay, that is weighted average. Sometimes what happens, whatever we issue to our production departments, they will return it to us. That time, how we should account for it? Sir, you got two options. Option number one, treat it as a fresh inventory, keep it at last. Or treat it as a temporary account. One temporary account you open, keep it in the beginning only, issue it. Next, whenever the requirement is there, issue that material only first. You can treat two ways. One, treat it as a fresh receipt, like normal way. Or you treat it as suspense account or some temporary account, receive it, and next time whenever they want it, immediately you issue it. That is your one more way of doing it. And there are other methods also, like standard cost method, where the some price will be fixed in the beginning, issue will be done at that only. Replacement method, that is, if the same inventory, how much it is getting sold at outside. For example, this mic is our stock. I don't know the price of this. For this, what I'm going to do, I'm going to check the same mic at what price it is getting sold in the outside market. So this will be issued at that price. That is replacement price. Realizable price means this particular mic only will go for how much price. That is realizable price. Like this, we are going to keep some prices. Keep that thing in mind. In the stores ledger, normal loss is there. Sir, how to treat the normal loss? Units of the normal loss should be considered, whereas value column, you should keep it blank. Why, sir? Because the value of the normal loss should get distributed to good units. If at all you consider it as along with the units, then automatically what happens? That will get distributed to all the units, including normal loss. That should not happen. For example, in my previous example, 9,95,000, I should distribute it only to 95,000 units, not 1 lakh units. If I distribute it to 1 lakh units, what happens? For that normal loss also, it will get distributed. So always remember, normal loss whenever is there, if the scrap recovery is not there, then amount column will be nil. Only unit columns will be there. If it's abnormal, treat it like a normal issue. If it's abnormal, please treat it like a normal issue. This is what about your material costing is. Quickly we'll see few questions from your material. Shall we? And remind me after this question, sir, examination point of view. In examination point of view, for EOQ, there are two crazy questions. Two type of questions are there. One, now they have made it as a case-based scenario that is there in your study mat itself. That is when the goods are perishable in nature. One more is how much discount you should expect from your supplier. RTP question that we will discuss. These two are nice questions relating to EOQ. Illustration one you can ignore. Okay, not much thing are there. We'll do. We'll go from illustration part wise. At what price unit part number should be entered? Guys, 1000 rupee what we purchased, should it be included in cost or no? Purchase price should be included in cost or no? Yes. 20% discount, which is 200. Is it a trade discount? The answer is yes. Should it be included or should it be ignored? Ignore. So, I mean, ignore in the sense, don't do any adjustment, let it be 800 because that should be reduced from the total cost. Done. 800. GST of 12% is there, 96. Just check. Document substantiating payment of generally included to claim a ITC, which means ITC is available. Should you consider it as cost? The answer is no. Please don't consider it as cost. So actual cost is how much so far? 800. Packing charges 5 non-returnable boxes 50. So that should be included or no? No. Non-returnable box. It should be included. Total cost is 850. A 2% cash discount is given, ignore. So your cost is 850. Correct? And number of units, if you take, you should take good units. Okay. Number of units means good units. That is actual input minus normal loss. Whatever you get, that one you will get the 4.25 per unit. Listen here, third illustration. Calculate the economic order quantity from the following information. Also state the number of orders to be placed in a year. Guys, consumption of material per annum, they have given 10,000. Order of placing cost is 250. Cost per kg of raw material is 2 and storage cost is 8% per annum. So that is 2 rupees into 8%, which will come to rupees 0.16. So EOQ will be very simple, guys. EOQ is equal to square root of 2AO divided by C. 2 into A is 10,000 units, O is 50 per order, divided by C. C is rupees 0.16, square root of that. You will get EOQ answer as 2,500, which means per order you have to place 2,500 units. How many units you need in a year? 10,000 units. So how many orders to be placed? 4 orders to be placed. 10,000 divided by order size. How to place? How many orders? 4 orders. Look at the third one. Compute the EOQ and the total variable cost for the following. Annual demand is 5,000, unit price is 20, ordering cost is 16, storage is 2%, interest is 12%, obsolescence rate is 6%. All this together is 20%. That is my carrying cost per unit per annum. So for this, square root of 2 into 5,000 into ordering cost is 16 whole divided by 20% of 20, rupees 4. You will get this. Determine the, and also they are asking you to compute the total cost. Total cost will be how much, sir? 5,000 units you are purchasing at the rate of 20. Ordering cost will be, how much is EOQ? 200. Hey guys, listen. Let's say it is 5,000. 50 is a requirement. How many orders to be placed? 5,050 divided by 200. How much? 25 point. Can you place 0.25 orders? Then round it off to the nearest 0. The answer is no. Next number. Whenever they give number of orders in EOQ, it should be next number. If at all you place the order for 25, this thing, so 25 into 200 will come to 5,000. Other 50, what you will do? Correct? So you should go for next number of orders. Either it's 0.1 also, you should go for the next number only, not to the nearest 0. So this is your purchase price, which will come to 1 lakh. Next is ordering cost. How many orders we are placing? 5,000 divided by 200. 25 orders. 25 into rupees 16. 400. Carrying cost is half of order size. Order size is 200 units. Carrying cost per unit per annum is 20 rupees into 20%. 4, no? I told you, no? Together it will be minimum and same. 1 lakh 800. 1 lakh 800. Sometimes due to rounding off, the variation might come. If the rounding off error is not there, then generally both will be same. Determine the total cost that would result for the item if the new price is 12.8. Now you should consider everything on 12.8 rupees. That I am not going to discuss more. Sometimes what happens, guys, they will ask you minimum stock level. In examination, they will ask you minimum stock level. They will ask you maximum stock level. They will ask you average stock level, everything they will ask. But inventory level, they will give for only one thing. Either they will give minimum, or either they will give maximum, or either they will give average. In that scenario, what we should do, sir? Whenever the question you are unable to find out how much is maximum, how much is average, how much is minimum, whatever they have given, no, that itself is maximum, that itself is minimum, that itself is average. For example, they just gave 50 kgs. Now, for the reorder level, you need maximum consumption, 50 itself maximum. For minimum stock level, you need average stock, 50 itself is average. For maximum stock level, you need minimum consumption, 50 itself is minimum. If the question is not particular about how much is minimum, how much is maximum, average you can find out. Maximum plus minimum divided by 2. Okay, these things we'll see in the examination, not examination, past year paper, practical problems. Look at this important question. Illustration number 7. You can mark it as important question. So, and by the way, in EOQ, if they give annual demand for the final product is 2 lakh units. Consumption per unit is 3 kgs. Now, how much is my annual requirement? Annual demand is 2 lakh units. Each and every unit consume 3 kgs of material. Now, for A, in the EOQ, what is A? I should take 6 lakh, not 2 lakh. Because 2 lakh is final product. EOQ is all about raw material. 2 lakh into 3 kgs, which will come to 6 lakh kgs. Keep that thing in mind. Now, Tyrotube is a traders in 4-wheel tires. It stocks sufficient quantity of tires, which means that generally keep sufficient number of tires. No doubt in that. Which means here the stock out, if they are asking, that is not relating to minimum stock level. Here the stock, safety stock means not minimum stock. Here in this question, safety stock means how much extra you have kept. How much extra you should keep. Whatever you are keeping right now is sufficient. But still, sometimes stock out is happening. To avoid that stock out, how much extra you should keep. So listen here, last year data they have given. Last time 100 units stock out happened 2 times. 80 units happened 5 times. 50 units happened 10 times. 20 units happened 20 times. 10 units happened 30 times. 0 units happened 33 times. So can you tell me what is the probability? What is the probability of you getting 100 orders? See, total how many observations are there? 100 observations are there. Correct? Can I tell probability of me getting 100 orders, extra orders than what we are satisfying normal? That is 2 out of 100. It happened only twice out of 100 times. So can I tell it as 2 times? Can I tell it as 0.02? 80 orders we getting is how many times? 5 times in that 100 times. 50 units, 10 times happened in that 100 times. 20 units, 2. That is, in 10 orders, 2 times it is happening. 10 stockouts, 2 times it is stockout for 20 orders. 10 stockout, 30 times it has happened in 100 observation. Very common it is. And no stockout happened in 33 observations out of 100. Correct? Now, tyrotube losses 150 per unit due to stockout. So stockout cost is how much? Spends rupees 50 per unit for carrying on inventory. So and here, while calculating carrying cost, keep one thing in mind. You are not going to take half of 100. If at all you keep the safety stock as 100, you are not going to take half of 100. Why? Because every day I am keeping 100 as my safety stock. Earlier we took half of that. Why? Because in the beginning it will be more, at last it will be less. Here, throughout the day, throughout the year, it will be 100 only. So for calculating a carrying cost, no need to divide it by 2. No need to take half of 100. Hope it is clear. Clear? Now, let's say you kept a safety stock of 100 units. You kept a safety stock of 100 units. Now, you got extra order for 0. Can you satisfy it or no? You got extra order for 10. Can you satisfy it or no? You can. Let's say 1000 anyhow you are keeping. Over and above 1000, 100 you are keeping. Now if you get 1000 orders, anyhow you can give it with this. If you get 1010, can't you give it from this 100? You got an offer for 1020, 1050, 1080, 1100. Yes, which means stock out cost if you keep the 100 units is 0. However, to keep the 100 units, how much you are spending? Rupees 50 per unit. For how many units? Which will come to. So I should check if I keep what stock, my total carrying cost and your stock out cost will be minimum together. Here it is 5000. If I keep the stock of 100 units, my stock out cost will be, my total extra cost will be 5000. Now, okay, sir, let's reduce the holding cost. What if we keep just 80, sir? Now, if you get extra 0 orders, can you satisfy it or no? Yes. If you get extra 10 orders, can you satisfy it or no? Can you extra 20, 50, 80, 100? How many units you can't? 20 units you can't. And what is the probability of that happening? 0.02. Because the 20 stock out happens only and only when your requirement is 100. The 20 stock out happens only and only when the demand is for 100 units. Because you are maintaining 80 units. So what is the demand, probability of that is happening? 2 times out of 100 times. Which will come to, whatever it is, leave. And you are going to lose 150 per tire. How much it will be? 200. At the same time, you are going to carry how many inventories? 80 inventories. And how much is the cost of that? 50. Huh? 60 it is. Okay. Next one, how much? 80 into 50. 4000. Here the cost is 4060. Better than keeping 100 units for sure. If at all you keep 80, I agree, stock out cost is there, but the holding cost will reduce, no? So automatically it will get adjusted. Let's say, what if I keep just 50 units, sir? Can I satisfy extra 0 orders? 10 orders, 20 orders, 50 orders, 80 orders. How many units I can't? 30 units I can't. If I get 100 orders, how many units I can't? 50. What is the probability of me getting 80 orders? 0.05. Correct? What is the probability of getting 100 orders? And how much is this one? 150 now. Sorry? 2 and total 375. This is what? This is your cost relating to stock out, which means you are going to lose so much. However, to carry 50 units, you are spending 50, no? How much? Together, how much? So out of 3 options, which is lowest cost? Third option. Shall we see the fourth one? That is when you keep 20 units. If you keep 20 units as a stock, guys, will you be able to satisfy 0 extra units thing, 10 units thing, 20 units thing, 50 units thing? How many units you can't? 100 units thing. How many units you can't? 80. What is the probability of you getting 50%, 50 as a extra requirement sales? 0.1. What is the probability of 100? What is the rate? 150, no? How much it is? And 240. Total 690. But how many units you have to carry? 20 units you have to carry at the cost of 50 rupees. 1000. So total cost is 1690. Correct? Now, out of 4, which is better? Option 4 is better. However, going to option next one, 10th one. Guys, how many units you are carrying? 10 units. So can you satisfy if we get an order for 0 units? Can we satisfy if we get an order for 10 units? Can we satisfy if we get an order for 20 units? How many units we can't? What is the probability of that happening? Point. Correct? 150. And if we get an order for 50 units, can we satisfy? How many units? How many times it has happened? Sorry? 50-50. We are keeping 10 as a safety. 50 coming is 0.1. Correct? Next is 80 units. If at all we get a 80 units, 70 orders we can't. And what is the probability of that happening? Correct? Next one is 100 units, which means 90 units we can't satisfy. 0.02 into 150. Together, tell me how much it is. You can use the M plus or GT or whatever you want. How much? A normal calculation. How many minutes you want? First one is 450. 1845. Carrying how many units you are carrying? 10 units at the rate of 150, which will come to 1500. Total is 3000. Done. Yes. Now, if at all you keep 0 as a safety stock, when you get an order for 10 units, how many units you can satisfy? 0 units, which means whole 10 also will be stock out only. And what is the possibility of that? 0.3 into. Next, if you get 20 orders, what is the probability of that? If you get 50 orders, then if you get 80 orders, then point into 150. If you get 100 orders, point. What is the total? 2700. And how much you will be carrying? 0 units. Correct? So, out of all these, which is better? Carrying 20 units extra is better. Hey, where is 1690? Something we have missed, no? Huh? Huh? 60 units we left. So 60 units is there. No.
So for 80 units,
If we keep 20 units, then if we get an order for 50 units, we can't satisfy. What is this thing 0.1 now? If we get an order for 80 units, we can't, which means 60. If we get a order for 100, we can't satisfy to the extent of 80. Probability of that coming is 0.02. How much it is? Thousand? 1? And 20 units you are carrying at the rate of 50,000. 2140. So out of this, which is least? Maintaining 20 units as a stock is the least. This question is, but I don't know, they will struggle too much. You guys understood now what we did? Because here the safety stock means we should not consider that. Right now we are keeping 0. Always remember, their question what they are telling, you are keeping sufficient number of stock. Which means, let's say you are keeping 10 units already. Which means over and about 10, how many units to be kept? That's what the question is all about. Fine. Tenth one you leave. 11th one you see, they're asking about inventory turnover. How much is the cost of material consumed? Opening stock plus purchases minus closing. $56,000 and 9,000 plus 27,000, 36,000, 25,000. Average inventory is how much, sir? 10,000 plus 6,000, 16,000, 8,000, 9,000 plus 11,000, 20,000. Clear? So what you should do, sir? 56,000 divided by 8,000. 7 times. 25,000 divided by 10,000. Which is fast moving. A is fast moving compared to B. You can write it by calculating it in terms of days also. How many days inventory has been held. Okay. Now we are straight away will jump into stores ledger thing. That also I will show with one example there. We'll do one thing. We'll take a break of 5 minutes and we'll continue. Okay. Stores ledger is important. We'll take a break of 5 minutes and we'll continue. So now listen. Quickly, we'll look into few decision making question, and for this I will take one simple question and I will show you. Listen here. Some this thing illustration 14, so many things they have given, just ignore. Now listen. Opening stock was 6,000 at 285. September 14 issued so much at what rate, sir? Guys, if it's a FIFO, we are going to check what is the first purchase price. At that only we are going to issue. If it's a LIFO, what is the last purchase price? At that we are going to issue. If it's average, simple average, guys, one thing you have to remember. We'll take the average of prices. Average of prices divided by number of prices. We'll get the price now, at that we will issue. But in simple average, one thing you have to keep in mind, that is whenever you issue at some price, you are going to assume whatever was there in the beginning, no, that has been gone out. Whatever was there in the beginning, that is gone out. First we are going to issue it out of that one. I will show you better. Actually in our material there are no such questions, but in ICMA material there is one question. Okay, I will just show it using that material, so it will be easy for you guys to understand. Shall I? See here, simple average what we are going to do. First, purchased 100 units at the rate of 10 rupees. Next, purchased 200 units at the rate of 10.2. Now, issued 250 units. At what price we are going to issue, sir? We are going to issue it at an average price. 10 plus 10.2. 20.2 divided by 2. 10.1. We are going to issue this 250 at what price, sir? 10.1. Done. So see here. First on only, next onwards you should keep on adding. Unit column should not be there in the balance column. So 100 units, 10 rupees, 1000. Then again 200 units we purchased at the rate of 10.2, which will come to around 2040. Total became 30440. Now out of 300, we issued 250 units. 50 units are remaining. 250 units we issued at 2525. Out of 3040, if you reduce 2525, you will be left with 515. Now listen very carefully. Next, we purchased 200 units at 10.5. We purchased 300 units at 10.8. So it became total 550 units at 5855. Next, we issued 200 units. For this, we have to check no. What are the prices to be considered? Guys, here in simple average, along with the simple average, you should keep FIFO also in mind. What do you mean by that, sir? Guys, 100 units were there, 200 units, total became 300. In the 250 we issued. Here what we will assume is, when we issued the 250, whatever that 100 was there, completely gone. The 50 is there, no? That is out of the 200 units. So for here, for average prices, I'm going to consider only that price, that is 10.2 plus 10.5 plus 10.8, 20.7, 31.5, correct? 31.5 divided by 3. We are going to issue it at 10.5. Clear? Next, again 200 issue is there. Here again you should use your brain. Come on. Anyhow, first stock was gone. In the next stock 50 was there. Again we issued 200 there. In that 50 also gone. Next, we purchased 200 units, which means in that 150 was gone, other 50 was remaining, no. So that 50 is there. So that 10.5 will be there in the observation, 10.8 will be there in the observation, which is 21.3 divided by 2, 10.65. So we are going to issue it at 10.65, and again we purchased 100 units at the rate of 11. Now 150 units we are issuing. Now listen, 150 units were there in that 50 was there here. So 50 we gave, 150 gone here. 50 was there, in that 50 gone in this. That 300 what we bought at 10.8, in that 150 was remaining. So now 10.8 plus 11 divided by 2. So we are going to issue at 10.9. This is how your simple average works. So in simple average, you should always keep in mind even your FIFO is going to play a role. Okay, that is how your simple average works. FIFO and all, how it works, sir. See, this weighted average, how it works, sir. Basically, we take the units and we take the average. How we are going to take the average for issue, sir? Anyhow, first one, whether it's FIFO, LIFO, weighted average, simple average, only one stock is there, means issue also will happen at that only. However, after that, whenever you purchase, you keep on finding out the prices, average prices. What you should do? Value divided by units. You will get the price. At that you are going to do it under weighted average. If you go for FIFO, whichever came first, that will go first. For example, here if you use FIFO, 6,000 was there. In that 4875 gone. 17,500 came. In this 12,000, what you are going to do? 1125 will issue from the stock of 285. Remaining you will issue from the stock of 276. Like that. If it's a LIFO, then 12,000 will be issued from the stock of 17,500 first. Later you are going to go for the previous stock. That is your LIFO method. I am not going to explain much about those things. I assume you guys know. And if it's a normal loss, only unit column it will come. Amount column nothing will come. Abnormal loss, same it will be. It will be treated as normal issue only. Okay. And in this thing, that's what you have to consider. If a rusting and all is there, that they are treating it as a normal loss only. So keep it as a normal loss. Treat it as a normal loss. And here, whenever the return is there from the production department, they are treating it under second method. That is, take it as a recent stock, issue it first. I think last practical problem, they are using that method if you see. Okay, done. Now we'll see few decision making questions which are very important. Listen, I will show one decision making question, this one, and I told you, no, in the case study they have given one more nice question, and one more in the RTP they have given one more question, that is how many percentage of discount should be accepted. Now listen, how much percentage of discount should be accepted, that I will show in this question only. Fine, no? Now listen, first, very important question, concentrate. A company manufactures a special product which requires a component alpha. The following particulars are collected for the year 22-23. Annual demand is 8,000. Cost of placing an order is 200 per order. Cost per unit is 400. Carrying cost is 20, which means carrying cost per unit per annum is rupees 80. Correct? Carrying cost per unit per annum is rupees 80. The company has been offered a quantity discount of 4% on the purchase of alpha provided order size is 4000 components at a time. You are required to compute the EOQ, state whether quantity discount should be accepted. Okay, for this question I'm adding one more question. If the quantity discount is not accepted, how much quantity discount minimum you expect so that quantity discount can be accepted? Okay, that we'll see later. Second part we'll see later. First we will do this one. Go through the question. We'll start. I'm giving you 30 seconds. Go through the question. Read the question. Very important. Guys, in examination, that first 15 minutes, how you read the question, that plays a very important role. So please spend a good amount of time on reading the question. Make the habit of reading the question. Okay. Listen. First they're asking about EOQ. Square root of 2 into A is how much, sir? 8000. O is how much? 200. Carrying cost is how much? May I know the EOQ, please? 200 units. So number of orders to be placed is 8000 divided by 200. 40 orders. Now I am going to compute the total cost at EOQ level at a discount level. Shall I? First, this is EOQ. This is discount proposal. Now, EOQ, how many units it is? 200. At discount proposal, what they are telling? 4000 units. Annual requirement is how much? 8000 units. Now, purchase price. Guys, how many units we are purchasing? 8000 units we are purchasing. We are calculating cost per annum. So 8000 units we are purchasing. First, at EOQ, are we getting any discount? No. Which means at EOQ we are spending 400 rupees per unit only. 8000 into 400. May I know how much it is, please? Sorry, 32 lakhs. Correct? However, our supplier is ready to give us a discount of how much? Discount of 4%. So now 400 minus 4%, 384. 8000 into 384, 30 lakh. So purchase price wise, it is so obvious that whatever our supplier is telling is absolutely fine. We are saving in that. However, ordering cost. In EOQ, number of orders we are going to place is 8000 divided by 200. 40 orders at the rate of how much per order? 200. 40 into 200. Ordering cost here is 8000. But when it comes to discount, 2 orders only we are placing at the rate of 200, which will come to just 400. Wow, even in terms of ordering cost also the supplier's proposal is better. Now we'll do the carrying cost. Half of order size, that is half of 200 into carrying cost per unit per annum, 400 into 20%, no, or 2%, 20%, 80. So half of 200 into 80, 8,000, correct? Now for the next one it is half of 4,000 into not 80, guys. Why? Because the price is just 384. 384 into 20% will come to 76.8. 76.8. How much it is? 1 lakh. Oh my god, look at the difference there. Now tell me the total here. Sorry? 32 lakh 16,000. 32 lakh 26,000. So which one will you accept? EOQ. We are not going to accept the discount given by our supplier. Okay, sir. Supplier will be like, fine. You tell me how much discount you want me to give you. I will give that much only. Now, it's our choice. Now listen. Minimum how much you will ask? Try to understand this point. Minimum you are going to ask, boss thing. If I am going to buy at EOQ, my cost is just 32 lakh 16,000. If I buy at your price, it is 32 lakh 26,000. I am not ready to pay even 1 rupee extra than EOQ. So maximum total cost I am ready to pay is less than EOQ, or maximum is EOQ, so that our relationship will be good. So instead of EOQ, I will go for quantity discount, which means now we should check at what price our total cost will be equal to or less than EOQ. Okay. So how to check that, sir? Very simple, guys. What is the total cost formula? Ordering cost plus purchase price plus ordering cost plus carrying cost will give you, nice. Now, how much is your purchase price? Purchase price we don't know, but one thing we know, we want to buy 8,000 units. We want to buy 8,000 units. Do you know the price? Can I take it as your X, sir? Yes, done. Plus ordering cost. Number of orders to be placed is 2 and ordering cost per order is 200. That is so obvious and we know about it. Because he is telling 4,000. Plus carrying cost is the thing here. Half of order size 4,000. Half of 4,000. Order size is 4,000 no. Into carrying cost. Hey, do you know the carrying cost per unit per annum? You don't know. That is nothing but X into 0.2. 20% of price. That should give you the answer as 32 lakh 16,000. That is total cost as per EOQ. Maximum I am going to accept is this much price, not more than that. In fact, if they give less than that also, we will be okay. I mean, we'll be happy. More than that though, we know. At least so much discount you should give. Now, 8,000x plus 400 plus half of 4,000 is 2,000. 2,000 into 0.2x. That is 400x plus 400x is equal to 32 lakh 16,000. Now 7,600x is equal to 32,15,600. This 400 will go that side. That's it. X is how much, guys? 423.105. After decimals, you should never tell it as full numbers. You should tell it digit wise. Now, this is what the new price I am expecting. We got how much? Oh, sorry, 8,000. Yeah, not reduced. 8,400. How much it is? 382.8095. Can I write it as 81? 81. Which means new price I am expecting is less than or equal to 382.81. Which means how much discount I am expecting? 17.19 rupees is what I am expecting in terms of discount out of 400 rupees, which is basically into 100.
4.30.
Our supplier should give at least 4.3% discount. Less than this, though, we are not going to accept at all. If he gives 4.3, we will think. If he gives more than that, then we will go. So this is one of the important question from the examination point of view. 4.5 or 4.3. So if at all our supplier gives 4.3, we will think of it. More than 4.3, yes. Less than 4.3, surely we are not going for that plan. Hope this thing you understood. One of the important point in terms of examination. There is one last important point in terms of examination is left. That is when the goods are perishable in nature. When the goods are perishable in nature, that time how to compute the maximum stock level, how to compute the total cost and all that we are going to see. That is given as your case study over here. Case scenario question. Okay, this was there in the RTP. Now they made it as a case scenario question. We'll solve this, and with that our material costing revision will get over. Then will be shall we? Yes, listen please. The purchase committee of A Limited has been entrusted to review the material procurement policy of the company. The chief marketing manager has appraised that the committee that the company at present produces a single product X by using raw material A and B in the ratio of 3:2. So to produce, let's say, if at all it takes 10 kg of raw material, then 6 kg of the A will be used, 4 kg of B will be used. Material A is perishable in nature, whereas to be used within 10 days from the goods receipt note. That is, in 10 days it will get spoiled. Otherwise, material becomes obsolete. Material B is durable in the nature and can be used after 1 year also. That's fine. Then that is durable in nature. It is not perishable in nature. That is normal material. Material A is purchased from the local market within 1 to 2 days of placing the order. That is, minimum reorder time is 1, maximum reorder time is 2. Material B, on the other hand, is purchased from the neighboring state and it takes 2 to 4 days to receive the materials in stores. Purchase price per kg of raw material A and B is 30 and 44 respectively, exclusive of taxes, which means tax is not added to that. To place the order, company has to incur administrative cost of 1200, that is your ordering cost. Carrying cost of material A is 15% and carrying cost of material B is 5%. At present, material A is purchased in a lot of 15,000 kgs to avail 10% discount on market price. So, right now we are buying it at a lot of 15,000 to avail a discount of 10%. GST applicable for both the material is 18%, ITC is available, so that is of no use at all. Exclusive of tax price only we should take. The sales department has provided an estimate that company could sell 30,000 kgs in January and also projected the same trend for the entire year. So annually we will be able to sell 3,60,000 kgs. The ratio of input and output is 5:3. Company works for 25 days in a month and production is carried out evenly. The following queries or calculation are kept that you leave. Generally, we'll see what are the few things here. We'll calculate the few levels and all. Here I told no. Here there is no minimum stock level, minimum consumption, maximum consumption, average consumption. So whatever the formula is required for everything, whatever is given, average consumption itself is a minimum consumption, maximum consumption. First, guys, first we'll understand how much raw material we are consuming. Now, how much we are going to sell during the year? 3,60,000 in a year. Correct? This is output. What they are telling, output input ratio 3:5. Output input ratio. Input output is 5:3, which means if you put a 5 kg of raw material, you will get a 3 kg of finished goods. If you are getting 360, which means 3 means 360,000. Correct? 5 means question mark, cross multiplication. 6 lakh. So you are going to input 6 lakh kg of raw material. And we know that in this 6 lakh kg of raw material, how much is A, how much is B? A and B in the ratio of 3:2 na. So divide by 5. 1,20,000. 3,60,000, 4,20,000, 2,40,000. Correct? 3,60,000, 2,40,000. How many days in a year? Guys, 25 days in a month? 12 months. 300 days. How much is the average consumption? Average consumption of A will be 360 divided by 300. 360,000 divided by 300. Per day. 1,200 kgs and 2,40,000 divided by 300. 800 kgs. Correct? This is my day-to-day requirement. Now, maximum stock level I will find out. Minimum reorder and all you know. Correct? Maximum shall we find out? For B it is very simple. Maximum stock level formula, sir. Reorder level, that is, we don't know reorder level, we have to find out. Shall we find out reorder level for both? Maximum into maximum. For A, maximum consumption per day 1,200. For B, 800. I told you know, if the nothing is there as maximum minimum, then it is same. So 1,200 into maximum reorder time for A is 2 days. Correct? For B is 4 days. 2,400, 3,000, 2,400, 3,200. Correct? Maximum stock level of B will be how much, sir? Very simple, guys. Reorder level 3,200 plus reorder quantity. Do you know the reorder quantity for B? You don't know the reorder quantity. Whenever in question reorder quantity is not there, there you should use EOQ. Whenever the reorder quantity is not there, then EOQ will be the ROQ. Now EOQ of B will be how much, sir? 2 into annual consumption is 2,40,000 divided by administration cost is 1,200, that is ordering cost, divided by carrying cost is how much, sir? Carrying cost is 5%. Rupees, how much is the value for B? 44, no? 44 into 5%. Okay, 44 into 5%. 2.2. How much is the EOQ? 16,180 kgs. 181 kgs. Minus minimum consumption, as I already told you, maximum itself will be the minimum, that is 800 into minimum lead time is 2 days. 2 days. How much will be the maximum stock level of B? Sorry, 17,781 kgs. This is the maximum stock level of B. Now the fun starts when you are trying to calculate the maximum stock level of A. Listen. First, what is the reorder level of A? First, we'll use the formula. Sorry, we calculated, no, here 2,000. Reorder level of A is 2,400. Reorder quantity, they are telling we are availing discount and we are reordering at 15,000 minus minimum consumption 1,200. Minimum reorder period 1. How much? 16. 200 kgs. This is maximum I can keep. My godown will allow to keep so much. But am I an idiot? No. Which means I will think wisely. What will think wisely, sir? Guys, whatever goods you purchase, end of the day I can use it only for 10 days. After that it's a spoilage. Let's say in your home, 4 of you are there. You buy one ice cream. Let's say, have you heard of natural ice cream? Naturals. There is one flavor called tender coconut flavor. Very famous. But the best part about that ice cream is shelf life is very less. Let's say 1 week. Now, whenever I go to that side, like that is from the coastal regions of Karnataka, whenever I go to that side, I will buy the natural ice cream. Sometimes it will be buy 2 get 4 at all, or buy 1 get 1. In my home, 5 of us are there. Now, I know that in a week, we can be able to empty 2 family pack of ice creams in a week. They are telling, boss, if you buy 2, you can get 2 free. Okay. Or if you buy 3, you will get 3 free. 6 packs you will get. am I going to buy 3 or am I going to buy only 2? Why? Because if I, by looking at the offer, if I buy also, sir, other 4-pack will be waste. We can't eat. Same way, that doesn't mean that my refrigerator don't have space. My refrigerator has space. But that is perishable in nature. So same applies here. Although my godown has a 16,200 kgs of capacity, guys, in 10 days, max to max, how much I can consume? 2,400 per day. And how much is perishable in nature? Perishable, this thing, 10 days, right? So per day I can consume how much? Sorry, per day is not, per day is 1,200. Per day I can consume. In 10 days, max to max, how much I can consume? 12,000. Now tell me, I'm going to keep 12,000 units or 16,200 units? So whenever it's perishable in nature, you should always and always remember this point. Maximum is not only what you get by applying a formula. You should check whichever is lower. Whichever is lower. Got it? Now, sir, they are asking whether it is better to go for EOQ or whether it is better to go for discount. Let's see. How much is our EOQ? First calculate that. No, that only we didn't calculate. What EOQ we are doing? 2 into annual requirement is how much, guys? 3,60,000 into ordering cost is 1,200 divided by C is how much? 2 point. How you got 2.2? Calculated. Very good. How did you calculate? 30 rupees into A is 30 rupees. See, this is what I told. In examination, you will do this mistake. 30 into 15%. How much? 4 point. How much it is? Sorry? 13,856 kgs. Correct? This is my EOQ. Now, if I go for EOQ and if I go for quantity discount, shall we see? First, number of units. Number of units. Tell me, how many units to be purchased? We calculated here, no? 3,60,000 units we have to purchase. Correct? But this is the speciality of this question. It won't be 3,60,000. What the hell are you talking, sir? Listen. My order size is how much? 15,000. One more is 13,856. Hey, after 12,000 you buy whatever you want. Maximum you can use is 12,000, which means in a year how many orders I should place? 3,60,000 divided by 12,000. Have to place 30 orders, irrespective of the order size. If at all my EOQ was 10,000, then I would have told 360 divided by 10,000. Straight away I would have told, because there would be no wastage. But here in this question, there is a wastage, which means you should check whether maximum level is more or your EOQ is more. If your EOQ is more, max to max you can consume per order is 12,000. Yeah, you buy 13,000, that's not a problem. But maximum how much you can consume? 12,000. Which means if you can consume 12,000 out of 3,60,000, if you consume 12,000 only per order, how many orders to be placed? 30 orders. Either you go for 15,000 or either you go for 13,856. So in case of EOQ, we are placing 30 orders. of rupees 13,000 of 13,856 units. How many units we are purchasing here? 4,15,680 kgs into rupees 15, no? 15 or 30? 30 into 13 for UOQ. Correct? So try to understand number of units purchased in UOQ is 4,15,680 units. Keep that thing in mind. Sir, what about quantity discount, sir? Quantity discount also we should place 30 orders only. Got it? 30 into 15,000 per order, 4 lakh. 4,50,000 kgs is what we should place the order for. Now, this is the important factor here. Whenever it's perishable in nature, keep this thing in mind. Clear? Purchase price 4,15,680 into 30. 70,400. In case of quantity discount, price won't be 30. Why? Our supplier is offering us a discount of 10%. It will be 27 rupees. How much is 27 into 4,50,000? 1 crore 21 lakh 50,000. Clear? Done. This is your purchase price. Next is your ordering cost. Number of orders placed in both is 330 only. So 30 into 1,200, 30 into 1,200. And this is your ordering cost. Carrying cost will be, guys, half of the order size into carrying cost per unit per annum. Before that, tell me the carrying cost in both the cases. In first case, carrying cost will be 30 into 15%. 4.5 rupees 4.5, correct? In case of second case, the price itself is not 30. Why? He is giving us a discount of 10%. 27 into 15%. 4. Now, how much is half of 13,856 into 4.5? 31,176. This is my carrying cost. Correct? Done. Next is, how much is half of 15,000 into 4.05? 30,375. May know the total cost, please.
1,25,37,570.
And 370. What's the difference?
3,21,201.
Not. Are we going to save this, or are we going to spend extra if you go for EOQ? We are going to spend extra. Why, sir? Because the quantity discount, our total cost is 122 lakhs 16,375. Whereas if you go for EOQ, it is 125 lakhs, which means 3,21,201 we will be spending extra. So loss of 321,201. So if at all they give this in a descriptive question, this is how you should solve it. So here few things we have learned in this question, special question. What is it? 1, maximum stock level. You should compare both. That is as per perishable in nature, how much is maximum we can use in that period, and normal formula how much, whichever is lower that we will take. Next, we computed EOQ. After EOQ, when computing the total cost, number of orders to be placed is not depending upon your size of the order. In fact, it will be based on how much you are going to use based on that. Because if at all you take 360,000 divided by 13,856, you can't use that 360,000 at all, because for each and every order 1,856 is wastage. Got it? So that's how you are going to do it. Hope it's clear. Yes, with that we have completed our material costing. Hope it is clear. Clear? Fine. We'll start with employee cost, or we'll take a break and we'll start with employee cost. Lunch break. Break means lunch break, proper lunch break. Lunch break means not more than 40 minutes, of course. What shall we do? Okay, fine. We'll take a lunch break of 40 minutes and we'll start with labor cost. So today's our target is labor cost from 145 to max till 3. It will be labor cost, because much different things are not there in that. And 3 to 315 to 5 will do overheads as well as ABC, because there the chapter is big but concept wise nothing is there. Yes. Then 515 to 6 we are going for cost accounting system. 615 onwards till our batch unit job ends, we'll be taking the class. Okay, we'll make sure not more than 8, because 2 days if you spend extra time nothing will happen, because it's going to give you one or the other result. Efforts will never go off waste. Yes. Now we'll be starting with employee cost and direct expenses. Okay. Sir, what do you mean by employee cost? Means cost is nothing, whatever the cost of benefit given to our employees, everything is treated as a employee cost. So it could be direct employee cost, indirect employee cost. What do you mean by direct employee cost, sir? Cost which can be traced in the final product or attributable to the final product, that we will call it as direct employee cost. If it is not, it will be indirect employee cost. Sir, in controlling the employee cost, whatever the departments will be involved, sir, or what are the departments will be involved? Personnel department, there is nothing but a HR department, because they should hire the right person at the right cost. Okay. And engineering and work study department, they are the one who is going to tell how much hours the employee should work and how many hours they should take to do this particular work. Timekeeping department, they are the one who is going to keep the time, that is at what time employees came in, at what time employees went out. Payroll department, they are the one who is going to calculate and tell how much is the cost of that particular employee in that particular period, that is how much we should pay to that particular employee. And cost accounting department is the department which accounts for all these aspects. Sir, employee cost control by keeping what are the use, sir? One is employees productivity, that is if you keep a control over employees, they will be working properly, otherwise they will work at their own pace, work at their own things. So employee productivity is there. Control of idle time, that is idle time means what, guys? Idle time is the hours paid where they didn't work. Try to understand. Hours paid but they didn't work, that is idle time. We didn't pay, they didn't work, that is not idle time. Try to understand. For example, ArivuPro people paid me for 8 hours, let's say. Now I am working for 14 hours, let's say. Sorry, 7 hours, let's say. Now 1 hour is idle time. For the remaining 16 hours in my day, are they paying? No. Which means that 16 hours which I don't work won't be considered as idle time. So, basic condition for idle time is, boss, that should have been paid. If you are paid, then it will be treated as idle time. Otherwise, no. Idle time could be normal idle time, abnormal idle time. Normal idle time means which you cannot avoid. For example, lunch break. Your employees, can you ask them work for continuous 8 hours, no lunch break? No break in between? No. Few necessary breaks should be given. No. Now that is normal idle time. Abnormal idle time means, let's say my employees strike, it could be, or my material got over. I didn't have the control over my material, so my material got over. So no production. No production means for them we have to pay, no choice. But they are not working. All these are abnormal idle time. So normal idle time should be treated as a normal cost. Abnormal idle time should be treated as abnormal cost. What do you mean by that? Normal idle time should be forming part of the good units, cost of good units. That is, you should divide it by the effective hours. If the employee worked for 8 hours, paid for 8 hours, in that 7 hours they are working, 1 hour is a normal idle time. Then whatever you are paying, let's say 800 you are paying. Now 800 divided by 7 hours. Per hour how much? We should calculate like that. If they work for only 6.5 hours, where 1 hour is normal idle time, 0.5 is abnormal idle time, then you should divide by 7. 0.5 related will go to costing P&L. 1 anyhow it got adjusted to all the good units. Got it? And assessment of manpower requirement, that is when you have control, then only we'll get to know for that particular work how many hours of human resource is required. To keep control over timekeeping and time booking. That is, timekeeping means what, guys? Recording at what time employees came, at what time employees went. That is time keeping. Time booking means, for example, I came at morning 8. I left at evening 8, let's say. Now 12 hours it is. They record Rastrith came at morning 8, Rastrith left at evening 8. Now this is time keeping. In that 12 hours, he took break of 2 hours. In the 10 hours, he gave 1 hour for cost sheet, he gave 2 hours for material costing, he gave 1 hour for theory. Like that division will be there, no? That is your time booking. That is booking the employees' hours to that particular job. That is your time booking. And time and motion study is about how many minutes you should take for how many products. They decide and tell, no? That is your time and motion study. Motion means movement. For example, there is my raw material. I am producing here. Me going till there, bringing it till here and again working, that takes a lot of time. So somewhere I should keep raw material here. So here I can take immediately and I can do it. So now this is motion study. And control over overtime. Because overtime will be paid extra hours, extra. So when they paid extra, so generally people might tend to work, don't work in the normal hours. Whatever work is there, that you complete in the overtime. That could be controlled. And control over employee turnover. Employee turnover means that is change in the proposition of employees or composition of employees. Either new employees coming in, that is also turnover. Employees leaving, that is also turnover. Generally we treat it as employee turnover means employees leaving the organization. Change in the employees composition. That is your employee turnover. Okay. Sir, what are the different methods of timekeeping? Sir, manual method and automated method. Manual method means what, guys? Attendance register method, metal disk or token method. Whereas automated method means punch card and biometric. Attendance register means what, sir? When employees comes, like school, we are going to tick their attendance, they are going to sign and go. Metal disk means what? You will be given a disk like CD kind of thing or a metal this thing, where whenever you come on time, you will put it in a box or you will give it to your time keeper and he will go. He will record at what time you came. Now when going, you are going to take it and go. At what time you left, that also could be known. Now this is your metal disc method. Whereas punch card is, you will be given a card. If you punch it, I mean punch in the sense, scan it. That is punch card. And biometric means by the physical behavioral traits. That is either retina scanner it could be, or thumb impression it could be, whatever it is. Now, how the payroll procedure will work, sir? First, timekeeping department will send a information about how many hours that particular employee has worked to the payroll department. And at the same time, from HR department, they will send a information about that employee. How much is the salary of that employee? I mean, general salary. Normally, if you work for so many days, how much is the salary of that particular employee? And what is their account number? All those details they will give. And that is payroll department. Now they will process how much should be paid, and they will send the information to cost accounting department. Cost accounting department, what they will do, sir? They will divide it. That is deductions, whatever to be done and paid to government, they will deduct it. Remaining things, whatever after salary, they will give it to employees. Whatever deductions are there, that they will give it to particular departments like PF, PSI, TDS, professional tax, voluntary contribution to PF, contribution to any benevolent fund, advance, etc. But here you should remember one thing. Guys, if they ask you to compute employee cost, you should think from the company point of view. Net, how much is going from the hand? For example, 80,000 you are paying to employees, 20,000 is employer's contribution. Now for a company, cost is how much? 1 lakh. For employees, earnings is how much? Not even 80,000, guys. Anyhow, this won't come to employees immediately. However, in this 80,000 also, 10,000 is employees contribution, which means earnings calculation, you should calculate in hand salary of employee, 70,000. That is how much employer is giving, excluding your EPF, PF and all, PF, PSI and all, minus how much as an employee I am contributing. That also should be reduced. That is your earnings. Whereas cost means company point of view, earnings means employee point of view. Now, idle time could be 2. That is time where no production is carried out but it is paid for. Now, normal idle time, abnormal idle time. Normal idle time means idle time which cannot be avoided in the normal course of the business. In that situation, added to the cost of production. Just treat it like a normal hours. So reduce that to arrive at effective hours. Just like that normal loss, abnormal loss, goods treatment, ditto. Whereas abnormal idle time is idle time which is not normal idle time. That will be charged to costing P&L. Guys, what do you mean by overtime? Hours worked over and above the normal hours. And overtime premium includes normal wages plus overtime payment includes normal wages plus premium. Overtime premium. Normal wages and overtime premium. Always remember, overtime payment is different, overtime premium is different. Premium means what you get extra over normal rate. Overtime payment means normal rate plus premium. Sir, how to treat overtime premium? See, normal hours we are going to charge it to the job, no doubt in that. But if the generally overtime is there, how to treat that premium? How to treat that premium? Should we treat it as what cost? Guys, for that you should see the reasons. Based on that, you should provide the treatment. What do you mean by that, sir? If the customer wants it, that's why you are paying a overtime premium. Then straight away we are going to charge that overtime premium completely to that particular job itself, that particular customer's job itself, you are going to charge the overtime premium. What do you mean by this? Let's say our customer is there. He asked, boss, do I give this work in 7 days? We are like, no, sir. Normally, if they work for 10 days, we can complete it. He's like, do one thing, ask them to work extra hours. In 7 days, you complete and give. Now, when we complete and give in 7 days, we are not going to treat that overtime premium as our normal cost. We are going to treat it as that cost relating to that particular job itself. That is, it shall be directly charged to that particular job. Sir, overtime is required as normal course of business or for meeting urgent orders. That is, for example, seasonal business. Yours is a school bag business. When the business will pick up? In the month of May. Generally, we'll be producing, let's say, 1 lakh bags. Now, for the May and June, 2 months, you have to produce 150,000, 150,000. For that, what you ask them to work for extra hours. Sir, take one employee. No, for 2 months, what one employee you can take? Correct? For 2 months, normally whoever is there, for them only will pay more and will get the work done. Because for the remaining 10 months, it will be normal only. Only for these 2 months, it is more. So now, I'm not hiring a new one. I'm making them work as a normal only. That is, it is due to normal course of the business to meet the urgent orders. In that scenario, overtime premium should be treated as a overheads. In that scenario, overtime premium should be treated as overheads. Sir, if the overtime is work due to fault of another department, then guys, don't take it as your cost, charge it to another department. It's not, you are working overtime not because, for example, you are working overtime because the material was not available. Normal hours, material was not available, it came late. So now our employees are working late to meet the requirement. Now whose mistake it is? Purchase department's mistake. I am going to charge it to purchase department. I am going to charge it to purchase department. If the overtime is work due to abnormal condition like flood, earthquake, etc., that you straight away charge it to costing P&L. If at all it is abnormal in nature, like natural calamities and all is there, fire and all, in that scenario, you just charge it to costing P&L. And if overtime required regularly because of the worker shortage, it's not something like I'm not trying to find a workers. I am trying to find a workers. I'm trying a lot to find a workers. However, I'm not able to find a workers. Because of which I'm making them work. So it has become a normal course of my business. So I'm not going to treat it as overtime also. I'm not going to charge it to particular job also. I'm not going to treat it for a different responsible department also. Instead, I'm going to treat it as a normal wages, and for all the job, I'm going to charge it at inflated rate. Charge it at inflated rate. On that basis, there is one illustration. We are going to see into that, look into that illustration. Clear? Okay. Sir, what are the different methods of payment of the wage, sir? You can pay on a time based. That is, how many hours you work, hourly how much. Output based, how many units you produce, per unit how much. Combination of time and output, that is giving a guarantee and all. Premium bonus method, that is there are few premium bonus methods were there earlier. Now it is only Halsey and Rowan. That's what there in our syllabus. And group bonus scheme, here where you can't trace it for a particular individual. As a team you can, then for them as a group we have to pay. Whereas incentive for indirect workers. For example, one work is there. 4 of you should work together. Then only work will get over. Now, you guys work very fast. Now I have to give you guys bonus. No. To whom I should give bonus? 4 of you, that is group bonus scheme. Whereas indirect workers, so you can't trace it with the final product. For them, either the share in the profit or something like that you have to give. That is incentive for indirect workers. Got it? Now, premium method, guys, you got 2. Halsey method, Rowan method. Halsey method, Rowan method. Halsey method means what, sir? time taken into hourly rate plus half of the time saved into hourly rate. Guys, try to understand. What Halsey is telling, boss, whatever the time they are saving, no? For example, 8 hours work it is. If I want to motivate you guys to complete it less than 8 hours, then of course, I should give you something, no? Otherwise, why will you complete? 8 hours work, if I want you guys to complete in 6 hours, 2 hours earlier, that is your efficiency should be more than 100%. Why you will work more than 100% efficiency? Because you should get something. Now, what it tells is, generally for 6 hours, whatever you are paying, you pay. Plus, half of the 2 hours, whatever is saving, cost, that you pay. Sir, we are saving 2 hours, no sir, whole 2 hours, give it to us only. Hey, 2 hours you are able to make it faster, that's not only because of your efforts. Might be machines are good, might be organization is good, organization condition is good, which means what Halsey is telling is, boss, half is your share, half is their share. In the savings, half is your share, other half is their shares, that is employee shares. Sir, you tell me, sir, per hour 100 rupees you are paying, correct? 8 hours if I work, I would have got 800. Now I am working for only 6 hours. How much I will get? 600 plus half of 200. Saved amount. 100, 700. Which is better? 800. If I work for 8 hours with the same job, I will get 800. If I complete the same work in 6 hours, then how much I will get? 6 into 100, 600 plus half of 200, 100, 700. You tell me, are you motivated to do more? Guys, that means if you work for 6 hours, that doesn't mean that other 2 hours you will sit idle. You will be working on other job. So anyhow, the 2 hours you will get paid in other job. Along with that 100 rupees extra you are getting. 8 hours you work, 800 plus half of 200. You will get 900 instead of 800. So that will motivate you. Now, sir, time allowed, you are telling no sir, 8 hours. How did you arrive at it? Guys, always remember, time allowed should be standard time for the actual output. For example, 10 units I am producing, or 10 units I am allowing 1 hour. Now we have produced 100 units in 8 hours. Now my question is, how much is standard hour? Can I take it as only 1 hour? The answer is no. Why? 1 hour is standard for standard. I want standard for actual, which means for 10 units it is 1 hour, for 100 units question mark, 10 hours, which means standard time allowed was 10 hours, but they worked in just 8 hours. 2 hours is the time saved. So always remember, time allowed means it is standard for actual output, not standard for standard, standard for actual output. This is Halsey. But the problem is what in Halsey, the more and more the time you save, the more and more benefit it is. If you work for only 1 hour, that 8 hours job, if you complete it in 1 hour, 8 hours job, if you complete it in 1 hour, that 7 hours bonus you will get. 350 rupees you will get. So automatically employees are motivated towards it. If the employees are motivated towards it, 8 hours job, can you imagine completing in 1 hour? If you complete in 1 hour, how worst it should be? Quality will get affected, yes or no? That's the reason Rowan came up with new formula. See, basic pay is time taken into hourly rate, no doubt in that. But premium when you pay, no, just try to give a link between hours saved as well as hours worked. Don't consider only hours saved like Halsey. Consider hours saved and hours worked. That is time saved divided by time allowed. You will get to know how much extra efficient you are into time taken into hourly rate. Here what happens, up to 50%, this will go in high. See, Halsey's will be going like this only. Halsey's will be going like this only. Rowan's what happens, of course, till half it goes more than Halsey. Okay. However, after that it starts declining. After half it starts declining. This is row 1. So automatically any employee will be motivated to save only 4 hours out of 8 hours allowed, not more than that. If they do for more than 8 hours, sorry, more than 4 hours, if they save time for more than 50% of time allowed, then automatically they will lose their bonus, because the bonus will start falling. For example, we'll take one example. Okay, we'll take one example. Hours allowed 10 hours. Okay, hours worked, hours work. One, let's take less than 50%, let's take 8 hours. One will take exactly 50%, let's say 5 hours. Next one, let's say hours saved is more than 50%, so it is 3 hours. Now will hourly rate rupees 100 will take. Now Halsey and Rowan, shall we check? Halsey, Rowan. Halsey for the first one, that is how many hours worked? Sorry, 8 hours at the rate of plus half of hours saved 2 into 100. Whereas Rowan it is 8 into 100 plus hours saved 2, correct? Hours allowed 10 into hours worked into hourly rate. How much in Halsey, how much in Rowan? First case. Halsey 900, Rowan? So when the efficiency is like, or time saving is less than 50% of the time allowed, who is giving, or which earning is more? Under which earnings are more? Rowan earnings are more. What if it's 50-50, sir? 5 into 100, 500 plus half of 500 is 250. 750 under Halsey. Correct? 5 into 100 plus half of time saved is 5 only into 100, 750. Correct? If you go to Rowan 5 into 100, 500 plus, instead of half we are taking 5 by 10, that's it, because hours saved is 5, hours allowed was 10 into 5, 7. So always remember one thing, at a 50% of time savings, Halsey and Rowan will give you same answer. Halsey and Rowan will give you same answer. Now, what if your time savings are more than 50%? That is, first case, 3 hours into rupees 100 plus half of time saved is 7 hours into 100. 300 plus 350, 650. Correct? 3 hours into 100 plus time saved is 7 hours out of 10 hours into time worked is 3 hours into hourly rate is 100 rupees. Now tell me, when the time saving is less than 50%, sorry, more than 50%, which is better earning? Halsey. Company point of view, ulta. Company point of view, if you go for Halsey, you will end up paying more. So now Rowan told boss, so it automatically demotivates, because if you produce at 50%, you are earning 750. If you furthermore reduce it, number of hours to complete the same task, you are getting just 5, 10. So better, no one will try to reduce it for beyond 50% of the time allowed. That is, they are not going to save for more than 50% of time allowed. Clear? That is your Halsey and Rowan methods. We are going to see few questions on that. Next is, guys, efficiency, how to calculate? 10 hours work, I am completing it in 8 hours. More efficient or less efficient? More efficient, because 10 hours work I completed in how many hours? 8 hours. So my answer should be for more than 100% for sure. Correct? It should not be less than 100%, it should be more than 100%. To get the more than 100%, numerator should be more or denominator should be more? Numerator. So always remember, when it comes to hours, efficiency calculation is standard by actual. Whereas when it comes to unit, then there it should be actual by standard. When it comes to hours, it is standard by actual. When it comes to units, it will be actual by standard. Got it? What do you mean by employee turnover, sir? Employee turnover is nothing but change in the composition of the employees in the organization. How we can find it out, sir? Very simple. We got different methods like replacement method, separation method, flux method. Replacement method means what, sir? How many employees were replaced during the year? That is, how many of them left? In that, for the same position, how many new employees are recruited? That is called as replacement. For example, 100 employees are left. For the same position, 80 employees are recruited. Now the replacements are how much? 80. Replacements are how much? 80. Sir, 100 employees left. 100 employees also are hired. Whereas 10 employees for a new job. Guys, that we will call it as new joinees. If it's for a new job, that we will call it as new joinees. So, in the replacement method, replacement means for the same existing job, how many employees are replaced? That is, how many of them left for the same job, how many of them joined? So that is your replacement. Separation means how many of them left and went. Whether we appointed the other for the same position or no, doesn't matter. Separation means how many of them got separated during the period. Whereas flux method means you are going to consider number of separation, number of replacement, number of new joinees divided by average employees. Clear? And average number of employees means opening plus closing divided by 2. This is how you are going to do the employee costing. These are the few basic theory things. Shall we see few questions of this chapter? Guys, listen here. What they are asking: compute the effective hourly cost of employee. Cost of employee means they are asking from the company's point of view. Now, basic pay of 10,000 is there. Should we consider it as cost? DA, bonus, other allowance, employer's contribution, because I am paying it to employees. Upon that, I am paying it to government. And X work for 2,400 hours, out of which 400 are non-productive and treated as normal idle time. So effective hours are how much? 2,000 hours. You are required to compute the effective hourly cost of employees. You will take the cost divided by 2,000. You will get to know how much is the effective hourly cost is or rate is. So we'll go to the next one. In a factory, working 6 days in a week. How many days in a week? How many hours a week? 8 hours a day, sorry. So 6 into 8, 48. A worker is paid at the rate of rupees 100 per day plus DA of 120%. So which is basically total is 220 rupees per day. Correct? We are paying them how much? 220 rupees per day for 6 days. How much it is? How much? 1,320. He is allowed to take a 30 minutes off during his hour shift for a meals break, 10 hours for a 10 hours 10 minutes recess for a rest, which means in a day he is getting a break of how much? 40 minutes. And is it normal or abnormal? Absolutely normal. During a week, his card showed that his time was chargeable to job X 15 hours, job Y 12 hours, job Z 13 hours. Now they are asking the time not booked was wasted while waiting for a job, which means try to understand there. Job X is spent how much? 15. Job Y 12. Job Z 13 hours. Total 40. Where we are paying them for 48 hours. Hey, 48 hours you are paying there, sir. But normal idle time is there. No, yes, it's there. How much it is? 40 minutes per day. So 40 into 6. 240 minutes divided by 60. 4 hours. So 4 hours is a normal idle time. So out of 48, 4 hours normal idle time if you take, you should have worked for 44 hours. Have you worked for 44 hours? No. You have worked only for 40 hours. That 4,000 is a abnormal idle time. The time not booked was wasted while waiting for a job. Okay. Calculate the cost state. How would you allocate the wages of the worker for the week? Guys, how much we are paying? 220. For how many hours? 48 hours. Okay, done. Now, how much is the effective hours? 44 hours was total. 4 hours was abnormal idle time. Other 4 hours is. So, which I should reduce? A. Normal idle time I should reduce while arriving at a cost per unit. So, now what I will do? Will reduce normal idle time of 4 hours. So, total cost divided by 44. Total cost divided by 44 hours. Accordingly, we'll get a rate. Accordingly, we are going to allocate it. Clear? This one question is there. Here, please be make sure DA and all they will give like this. What you should do is DA should be divided by normal hours. So you will get to know per hour how much. That should be given to actual hours they are working. Keep that thing in mind. This question is nice. They have given how much is the overtime rate and all. Following have been worked on jobs that normal hours, overtime before and after working hours, and Sunday and holiday. So always remember in the company we are not doing only one job here. There are different jobs we are doing. In that this particular job got so many hours. You are required to calculate the labor cost chargeable to job Z and overhead in each of the following circumstances. Where the overtime is worked regularly throughout the year as a policy due to worker shortage, take it at an inflated rate and charge it to all the customers. Where overtime is worked irregularly to meet the requirement of production, charge it as a overheads. When overtime is worked at the request of customers, expedite order, that is urgent orders of customer, charge it to particular job. Go through the question, guys. We'll start in 2 minutes. One of the important ones. Go through the question. Will you start? First one is what? Where overtime is worked regularly throughout the year as a policy of worker shortage. I told you 5 circumstances. You remember? First one, when it is as per the requirement of the customer, charge it to job directly. When it is irregular, treat it as overhead. When it is a mistake of a particular department, charge it to that particular department. When it is due to abnormal reasons like earthquake, etc., earthquake, strike, etc., charge it to costing P&L. When it is due to worker shortage, calculate a inflated rate and charge it to whole job, I mean whole factory. So first one they are telling where overtime is worked regularly throughout the year as a policy due to worker shortage. In this scenario, very simple guys. First, now here the rate will be calculated for the whole factory. For the first one, because you should calculate inflated rate, whole factory, and you should charge first. Normal time, 1 lakh hours. How much you are paying them? 100 rupees per hour. How much is 100 plus 100 into 1 lakh? 1 crore. Correct? Done. Overtime before and after work. Overtime before and after work, you are going to pay them. They are not talking about overtime premium, they are talking about overtime rate, which means this includes normal also, premium also. If at all they told it as premium, then only 175 was premium. Normal 100 you should pay. So 275 was supposed to be the one. But here they are telling overtime rate, which means we should take only 175. Got it? 175 into 20,000 is how much? 35 lakhs. Overtime on Sunday is 5,000 hours and payment is 225% of the normal, which is basically 225 rupees. 11 lakh. Total will come to 1 crore 46 lakh. Whole divided by how many hours in a year? Total per hour. This is inflated rate. Now for this particular job, we are not going to calculate normal blah 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 and all. Straight away we are going to check, boss, 1125 hours into rupees 117. 1,31,000. This is what we are going to charge to particular job when it is done in a normal course only, but due to worker shortage. Second, irregular to meet the required demand, then you treat it as a overheads. You treat it as a overheads, which means normally for 1125 hours, normal rate will be paid. For 1125 hours, normal rate will be paid as a labor cost. Rupees 100. How much? So 1,12,500 is paid as normal. But this overtime what we are paying here. Here how much we'll pay? 100 rupees. 75 rupees is a premium. 75 into 100. Sir, 175 into 100, no sir. Yeah, in that 175, 100 rupees is already adjusted here. Only 75 is a premium. Because normal wages you have to pay. If instead of working today, tomorrow if they work also, normal hours you have to pay, no. That has nothing to do. Only overtime premium is a question here. Now, 7,500, Sundays and holidays, 25 into 125 is a premium in it. Total 10,000. So 11,500 you are going to charge it as a direct labor. 10,625 you are going to charge it as a overheads for this particular job. Clear? Wherever overtime is worked at the customer's request, so straight away charge everything to customers. So you are going to charge whole 1,23,125 to customers. Normal rate plus this one. See, first one. 131,625. Second one, employee cost chargeable is 112,500. Factory overhead is 10,625. Third one, chargeable to customer is 123, 125. Hope you guys understood. I'm giving you guys a minute. Please go through the whole answer, and if you have any doubt, please let me know now itself, and please mark it as last minute revision question. I don't know why I'm getting a strong vibe that this time similar question might come. Yes. Now listen. Guys, one normal maths thing, you know this. When one equation is there, how many unknown figures could be found out? One unknown figure. Two equations, two unknown figures. So always in costing, you should always remember how many equations can be formed and how many unknown results could be found out. So always you should try to keep your unknown numbers as less as possible. Listen. Two workmen A and B produces the same product using the same material. Their normal wage rate is also same, which means here if you consider material as A, for A or X, if you consider material as X, for A also you should consider X, for B also you should consider X. Don't consider different things, because try to keep it as simple as possible, because they are here directly they are telling boss material cost is same for both. Employee rate per hour, if you are going to consider Y for A, then for B also it is Y only. Okay, because that also they are telling same. Whereas A is paid as per row 1 system, B is paid as per Halsey system. The time allowed to make the product is 50 hours. A takes 30 hours while B takes 40 hours to complete the product. Factory overhead rate is rupees 5 per man hours actually worked. The factory cost for the product for A is 3490, for B is 3600. They're asking you to compute normal rate of wages, cost of material, and comparison. Comparison and all I'm not going to do, but I'm going to show you how to compute the material cost and labor cost. A, B. Material cost, can I take it as X? Direct material, can I take it as X? Direct labor, can I take it as Y, rupees Y per hour? So X is taking how many hours? A, hours, 30. Y is taking 40. B is taking 40. So it is 30Y hours into rate, no, plus is getting paid under row 1. Yes, time saved is how many hours? 20 hours out of 50 hours into hours worked is how much? 30 into hourly rate is Y. Understood? This for A. Under Halsey it is 40Y, because he is working for how many hours? 40 hours. Half of hours saved 10, hourly rate Y. Will give you prime cost. Prime cost, can I write it as X plus 30Y plus 40. 40 means 12. 12Y. Can I write it like this? Also, can I write it as X plus 42Y? Can I write it or no? Can? Next one. x plus 40y plus 5y, x plus 45y. For this, add the factory overhead. How much factory overhead they are telling? Factory overhead is 5 rupees per actual hours worked. So factory overhead here you work for 30 hours, so it is 150. Here you work for 40 hours, it is 200. This will give you factory cost. How much factory cost they are telling? 3,490, 3,000. By solving this equation, you will be able to arrive at how much is x, how much is y. That is how much is material, how much is labor cost per hour. Anyone, any doubt? This is also one of the nice question. See, ditto question only. Ditto question only. ನಾವೇ ಎಕ್ಸ್ ನ ಬಿಟ್ರು ಈ ಎಕ್ಸ್ ನಮ್ನ ಬಿಡ್ತಾ ಇಲ್ವಾ, ಏನ್ ಮಾಡತ್ ಸರ್? He's telling he left x it seems, but x is not leaving. Lucky person. 10th one. Guys, effective hourly rate is 37.5. Try to understand. Ditto question, but small change. What is it? What is it? For example, if it is Halsey, what we took? Hour worked into hourly rate plus half of hour saved into hourly rate. But here that won't give you 37.5. This whole divided by hours worked, that gave you 37.5. So keep this thing in mind. See here, a skilled worker in XYZ is paid a guaranteed wage rate of 30 rupees per hour. The standard time per unit for a product is 4 hours. How much is the standard time? Mr. P, a machine man, has been paid a wage rate under Rowan incentive plan, and he had earned an effective hourly rate of 37.5 on the manufacturing of that particular product. So they have given two things. State what could have been his total earnings and effective hourly rate had he been put under a Halsey scheme. What if he had put under a Halsey scheme? How much would be his earnings? Now we should match it. How, sir? First, under Rowan is earning how much? 37.5 per hour. You don't know how many hours he worked. Correct? Can I take hours worked as x? Yes. Now under Rowan, x into what is the hourly rate? 30. Correct? Plus hour saved. Do we know hour saved? No. Can I take it as y? Always remember, only one equation is there. How you can take y? Instead, can I tell time allowed is how much? 4 hours. Time taken is how much? X. Can I take it as 4 minus x? Divided by hours allowed was 4 into hours worked x into hourly rate 30 whole divided by hours worked, which is x. That is giving you 37.5. If you solve the equation, you will get how many hours you work. That you apply under Halsey, you will get which is better, or how much you would have got. Got it? All these things you go through it. See employee turnover question, they will give like this. They have given here how many employees were replaced during the year 30. So here they have given how much is the replacement percentage, 5%. So how you got 5%? You got 5% by dividing 30 by some average employees. You got 5%. Using this formula, you can find out how much are those employees. Now, once you find out how much are those employees, then separation flux using that you can find out how many separations, how many accessions. What do you mean by accession, sir? Total joinees. New joinees plus replacements. New joinees means what? All together for a new work, not for the existing work. If at all any employees comes in for the existing work, that is replacement, otherwise new joinees. Actually, one of the RTP or previous year papers, I'm not sure, there is one legal firm question. Some new big table they have given, question mark, question mark, question mark. There one nice question of employee turnover is there. I am just giving you heads up now. Whenever you have time, go through that RTP question, one of the important question. Anyhow I'm going to cover it in our that session which I told, extra question session. Guys, employee turnover, this is one of the important question. This also I feel like one of the very, very, very important. Here, listen. Management of BR Limited is worried about their increasing employee turnover in the factory, and before analyzing the cost, they want to take the remedial step. Before taking remedial step, they want to know, due to employee turnover, how much is the profit they lost in the last period. Okay. Now to calculate how much profit they lost in the last period, can I tell there are two kind of cost? What are those? One, due to employee turnover, what happened? Old employees went, new employees joined, for them we trained, etc. Which means they are not working as same as what my old employees were. They are working bit slower, or we wouldn't have taken them on time, etc. Due to that, one, productivity we lost. If we lost the productivity, we lost the profit also. We lost productivity. Because of that, we lost profit also. Plus, new joinees we have to take, for them welcome kit, welcome bonus, training, extra cost we will incur. No. Together, this thing we will call it as total employee turnover cost. And also, sometimes our our new employees might do some mistakes when producing certain things, defectives. To rectify that, again, we might have to spend some time. No. That is again a cost. Listen here. Last year, sales amounted to 83,03,300. PV ratio is 20%. Guys, always remember PV ratio and profit percentage after break-even sales is same. I'm going to tell it the same, how it is in the marginal costing chapter. Now, for the time being, PV ratio means think it as a profit percentage. Total number of actual hours worked by a direct employees force was 4.45 lakhs. The actual direct employees include, that is whatever they work 4.45 includes 30,000 hours attributable to new recruit training. So in this 4.45, 4.15 is normal work. Other 30,000 hours are training hours, out of which half of the hours were unproductive, which means they didn't produce it at all. Guys, if at all we had our old employees, if they had worked for 4.45 hours, how many hours productivity we used to get? 4.45 only. But just because some new employees we are taking, we are losing 15,000 productivity there. How, sir? 4,45,000 hours they are working. In this, old employees, normal, whoever is continuing, they are taking 4,15,000 hours. They are working on time only. But this 30,000 is given to this training, which means in this training, 15,000 is waste of time, 15,000 is of productivity. 15,000 is waste of time, 15,000 is productivity, which means in last year, how many hours productively we have worked? 4,15,000 plus 15,000. Productively we have worked for 4,30,000 hours. Done. Also, As a result of the delay in the personnel department recruitment, 1 lakh potential hours lost other than unproductive training. Other than losing that 15,000 hours, we are losing even 1 lakh hours extra, which means net how much we are losing. We are losing 15,000 due to training period and 1 lakh due to non-productivity. Total we are losing 1 lakh 115,000 hours. Now listen very carefully. When we work for 445,000 hours, how many productive hours we work for? 4 lakh 30,000. By just working for 4 lakh 30,000 hours, we were able to make a sale of 83 lakh 3,300. 83 lakh 3,300. Now, if at all we worked in this 115,000 hours also, how much sales we would have made? $22 lakh 650. This much sales would have made. Array, the sales we lost, that doesn't mean that profit we lost to this extent. Profit is 20% of this. PV ratio is 20%, no? Sorry? 4,44,130. This is profit loss due to non-productivity. Upon that, to recruit these idiots, we spent so much. 4,44,130 plus these. That is what the profit foregone at the end. Got it up? If at all they would have given some defective units and correction cost for that defective units, then you should have taken that also as a cost. Cost of correcting defective units, that also should have been considered as a cost. And sometimes listen, in the question they might tell there is a employee turnover is there, they might tell equivalent employee turnover. For example, whatever the period they have given, let's say that will be for 3 months. You calculated employee turnover for 3 months. Now, if they ask you annualized employee turnover or equated annual turnover for 3 months, so much, for 1 year, question mark. That is for 3 months, so much, for 12 months, so much. Like that. Guys, in this question, office and administration cost, is it a direct expense? Product blueprint cost for a job, direct. Higher charges paid for machinery used for job. Salary to office attendants, indirect. Administration, overhead it is. One-time license fees paid for a software used to make a computerized graphic for job C. Salary paid to marketing manager. Clear? These are the few things you should keep in mind when doing a question of employee. And the second question is there, no? Here also be very careful. Second question of this one. Practice questions. They are asking you to calculate the earning of each 3 type of workers and the employee cost for 100 pieces. So they are asking you to compute the earnings. Upon that, they are asking you to compute the cost for 100 workers. Sorry, 100 pieces. See, as per day wage, how much they earn. Per day, how much it is, so much. Piece rate, ALSI system, Rowan system. Like this, you should compute. There are 3 kind of workers they have given, A, B, C. Now we will get to know total how much their earnings is. That itself is your cost if the EPF, PF, ESA, etc. is not there. Now we will get the cost now. That is for those 3 employees working for some hours. Divide by so many units. How many hours they worked? Total cost divided by those many units. Into 100 is question mark. That will be your cost per 100 units. One of the important question, mark it and go through it. If you don't understand, please let me know. Then we'll see. Second one, if at all you guys are not able to solve it, then let me know. Okay, we'll see. This one, power paid for power and fuel, direct or no? Direct expense. Because what is the formula? I mean, what is the keyword? TP, T for technical know-how, R for royalty, A for amortization of molds, pattern, patents, S for specific software, H for higher charges of specific machinery, D drawings and design, P power, fuel and steam. Got it? Whereas indirect, that is factory overhead R, ADI is DSLR, A is amortization of jigs, fixture, etc. D is drawing department salary, drawing department's expense, not drawing and design cost. I is insurance. E is one more I is indirect workers. S is service department's expenses, that you will understand in overheads chapter why it is and all. DS the is S is done, no? D is done, S is done, S. L is lease means rent, etc. R means repairs and maintenance. So wages paid to factory workers, direct expense or direct wages? Direct wages, so it's not a direct expense. Bills paid to job workers, direct expense. Royalty payment, direct expense. Fees paid to technician hired for the job, administration overhead. Commission paid to sales staff. And the defective thing, here it is. You can go through it once. Okay. Defective thing, see, 20% of the output during the training period was defective. Cost of rectification is 25. See, training period of the new recruit is 50,000. During this period, their productivity is 60% of the experienced worker, which means whatever the experienced worker would have produced in the 30,000 hours, they are taking 50,000 hours to produce it. A experienced worker would have taken how many hours per unit? 10 hours, which means in 30,000 hours, how many units you would have produced? 3,000 units. Correct? These guys are also able to produce 3,000 units, but they are taking 50,000 hours. And what they are telling upon that, in that 3,000 units, what you guys have produced, in that 20% is defective. 600 is defective. For each and every defective, 25 rupees you should spend for rectification. All other things are ditto kind of things. Go through it once. Sir, case scenario, what to do, sir, for examination? Guys, if you do and go 100 case scenarios also, ICI will give 101st only. So always remember, you should concentrate on a conceptual clarity rather than solving some of case study based scenarios. Okay, so have an idea of conceptual clarity, not your case study separate video and no. Got it? This is all about your labor cost, and few nice questions are there. I told no, those questions that settlement cost, etc. I mean, not settlement cost, that law firm question of employee turnover, those kind of questions are there. Keep that thing in mind. Okay, fine. With that, we have completed our employee cost. Now we'll be going to our overheads and ABC. Overheads and ABC, always remember, it should be taken together. It should be taken together. They are not two different things, same only, but one is modern, one is traditional. Okay. Yes. Now we are starting with overheads. Sir, what do you mean by overheads? All the indirect material, indirect labor, indirect other expenses, everything will be treated as a overheads. Now, listen. Why you need a separate concept for this? Try to understand direct material, direct labor, direct expense. Directly you can attribute to the final product. When ascertaining the cost of the product, direct material, direct labor, direct expense, directly you can put it and you can find out per unit how much. But overheads, can you do that? Overheads, can you do that? You can't. Because for that particular unit, how much you don't know. Correct. So what we will do is we are going to absorb it. We are going to absorb. Absorb means charge it to final product, or in the final product's price we are going to recover it. Absorption, also known as charge, also known as recovery. Okay. We are going to either absorb it or either charge it or recover it. But before that, see how it works. Let's say three departments are there: X, Y, Z. For the department or X, Y, Z, let's say A, B. These are production department, these are service department, which means AB is providing service to X, Y, Z. Now, first there will be indirect material. Correct? Some amount will be there, amount will be there, amount will be there. Indirect labor. Some amount. Indirect expense. Some amount. Now, there is one product. There is one product called product M. Product M. Now, product M, it uses 3 hours of X, 4 hours of machine in Y, 5 hours of machine in Z. Then it will become a final product. Now my question is, for that product M, how to determine how much overhead is to be charged? So what we will do, we'll take first, this service department's total will be there, no? Guys, can you recover it in the final product? Can you recover the service department's overhead in the final product? How? Yes. So you can't directly do that. So what you should do, from service department overhead is there, no? That you should charge it to production department on the basis of service they provided. That you should charge it to production department on the basis of service they provided. That service, finally that cost will get added here. Service department cost will get added here. And finally total cost will get. Now, X how many hours of machine used, Y how many hours of machine used, Z how many hours of machine used will calculate. Per hour how much is a rate will calculate. Accordingly, how much we are going to charge to M we are going to check. Now, for 3 hours, 4 hours and 5 hours, how much is the rate we calculated? No. That rate, per hour rate we calculated. No. That rate is known as absorption rate. That rate is known as absorption rate. Now in the absorption rate, you multiplied with the number of hours, no? To calculate how much for that particular product. That is called as absorption process. That is known as absorption process. And from the service department you are going to charge their expense to production department, no? That is called as redistribution of overhead, or reallocation of overhead, or reapportionment of overhead. Now, first you distribute it to all the departments, no? That will be known as distribution of overhead, or allocation of overhead, or apportionment of overhead. Sir, what are you talking? Apportionment, allocation, both same, ah? The answer is no. What do you mean by that, sir? Let's say ArivuPro. We are having CA classes, CS classes, ACCA classes, CMA classes, CA, CS, CMA, ACCA. Let's say 4 other courses are also there. Leave that. Now, there is one 10 in 1, correct. Nice, nice. Now, where were we? Are you? So 4 departments we got, 4 different these things we got. Now here faculty cost, let's say if they give it as a number multiplied with number of students, then yes, that is direct. Otherwise that will also be indirect. If it is cannot be traced in the final product. Like here products are, or here the cost units are students, correct? Now rent is there. Rent is there. Rent is used by CA department, CS, CMA, ACCA. At the same time, if you go outside, you can find the academic advisor there. Coordinator. She is sitting in some space, which means that department is also using. Are they giving any direct service to students? No. They are providing service to these 3 courses, these 4 courses, then these 4 courses are providing service to students. At the same time, if you come bit this side, you will find the sales guys there. Sales team guys. Now, are they providing service directly? No. They are again providing to institute. Now try to understand. This rent is there, no? This rent, what we are going to do is apportion. That is on some basis, how much for CA, how much for CS, how much for CMA, how much for sales, how much for academics, how much for ACCA. Like that we'll divide. Rent. At the same time, that sales team salary is there. Should I charge it to CA, CS, CMA, ACCA separately, or directly I can add it only to sales department? Directly to sales department. There is academic team like that coordinators. Their salary, can I add it only to coordination team or everyone? Coordination team. Indirect only, but it can be traced to particular department. Indirect only, but it can be traced to particular department. Rent, can I charge it to only one thing, or you should allocate, apportion it? Apportion it. You cannot allocate it. So where directly you can allocate to particular department, not to cost units, overheads only, but you can allocate to particular department. That is allocation, where you cannot allocate on some basis, you are going to do the apportionment. That is apportionment of overheads. Now, end of the day, that operations teams also we are going to put to CA, CS, CMA, ACCA on some basis. Marketing teams also we are going to put to CA, CS, CMA, ACCA. Your sales team also CA, CS, CMA, ACCA. That is called as reapportionment, redistribution. That is service departments you are going to charge to that department which is providing the service, which is providing a product. Understood? Now, CA faculty cost. Let's say indirect it is. Salary to faculty, if one student also salary is same, 100 student also salary is same. Indirect. Now I'm going to allocate or apportion. Allocate. Why? That is purely relating to CA. CS, CMA, ACCA I am not going to put. But there is one more faculty who is into this paper correction and all. They correct CS, CS, ACCA, CMA, all the papers. Now their salary, I should apportion. Clear? Now. So this is how it works. Basically, see, if I started from allocation, it would be confusing one. But I started with absorption, why it is required. Then now it has become base. I hope you understood. Why this chapter is there, I hope you understood. I cannot charge it directly. So I should absorb it. How to absorb, I showed you. Total overheads of that particular department with some base, we are going to absorb it. To arrive at the total overheads, we redistributed, we distributed. That is, we allocated, we apportioned, we reapportioned. First, allocation means what, sir? Direct assignment of cost to cost object which can be traced directly. The traced directly means it is direct, no sir. Hey, It can be traced in the cost unit directly, then it is direct. Here it can be traced for the cost object. Sales team salary can be directly traced to the sales team. But can I find out per student how much? Can I find out directly in the per student how much is the sales department salary is there? I can't. So direct assignment of cost to the cost object is allocation, whereas allotment of the cost to cost object on some basis in proportion as cost cannot be traced directly, such cost object, in such cost object, that is what, sir? Apportionment. Reapportionment means apportionment of the service department's overheads to the production department, because service department is not providing any service to the, not directly to the customers. It is providing to the production. So reapportion it, then charge it. Sir, how to reapportion? There are methods. There are methods. I will tell that. Absorption means what, sir? Process of recovering the overhead of the department from its output is known as absorption. Absorption rate means what, sir? Rate at which overheads are recovered. That is absorption rate. Guys, generally absorption rate will be calculated on the budgeted basis or actual basis. Budgeted basis or actual basis. Why? Estimation. Budget means estimation. But why you are taking on estimation basis? That's why you are taking estimation, I agree. But why estimation? Why can't you take actual? Yes. Try to understand. If you go for CA, CA now, imagine you guys are CA students. Now, what we did is we calculated. We didn't calculate. All the overheads we left, only direct expenses we have taken. Okay, prime cost we have taken. Now we charge some X amount to you guys. Course got over. Then I calculated how much is my actual overheads are. Then I divided by actual number of students. So we got to the per student we have to charge 10,000 more. We called you guys. What you guys will tell? Hello, sir, can't hear you. Hello. Because your work is done, no? Will you receive the call? Forget about hello. Will you receive the call? No. Which means here only it is so much. Sir, can you please share these notes in the WhatsApp that I haven't decided whether to share or not to share? So that I have to decide. Where were we? Here only it is so much. Then imagine some big company, like let's go for production. Let's say Colgate. Imagine how many people will use Colgate. Can they call and tell, sir, today our year-end process done, this much is our overhead. So per Colgate, this much is the overhead I should recover. So can you put 50 paise, sir? Can you? No. Which means that's the reason generally what we will do, if it is bulk in these things, we are going to calculate in the beginning only how much I should charge to my customers. How much I should charge to my customers. If it's B2B, that works different way. B2B means if at all minus plus is there, they will get they will adjust because they have that contact there. B2Bs, if they can't tell, no, I won't pay and all. That is different. But when it comes to B2C, it is very difficult to trace later onwards. So now only you should determine the price in the beginning. That's why beginning means beginning only you should find out how much I should charge to my customers. For that, I can take the actual no, I should take the budget. So what absorption rate? Generally absorption rate, normal absorption rate, what we will take? Budgeted overhead divided by budgeted cost unit. It could be number of hours, it could be number of units, it could be percentage of something like that. So how we are going to absorb, sir, or how we are going to recover? How much is the rate into how much is the actual? Try to understand. Because you can recover only with the actuals, no? Let's say we thought CA class, after reapportionment, everything, after doing all the drama, we got to know one thing. What is it, sir? We got to know that, boss, our budgeted overhead is 10 lakh. Our budgeted overhead is 10 lakh, and we assume that our budgeted students during this particular year for CA Inter is 1000. Now, how much per student we should charge? 1000 rupees per student. We have charged 1000 rupees per student. Now, instead of 1000, only 900 students came. Can I charge them more? No. Why? Because beginning I thought 1000 and accordingly I calculated 1000 rupees. But now only 900 students, I am going to charge them only 1000, which will come to 9 lakh. So this is what I have done is known as absorption. That is, what was 900? Actual students. That is actual unit, actual output. What is 1000? Absorption rate. We'll arrive at absorption. How much amount we absorbed. But what is the best part, you know? We incurred 11 lakh rupees. 10 lakh was also budgeted. Hey, 10 lakh was also budgeted. But we incurred how much? 11 lakh. Double effect to one. Number of students what we estimated. So many students didn't come. Though there we are taking a hit. Plus, how much we estimated? Cost is going more than that. Again we are taking a hit. Two times we are taking a hit. Now this is actual overhead. Now difference between this and this, no, that is under absorption or over absorption, under recovery or over recovery. Now in this question, in my example, is it a under recovery or over recovery? Under recovery, under absorption. Why, sir? How much I spent? How much I recovered? 2 lakh is under absorption or under recovery. Sir, how to treat it, sir? That you wait. That I am expecting. This time it might come in the question. I mean, examination. How to recover this under or absorption, over absorption, that I will tell. Now, we got to know 2 lakh is the under or over absorption. Clear? So, how to arrive at under or over absorption? Actual overhead less absorbed overhead. We will arrive at under or over absorption. If the actual overhead is less than the absorbed overhead, that leads to over absorption, over recovery. Because you recovered more from students. Let's say 9 lakh you recovered, but actually you incurred only 8 lakh. Over absorption. Good or bad? Good. Over absorption is good. Sir, 9 lakh we estimated, 11 lakh we incurred, 2 lakh we didn't recover only. That is under absorption. Good or bad? Bad. Bad means adverse, favorable. Adverse. Good. Now, see here, very simple. Overheads will be there. We'll do allocation or apportionment like this. Allocation or apportionment will do. How to allocate, how to apportion, I will tell. And for the service department and the production department, from the service department, we will reapportion it. We will get to know how much is the total that we are going to absorb from the product. This is all about this chapter. That's it. Nothing else. This easy it is. Now, sir, how to allocate or apportion? Guys, in some related ratios. In some related ratios. For example, power is there. Power. On what basis you will do? On the basis of consumption of electricity. Consumption of electricity based on what? HP of machine. Sir, they have given number of hours as well as HP. Number of hours machine as well as HP. Then you should multiply both and take it. Why, sir? Because less HP machines, less horsepower machine and more horsepower machine, will that take the same amount of electricity? That means It will change. So number of hours as well as HP both you should consider if they give the both. So that is left to you guys. Left to you guys in the sense you should make the proper assumption only. But proper assumption should be there as to what I should take. For example, see, rent and other building expenses. Generally we go for floor area, correct? Lighting and heating, again the floor area or the number of light points. Fire protection service, precaution service, that red box they will keep, no? Extinguisher. Now that if you observe that they will keep, if you go to your colleges and all, that they will keep near the steps or somewhere at the end. Per floor they will keep same amount in all the floors, which means that is also based on floor area, air conditioning, floor area. So what floor areas are? How many ACs are there in that room? You divide. Generally that won't be there. In this classroom, how many ACs are there? Can you tell? No, centralized AC, which means this classroom also same AC is working. That classroom also same AC is working. That classroom also same AC is working. Correct? So as it is centralized AC, you can go for floor area. Sir, what you pay to your employees and all? Number of employees basis. General overhead, sir. Guys, try to understand if the general overhead it is, you should see, if you don't know which overhead, like general overhead it is, what to do you don't know. Just you should check whether the department is machine intensive or labor intensive. You should check whether it is machine intensive or labor intensive. If it is a labor intensive, you take labor hours. If labor hours are not known, then you take direct wages. If it's a machine intensive, take machine hours to distribute it. Depreciation and all based on the capital value, that is how much you invest. Power, steam and all based on, I told, no, number of machines, or it could be number of machine hours, or it could be HP, or everything together, like that. Whereas service department's cost, that you should check and you should apportion it, which is related. Now, sir, what are the different methods of reapportionment? What are the different methods of reapportionment? Here you should check, guys, what is happening. For example, you have department X, department Y, department Z. These are the production department. A is there, B is there, C is there. These are service department. This is production department. This is service department. First, direct material will be there. How much I should take for the production department? I should take nil. Why? Direct material is A, prime cost. Why it will be considered as overhead? Got it? Service department, how much I should take? Sir, direct material, no sir, prime cost. Hey, direct material means direct material which is traceable in the final product. In service department, what final product you are doing? Nothing, no. So in the service department, direct material will come. Direct wages, again. Direct expense, again. Overheads. Overheads will come everywhere. Correct? Now we'll get the total overhead. Correct? We'll get the total overhead. This is known as distribution, allocation, apportionment. Now, this service department we should charge to production department. Correct? Now what to do, sir? First thing you have to check is whether any service department reciprocating its service or what. Or in simple, first you should check whether any service department is providing service to other service department. If the answer is no, Service departments providing service only to production department. Then you can go for direct redistribution method. Direct redistribution method. That is, you will take from the A, charge it to XYZ on some basis, take from the B, charge it to XYZ on some basis, take from C, charge it to XYZ on some basis. This is when there is no service provided to service from other service. Sir, small change. What is it? This A is there, no sir. A is providing service to X, Y, Z, B and C. B is there, no sir. That is providing service to X, Y, Z and C. Not A. C is there, no sir. C is providing service to X, Y and Z. That's it. Now try to understand what is happening. Service departments are providing service to other service department or no? Yes. But any service department is reciprocating it. One side love story. A is providing service to B and C. But is B is providing back to A? C is providing back to A? No. B is providing service to C. Whether C is providing back to B? One department providing to other department, whether other service department is providing back? No. This is called as non-reciprocal. Whenever there is a non-reciprocal, you are going to use step method. You are going to use step method. How the step method is going to work, that I will tell later. Sir, two-sided love story. That is, this providing to this, so 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 this providing to this and this providing to this. Got it? Reciprocating. In that scenario, we can use simultaneous equation method, trial and error method, repeated distribution method. Simultaneous equation method, trial and error method, repeated distribution method. Gotcha. Now, sir, how this trial and error, repeated distribution and all will work? Shall we see with one question? Here. There are 3 production department and 4 service department. Okay. 4 service department are stores, timekeeping, power, canteen. The following information is also available in respect of the production departments. Prepare a statement showing cost of service department over the production department using the direct redistribution method. Here they are directly telling the direct redistribution method, which means they are telling no other service is providing service to other service. Now, overhead direct we have, redistribution we have to do, no? Stores. Stores distribution on what basis it's better to do it? Value of stores requisition. Timekeeping and accounts. Number of workers. Power. horsepower of machine. Canteen, number of workers. Simple. We'll do like this and we'll get the total after secondary distribution. Now we should find out some base for it and we should find out absorption rate and we should charge it to final product. Sir, what if, listen here, two service department are there, X and Y, production department A and B. So remember that X and Y are service departments, A and B are production departments. Service department X, how it is providing service, sir? 25% it is providing to Y, which means one service department is providing service to other service. Whereas Y is not providing anything to X, straight away it is providing to A and B. One more thing. For any other methods you can use the ratio. Okay. But when it comes to simultaneous equation method and trial and error method, kindly don't use the ratios. Please use the percentages only. Because we will understand later. Now, so X is providing service to Y, but Y is not providing service to X. So it is non-reciprocal in nature. In that scenario, what you should do, sir? You can use the step method. Step method, how to use, sir? First, arrangement will be like this. Production department you will take. Correct? Let's say 4 service departments are there. In that, how to arrange, sir? First, you should take the service department which is providing the maximum number of service, X. Next to next service department which is providing next maximum, Z, W. Like this. It's not about the given order. It's about how much service they are providing. The more the number of service, that will come first. Because what happens, let's say instead of X you wrote to Y. Okay. Now Y department you closed off. Y department you distributed and you closed off. But later X provided service to Y. Again Y will get open, no. Then there is no point in doing this, no. So always remember the order is very simple. The service department which is giving a maximum number of service, that should be taken first. So like this we are going to do. First X department 2 lakh, that will provide service to Y, A and B. Then Y department 1,50,000 was already there. 50,000 will get added, 2 lakh. That 2 lakh will get distributed to A and B, not to X. This is your step method. Now reciprocal means X is providing service to Y, Y is providing service to X. In that case we can go for simultaneous equation method, trial and error method, repeated distribution method. Simultaneous equation method means what, sir? We should find out the equation using that. How, sir? Guys, try to understand. They have given 2 service departments here. One is boiler house, one is pump room. Now, boiler house is providing service to pump room. Pump room is providing service to boiler house. Boiler house is providing service to pump room. Pump room is providing service to boiler house. Sir, what do you mean by this, sir? Guys, hey, sir, so simple. Why you are doing so much drama? Take the boiler house, sir. Boiler house cost is how much, sir? 3 lakh. Sir, we know that. Boiler house cost is not only so much. Why? Pump room is providing service, no? 50% of the pump room's cost is relating to boiler house. So for that, add 50% of the pump room cost, sir, which is 60,000 into 50%, which will come to 30,000. Total is 3,30,000. Now, my question is the cost of pump room is 60,000 or what? Yes, sir, they have given 60,000. Also, they have given Boiler house is providing 5% service to pump room. So add that also. Okay, sir, we'll add, sir, 5% of 3 lakh. Hey, do you know the boiler house overhead? 3 lakh, no, sir. Hey, boiler house is 3 lakh plus 50% of pump room. Which means May, November, May, November, May, November. Until you pass. Correct? You guys don't worry. You guys will clear. Telling how the reciprocal is working. After May, November. Try, never surrender. After May, there is a November. Where there is a will, there is a way. After November, there is a May. Now they changed it. Correct? No, these are the old. When I was doing my inter, 2018. Now, listen. As this is reciprocating to each other, so what you can do is, you can go for equation. What you can do, sir? Can I take the boiler house cost as B, pump room cost as P? Can I take boiler house cost as 3 lakh plus 50% of pump room? How much is the cost of pump room? P. So can I take it as 0.5 P? Can I? Pump room, guys, how much is the cost? Plus 0.5 of boiler house. Clear? Now if I solve the equation, I will get how much is B, how much is P. Either you replace P with the B or B with the P. What shall we do? B with P, okay. So P is equal to 60,000 plus 0.05 into 3 lakh plus 0.5B, 5P. Correct? So that is P is equal to 60,000 plus 5% of 3 lakh. 15,000 plus 5% of 50%. P. Correct? May I know the P, please? How much? 75,000 divided by 0.975. 76,923. Now, B is how much? 3 lakh plus 0.5 of 76,923. Three lakh 460. Total is how much, guys? 380. But actual overhead is only 360. So this is the reason I told you should apply the percentages. Now what you should do, P 76,923. P is 10% will go to A, 40% will go to B. How much is 10% of 76,923? 7,000. 7,000. Give me a second. 7,692. And how much is 40%? 30,000. 769. Correct? Now, boiler house. 60% of 3,38,462. 3,77. How much is 35% of this? 1,18,000. Now total all these four. Three lakh 60,000. If at all you have taken a ratios, no, then imagine what would have happened. 1 is to 4, 1 is to 4, that is 1 by 5. Whole 76,923 would have got distributed, which means whole 4,15,385 would have got distributed. That should not happen because overhead is just. So for the simultaneous and for trial and error, it's always and always. Now, sir, trial and error means how, sir? Guys, listen. Trial and error, there are two service department, A, B, C, X and Y. Okay. Now, what you should do is, first you distributed overheads. See here, direct material, direct wages, I didn't take to the production department. Factory rent on the area basis, power on the HP into machine hour basis, depreciation like this, I got this one. Now, which are my service department? These two are my service department. This I should distribute it to production department, but the best part is, if you see here, X is providing 10% to Y, Y is providing 5% to X. Now what I should do is, I should go for simultaneous. Sorry, trial and error. What I will do in trial and error, you know, I will take the primary distribution overhead for X and Y. First, X thing I will distribute to Y. How much? 10%. Now Y total became 580 to 400. Now Y is, I'm going to distribute it to 5%. To which one? X. Now X balance is how much? 29,125. This I am going to distribute 10% to Y. This I am going to distribute 5% to X. Like this I will do till I arrive at negligible amount or 0. Now we take the total of how much? 475,000, 29, 146. Here it is, either you are going to ignore these two or you are going to ignore this amount, because both are same. Either you are going to take this amount or this amount. Shall we take this amount? This you ignore. This plus this. We got this one. Now this you distribute it in percentage to ABC. That is trial and error. Now if at all you merge this table with this table, that is your repeated distribution method. That you see here. First you took X. See, this is overheads. First you took X. X you distributed to every department. Now X became nil. But Y became 582. Y you distributed to every department including X, because X is also taking something. Now X distributed to all the departments including Y. Y distributed to all the departments including X. So and so and so until we get a negligible amount. Now that is repeated distribution method. Okay. Now here also they are asking you to calculate machine hour rate. That is absorption rate based on the number of machine hours. So number of machine hours are there, no? That if I divide it with the cost, I will arrive at how much is the machine hour. This is your repeated distribution method. Hope it is clear. Methods are clear. Now, sir, how you can absorb the overhead? Overhead can be absorbed as the percentage of direct material. That is, my factory direct material is there, no? That is 10 lakh. Budgeted 10 lakh. Overhead budgeted is 5 lakh. Can I tell my overhead is 50% of the direct material? Now one job actually it took 2 lakh rupees. Now overhead how much I should absorb to this? 1 lakh. 50% of direct material. Now if at all you take the same thing with the direct labor, same. Sometimes it is a prime cost. Sometimes it's a labor hour. That is, we budgeted our overhead of rupees 10 lakh, assuming we are going to work for 20,000 hours. How much it would be per hour? Hey, use your calculators. 50 no. 50 per hour no. Now, let's say one job is taking 50,000 hours of labor. Oh, sorry, 50,000 hours only, not there. 5,000 hours of labor. Now, how much you are going to charge? 2,50,000. Instead of labor hours, if you take it a machine hours, that would be machine hour based, and number of units only directly you take, that is output based. And what are the different types of overhead rates are there, sir? Normal rate, also known as actual rate. Here we are going to consider actual figures, actual overhead divided by actual base. Predetermined means budgeted by budgeted. Departmental overhead rate means you are going to take the whole department's overhead with the department's base. Blanket means you are not going to take the department separately. ABC, overhead of all these three departments, let's say it's working out to be 30 lakhs. For this, during the year, how many units you planning to produce, sir? 1 lakh units. Blanket. That is, as a factory, you are considering one overhead for the whole factory, not 2 units. For the factory itself, you are considering one cost. That is your blanket rate. Sir, if there is a under absorption or over absorption, how to treat it? I told no important one. Here it is. When it is treated as under absorption, when the actual overhead is greater than absorbed overhead, that is under absorption. If the actual overhead is less than absorbed overhead, over absorption. Now what you should check is, you should check what is the reason. What is the reason for under absorption? Is it an abnormal reason? Is it due to wrong estimation by the management? If the answer is yes, charge it to costing P&L. No sir, it's not due to abnormal reason, not due to wrong estimation. Could be due to change in the prices, change in the prices of material, labor, etc. Because of that, we are incurring extra overhead than what we estimated. If that was the scenario, no. If it's a over absorption, reduce it from the cost of production. Under absorption, add it to cost of production. Because over absorption means it's not so much amount of expense, but you treated it so much. Under absorption means it's not so much expense, it is more than that, but you treated less. Add it by calculating a supplementary rate. By calculating the supplementary rate, you should charge it to all the produced units and WIPs also. How, sir? How? We are going to see one question for that. Shall we? And you should take overhead for the period. Okay? Normal overhead as a overhead for the period for the computation of this. Under absorption, over absorption. And by the way, listen here. There is one reverse calculation question where you are going to take some few x, etc. Now, you know to solve this question. No? Let's say 10x plus 20y is equal to 500. Is equal to 500. Now, 8x plus 6y is equal to, let's say, 200. How to solve this? Changing the signs. Okay, change the signs. Now, only one digit you should keep. Only one unknown figure you should keep. Now, how to find out which to keep, what to keep? Multiply both by, if you multiply first equation by 4, second equation by 5, you will get 40, 40x. X will get cancelled. Correct? So much drama you don't have to do. Why, sir? What you should do? Nothing, guys. Now I want to cancel x first. So what I will do is, 10 is there, 8 is there. 10 is how many times of 8? 10 by 8. 10 by 8, 1.25 times. Correct? Now what I will do is, I will multiply this with 1.25. Simple, no need to think too much. Whatever the first digit is there, you take and you divide this by this. Now, what will be the equation? This will become 10x. This will become 7.5y. This will become 250. Now XX got cancelled. 12.5y is equal to 250. Y is equal to 20. Simple. So always remember, sir, multiply that by that, sir, this by this, sir. Why you want to do that drama when you have calculator in your hand? Just take this and divide this. You will get to know this is how many times of this. Then multiply this with how many times of this. Finish. Listen here, look at this seventh one. In a factory, overheads of a particular departments are recovered on the basis of rupees 5 per machine hour. Right now, how much is the absorption rate? 5. Huh? The total expense incurred and actual machine hours for the department of the August were 80,000 were 10,000. So how much you recovered? Rupees 5 into 10,000. This is what you absorbed. Rupees 50,000. How much is the actual overhead? But wait. See there. Of the amount 80,000, 50,000, 15,000 became payable due to an award of the labor court. That is, we should pay some penalty or something, which is 15,000. Is it a normal overhead? Don't consider this for calculation. Straight away it is going to costing P&L. 5,000 was in respect of expense of the previous year. Is it of the current year? You booked in the current year, but is it a current year's expense? No. That will also should not be considered in the overhead. Like this, whatever they give, extra amounts, that you should not consider it as a overhead. In this question, overhead is just 60,000. So 10,000 is under absorption. 10,000 is under absorption. What I should do with this 10,000, sir? I should charge it to production. See, actual August production is 40,000 units, of which 30,000 were sold. Also, guys, they might give WIP also. In that scenario, you should take the equivalent WIP and divide it, total cost divided by equivalent units. Okay. Now, in this case, WIP is not there. 10,000 is there. Listen. On the analysis of the reason, it was found that 60% was due to defective planning. Charge it to costing P&L. Out of 10,000, 6,000 will go to costing P&L. Rest is due to normal cost increase. So this 4,000 what we are going to do, sir? This 4,000 we are going to find out a supplementary rate. Here only how many units we are producing? 40,000 units we are producing. If the equivalent WIP is there, that also you should consider. You will get rupees 0.1 per unit. This is supplementary rate. You should not charge it to customers. You should charge it to production cost. How, sir? Sold units amount will be there in the cost of sales. I am going to add it to cost of sales. How much, sir? 30,000 units I have sold into rupees 0.1. 3,000 I am going to charge it to cost of sales. Remaining 10,000 is there, no, sir? 0.1. That I am going to add it to closing stock, finished goods. If the closing WIP is there, that equivalent amount should be charged to WIP also. Accordingly, you should do it. Very important question. Like these questions, I am expecting this to come in the examination this time. Got it? Yes. And also one more question is there. With the use of computer, without use of computer. Correct? That what you should do, you should divide the overhead with the use of computer, without use of computer, calculate two different rates and multiply it. That's it. That you are going to find out. And one more thing is there, something called as machine hours calculation, guys. Machine hour rate calculation. Here what you should do, sir, machine hour rate calculation. Very simple. You should compute how much is the cost of running each machine. Okay. Divided by number of machine hours. You will arrive at machine hour rate. But here there is one crux. There is one more thing called as composite machine hour rate. What do you mean by that, sir? Your drilling or either your machine operator wages and all will be there, no? That can be treated as direct expense. But if they're asking you to compute the composite machine hour rate, then take that wages also into overheads only and calculate it. Okay. And for this, the important question is your the drilling 6 machines and 8 machines question. They have 8 identical machines, whereas 6 months data they have given, only 6 operators are there, and here they have given one word called as you cannot operate a machine without a operator, which means max to max you can operate how many machines? 6 machines. You can operate 6 machines. You are going to accordingly find out the cost of that. Here that is different because of this information what they have given. Normal hour available for the month is 208. Here they have given absenteeism and leave. And normal idle time. Guys. Leave without pay. This should not be considered at all. Because are we paying for this? Is it idle time? So don't consider it. Ignore it. If it's already added, just reduce it. And here the leave with pay 20 hours they are telling no. It is not per month like this. It is for 6 months. This is the different question here. Normal idle time 10 hours they are telling no. That is not per month. That is for 6 months. Got it? Accordingly, we are going to calculate your composite machine hours. This is all about your overheads. Nothing much in this particular chapter. Very simple. You should know why we are doing that. That's it. Okay. So you guys can do it right. All the questions you work out once. Please don't ignore anything. Fine. Sir, continuation of this only is activity based. What do you mean by this, sir? There we used to take the overheads and we used to charge it to product on either the labor hour basis, either the machine hour basis, or either the percentage of direct wages, direct material, prime cost, like that. Whole overhead on one basis. But in activity based costing, what we will do is that overhead we are going to split into different activities. Overheads we are going to split into different activities, and when we split into different activities, then that activity will find out what is the cost driver for that activity. Cost driver for activity, per cost driver I will find out, and in that particular unit, that cost driver is how much, that we will calculate. For example, overheads, everything is on machine hour basis. Now there is some electricity. Now electricity, we found out activity driver or a cost driver is our number of machine operations. We computed number of machine operations. And per machine operation how much we took. And for product A, we might be using 10 machine operations. For product B, 5 machine operations. For product C, 12 machine operations. Like that, now we are going to allocate our overheads to that particular thing by dividing the overhead into how much is related to machine hours, how much is related to machine, that is power, that on the basis of machine operations. So we are going to very in depth. We are dividing the overheads into different costs, and we are going for activity based cost drivers, and we are allocating on cost driver basis. That is your activity based costing. That's it, nothing much there. Where in the overhead absorption, traditional, either you will do it on the labor hour basis or machine hour basis, whereas in the activity based question, it is activity wise you are going to do it. Total overhead you will take, divide by the cost drivers, you will get how much is the cost per cost driver, then you will arrive at a cost per cost driver. If you multiply that with the number of, in units, how many cost drivers are there, you will get the cost of that particular overheads in that particular unit. That's it. In this particular chapter, I'm not going to show the question and all. Few things you have to remember from the examination point. Because activity based, I don't find anything difficult there. Very easy it is. Which are those, sir? One, that baby soft question is there. Practical problem. Gold, diamond, silver. Gold, diamond, pearl. Soap question. Practical problem. If I'm not wrong, last one. Fifth question. So that question is important. And in one more practical problem, there is one more thing is there. Like they will give how much is the recovery rate. Okay. Then they will tell out of the total overhead, 40% is relating to machine setup, 30% is relating to this, 20% is relating to this, 10% is relating to this. Like that they will tell. If I'm not wrong, practical problem 2 or 3 might be. One. See there, they are not telling how much is a total overhead. They are not telling how much is a total overhead. But they are telling total overhead split into different activities how much. In that scenario, what we should do, sir? See what they have told. Overhead recovery rate, ₹6 per machine hour. Something they have told, no? ₹6 per machine hour. Now what you should do is, how you arrived at ₹6, you tell? Total cost, that is total budgeted cost divided by budgeted machine hours. Correct? Now, I know the ₹6. I don't know total cost. At the same time, I don't know total budgeted machine hours. But I can find out. How, sir? Are there 3 products in that? 4 are there. Which are those? 4 cost is there. 4 activities are there. Number of products are how much? 3. Which are those? P, Q, R. P, how many units we are planning to sell? 3000 units. And they have given each and every unit takes how many hours of machine? 10 hours of machine. Which means for P, we planned 30,000 of machine hours. Q, how many units? Q also 3,000. 5,000 units. How many hours? Per machine. Per unit 18 hours. 18 hours or 18 minutes, check. Oh my god. So how many units you told? 5,000 into 18, 90,000 hours. First one is 30,000 hours. Second one is 90,000 hours. R is how many units? 20,000 units. How many hours they have given? 14 hours. That is your 2,80,000 hours. So total 4,10,000 hours. 30 plus 90, 120, 120 plus 4 lakh hours. Now what we know? We know one thing. Boss, how we arrived at 6 rupees? Some total cost was there. That we divided by 4 lakh. Then we arrived at 6. Now that 4 lakh, if I multiply with 6, don't you think I will get a total cost? That I am going to divide into 40, 30, 20, 10, whatever the ratio they have given, and divide by the activity drivers will arrive. And here, one more important thing you have to remember is few theories like activity-based management, activity-based budgeting, activity-based management, activity-based budgeting. That is important here. And listen. While computing the cost per cost driver, be careful. Why? Few cost driver they will tell per unit how much. Few they will tell per batch how much. Few they will tell per purchase order how much. So you should bring everything into uniform. Then only you can solve it. Got it? When they give per unit, you should multiply with number of units. Then only we'll get the total cost drivers. If they tell per batch how much, you should check number of batches. Then you will get total cost. Like that, you should equate it. Then only you can do it. One of the important. And one more might ask question from this is customer analysis. They will give 2-3 customers. Yes, they will tell how much is the selling price, how much is the discount of it, how much is the COGS, what are the different activities involved, for expedite delivery, how much, all those things are there, no? Yes, that question. I think in the study mat it is ABCDE question. Clear? There you should ascertain the profitability of customer. Same kind of question is there relating to one drugstore also, if I'm not wrong. Supermarket chain, medical stores, like that. That thing is there. That is also similar kind of question only. So all this 1-1-1 question, if you see and go, is also fine. But listen one thing very carefully. ABC, don't keep it for a last day's revision. ABC and overhead, please don't keep it for a last day's revision, guys, at any cost. Because that will be very much of time consuming and your other things might get affected with that. So please don't keep these chapters. Which are those chapters, sir? Basic theory chapter, ABC, overhead, cost sheet, job and batch costing, job costing, batch costing. These things please don't keep for the last day. Last day your full concentration should be on, if you want to score high, your full concentration should be on standard costing, marginal costing, budget. Budget also you can ignore and you can finish it off earlier only. Budget, your process costing, joint product, byproduct. Here is where your concentration should be there in full. Got it up? Yes. Now with that we have completed our overheads and ABC. So if I am not wrong, total 5 chapters are over. 6 are over. 6 are over. Today's our still the target is, see, because I don't want to rush towards marginal and standard, because those are the beautiful chapters and gets you a maximum marks. And students' favorite chapters, correct? Standards to wow. Such a easy chapter, I don't know why they complicate it, students. Few will do that. 1 minus 2, 2 minus 3, 3 minus 4. 1 means this into this, 2 means this into this. Why to complicate, boss? Why to by heart a formula? Understand the concept. Why to by heart a formula? Correct? And if you see recent papers, marginal costing is so superb chapter. They are going for a practical based decision making question, pure decision making question. Now no more PV ratio and all. Proper decision making question, whether to produce more or no, whether to shut down or no, whether to sell, what should be the price we should charge to sell, if it's a key limiting factor, how to do it, like that. So I want to give more time towards that. Okay, so today our target is few more chapters, like next we are going to do JPBP, then we'll come to cost accounting system, then we'll do batch, job, unit. Okay, if at all these things gets over before 7, then we'll try to do budget also. Okay, and tomorrow if at all time permits, for example, if tomorrow by 3:34 our marathon all session gets over, then we'll see few questions, special questions we'll start seeing now itself. Fine, no? Now we'll take a break. What is the time now? 4:20. Eat something, have some food, do whatever you want. Take a break till 4:40. We are starting exactly at 4:40. Go out, take a nice air, take a tea, coffee, do whatever you want. Even if you are watching in YouTube marathon, whatever you are doing, take a break, go out, talk to your parents, do whatever you want, take a bit of walk and come back. If you are watching before going to exam, stop this video and go study. Nonsense. Now we are starting with joint product and byproduct. Now, sir, what do you mean by joint product? Sir, see, joint product is those kind of product which is coming out of the same process but two different products. For example, you take a crude oil. You start processing crude oil, you will end up getting petrol, diesel. Now, petrol and diesel are a joint products. Petrol and diesel are a joint products. Now, let's say you process curd. You process curd. You will get butter. You will get buttermilk. You will get butter. You will get buttermilk. Now, when you get butter, it is main product. Whereas buttermilk, does that have a significant value just like butter? The answer is no. If that don't have significant value, this will be treated as byproduct. This will be treated as byproduct. Now, there is something called as co-product. What do you mean by co-product, sir? Guys, process is same. Only process is same. Products are coming out of different materials. For example, oil refinery. If you put the mustard seeds, same process will give you mustard oil. If you put a sunflower seeds, same process will get a sunflower oil. If you put a groundnut, same process you will get a groundnut oil. Now these are the co-products. Are they coming out of the single process? The answer is no. Are they coming out of the same process? Yes. Are they result of the only one process? No. When you give the raw material relating to mustard oil, you will get mustard oil. When you are going to give a raw material relating to sunflower oil, you will get a sunflower oil. Which means those are co-products. Those are, what do you mean by co-products, sir? Where different units but the same process. So, listen here. Joint product means two or more products separated in the course of the same processing operation. Two or more products separated in the same course of operation. That is your joint product. Whereas products recovered from the material discarded in the main product process, which means you never had an intention to prepare a byproduct. Your intention was always and always the main product only. But it got discarded. You don't have choice. You got it. That is your byproduct. That is your byproduct. Now, the point at which we get all these things, no, that is known as split off point. That is known as split off point. The point at which the products that from process we get a segregate different products, that we call it as a split off point. After split off point, few product can be processed, few cannot be. Which can be processed further, whatever the cost incurred for that further processing, that we will call it as further process cost. For example, now from the curd, you got butter, you got buttermilk. Now, buttermilk you can't do anything, leave. But butter, guys, you can further process it into ghee. Now, the cost incurred to further process ghee is a further processing cost. This is very simple here. This further processing cost is purely to the ghee. However, cost till here is there, no. That is there for butter also, buttermilk also. How to segregate the cost between butter and buttermilk? That's what we are going to learn in this particular chapter. That's what we are going to learn in this particular chapter. Now, before that, try to understand the cost what we incur till the split off point, that cost we call it as a joint cost. The cost which we incur till the split off point, that we call it as joint cost. Clear? Joint cost. Guys, here be very careful. What is it, sir? Sometimes you will get a byproduct. Now, how to treat this byproduct, sir? You have two methods. You have two methods. What you should see, sir? You should see the value of byproduct. Value is more, value is less. I mean, more in the sense comparatively more. You have good economical value. You don't have good economical value. Now, when the value is more, good economical value is there, then treat it like a one more joint cost. Joint product, sorry. Treat it like a one more joint product. When the value is not there, then what you should do, take the NRV of byproduct. Take the net realized value of net realizable value of the byproduct and reduce it from the joint cost. For example, 10 lakh is the joint cost. NRV, your NRV of byproduct is, let's say, rupees 10,000. Now reduce it. 9,90,000. Divide it only among joint products. Ignore byproduct. This is one more option. Option number one is what? Treat it as a separate product, joint product, if the value is good. Option number two, value is not good, do sarru. Reduce it from the joint. Got it? Sir, how to apportion this, sir? We got different methods. Physical unit method, net realizable value method, one of the very important method. Net realizable value method, one of the very important method, and other technical estimates like contribution, average unit, market value, etc. Physical unit method, what you are going to do, sir? That is, joint cost is divided on the basis of number of units produced. Joint cost is divided on the basis of number of units produced. Whereas in NRV method, one of the important method, joint cost is divided on the basis of NRV of each product, net realizable value of each product. How to arrive at net realizable value, sir? That I will tell later. Where average unit method, average unit cost method, you have to find out the cost per unit, divide it. Contribution margin method, you are going to segregate between variable cost and fixed cost, and then you are going to segregate it. Okay, that we'll see. Now, see here, physical volume method, one question we are going to discuss. A coke manufacturing company produces the following product by using 5,000 tons of coals at 1,100 per ton of the into common process. So how much is the joint cost here? 5,000 into rupees 1,100 rupees. Sorry, 55 lakhs. That should be divided among coke, tar, sulfate of ammonia, benzol. What are these, sir? Different elements, different minerals, elements. Now, they have given how much is extracted also. Now we are going to divide it on this basis. That is 55 lakh. 55 lakh divided by how many total units? 3,500, 4,700, 4,800 tons. Correct? Sir, where does other 2,000 tons went, sir? Loss. Now you should distribute this 55 lakh to 4,800 tons. How, sir? Per ton, how much, sir? 55,000, 55 lakh divided by 4,800. Now, what you should do is, first one, 55 lakhs divided by 4,800 into 3,500. 55 lakhs divided by 4,800 into 1,200. 55 lakh divided by 4,800 into 52. 55 lakhs divided by 4,800 into 48. First one how much? Second one how much? Third one how much? Fourth one how much?
10,417.
40,10,417.
13,75,000.
13,75,000.
59,583.
59,583.
55,000.
50. This is the segregation of the cost among coke, tar, sulfate of ammonia and benzol. Under which method? Physical unit method. Clear? Now, sir, NRV method. Sir, NRV method, what we should do is, guys, you should check whether that particular unit is further processed or no. If the particular unit is not further processed, then NRV will be nothing but selling price at split off point. If the unit is not further processed, then NRV of that particular unit is sales value at split off price. Sorry, split off point. Sales value at split off point. No, sir, that unit is further processed. Unit is further processed, then the NRV, what you should do, you know, selling price or sales value at after further processing minus gross profit. If you know, you should reduce it. Gross profit, if you know, you should reduce it, or any profit, if you know, you should reduce it, minus further processing cost. Minus further processing cost. That time what you will arrive at, sir? You will arrive at selling price at split off generally. Selling price at split off you will arrive at. Or NRV at split off you will arrive at. We want to know how much is NRV at split off. So always remember, if at all it is further processed, then what you should take? Sales value after further processing minus further processing cost minus profit margin. If it is given, you will arrive at NRV at split off point. If at all further process is not done, then what you should do? If the further process is not done, sales value at split off will be your NRV. Sir, now how to determine whether it is further processed or not further processed? That they will give in a question only. That they will give in the question only whether that is further processed or not. Sir, if it is not given in the question, how to determine? Sir, guys, very simple. What do you mean by very simple, sir? Very simple. All you have to do is check which is beneficial. Whether further processing is beneficial or not further processing is beneficial. Which is beneficial, you choose that. And you calculate NRV based on that. You calculate NRV based on that. Now, the question is, sir, how to determine which is beneficial? Whether further processing is beneficial or no? Very simple, guys. By further processing, how much extra sales you can make? Let's say, without further processing, you are able to make 14 lakh rupees sale. With further processing, you are making 17 lakh rupees sale, which means incremental revenue is how much? 3 lakhs. Incremental revenue is 3 lakhs. To make this incremental revenue, you have incurred further processing cost. If at all you guys haven't further processed, no, then that further processing cost only wouldn't have incurred. Now you should check how much is further processing cost. Now my point number 1. Further processing cost is 2,50,000. Further processing cost is 2,50,000. Now my question is, should you further process it or not? Further process, because 50,000 extra you can make. What if the cost is 3,20,000? Then don't further process, because you will lose 20,000 extra. Extra you got is 3 lakh. Extra you spent is 320. So better not to spend. Got it? So very simple. Taking decision is pretty simple. If the incremental revenue is more than incremental cost, go for it. If the incremental revenue is not more than incremental cost, ignore it. Incremental cost is more than incremental revenue, go for it. Incremental cost is not more than incremental revenue, ignore it. Don't go for it. Sell it at split off only. Like that, you are going to take a decision and you are going to take a call under NRV method. Other methods are there, like market at a split, market value at a point of separation. There is basically sales price basis at this one. Like that, market value after further processing, based on that they will give in the question. If these are the things, they will give in a question. Average cost unit, what you should do, sir? Whatever the cost incurred divided by joint product total units, you will get per unit how much, that you are going to multiply with number of units. Same like your physical only, but in physical value method, what we did, divide into together. Here what you should do, divide by units, you will get rate per unit, multiply it with number of units. See here, find out the cost of joint product ABC using the average cost unit method. Joint cost is 60,000. How many units you are able to produce? 1000 units. Per unit how much? 60,000 divided by 1000. Per unit it is rupees 60. Correct? Now multiply it with 500. Multiply it with rupees 60. Multiply it with rupees 60. Peace. That's it. Simple. Very simple. Correct? Contribution margin method. Guys, always remember this. Sales minus variable cost will give you contribution. Contribution minus fixed cost will give you profit. Contribution minus fixed cost will give you profit. FM is different, costing is different. Because here pure financial items won't be there, no? Now, listen. Find out the cost of the joint product using a contribution margin method. Sales they have given 1000 kg at rupees 60, which will come to, 100 kg of rupees 60, which will come to 6000. 120 kg at rupees 30, which will come to 3600. Now, joint cost, marginal cost, that is variable cost is 4400, fixed cost is 3900. Now, what you should do, first you should find out contribution. To find out contribution, you should know the variable cost. But per unit, how much they haven't given, we only will calculate. How, sir? 4400 divided by how many units? 220 units. Per unit how much? 20. So we are going to calculate variable cost at 20 rupees. So 20 into 100, 2000. 20 into 120. Now my contribution is 4000 and 1200. Now in this ratio I am going to segregate this fixed cost. 3900. First, for A it is 3900. How much is the contribution of A? 4000 out of 1000, 5200. How much is the contribution of B? 3900 into 1200 out of 5200. How much for A? How much for B? 3900. This is how you are going to do it under contribution method. First, you find out the contribution. If they don't give the variable cost separately, just segregate it in the terms of units. You will get a variable cost, you will get a sales, difference is contribution. In that contribution ratio, segregate a fixed cost. Clear? Yes. Now, listen. One nice question is there. Listen. They are into some production where the cost, like purchase cost of material is 40,000. Conversion cost, that is your labor plus overhead, is 60,000. Conversion cost means cost incurred to convert the material into finished goods. Cost incurred to convert the material into finished goods. So material cost is not included. That material, after getting material, how much we incur to bring it into finished goods, that is your conversion cost. So total JC is how much now? 1 lakh. 40,000 plus 60,000, 1 lakh. Actually, they are into two productions, two units. One is caustic soda, one is chlorine. However, chlorine they are not selling directly. Chlorine they are further processing into PVC. Okay. So chlorine 800 will give you a yield of 500. You can go through question once again later, but I am just giving you a brief about question. So 800 units of chlorine can be further processed into 500 units of PVC. Now, it can be further processed with the cost of 20,000 extra. So further processing cost is 20,000. Also, there is an active market for chlorine also at the rate of rupees 75. First, they are asking how the joint cost of 1 lakh would be apportioned between caustic soda and chlorine under sales value at split off point. How much is the sales value at split off point for caustic soda? 1200 into 50. And always remember, as it is joint cost is related to production, when they give sales quantity as well as production quantity, you should take production into consideration, not the sales quantity for decision making. If they give both to ascertain the joint cost, you should always take the production units, not the sold units or a sales units. 1200 into 50. 60,000. Great. Chlorine 800 into 75. 60. Total both are 60,000, 60,000. 1:1 ratio. So sales value at split off is 50,000, 50,000. Sales value at split off is 50,000, 50,000. Physical unit method ratio is 3:2. 1,200 and 800. Total 2,000. That is 1 lakh divided by 2,000. Rupees 50. 1,200 into 50. 60,000 and 40,000. This under which method? Physical unit. Estimated NRV. Now, caustic soda to very clear, guys. We are not further processing at all. We are not further processing at all. So, whatever is there, NRV is nothing but sales value at split off. 1,200 into 50. 60. But chlorine, it is clearly mentioned in the question, it is further processed. Here you don't have choice also. They have clearly mentioned it is further processed. For NRV calculation, it is 500 into 200. 1 lakh. But to make this sale happen, you are incurring extra 20,000 further processing cost. 80,000. If the gross profit was there, that also would have reduced, but here it is not there. So it is 80,000. 3:4 ratio. NRV is 3:4 ratio. So 1 lakh, if you divide it in the 3:4 ratio, how much it will be? 1 lakh divided by 7 into 3. 42,857. 57,140. This is your estimated NRV. Hope it is clear. Now they are like, boss, one swimming pool people offered to purchase the chlorine directly. Now they are not even asking you to check whether it is better to accept or not to accept. That is not even a question. They are asking you better to go or not to go. Not the question. That's not the question. They are asking you, we are already going for it. How much should be our loss or profit by going for it? Very simple. If at all we are going for selling 800 tons of chlorine, can we sell any PVC? No. Now 800 tons of chlorine at rupees 75 if you sell, how much is your sales? Rupees 60,000. Instead of selling the chlorine, if at all you sold the PVC, that is 500 units at rupees 200, how much would be your sales? Rupees 1 lakh. Now rupees 40,000 is your loss of sale. It is loss of sale, not the actual loss. Why, sir? If at all we are not further processing, don't you think 20,000 we would have saved? Further processing cost of 20,000 we would have saved, which means Just because of not further processing, we are losing 20,000 as a company. How much we are losing? 20,000 as a company. Anyone any doubt in this conclusion? Here they are not even asking you whether to further process or not to further process. They are clearly telling, boss, it is not further processed, it is sold. Value it. That's what they are telling. Is it clear? Clear or no? Done. Now we are going for the next one. Few decision making questions only. All are decision making question only. Here the first one, if you see, they have given 3 products, A, B and C, and the byproduct is also there, and NRV of byproduct is ₹5. Okay, see, selling price is not a NRV. If at all you incurred anything else to make that sales happen for further processing, that you should reduce from the sales value, then only it will be NRV for byproduct. Now find out the amount of joint cost, allocate to product B using physical volume method. Now guys, how much is your joint product cost? 10 lakh. Correct? 10 lakh, no. That is to produce how many kgs? Guys, it's not 10 lakh because there is a byproduct. Correct? NRV of byproduct will be how much, sir? 50,000. So automatic 50,000 only, no? 50,000 into 5, sorry. 2 lakh 50,000. Now, if you reduce the 2 lakh 50,000, see, they are telling the NRV of the byproduct is used to reduce the JP. They are in question only, they are telling how to treat the byproduct recovery. So, out of 10 lakh, if the 2 lakh 50,000 is scrap, 7 lakh 50,000 is cost. Correct? Now, 7 lakh 50,000 should be divided among these two, 180,000. Whereas product B is just 120,000, which will come to 5 lakhs. Which will come to rupees. Anyone, any doubt? No doubt? Next, look at the next one. Sun Moon Limited produces and sells the following products: A, B, C, D, E. D, there is no further processing selling price, which means D is not further processed at all. You're not even decision making for that. Raw material is 3590, other manufacturing expenses 547,000. So how much is the total joint cost? Joint cost is 41 lakh 37,000 if I'm not wrong. Correct? And the manufacturing process which are absorbed on the product on the basis of NRV. They are asking you to NRV. And the further processing cost of A, B, C, and D are so and so and so. Fixed cost is 470. That is finally after everything we are going to reduce it. They are asking statement showing the forecast of the company assuming that none of its products are further processed. 2. Statement showing income forecast of the company assuming A, B, C and D are further processed. Third one, can you suggest the best plan? Listen here, when the question is silent as to which are the units further processed, which are the units not further processed. In that scenario, again NRV will be computed by assuming that everything is further processed. However, if the question is like, for example, in this question only, A, B, C, D, E, they told B, C and E are further processed. They are not talking anything about A. In that scenario, A, we have a choice to check which is better. Further processing is better or not further processing is better. In the question, if completely silent, then we assume it is further processed. If the question is partially silent, then that partially silent portion we can go for checking whether it is further processed or not further processed. How, sir? Guys, here they are not talking anything about further processed or not further processed, which means we are going to assume it is further processed. So 2 lakh into 25, 50 lakhs. Correct? B, 30,000 into 17, 5 lakh 10,000, that is 5.1 lakh. 25,000 into 12, 3 lakh. 20,000 into 10, because listen, when it is not further processed, you are going to take selling price at split off point as NRV, 2 lakh. 75 into 20, 15 lakh. Minus what, sir? Further processing cost. For A, further processing cost is 12.5 lakhs. For B, further processing cost is 1.5 lakh. For C, further processing cost is 50,000. For D is 0. For E, 1.5 lakhs. Now we got a NRV. Correct? For the first one, NRV is 37.5 lakhs. 3.6 lakhs. 2.5 lakhs. 2 lakhs. 5 lakhs. Total NRV is how much? 37.5, 40, 47, 50.6. Correct? 50.6 lakhs. Correct? No, total. Which one is 1,50,000? This is 13.5. Yeah. Sorry. 37.5, 40, and 16. 56, 59.6. Hey. 13.5. How much, sir? 59 lakh 10,000. Now this is my NRV. I am going to divide this cost of 41 lakh 37,000 on this basis into this, divide by this, 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 into this. I will get a joint cost allocation. Clear? Next, what they are telling, statement showing the income forecast of the company, assuming none of them are further processed. So what you will do, you know the joint cost, no? So you are going to take the sales price and split off for all the units, and minus for the joint cost, we will get the profit. Total you will get from that minus fixed cost of 473,000 you will get. Next, everything is further processed except D. Then again, sales value after split off you should take minus joint cost, minus further processing cost, everything you will get total profit minus fixed cost, you will get the total profit of the organization. Third one, which you should further process, which you should not further process. For that, very simple, I should check the benefits. A, 2 lakh units are there. At split off point, you can sell it for 17. At further processing, you can sell it at 25. Now my question is, how much extra rupees we can make per unit? 8 rupees. So 8 into 2 lakh. 16,000. How much is the extra cost we incur for that? 12 lakh 50. So incremental revenue is 16 lakh. Incremental cost is 12.5. Better further process it. B, 4 rupees is extra what we are going to make. 1,20,000. To make this 1,20,000, we are spending 1,50,000 extra. Better don't. C, 25,000, 4 rupees extra we are making. 1 lakh we are extra making by spending 50,000. So better to go for it. D is not even a question here. E, 75,000 into 6. 4,50,000, and you are spending 1,50,000 for that. Better to go for it. So the optimum production mix, which to be further processed are A, C, E to be further processed, B need not to further process, D anyhow you can't further process. So this is one more question based on your that swimming pool kind of question. It is nothing special. Listen here. This fourth question is bit different. Why, sir? Listen, that I told no. If at all it is completely given, not further processed or further processed, then it is further processed. If completely not given, also partly it is given. Few units are further processed, other units they didn't talk anything. That is your choice. Now in this question, see what they are telling. Product B and C must be further processed before they can be sold. Which means A is what? A is what? Your choice. Whether to further process, not to further process. Because B and C they are talking, A nothing they are talking, which means they left to your choice. Now, you should take units produced or units sold. Units produced. How much is the selling price at split off? 100. After 150. So, how much extra you will be able to make? 50 rupees from 1500 units. How much it will be? Sorry? 75,000. To make this 75,000, how much you have to spend? 1,50,000. Better not to further process. So for NRV, take 1500 into 100. Sure, understood? This is how you should do. Hope it is clear. With that, we have completed this particular question. And this case-based scenario question is also very nice. Go through that. Pokemon Limited. Clear? With that, we have completed our JPBP discussion. So how many chapters got over? Today's our target is, which are those? Cost accounting system, batch costing, service costing, job costing. Service costing, we'll see if at all everything gets over before, then we can go. No doubts here? Fine. Now we are going for the cost accounting. So, cost accounting system. What do you mean by cost accounting system? Sir, how to account for the costing? That is cost accounting system. Basically, we have two type of cost accounting system. One is integrated cost accounting system. The other one is non-integrated cost accounting system. Integrated, non-integrated. Now, what do you mean by integrated cost accounting system, sir? Both costing records as well as financial records are kept in the same books. Costing ledgers and financial ledgers are kept in the same books. That is your integrated cost accounting system. Non-integrated means where cost accounting and financial ledgers are kept in a separate books. Cost accounting and financial ledgers are kept in a separate books. That is your non-integrated cost accounting system. In a non-integrated cost accounting system, we'll start with non-integrated cost accounting system. What do you mean by this, sir? Only costing information will be there, which means pure financial items won't be there. Pure financial items won't be there. At the same time, your pure financial ledgers are there, no? Cash, bank, purchase, sales, creditors, debtors, bills payable, bills receivable, all these things won't be there. All these things won't be there. Sir, if these things are not there, how to pass the double entry, sir, then? For example, expense I incurred, sir. Factory overhead I incurred. Let's say I debited the factory overhead as it's an expense. To what, sir? To bank only I should put, no, sir. Guys, to make sure this won't affect the double entry, what we have done, we prepared some special account called GLC account. General Ledger Control Account. This is also known as CLC account. Cost Ledger Control Account, also known as GLA account. General Ledger Adjustment Account. Sir, which I should take for examination point of view, sir? Guys, that depends on question to question. Depends on question to question. Clear? So your cash account, bank account, debtor, creditor, purchase, sales, building, all those things won't come in the cost accounting system. All these things, to make sure double entry is completed, we are going to prepare a some account called as general ledger control account or cost ledger control account. Okay, few important ledgers are there like general ledger or cost control, that is to make the double entry possible. Stores ledger, also known as material ledger. Guys, this is nothing but relating to material. Okay, material account means it's a current asset, correct? Increase means we should debit, decrease means we should credit. Asset, no. Material account, increase means debit, decrease means credit. Wages is again expense. When we incur, we should debit it. When we transfer, we should credit it. When we incur, we should debit it. When we should credit it. Factory overhead, also known as production overhead, also known as manufacturing overhead, also known as works overhead. These are also expense account. These also expense account. Administration overhead, expense account. Selling and distribution, expense. WIP control, this is process in which the production is going to take place. The production account, we call it as WIP account. So this is nothing but one more asset only. So debit, incurrence of cost, credit, transfer of cost. Finished goods control is for your finished goods, also known as finished stock ledger, cost of sales and costing P&L. Now try to understand how it works. If you are able to understand this particular diagram, then everything is sorted. First, we bought a material. Second, we paid for a labor. Third, we paid for a direct expense. Now, material we bought, we can do two things. What are those, sir? Bit we can send it to factory, bit we can treat it as a overhead. Bit of material is transferred to factory for the production. Bit of material, that is indirect material, will be going to overheads. Labor, same. Direct will go to factory, indirect will go to overheads. Direct expense directly will go to factory. In fact, this direct expense, while passing the entry, we are going to ignore this at all. Ignore this. We are not going to consider this at all. We'll be passing one final entry. We'll understand that leave. Now, going to overheads. We incurred few overhead expense directly. Not the material labor overhead. Direct expense. Other than that, other indirect expense will be there. No? That we incurred. Now, overhead could be factory overhead, administration overhead, selling and distribution overhead. Factory overhead, administration overhead, selling and distribution overhead. Now, this overhead, which is factory overhead, we are going to absorb to what? Factory production. By the way, factory production means WIP, work in process. So we are going to absorb to which account? WIP. Administration overhead, we are going to divide it into two. One, general in nature, one is related to production. Related to production, we used to charge it to cost of production, which means it will be added to finished goods. If it is general in nature, it will be written off against cost of sales. And finished goods, whatever opening is there for that, whatever we received during the period will get added, and whatever sold will be transferred to cost of sales. At the same time, we incurred selling and distribution, that will also be charged to sales. Now cost of sales, we are going to transfer it to costing P&L. It will be compared with the sales. At the same time, in the overhead, there will be under absorption, over absorption, which we should charge it to costing P&L. We are going to charge it to costing P&L. Now, whatever the balance in the costing P&L is there, that will be taken to cost ledger control account or general ledger control account. This is how the process works. If you want to take a photo, quickly take a photo. Then I'm going to show you the adjust like entries, how it will be passed. Done, sir? Done. First, First transaction is what, sir? Purchase of material. When you purchase the material, guys, when you purchase the material, what happens to material? Increase or decrease? Increase. Increase in the asset, debit, credit. So I am going to debit my stores ledger control account or material control account, whatever given in the question based on that. 2, can I write bank? Can I write bank? No. Why? Can I write vendor account, supplier account? Why? Non-integrated. All these accounts are replaced with what account? General ledger control account. First entry, is it clear? First entry, is it clear? Done. Going to the second one. Incurrence of the labors. Wages. Wages is expense or income? When you incur the expense, you should debit it or credit it? I am going to debit wages, control account, debit. 2, cost ledger, control account or stores ledger, control account. Next, direct expense we incurred. I can take it as direct expense to GLC, and again I am going to charge it to WIP. When we charge it to WIP, direct expense will be credited, WIP will be debited. That only, no. When you incur, you will debit it. When you charge it, you will credit it. Instead of this one, we will pass this entry. WIP to general ledger control account. That is for the incurrence of the direct expense. Anyone, any doubt in these 3 entries? No doubt. Great. Now, 4th transaction is what, sir? 4th transaction is we issuing our material for the production factory. That what we should do, sir? Very simple, guys. When you issue, stores increases or decreases? Debit, credit? Stores ledger control account, I will debit, credit it. At the same time, what is receiving? WIP control account is receiving production. So I am going to debit the WIP control, credit the stores ledger control. 5th is what? Me issuing material for the factory overheads or any overheads. So I am going to take the respective overheads account debit, because that will be expense to that particular overheads. Increase in the expense, debit. 2, decrease in the material, credit. So stores ledger control account. Stores ledger control account. Now 6th one is what? Charging the labor to production. Charging the labor to production, that is wages control account should be debited or credited? Credited, because when we incurred we debited, now we are charging, we should credit it. So debit what? WIP to wages control account. This is your 6th one. 7th one is what, sir? Wages we are providing to the overheads. What we should take? Respective overhead to wages control. And one thing you have to remember, guys, in your general ledger account there will be balance, because that is that kind of account. In your stores ledger there could be balance. Thumbs up came on. In stores ledger there could be a balance, guys. Stores ledger there was a balance. General ledger there is a balance. WIP is also material, that also can have balance. Finished goods can have balance. Overheads are expenses, that should not have balance unless and until they have given it in a question. Unless and until they have given it in question, it should not have balance. Wages is your expense, that should not have balance. If balance is there, you should write it off. Balance in overhead means under absorption or over absorption. If they are not giving balance, then you should write it off. Your costing P&L should not have balance. You know, right? Only asset account should have balance, liability account should have balance. Here anyhow liability account we are not creating only. Why? Instead of liability account we created general ledger control account. We created general ledger control account. Hope it is clear. See, I will show you some magic. Two hands up. Nice, no? See, rain will come with cloud. What else was there? This will, heart will come. And one more balloon thing was there. I think this one, balloon will come. Balloons will come. This celebration, I feel. This celebration. Leave. Now, where were we? So, this is your 7th point. Clear? Done. 8th is what, sir? Direct expense that we have already showed you. Correct? When you incur direct expense, what you are going to do? Charge it to production directly, WIP to GLC. That was 8th one. 9th one is where? Incurrence of the overheads. Incurrence of the overheads. Expense it is. So increase in the expense. Respective overhead account debit. So respective means what, sir? If it's a factory, admin, selling and distribution. Respective overhead account debited to bank or GLC or CLC account. Because bank won't come directly. Now, 10th one is you are charging factory overhead to the factory. So increase your production cost, that is WIP account debited to factory overhead account. Now 11th is you transferring finished goods to the finished goods from the production. So from production it will go out. So to WIP account, and in the finished goods it will increase in the finished goods account. So this is the entry for transfer from the WIP to finished goods. Done. 12th one is what, sir? Admin overhead related to production. Admin overhead related to production, that we have to charge it to finished goods. That is again finished goods account debited to administration overhead control account. Now administration overhead, 13th one is finished goods, you are transferring it to cost of sales. That is sold units that you should reduce. No, that is cost of sales will increase to finished goods. Cost of sales to finished goods. 14th one is what? You charging general admin overhead to the cost of sales. Again, cost of sales to admin overhead. That is your cost of sales. Next, 15th is selling and distribution you are going to charge. Before that, incurrence of selling overhead, if any, what would be the entry? Selling and distribution overhead account debited to bank or GLC. Now 15th one, cost of sales, guys. What would be the entry? Cost of sales to selling and distribution. All these are absorption. All these are absorption. In the question, if they are silent about whether selling and distribution is absorbed or no, then always and always remember complete selling and distribution will be absorbed to the sold units. Clear? In the question, if they are not talking how much is absorbed, S&D, then make sure you are not going to keep the balance. You are going to absorb everything to the cost of sales. Done. That was 15. 16 is sales. When the sales happens, what will be the entry, guys? Bank account debited to sales. Best part is both of this is pure financial. This entry won't come. From the sales, you will transfer it to costing P&L. No. That time, what would be the entry? Sales account debited to costing P&L. But sales, can I take it as sales? No. Instead of sales, it is general ledger control account. So this entry is general ledger control account debit to costing P&L. Now 16th, 17th is where? This expense you should charge it to costing P&L. No. So debit the P&L, that is costing P&L account debited to cost of sales account. Whatever the balance is there, just write it off. Then sir, then under absorption or over absorption is there. If it's the under absorption, charge it to costing P&L, that is costing P&L account debited to respective overhead account. If it's a over absorption, credit it to costing P&L, that is respective overhead account debited to costing P&L account. Costing P&L account. Is it clear? Done. That is 18. 19 is where? 19 is not there. Huh? 20 is there. 19 is here. I will show that. 20 is what, sir? 19 is what, sir? We bought some materials, no? That we are sending back to our vendor. So automatically it will become 2 SLC. Debit vendor. Can I take the vendor's name? I should take GLC or CLC. 20 is what, sir? Whatever we issued to the material to the production, that is coming back to us. Then what we should take, sir? WIP, that time we debited, now we will credit. As it is coming back to our stores will increase. So stores ledger control account debit to WIP account. These are the few journal entries which we are going to pass. That's what I told. If you understand this diagram process, how it works, then it will become very easy for a journal entries. Hope you guys understood this. Now, if you want, take a picture of this. All the journal entries along with numbering are there. Done now? Done. Listen here. Balance in the costing P&L shall be transferred to GLC account, and overheads under or absorption shall be adjusted in the two situations: when they particularly ask in the question to adjust it, or when the accounting is done at the end of the period and in trial balance overhead balances are not there. In that scenarios, you are going to adjust the overhead. That is, you are going to write it off to costing P&L, or you are going to credit it to costing P&L. Whereas integrated cost accounting system, guys, very simple. Both cost ledgers and financial ledgers will be in the same books, which means your SLC, all those things remain same. Instead of GLC, we'll take that particular account itself. Purchase of material, what was the entry? Stores ledger account debited to GLC. Here it will be particularly vendor or bank. Labor incurrence, what would be the entry? Wages control account debited to CLC. Here no CLC, here directly to bank. Like that we are going to do. And guys, now try to understand, whenever you maintain the cost accounting and the financial accounting separately, that is non-integrated system, automatically your costing profit and financial profit won't match. Now we want to know the reason. When you want to know the reason, you are going to prepare something called as reconciliation statement. You are going to prepare something called as reconciliation statement. Now, when you prepare the reconciliation statement, you are going to compare the profit of the cost accounting, profit of the financial accounting. Why the difference will come, sir? Difference will majorly come for these things. Pure financial items will be there, no? That will only be there in the financial accounting, not in the cost accounting. Pure financial items only be there in the financial accounting, not in the cost accounting, like your dividend, like your interest, like your income tax, like your donation, all those things will be there only in the financial accounting, not in the cost accounting. So automatically profits will vary, income tax in cost accounting it won't be there, in financial accounting it will be there. Notional items, opportunity cost and all, in financial accounting we won't consider it all because we consider only actual numbers, whereas in cost accounting it will be there. Cost accounting it will be there. Overheads, keep this thing in mind. In the financial accounting we take it on actual basis, whereas in a cost accounting we are going to take it on an absorption basis. In cost accounting, on what basis we will take it, sir? Absorption basis. In financial accounting, incurrence basis. Now, guys, what is the relationship between the stock and profit? Opening stock and profit are inversely proportional. Closing stock and profit are directly proportional. Opening stock and profit are inversely proportional. Closing stock and profit are directly proportional. What do you mean by that, sir? Opening stock means expense. Expense. More the expense, less the profit. Opening stock means you are going to take it in the expense side. So more the expense, less the profit. If at all it's a closing stock, that is decreased from the expense, because debit side 1 lakh is there. Credit side if you write 20,000, expense is how much? Only 80,000, which means as the closing stock will be there in the credit side, which is not an expense, opposite of expense, closing stock increases means expense decreases. Expense decreases means profit will increase. So remember this point, closing stock and profit are directly proportional, opening stock and profit are inversely proportional. Now, sir, how to do it, sir? Guys, always remember there is no particular starting point as such. You can take a cost accounting or financial accounting where the information of both will be available. Okay. Let's say if you start with financial accounts, you are trying to reach at cost account. Starting point is financial accounts, you are trying to reach at cost accounts. In your study mat 1 examination, they use the starting point as a word base book also. They use the term called base book in one of your examination. So if they tell, consider financial accounts as a base book, you should start from the financial account. Here the motive is very simple. Here it is not about cost accounting is right or wrong. If you start from the financial accounting, it is not about cost accounting is right or wrong. It is all about we going and reaching cost accounts. We going and reaching cost accounts. How we can reach the cost account from the financial account profit basis? How we can reach the cost accounting profit from the financial account profit, guys? Very simple. Whatever in financial accounting we treated it as income. In cost accounting they haven't treated it as income, because of which our profit was increased, now decrease it. Few incomes will be there. In your financial accounting you treated it as your income, because of which what happened to your profit? Increased. In cost accounting did you treat it as income? No. Now if you want to go and meet the cost accounts, whatever cost accounting has done, that you should do, no? So what you should do, you shouldn't have done that. So now, reduce your profit. So you should see that particular item, how it affects profit or loss. Done. There are few incomes which is taken only in cost accounts, not in financial accounts. In cost account profit will be more or less? More. Because in financial it is not treated as income. In costing it is treated as income. So increase. Now in financial accounting, are we thinking which is right, which is wrong, or are we just thinking that how to reach or how to make this financial profit reach cost accounting profit? how to make this financial accounting profit reach cost accounting profit. So to reach there, what we should do? Whatever is done in the cost accounting, that should be done in the financial accounting. This is how you should think. That is, we will start from here and we'll end at here, which means from this point we should try to reach this point, which means whatever this here it is done, we should do it in this also. Whatever not done in this, that should be eliminated from this also, if at all it is done. Shall we see one line by line item? First, expenses recorded in the cost accounts but not in the financial accounts. Expenses recorded in cost accounts but not in the financial accounts. Now my question is, in the cost accounting profit is more or less? Less. Financial accounting profit more. What I should do? Minus. This is my right hand, cost accounting profit. This is my left hand, financial accounting profit. Try to understand. I should make my left hand reach my right hand. In my right hand, what happened? There was one expense which got recorded. So my right hand went down, but my left hand is there only. To make my left hand reach my right hand, what I should do? Less. Incomes recorded in cost account but not in financial account. In cost accounting, profit is more. In financial accounting, it is not more. What you should do? Expense recorded in financial account but not in cost accounts. Expense recorded in financial accounts but not in cost accounts. Now, in financial account, we treated expense. Profit became less. In cost accounting, nothing happened. Can I move my cost accounts? No. Because I have to reach my cost accounts. So I should increase, add. Whatever we have done in the cost accounting, we should do it. Whatever is not done, we should eliminate it. That's simple. Now, income recorded in financial account. Because of that, profit is more in financial account, not in cost. What you should do? Less. Because I should reach my cost accounts. Overvaluation of closing stock in the financial account. When you overvalue the closing stock, what happens to profit? Increases. So in financial account, profit is more, cost account it is not more. What you should do? Less. Cost account I should not move. Undervaluation of closing stock in financial account, because of which my profit is less. Less the closing stock, less the profit. What we should do? Add. Overvaluation of closing stock in the current asset. Not current asset. Cost accounts. Overvaluation in cost accounts. Profit is more. What we should do? More. I should reach this one. It's not about who is correct, who is wrong. It's all about reaching there. Undervaluation of closing stock in current asset. Profit is less in cost accounting. What we should do? Now, overvaluation of opening stock in the financial accounts. Overvaluation of opening stock means less profit. What we should do? Add. Undervaluation of opening stock in financial account. More profit. What we should do? Minus. Overvaluation of opening stock in cost accounts. Profit less. What we should do? Minus. Undervaluation of the opening stock. More profit in cost accounts. What we should do? Add. Now comes absorption. Over absorption means what? Your absorbed overhead, recovered overhead, that is overhead expense what you are showing is greater than actual overhead. For example, if you had spent rupees 8 lakhs, you absorb 9 lakhs, means how much you are showing it as an expense? 9 lakh in cost accounting, but in financial accounting 8 lakh, which means if it is a over absorption, in cost accounting profit will be less, because more expense in cost accounting, less profit in cost accounting. So you should reduce in financial accounting profit. Now, if it's under absorption, what do you mean by under absorption? Actual expense is 8 lakh, absorbed overhead is just 6 lakh, which means you under absorbed it. Now when you under absorb it, what you should do? When you under absorb, in cost accounting you are showing more expense, less expense. Less expense. Less expense means profit is more. So to make sure my financial profit reaches this one, I should increase my profit. Add. This is how you are going to treat it. And few financial items, all those things we have discussed. Profit as per cost accounting, if you start, you should make sure what is happening in the financial account that you are doing in cost accounting also. If you start with loss, you should think what happens to loss, not to profit. Okay. Then there is one more thing called as memorandum reconciliation account. What is that, sir? One account will be there, like account only will start. Profit means you will start from the credit side. Loss means you will start from the debit side. Whatever you should add to the profit, if it's a profit, whatever you should add, you will take the debit side, credit side. Whatever you should less, you will take it in the debit side. If at all you started with the loss, whatever you should add, that will take it in the debit side. Whatever you should less, that will take it in the credit side. You will get an opposite side balance. If you start with loss as per financial account here, you will get loss as per cost accounts here. If at all you get debit balance only, that means that will be profit as per cost accounts. Like that it is. Profit means start from the credit side. Gain, profit, loss means start from the debit side. Whatever to be added to loss, debit. Whatever to be added to profit, credit. Whatever should be reduced from the profit, debit. Whatever should be reduced from the loss, credit. Opposite side, that's it. Okay, that is your memorandum reconciliation account. Clear? This is how you are going to do. And one more thing, guys, here, one more important point, if you ask me, sir, which is important, very important in this, what you expect this time to come, that incomplete records are there. 2 questions are there that might come. That is, you should keep on starting giving a link. From the payment of vendor is there. From payment of vendor, you can find out vendor account. In vendor account, everything is there except how much is purchased. Now payment is also known, means you will get to know how much is purchased. That purchase you can take and go to material control. Like that, you can keep on giving link. End of the day, you will arrive at all the accounts balanced. Okay, all the accounts balanced. And in one question, if you observe carefully, generally what they will do, you know, wages, direct 60,000, indirect 40,000 they will tell. Total is 1 lakh. Now, when you pay the wages, what entry you are going to pass? Wages control to bank, 1 lakh. When you allocate it, 60,000 to WIP, 40,000 to factory overhead. Now try to understand, sometimes they will tell, out of this 60,000, 55,000 is related to production, which means the extra 5,000 is there, no? That you are going to treat it as a, relating to idle time or something, you are going to treat it as a overheads. First they will tell direct, then they will tell, out of this, only 55,000 is productive in nature, which means other 5,000 you are going to charge it to costing, sorry, not costing P&L, overheads. And when doing reconciliation, guys, you have to prepare the financial profit by preparing financial profit and cost accounting profit. Sometimes they will give few expenses. Let's say 1 lakh they will give. Okay, that is incurred. And they don't give budgeted and also that only will take it as budgeted also. In that they will give 40% is variable. Now that 60,000 is there, no? 60,000 directly will take in the financial profit as it is, financial accounting. Because in financial accounting, we take the actual terms. But in cost accounting, what we should do, we should absorb it. How, sir? This 1 lakh, when the units are 80,000. But our normal capacity is 1 lakh. Always remember, your absorption will be done on the basis of normal capacity. Normal capacity means generally if you work in a normal ways, how many units you can produce. So we think normally only, no. So when deciding overhead factor, we thought 1 lakh units only. But we are producing only 80,000. Now the 60,000 what I should do, I should calculate how much is absorption rate. Rupees 0.6 per unit. Now when charging, when calculating costing P&L, I should take not 60,000, I should take 80,000 into 0.6. 48,000, which means 12,000 is under absorption, like that. For financial, I will take 60 directly, no doubt. Variable cost, I will take directly, no doubt, because variable cost is on the basis of actual terms. But when it comes to fixed overhead, you should absorb it. There are 2 or 3 questions based on this in the practice problems. Okay, everyone will get confused in that. So please don't get confused. In the cost accounting, we should absorb on the normal base capacity and you should absorb it. In the financial, we take it directly. This is all about cost accounting system. Guys, don't worry much about this. Whatever is there in the study material, if you do so much, more than sufficient. Nothing special. Whatever is there in the study mat, if you do so much, more than sufficient. But special emphasis or special concentration should be given for the reconciliation. Because the ratio is like 5 times if they have asked reconciliation, 2 times they would have asked ledger journals. And journals also, when they ask, they will ask for 5 marks. They will give few extracts and they will give. Sir, in the question, how to determine whether it is integrated or non-integrated, if they don't tell. Guys, just check whether in the trial balance, general ledger control account or cost ledger control account is there. If it's there, it is non-integrated. If it is not there, it is integrated. As simple as that. Is it clear? Okay. With that, we have completed our cost accounting system. In fact, we completed one module also and one chapter from the second module also. Now, today's target, we are left with 2 more chapters. We'll do it. Before that, we'll take a break and we'll do it. Fine, no? You are able to understand, no? Am I going fast? If at all you revised once, I think it is, you are able to revise. If at all you haven't revised, then you might feel that I'm going a bit fast. But you don't have choice, no? You have to complete it in 1.5 days before your examination. So here revision at least should be completed in 2 days. Okay, fine. We'll take a break of 10 minutes and we'll start. We'll start at 6:16. Fine now. Give me a second. Huh? Which format, madam? These formats. Done now. This one also you can take. Have you taken this? And if it's a loss, what would be the thing? Take this one. If it's loss means opening stock and loss is directly proportional. More the opening stock, more the expense. More the expense, more the loss. Whereas closing stock and this is inversely for loss. Wait. Okay. Shall we start? See, basically, if you take material costing, what and all are there, sir? One is computation of the total cost of material. 2, EOQ. 3, that maximum stock level. 4 is your inventory turnover ratios. 5 is decision making questions. Labor, if you take computation of employee cost, computation of employees' earnings, overtime, how to treat the overtime. Overheads, if you take distribution, redistribution, absorption, machine hour rate, and treatment of under absorption, over absorption. 5. ABC, nothing special is there. If you take a topic wise questions, you can tell. One is that customer analysis. 2 is that that basis of that kind of question. These are the only 2. And bank one question is there. ATM service, that thing. That is your ABC. Next was which chapter? Cost sheet. Cost sheet, nothing special is there. Cost accounting system. Accounting as per integrated, accounting as per non-integrated, reconciliation, 3 topics. Memorandum reconciliation, 4 topics. Marginal, if you take marginal, standard, if you take 4 variances. Basically 4 variances. Budget is nothing is there. And process, as I told you, 3. Basically 3. Normal process account, inter-process profit things, equivalent units. So you should always divide the topic subject into or the chapter into subtopics, and you should study. Then automatically it will be easy. Now we'll be starting with unit and batch costing. Basically this is method of costing, guys. This method of costing, that is what you mean by costing, ascertainment of cost. Whereas homogeneous products are produced. It is a method in which when the homogeneous products are identical, homogeneous means similar kind of products. Identical means similar kind of products that is produced in bulk. How to calculate the cost per unit? That method what we are going to apply is a unit costing, where the production is done on the batch basis. When the cost is calculated on the batch wise, that is per batch how much, then there we are going to apply batch costing. Unit costing you don't believe, but when we did a cost sheet, that time only we understood what is unit. In the cost column per unit we'll take no, that itself is a unit costing. We can see questions on that. 2 or 3 questions must be there. 2 questions if I'm not wrong. Here, the following data relate to the manufacture of a standard product during a 4-week, that is 1 month data they have given. Raw material consumed, direct wages, machine hours work, machine hour rate. So this is for the absorption. Office overhead 10% of the works cost. Selling overhead is 20 per unit. Units produced and sold are 10,000 at the rupees 120. Produced also same, sold also same. Otherwise, till a COGS what you should take? Till COP what you should take? Units produced. Opening stock, closing stock. COGS you should take number of units sold. Administration overhead general in nature, selling and distribution general in nature, you should take a units sold. I hope you remember. Till COP it is units produced. After that, units sold. You are required to find out the cost per unit and profit for the period. Now, cost per unit, 4 lakh divided by 10,000, 40. 2 lakh 40 divided by 10,000, 24. Overhead is 3,200 into 40. How much it is? 1 lakh 28,000 divided by 10,000, 12.8. Office overhead 10% of works cost it seems. So 4 lakh, 6 lakh 40, 7 lakh 40, 7 lakh 68,000 is a works cost into 10%, which is 76,800 divided by 10, 7.68. If at all the units produced and sold were different, then for this one we would have taken units sold. For these we would have taken units produced. Selling overhead 20 per unit. Directly they have given unit cost only. We will get a total cost. Simple. Very simple. No? Cost sheet only with the unit column. Listen. Atharva Pharmacare Limited produced a uniform type of product and has a manufacturing capacity of 3,000 units per week. From the records of the company, the following data are available relating to the output and the cost of 3 consecutive weeks. Units manufactured, direct wages, direct labors and factory overhead. So why 3 informations they have given, you will understand. Assuming that the company charges a profit of 20% on selling price, find out the selling price per unit when the weekly output is 2,000. They want to know how much is the cost of 2,000 units a week and how much is per unit. Very simple. Week number 1, week number 2, week number 3. 1,200, 1,600, 1,800. Sir, why they have given 3 information? Just to help you guys in segregating which is variable in nature, which is not variable in nature. 9,000 divided by 1,200. In the first week, direct material was 7.5. Second week, how much? 12,000 divided by 1,600. Third week, how much? 13,500 divided by 1,800. Which means direct material is variable. Because variable feature I told no. Total will change, per unit won't change. Total will change, per unit won't change. That is your direct material. Direct wages, 3,600 divided by 1,200. 4,800 divided by 1,600. 5,400 divided by 1,800. This is also factory overhead. Damn sure that is not fixed. Why? Total is changing. Now 31,000 divided by 1,200. 25 point. 33,000 divided by 1,600. 20 point. Oh, so this is what? Not a variable, not a fixed. It is a semi-variable. Correct? In this scenario, what you should do, sir? Take the two difference between cost. Which are the levels shall we take? This only will take. Fine. So 2000 is the change in cost. Divided by change in output. 400 units. Correct now? 400 units. How much is the variable cost per unit? Per annum. Per unit. Rupees 5 per unit. Correct? Now, for the level of 2000 units, we have to calculate the cost. Before that, we want to know how much is the fixed in it. Which one shall we take? Which level shall we take? To calculate fixed. 1200 only will take. Total cost of 1200 is 31,000. Variable cost is how much, sir? 5 into 1200. 6,000 plus fixed cost. So, fixed cost is how much? 25,000. Fixed cost is rupees 25,000. If you want to check, you can cross check here. How, sir? 1,600 into 5 is how much? 8,000 plus 25,000. Is it the same? Yes. Now we have to find out cost per this one. Direct material is how much, sir? 7.5 per unit. 2,000 into 7.5. 15,000. Direct labor is how much, sir? 3 rupees per unit. 3 rupees into 2,000. 6,000. Overhead is how much, sir? Fixed is 25,000. Variable is 5 rupees per unit. 2,000 into 5 is 10,000. May you know the total cost, please? What? 21,000, 21,000, 46,000, 56,000. 56,000 to produce a 2,000 units, and they are asking, they are telling 20% on selling price, which means try to understand. You can follow the equation method or you can go for cross multiplication. Equation method means selling price is equal to cost plus profit. Selling price we don't know. Can I take it as S? Cost I know, 56,000. Profit is 20% of selling price, that is 0.2S. So 0.8S is equal to 56,000. S is equal to, sorry, 70,000. This is one way. One more way is selling price. If I take it as 100, cost is how much? 80, because profit is 20. No. Selling price 100, profit is 20% of selling price, which is 20. Cost is 80. So 56,000 means 80. 100 means question mark. 70,000. I will get my selling price as 70,000. So how much is 70,000 divided by 2,000? 35. So cost per unit is rupees 35. Peace. Simple. Understood? Now batch costing is what, sir? Method of costing used when to ascertain the cost of the batches. In batch costing also there is something called as economic batch quantity, guys. Why, sir? Why it is? Try to understand. For each and every batch, we have to do setup. One batch gets over. Before starting new batch, you have to set up the machine. So the less the batch size, more the number of batches. Annual requirement is 10,000. Now I am running 1,000 units batch. How many times I have to make the batch? 10 times. So 10 times I have to change it. Setup cost will come for 10 times. Instead, I will decide one thing. Boss, let me do it in a just 2000 units per batch, which means how many batches? 5 batches. So setup cost will be reduced to 5 batches. However, earlier you were carrying how many units? On an average, 1000 units, half of 1000 units. Now we will carry how much? Half of 2000 units. Carrying cost will be more. So this is also just like your material, your carrying cost and your setup cost. There it was ordering cost, here it is setup cost. There it was relating to raw material, here it is relating to production. Clear? Huh? So the formula remains same, square root of 2ds divided by C. D is what, sir? Annual demand for our product. S is what, sir? Setup cost per order. C is what, sir? Carrying cost per unit. Simple. Demand per annum, okay? If at all you take carrying cost per unit per annum, demand per annum. If you take carrying cost per unit per month, then demand per month, like that. Everything should be in the same, this one, time period. That's it. Now, we'll see the question quickly. Shall we? See here, Arnav Confectionery is doing this thing. They reduce, they produce it in 50 batches, 50 units batches. They have order for 600 muffins. So, how many batches it is? 12 batches. Each batch, direct cost is 500 rupees. So, for 12 batch, it will be 6000. Direct wages is 50 per batch. For 12 batch, it will be 600. Oven setup, per batch it is 150. So, for 6 batches, it is, sorry, for 12 batches, 1800. Total is how much? 8400. Now 8400, guys. AC absorbs a production overhead at the rate of 20% of direct wages. So 20% of direct wages are 600. So 20% of that is 120. Correct? 600 into 20%, 120. Next, 10% added to the total production cost to allow the selling and distribution and admin overhead. So 10% of what? Total production cost. So total production cost is 8520. For that, add 10%. 9372. For that, again, they are telling 25% on sales value, which means sales is 100 means cost is 75. So 75 means this one, 100 means question mark. 3 by 4. We'll get this one. So that will be your selling price. Simple. This is one different question. So they have to take undertake a 200 pieces supply, and this is what they have incurred. Overall position of 1200 pieces also you have to tell them, and the selling price is rupees 8. Okay. They have given here January. How many batch output is there? 210, 200, 220, 180, 200, 220. Sir, but you have to supply 200, no sir. So can we restrict it to 200? The answer is no. Why? Because this is the units. These are the cost for these units. Okay. So you should take the actual cost for actual production. So you should take the batch output, not 200 per month. Done. So material cost is there, guys. Material cost is there. When 210 we produced, it was 650 per unit. How much? Point. When it was 200 unit, it was 640. Point. 680 divided by 220. 630 divided by 180. 3.5. Whatever it is, end of the day, direct material, direct labor we got. We want to know how much to apportion the variable overhead. That's it. Overheads. What they are telling, it is apportioned on the basis of direct labor hours. So how we are going to apportion, sir? In the January, whole factory overhead was 12,000 when the number of hours were 4,800. So how much was 12,000 divided by 4,800? 2.5 into 240. For the first month, it is 600. For the next month, 10,560 divided by 4,400 into 280. 672. 12,000 divided by 5,000 into 280. 672. 10,580 divided by 4,600 into 270. 13,000 divided by 5,000 into 300. 780. 12,000 divided by 4,800 into 320. 800. This will be your overhead. You will get the total cost. That total cost you should divide by batch output. You will get per unit how much. Okay. Accordingly, you know the selling price of 8 rupees. You are going to calculate how much it is. This is monthly wise. And if you take total cost here and find out cost per unit in overall, then you will get the overall position. Okay. That's how you are going to do. This is one of the separate question and nice question. So here listen, monthly demand is 500, setup cost is 60, cost of manufacturing is so much, rate of interest is 10% per annum. So what is the EBQ? Square root of 2 into, should you take 500 or should you take 6,000? 6,000 because 500 is per month. Into, how much is the setup cost? 60, whole divided by 2 rupees. How much? 600 units. Accordingly, we are going to do like this. Okay. That is also known as optimum run size. This paint question is there. This is also nice question. Just go through that. But here, the thing is this. Rupees 50 per square meter. You want to know per unit per annum, no? Here unit is in liters. But here it is carrying cost is, they have given per square meter. And each square meter can hold 250 liters. So what you are going to do? For 250 liters, 50 rupees. For 1 liter, question mark. 0.2. Now this is your setup cost. Sorry, carrying cost per annum. In this question, that is the speciality here. Carrying cost is how much? 0.2. Okay. Just go through this question, one of the important. And here, of course, here actually you have to go to the next batch number, no? But generally here, if you go to the next batch number, everything gives the same answer. So better if the question is like this in the batch costing, then better go for whatever the decimal batches you are getting, that only. That would be easy to make the decision. Clear? Actually, in this, nothing special is there, but one crazy question is there relating to case scenario, bottle question. Bottle question means it should be crazy only, isn't it, sir? Now listen. Arnav Limited operates in a beverages industry where it manufactures soft drinks in 3 sizes: large, medium, small. Large is 3 liters, medium is 1.5 liters, small is 600 ml, 0.6 liter. The products are processed in a batches. The 5,000 liter capacity processing plant consumes electricity of 19 kilowatt per hour, and batch takes 1.45 minutes to complete. 1 hour 45 minutes, 1.75 hours in fact. Only symmetric size of product can be processed at a time. What do you mean by symmetric, sir? Similar kind. If you are producing large, everything should be large. If you are producing small, everything should be small. If you are producing medium, everything should be medium in one batch. Only symmetric size done. The machine setup takes 15 minutes to get ready for the next batch processing. During the setup, power consumption is only 20%. So in that 15 minutes, it is not consuming normally how much it used to consume. It consumes only 20% of it. Current prices they have given 150, 90 and 50. To produce a liter of beverage, 14 liters of raw material W, 25 meters of material C are required, which cost 0.5 and 1000 per liter respectively. To produce 1 liter of beverage, you need 14 liters of raw material W. That is nothing but raw material water. 25 ml of material C. That is nothing but chemical. 20 direct workers are required. The workers are paid at 880 for 8 hour shift of work. So, how many direct workers are required? 20 direct workers at a time. Each batch need 20 direct workers. Which means one batch is taking how many minutes? Hey, why you want calculator? 8 hours, very good. One batch is taking 1.75 hours to process, 0.25 hours to set up. Each batch is taking 2 hours, not 8 hours. Okay. Each batch takes how much? 2 hours. But how many labor hours are required? If 20 workers work for 1 hour, tell me how many labor hours are there in this? 20 labor hours are able to understand. If 20 workers work for 1 hour together, how many man hour is there? 20 man hour. Now each batch takes 2 hours, where 20 workers should work. How many man hours? 40 man hours are required. In each batch, how much man hour is required? 40 man hours are required. Per man hour payment is how much? Rupees 110. You understood what I am trying to tell? Each and everyone will get 880 rupees for 8 hour shift. No, now 1 hour we are paying 110 rupees. Now for 20 hours, for 40 hours how much? 40 into 110. That is your direct labor cost per batch. You understood or no what I am trying to tell? I calculated how many man hours are required per batch. I calculated per man hour how much I am paying. Average packing cost of the bottle is 3 rupees. Power cost is rupees 7 per kilowatt hours. Other variable cost is 30,000 per batch. Sir, why this other variable cost is given, sir? Per batch means this will form part of setup cost. So your setup cost is not only electricity, not only labor, but also other variable cost. Fixed cost is 4 crore 90 lakhs. Holding is rupees 1 per bottle per annum. The marketing team surveyed and this much is the demand for the bottles. Following information they are asking. I will show here only. I will only solve. Now, first one. Guys, let's find out the total cost of 3 and profit of all the 3. First, large bottles, how much you need, sir? 3 lakh bottles you need. Hey, try to understand how many bottles you need? 3 lakh bottles you need. So if you need 3 lakh bottles, how many liters of soft drink is required? Because one bottle consists of 3 liters of soft drink. We have to go for 9 lakh liters. And how much is the capacity of our plant per batch? 5,000 liters. They have given, no? So to produce 9 lakh liters, how many batches we should run? 180 batches we should run only for the large bottles. Next, medium batches, medium bottles. How many bottles are required? 7,50,000, and what is the liters in it? Huh? Think and all, you don't have question now. Nice. There is something called mobile. It's there. Correct. You got mobile. You got internet by any chance? No. It's there or not there? Internet is not there. There is something called as Chrome. Open it. There one awesome website is called ICAI. Their BOS study material question will be there. So how much is 7,50,000 into 1.5? 11 lakh liters of juice you want. You are processing it in 5,000 liters. How many batches? 225 batches. Correct? One more small is there. How many bottles of small is required? 20,000 bottles, and each and every bottle is of 0.6 liters. So 20 lakh into 0.6, that is 12,000 liters. 12 lakh liters, sorry. 12 lakh liters divided by 5,000. 240 batches. 180, 225, 240 batches. These are the number of batches to be produced. Done. Oh, this one answer here only we got. Done. Now we'll go one by one. First we'll start with the material cost. First we'll go to direct material. Before that, we got 3 batches. Large bottle, medium, small. Correct? Number of batches we have calculated already. Number of batches. Always remember, if it's a rupees, you should mention rupees somewhere. Very important. Units, you should mention it as units. Number of batches, how much we calculated here? Somewhere we calculated, no? 180, 225 and 240. 180, 225, 240. Correct? First we'll start with the direct material. We got 2 materials. One is material W. What they are telling? You need 14 liters of W to produce 1 liter of juice. Correct? Now, how many large bottles we are producing, sir? 3 lakh large bottles. How many liters? 9 lakh liters. 9 lakh liters juice means how many liters of W? 9 lakh into 14. And each liter will cost you how much? 0.5 into 0.5. So for large bottle, material W is 63 lakh. Is it clear or you have doubt? Clear. Next, Medium, how many bottles we are producing? 7,50,000 into 1.5. 11,25,000 liters of juice we are producing into 14 liters into 0.5 rupees per liter. 78 lakh. Done. Small bottles. How many bottles we are producing? 20 lakh bottles, which means 12 lakh juice, 12 lakh liters of juice. 12 lakh into 14. 1 crore. Done. Now, chemical C. Material C. Now, C per liter, how much is required? Just 25 ml. 25 ml means 0.25 or 0.025. Very good. Remember this point. 25 ml means 0.025, 250 means 0.25. Here usually you do mistakes because 25 by 1000, not 25 by 100. Okay. And it will cost you 1000 rupees. Now, how many liters of juice we are preparing? 9 lakh liters of large, which takes 0.025 ml of this one, liters of this one into 1000. How much? 225 lakhs. Done. Next one. How many bottles you are producing? 7 lakh 50 into 1.5. 11 lakh 25,000 liters. Each liter takes 0.025 into 1000 rupees. 2 crore. 25. Done. Next one. How many liters of this one you are producing? 12,000 liters if I am not wrong, or 12 lakh liters. 12 lakh liters, and each takes 0.25 into 100. Sorry, 1000. 3 crore. Chemical only is costly. 300 lakhs or 3 crores. Material is done. Next time we go for a labor. Yes. Each and every batch is taking how many man hours? We calculated, no? See. 1 hour consists of 20 man hours. Each and every batch is taking 2 hours. Because in setup time also we need labor. They are not sitting quiet. We are paying for that. Which means on an average, each and every batch is of 2 hours. Now, in that 2 hours, 20 workers are working means each and every batch is taking 40 man hours. Correct? Into each and every man hour is paid at 110 rupees. How much it is? 4,000. So now 180 into 4,400 because 180 batches we are doing. 7 lakh 92,000. 225 into 4,400. 9 lakh 90,000. 240 into 4,400. 10 lakh. This is your direct labor. Done now. Next we'll see other expenses from one by one. They're talking about electricity. Try to understand power. Try to understand what is happening. Each and every batch, it is taking 1.75 hours. Normal working hours. And each and every hour taking how many kilowatt? 90 kilowatt hours. Correct? 90 kilowatt hours it is taking, and each and every kilowatt hours is costing us rupees. Where they have given? Rupees 7. Correct? Plus batch is taking 0.25 hours of setup time. 15 minutes. 0.25 hours. And 90 kilowatt hours is what it should take normally, but it consumes only how much at a setup time? 20%. Only 20% and cost rupees 7. Together tell me how much per batch? 1.75 into 90 into 7 m plus 0.25 into 90 into 20% into 7 m plus MRC. Thousand? $1.75 into 90 into 7 m plus 0.25 into 90 into 20% into 7 m plus MRC 1134. 1134 per batch. Now tell me how much is 1134 into 180? 2,04,000. How much is 1134 into 225? 2,04,000. How much is 1134 into 240? 2,70,000. These are the power cost. Correct? Done. Next is what, sir? Power is done. This is done. To produce the beverage, this is done. Workers is done. Packing cost is 3 rupees. First, how many bottles of 3 lakhs bottles? So it will cost you 9 lakh rupees. Next is how many bottles? That will cost you 22 lakh 50,000. Next is how much? 20 lakh bottles. That will cost you 60 lakh rupees. Correct? What bottle, sir? Lime is it? No. It is soft drinks. Next is what? Power cost is done. Other variable cost 30,000 per batch. So other variable cost 30,000 into 180. 54 lakh. 225 into 30,000. 67 lakh 50,000 and 30,000 into 240. 70. This is your other variable cost. Correct? What else is there, sir? Fixed and administration is 4 crore 90 lakh. That is total. Let it be. That we will take later. Holding cost is that anyhow you leave. How much is the total of this? Twelfth I will tell. 12th evening. Felicitation day. Previous day of felicitation. But you are coming on 12th only, no? Whatever it is, I will show it here only. Leave. You go other half an hour to 1 hour. You guys listen. Here you understood now how to compute the cost. Yes? I will show it here only. Material we got so much. Material we got it in crores, no? No, this one we got it in crores. I think these are the numbers we got. Direct wages, these are the numbers we got. Packing, yes. Power is done. Other variable cost we have taken. Total variable cost we got. That we reduce from the profit, sales. we'll arrive at a profit, I mean contribution. From that, if you reduce the fixed cost, we will arrive at a total profit. This is how you should do it. Okay. And here, how to compute EBQ? Guys, EBQ is very simple. EBQ is square root of 2DS divided by C. D is which demand? Annual demand per bottle. Correct? So that is anyhow it's there. S is what? Setup cost per batch. Not per bottle, setup cost per batch. Here setup cost is not only your power, also your other variable cost. That is 30,000 is your other variable cost. Power cost is how much? 0.25 hours, 90 kilowatt hours, 7 rupees, 20%. $31. This is your setup cost. $30,000, 31.5. Accordingly, holding cost, anyhow you know that. You will be able to find out EBQs. Please mark it as one of the important questions for the current examinations. Done now. Done. Now, guys, we are going to the next one more small chapter, that is job costing. Here, what we will do, sir, we will use this costing method to ascertain the cost of particular job. That is, you are going to have some customized jobs done. That is your job. That's where you are going to apply job costing. For example, let's say, sir, your marriage invitation. Can it be custom? I mean, can it be generalized? What's your name? Hariharan. Someone is there called Hari. Their marriage invitation, your marriage invitation, they can print together. Design is different. Forget about design. Names are different. Imagine same name you take. Hari will match. What about girl? Correct, no? So now there what you are going to use is job costing. Because customers specific job it is given. So you should compute the cost for that particular job. That is the method which you apply is a job costing. So you should check that time required for that particular job, whether it is long term or a short one. If it's a short one, we are going to apply the job costing. If it's a long, we used to apply the contract costing. Anyhow, now the contract costing is not there in your syllabus. What you should do, sir? Nothing. Whatever is related to that particular job, you should treat it as an expense and you should compute the cost for the job. As simple as that. Nothing special. Literally nothing special. Okay. We'll see questions. Year and all, nothing is there in this to tell. Illustration 1 is of that journal entry of no use that you leave. If you see the second one, here what is happening, guys? Here they have given few things. 40 rupees they have directly apportioned. But here they are asking us to compute the new job cost sheet using the P&L given. So direct material we know 70 rupees. That will come as 70 only. Direct wages we know 45 rupees. That will come as 45 only. Direct expenses 5 only. So your prime cost will come as 120 only. However, when it comes to overhead, try to understand. Overhead, let's apportion it on the basis of wages. Fine now. Product X or department X. How much is the overhead? 5,000. How much was the labor? Direct wages? 10,000. Can I tell this is 50% of the direct wages? Yes. Now, in this particular job, X is of how many hours? 8 hours of 2.5. How much it will be? 8 hours of 2.5. 20 rupees. Now, 20 rupees of that 50%. 10 rupees. Correct? Now, going to department wise overhead. Overhead is how much? 9,000. Wages is 12,000. Can I tell it as 75%? Can I tell overhead is 75% of wages? Now, Y is 6 hours, 2.5. How much it is? 15 into 75%. 11.25. Next is Z. Z is how many hours of labor? 4 into 2.5. 10 rupees. Overhead is how many percentage, sir? 2000 divided by 8000. 25% of direct wages. So I am going to take 25% here, which will cost you 2.5. Total overhead is how much? 13.75. 23.75. 23.75. This is your factory overhead. Next you got works cost, done. Next you got selling expense. Selling expense I can apportion on the basis of works cost. Sir, you can do it on the sales only. No sir, I can do, but here I don't know the sales. Here I know the sales, but in this job I don't know how much is the selling price. So what I am going to do, I am going to apportion it as a works cost. How much percentage of works cost it is? 10% of works cost. 10% of works cost. So here how much is the works cost total? 143.75. So 10% of this will be 14.38. Now my total cost will be how much? $158.13. 158.13. Now for this they are telling add at 20% of total cost to determine the selling price at 20%. 189.76 you can take. This is one of the examination question. 189.76. Simple question. Got it? And there is one crazy question here. Not this one. This also you can take. What they do is they have given a opening overheads, opening WIP for the particular job in the month of September. In the month of October we have done this. So this cost we should add, whatever we had done in the October we should add, we will get a total job cost. Okay, do it as a go through it once, not that special also. This plumbing question is important. Material wise, they have given material is issued and you are going to calculate issues under which method? FIFO method. Correct? Or weighted average method? Weighted average method. Okay. So what you are going to do? Issues at what price you are going to do? That you are going to do it under weighted average. How you are going to do, sir? For each and everything you should take the timeline. For example, I will show one item. 15 mm GI pipe. Okay, I will take the one timeline first. First, opening stock. How many units were there? 12 units at rupees 600. Correct? That is on 12th. Let it be. Price is no need now itself. Now, next when it is there? 16th it's not there. 27th of August. What is it? Purchase. Correct? Somewhere here on 27th of August there is a purchase. How many this thing? 35 units. At what rate? 628. 35 units at 628. Now issues. 17th August 15 mm. Somewhere here. 17th. How many units? 8 units. Issue you don't know. Issue you have to calculate. Next. 28th August 10 units. Correct? 28th August, 10 units. Now, first, 17th August, there was only one stock, which means this 8 is issued at 600. Correct? Now, by the time we came to 17th, we have 4 units of 600 rupees plus 35 units of 628 rupees. Total 39 units. $625.13 you can take. Now this is the issue price for this one. Like this you should do. If you take the timeline, it will be easy. Okay, for all the material you should do this only. Timeline. If you keep doing, you will get it. Nothing special in this particular question other than this. Other than material issue, nothing is there. So, plumber work and all here they have given. 180 hours of work, 50 hours per hour, includes 12 hours of overtime. 192 hours, 35 rupees per hour, includes 24 hours of overtime. Overtime is 1.5 times of normal wage. So, in 180 hours, 168 hours is normal, correct? At the rate of 50 plus in 180 hours, 12 hours is overtime means normal time is how much? 168. So 168 into 50, correct? Now, remaining 12 hours, how much we are going to pay, sir? 1.5 times of normal wage, that is 75. Done. This is for the plumber, helper. 192 hours, in that 192, 24 is how much? What? Overtime. So 168 is this thing. Plus 24 hours we are going to pay him 52.5, 35 into 150%. We are going to pay so much. Clear? This is how you are going to see. Overhead is applied at 13 rupees per labor hour. How many labor hours we are using? 180 plus 192. 180 plus 192. Total? That is fine. Overtime is charged on the basis of number of hours you worked. I mean, number of hours you worked. Okay, you are going to multiply that. You are going to calculate that. Here, very simple. 168 hours, normally both of them worked. And then this guy worked for 12 hours. In that time, this guy was also there. However, next 12 hours, this guy told pipe and all, keep it proper, etc., etc. And this guy went. Because he is a plumber, no? Helper should do and come, all the workers. I'm in accounts marathon and attending costing. Very good. Do this multitasking. Because today the accounts and costing marathons are getting clashed. In Chennai, accounts marathon is going on, group 1. Here, group 2 costing is going on. You are going to do this way. This is all about your job costing. Nothing special, guys. These things and all in the examination time, previous day of exam, these chapters and all should get over in 1 hour max to max. Nothing should be kept till the end. Because nothing special is there also in this particular chapter. At the same time, please don't ignore and go also. Because small chapters also, if they come for 20 marks, that will be deciding factor. Got it? That will be deciding factor. See, for example, you can expect 10 plus 10 plus 10 from the last 3 chapters. Management accounting part. 30 marks from management accounting part. From the cost accounting part, remaining not 70. 114 minus 30. 84 marks will come. This 84 marks, let's say, sir, cost sheet 5 will come, material 5 will come, which means each and every chapter is important. Please don't skip and go. Got it? Please don't skip and go any chapters, but these chapters are not having much of conceptual requirement, so you can revise very fast. That's it. You can revise very fast. Keep that thing in mind. Fine. So I think we can close for the day now. Close for the day. Fine. We'll meet you guys tomorrow at 8. Tomorrow morning we'll be starting with service costing. Shall we start? Okay. Service costing will start. Bit of our body will get adjusted to all these things. Marathon to run. You need no. After service costing, straight away we'll go to marginal, standard. Oh no, service costing will go to process. Process, marginal, standard, budget. Marginal, standard, budget. Peace. Thank you so much. We'll meet you guys tomorrow. Bye bye bye. Yes. Guys, now we'll be starting with service costing. Right? Service costing, one of the important chapter again and one of the simple chapter. Sir, what do you mean by service costing, sir? Nothing. It is a method of ascertaining the cost of service provided. So it is a method of ascertaining the cost of service provided. This is also known as operating costing. Guys, try to understand, not operation costing, operating costing. Because operation costing means process costing. This is service costing. So it is operating costing. Here we are going to discuss about different industries like transportation industry, hotels, hospitals, educational institutes, software development industry, toll road and electricity supply, insurance bank, etc. Now, here generally we use something called as composite cost unit. Here we don't use generally just a cost unit, we will use the composite cost unit. Sir, what do you mean by composite cost unit? Sir, guys, very simple. When more than one cost unit is there, that thing we call it as composite cost unit. For example, we can take passenger or kilometer. These are cost units. But when you take passenger kilometer, that is mixture of passengers as well as kilometers, that we call it as a composite cost unit. Okay. So transportation service could be two. That is to the passenger towards goods. Passenger, generally we are going to compute the cost unit as either the per passenger or per kilometer or per passenger kilometer. Now the question comes, sir, how to arrive at a passenger kilometer? Very simple, guys. You should take number of days our bus is running. Okay. Into number of trips it is doing for in each day. Then how much is the distance from point A to point B, and what is the capacity and what is the occupancy. This is your per passenger kilometer computation. I repeat, number of days into number of trips into distance or trip into passenger capacity into occupancy. Whereas when it comes to goods, we are going to take ton kilometer based or space occupied based or a per load. Now, sir, ton kilometer means what, sir? It could be absolute ton kilometer or it could be commercial ton kilometer. It could be absolute ton kilometer or it could be commercial ton kilometer. Guys, absolute ton kilometer we also call it as a weighted average basis, whereas commercial ton kilometer we also call it as simple average basis. Now, how to compute it, sir? Always remember, for each and every distance we take, how many people we, how much ton we have carried. That is, for example, there are point A, point B, from point B truck goes to point C, from point C truck goes to point D. Let's say A to B it is 100 kilometers, carrying 10 tons. B to C it is let's say 80 kilometers, carrying again 8 tons. C to D it is let's say 150 kilometers, carrying 8 tons. D to A, let's say 60 kilometers, carrying 0 tons. Carrying 0 tons. Now, how to find out a weighted average, sir? Very simple. I should take from each and every point and I should take the total of it. That is first A to B. 100 kilometers into 10 tons plus 80 kilometers into 8 tons plus 150 kilometers into 8 tons plus 60 kilometers into 0 tons. Okay. Now 100 into 10, 1000, 80 into 8, 480. Sorry, not 480, 640. 100 into 10, 80 into 8, 150 into 8, 60 into 0, that is 0. Correct? And MRC 2840. That is, we'll be having 2840 ton kilometer. We'll be having 2840 ton kilometer under which one, sir? Under weighted average. That is under absolute ton kilometer. But when it comes to commercial ton kilometer, that is simple average basis. Same question if you take, what we are going to do is first we are going to calculate how many kilometers we have traveled. Guys, A to B 100 kilometers, correct? B to C 80 kilometers, C to D 150 kilometers, and D to A 60 kilometers. Total we traveled 390 kilometers. We traveled 390 kilometers into average of tons we carried. That is, first we carried 10 tons, next we carried 8 tons, next we carried 8 tons. Sir, next we carried 0 tons. No, sir. Guys, try to understand. Whenever you are doing a commercial ton kilometer, that is simple average. Whenever you are doing a commercial ton kilometer, that is simple average. Always and always and always remember this point. Remember this point. Total average carried, when computing average carried, if at all any ton is not giving you revenue, any ton is not giving you any revenue, any trip is not giving you any revenue, that should be completely ignored while arriving at average. That is, here you are going to carry 0 tons, which means that gives you 0 revenue. So what you should do, you should ignore it. That's what the commercial ton kilometer is, or a simple average basis is. That is, you should ignore if at all the any weight carried is giving you no revenue. That is, you should ignore everything. That 0 whatever is there, you should ignore it. So here what we will take, sir, first we carried 10 tons, next we carried 8 tons, next we carried 8 tons, divided by 3. So it will be 10 plus 8 plus 8 divided by 3. So you should not consider it as even an observation. You should not consider it as even an observation. If at all, that is not giving you any revenue, into 390. That is 3380 kilometers. That is ton kilometers, in fact. Sir, is a ton and metric ton are same, sir? The answer is yes. Ton and metric ton are same. This is how you are going to calculate a commercial ton kilometer. Sir, now you told one more thing, no, that if at all it is bringing no revenue, you should exclude it. Is there any sum based on this, sir? Yes, there is a sum. Illustration is there, no, where that penalty question, instead of 6 metric ton, we carry 8 metric ton for 2 times, something like that. That question is based on that principle. See here, while computing the commercial ton kilometer, if any load is not having any income, such load should be ignored while computing the average weight carried. Okay. What do you mean by composite cost unit, sir? when two or more measurement of units are combined to make one cost unit, such resultant cost unit we call it as composite cost unit. Guys, cost of the transportation we can call it as standing charges, running charges, maintenance cost. Standing charges, running charges, maintenance cost. Standing charges is also known as fixed cost. Running charges is variable. Maintenance is semi-variable. Like depreciation on life basis, rent, salaries, lease payment, interest, license fee, admin cost, etc. These are your standing charges. That is whether you are running a bus or you are running a truck or no. Doesn't matter. End of the day, that is your expense only. Whereas running is, you will incur this only if you run the vehicle, that is fuel, oil, power, commission, depreciation on usage, etc. Maintenance cost or semi-variable is your maintenance cost, that is repairs and maintenance, tires, spares, all those things comes under a maintenance cost. Sir, what if it's a hotels or a lodges, sir? In that case, we provide a accommodation service. In that case, cost unit is nothing but, guys, we call it as room days. Room days. Because they are going to charge us for every night we stay and how many rooms we stay. Correct? So it is room days. That is number of days into number of rooms into occupancy percentage. Number of days into number of rooms into occupancy percentage. And when we provide a different kind of rooms with the different charges, then we should calculate a equivalent room days. For example, we have 2 sharing room, 3 sharing room and suite. These many. Now we know that for 2 sharing room we charge some money, no? For 3 sharing we charge 1.5 times of that, and for suites we charge 3 times of that. Now 2 sharing, if I take it as x, 3 sharing will be 1.5x and suite will be 3x. So if you consider 2 sharing as the equivalent unit as 1, then 3 sharing will be 1.5 times of 2 sharing, whereas suite will be 3 times of 2 sharing. This is how you are going to do. But here in this hotel question, there is one nice question, past year examination question, where that complimentary breakfast and swimming pool thing is there. Okay, there always remember, for the restaurant cost is what, sir? Sorry, for the hotels, what is the cost, sir? What they incur, that is the cost. What they incur, that is the cost. In that question, what happens, there are 3 rooms. Deluxe room is there, executive room is there, suite is there. Now they are telling deluxe room won't have any benefit. That is, if they want a breakfast, they should pay and eat. If they want a swimming pool, they should pay and use it. Which means whatever these guys uses for this, it's not at all cost to company, cost to our hotel at all, because these guys only incurring it, right? We are not incurring it as a hotel. However, for executive room, breakfast is complimentary, which means these guys breakfast cost hotel should incur. Whereas for our suite rooms, breakfast as well as swimming pool is complimentary. Now breakfast and swimming pool, both costs should be incurred by our hotel itself. So this is how you should do that sum when calculating different costs. So the point you should remember, that is, you should take the cost as a cost only if it is incurred by us. Otherwise, no. Done, sir. Sir, what about the hospital, sir? Hospital composite cost unit is nothing but bed days or a patient days. It could be outpatient division or an inpatient division. If it's outpatient division, means patient will come, take a treatment, leave on the same day. They are not going to get admitted in the hospital. Now that will be charged on the basis of service we are providing. Whereas inpatient division is based on bed days or patient days. That is based on bed days or patient days. And we have toll questions and all, bank question, insurance question, etc., etc. That's fine. We'll quickly see into different questions of a service costing, then we can proceed to the next one. However, there is one service costing nice question is there relating to that school one, where the students come from less than 4 kilometers, more than 4 kilometers, that one. That is also one of the important question. See here, this is the computation of your commercial ton kilometer and absolute ton kilometer. A lorry starts with a load of 20 metric ton of a goods from the station A. It unloads 8 metric ton in the station B and balance it takes to station C. And from C it takes only 16 metric ton. So A to B, B to C and C to A are 80, 120 and 160. So A to B how many kilometers, sir? 80 kilometers. B to C how many kilometers, sir? B to C it is 120 kilometers. C to A how many kilometers, sir? C to A it is 160 kilometers. Now, how many metric tons are carried? 20 metric ton from A to B. In B, we are unloading 8 metric ton, which means the balance is 12 metric ton that is carried from B to C. And from C to A, we are carrying the remaining, they are telling 16 metric ton. Now, if you go for absolute ton kilometer, what you should do, sir? Nothing, 80 into 20 metric ton plus 120 into 12 metric ton plus 160 into 16 metric ton, which will come to 80 into 20 m plus 120 into 12 m plus 160 into 16 m plus MRC, 5600 metric ton. 5600 metric ton kilometer. Done. Now, sir, what about the commercial ton kilometer, also known as simple average ton kilometer? Guys, how many kilometers we have traveled in total? 80 plus 120 plus 160 into average is what, sir? 20 plus 12 plus 16. Out of this, if any trip is not giving us revenue, that you should ignore. Divide by 3. Now 20 plus 12 plus 16 divided by 3, 16 into 360 kilometers, 5760 metric ton kilometers. 5760 metric ton kilometers. This is your simple average. Here not much things are there. The school question is there, no? School question. Here, try to understand, sir, how to compute the diesel cost, sir? Each bus is giving a mileage of 4 kilometer. In that scenario, sir, how to compute the diesel cost? Very simple, guys. How many kilometers we are traveling? How many kilometers we are running the bus? Very simple. Total. How many trips we are doing? Try to understand. In a month, school work for 25 days. In a month, school work for 25 days, and that will happen for 10 months because 2 months is a holiday. Correct? How many kilometers it runs, sir? 8 kilometers per trip it will run. Now the question comes, how many trips will do? 8 kilometers of 2 sides, and how many trips we do? Or instead of 2, I will take like this. See, school is there, students' place is there. Now, first from school to student place it will go. It will pick up the senior students. It will come back. It will drop at school. Again, it will go to juniors and again it will come back to school. So, 4 times it will do in the morning. So, 4 times again when they are going to leave, 4 times again in the afternoon. First from school to junior's house to school. School to senior's house to school, which means they are doing it 8 times in a day. So 25 days into 10 months into 8 days into 8 times will get 16,000 kilometers is what we are traveling in a year. Now 16,000 divided by 4, mileage is 4, no, which means we need a fuel of 4,000 liters to travel 16,000 kilometers. We need the fuel of 4,000 liters. Each liter will cost you 45 rupees, which will cost you rupees 180,000, which will cost you rupees 180,000. This one thing. And number of equivalent units computation, it's not like a normal ordinary thing. Try to understand. Why, sir? Because morning whomever you pick up, evening you are going to drop the same student. Point number 1. And when you are going to charge, you are not going to charge per day and all. You are going to charge monthly, but for the 12 months only you are charging. Okay. So always remember you are going to compute month wise. Junior students, senior students. There are junior students who come from less than 4 kilometers, more than 4 kilometers, up to 8 kilometers. Now, if you consider them as X, these guys will be 2X in terms of fees because we are charging them more. Here how many are there, sir? 50. Here how many are there, sir? 50. So junior students in each bus would be, if you consider 50 into 1 plus 50 into 2, 150 equivalent units. Equivalent units of what, sir? Equivalent units of people or students coming from less than 4 kilometers. So whatever the cost you get, that is for the students coming from the less than 4 kilometers. So if it is more than 4 kilometers, you should charge them double of what you are going to charge. Senior students also same thing. That is less than 4 kilometers, if you take it as X, more than 4 kilometers, you should take it as 2X. So here also, sorry, not 50. 50 is the capacity and half of that is this thing, 25. 25 and 25 comes to 75. Okay. Senior students, 25, 25. Now, equivalent units are 25 into 1 plus 25 into 2. Same, 75. So, 75, 75, total 150. You are going to take denominator as 150. We'll get to know how much you should charge to the students who are traveling from less than 4 kilometers. How much you should charge to the students who are traveling from less than 4 kilometers. That's how you are going to do it. I hope this thing is clear. This is the question which I told, GTC. Here what we should do, sir, see penalty is there, no, that is abnormal. You should not take while computing the cost per ton kilometer. You should take it or you should write it off only against a costing P&L. Okay, so you should not consider here. And sir, here they have asked absolute ton kilometer as well as commercial ton kilometer. How to do it, sir? First, if you take the absolute ton kilometer, 10 journeys you went with the 6 tons, correct? 2 journeys you went with 6 tons, correct? 2 journeys you went with 4 tons, correct? 5 journeys you went with 8 tons, 6 journeys you went with 6 tons, 1 journey you went with 6 tons, and 1 journey you went with 0 tons into from A to B, distance is 300 kilometers. So here you traveled 300 kilometers. From A to C, distance is 140 kilometers, which means C to B it should be 160 kilometers. B to A again 300 kilometers. 300 kilometers. B to C it is 160 kilometers. C to A it is 140 kilometers. So basically 10 into 6 into 300 m plus 2 into 6 into 140 m plus 2 into 4 into 160 m plus 5 into 8 into 300 6 into 6 into 300 1 into 6 into 160 44,720. So it is 44,720 ton kilometer. Sir, what if it's a commercial? Very simple, guys. Very simple. Here frequency is also there, X is also there, F is also there, observation is also there, frequency is also there. You know that in that case what we should do, how to find out average. Average is summation fx divided by x, correct? This is frequency f, this is x. So now to find out the average, 10 into 6 60, 2 into 6 12, 2 into 4 8, 5 into 8 40, 6 into 6 36, 1 into 6 6. This is 0. How much is the total summation 4x? Summation 4x will be 60 plus 12 plus 8 plus 40 plus 36 plus 6, 162. 162 tons. However, we know that as this is giving 0, to take the average, this observation should be ignored, which means 162 divided by 10 plus 2, 12 plus 2, 14 plus 5, 19 plus 6, 25 plus 1, 27. You should ignore this. 14, 19, 25, 26 divided by 26. You get something. Now, whatever you get, no, that is average tons. How many kilometers you are traveling, sir? How many kilometers you are traveling? Very simple, guys. 12 journeys we are doing of 300 kilometers for 2 times. What are you talking, sir? Guys, try to understand. How many round trips? 12 round trips. Which means, which is having 2 sides of how many kilometers each? 300 kilometers each, correct? 12 journeys, we do it for 2 times, which is having 300 kilometers distance. So 12 into 2 into 300, 7,200 kilometers. We are running for 7,200 kilometers. Now 162 divided by 26 into 7,200, 44,861.5. This is your commercial ton kilometers. This is your commercial ton kilometers. Hotels also here. This is not much this thing where you have to compute the equivalent room days. For example, what they are telling, the rent of the double room is fixed at 2.5 times of the single room, whereas triple room is twice of the double room. So if you consider this as 1, this will be 2.5, this will be 5. So for computing equivalent units, now whatever the cost you get by dividing this composite cost units is your rent for single room. Okay. This hill station question is also important, where they tell the 6 off season month, and remember that winter they are considering it falls under off season. Winter they are considering it falls under off season. Keep that thing in mind. And here electricity charges is one more thing. Electricity charges is 120 per month per room. It's not per day per room, it is 160, 120 per month per room, whereas room attendant salary is 10 rupees per room per day. These two are different things. So these things you should keep in mind. You should keep in mind these things. Here hospital question if they ask, always remember when they take extra bed, that means that is not there in this average. In this average, that won't be there, which means that is extra day. That you should consider it as extra day. Okay, extra bed days. So when computing the patient bed days, you should consider it as plus this. Here in your projects and all, always remember you should apportion these expenses, because this is not only relating to whatever the project you are carrying. You should apportion repairs and maintenance and administration. So how to apportion it, sir? Guys, very simple. As here the salary is the main factor, we are going to apportion on the basis of salary. Keep that thing in mind. Toll road question, always remember your computation of equivalent unit is the key factor. Few questions they might ask. For example, they will tell 4-wheelers are there, 6-wheelers are there, 8-wheelers are there. 4-wheeler you are charging 1, means for 6-wheeler you are charging 1.5, for 8-wheeler you are charging 2, let's say 2 times. Now this one you should keep in mind to compute the equivalent vehicles. Also one more thing here you should keep in mind is they tell 4-wheeler, in that there are few people who are having concession, that is they don't have to pay the toll, that should be excluded from the equivalent units. Also they will tell return journey you are getting a discount. For example, you are getting a 20% discount. Now what we will do, how many 4-wheelers are coming into whatever the answer you get in the return journey, into 80% if you do, you will get to know remaining how much is there, or minus 20% if you do, you will get the answer. That's how we should do. One of the examination question, that question anyhow we are going to discuss in that I told no special question discussion that time. Here in this question, the school question, higher secondary teacher salary. Here what you should do is you should take clearly how many teachers are there for what. For example, here 4 science teachers are there, 5 commerce teachers are there, 6 arts teachers are there. Sorry, 4 arts, 5 commerce, 6 science. Now what they are telling, in this arts there is one teacher who takes economics. So what you should do is here you should take purely 3 teachers. One teacher, what you should do, how much portion is applicable to this, you should charge that. Here you should charge the remaining thing. Here this 5 is purely 5, no diversion. Whereas in this 6, 5 is normal, one teacher is there, that you should take separately and you should provide to this one as well as this one. Instead of taking for 6, 5 and 4 and then reducing it and adding it, do one thing, first exclude and take. Then one teacher's adjustment you do. Simple. Not much things are there other than this. Actually, there is one case scenario question which is very nice question that we are going to discuss. Very nice question. What is it, sir? See, A LMV Private Limited operates a cab or a car rental service in Delhi or NCR. Okay. It provides its services to the offices of Noida, Gurugram, Faridabad. At present, it operates CNG fueled cars, but it is also considering to upgrade to the electric vehicles. The following details related to the owning of CNG and EV propelled cars as tabulated as follow. Cost of purchase for CNG it is 920,000, for EV it is 15,20,000. Government subsidy here we are getting is 150, which means net cost is not 15,20,000, it is 15,20,000 minus 1,50,000, 13,70,000, 13,70,000, and life of the car is there 15 and 10. Residual value is there 95,000 and 1,70,000, and mileage CNG car is giving you 20 kilometers per kg of CNG, whereas EV car is giving you 240 kilometers per charge and 30 kilowatt hours it takes to get fully charged. Cost of CNG per kg is rupees 60. Power cost per kilowatt is 7.6. Annual maintenance costs are 8,000 and 5,200. Annual insurance cost is 7,600 and 14,600. Tire replacement cost in every 5 years is 16,000 and 16,000. Battery replacement cost is in every 8 years is 12,000 and 5,40,000. Apart from the above, following are the additional details. Average distance covered in a month is 1,500. Driver salary is so much. Garage rent is so much. Office administration is so much. You have been approached by the management of LNV Private Limited for the consultation of two options of operating a cab service. The expected questions that may asked by the management are as follows. What would be the depreciable value of the EV car? Depreciable value, they are not asking depreciation. Keep this thing in mind. Which means depreciable value would be, boss, my cost is 13,70,000, whereas my scrap realization value or residual value what I am expecting is 170,000, which means I have to depreciate my 12 lakh rupees over the period of 10 years. Over the period of 10 years, I should depreciate my 12 lakh rupees. Option D. What would be the monthly cost of electricity for an EV car? So EV car is running for 1,500 kilometers. Yes, sir. And in one charge, it can run for 240 kilometers. Yes, sir. And each and every charge will take 30 kilowatt hours. That is 1,500 divided by 240. We'll get to know how many times we have to charge the car. And each and every time we charge, it takes 30 kilowatt hours and it will cost us 7.6. That is 1,500 divided by 240 into 30 into 7.6. 1425 rupees. 1,425 is the electricity cost here. Done. What would be the total cost incurred for the replacement of tires for the EV car? Here is the crux, guys. Tire replacement cost is every 5 year once, which means, try to understand. What we will think, sir, life of the car is 10 years, sir. 10 years means 2 times we have to change the tires. Correct? See, here in the beginning when we received the car, are they going to give the car without tire? The answer is no, sir. With the tire only they will give, which means the tire replacement take place here at the 5 years end. Till here there is no replacement of tires because whatever we paid in that only tires are there. Okay. In 5 years, after 5 years, we'll change the tire and we'll run it till 10 years. And after 10 years, anyhow we are not running a car. Why will we even change the tires? Correct? So change of tire is happening only once. Once. That is at the end of 5 years. So for each and every tire replacement, it will cost us 16,000. It will cost us 16,000. Calculate the operating cost of vehicle per month per car for CNG and also for EV car. Let's see what are the total operating costs. One by one we'll see. Per month they are asking. So here first depreciation. Depreciation for CNG it will be 920,000 minus 95,000, 8,25,000 divided by 15 years. Per year it is 55,000 divided by 12. Per month it is 4583.33. Depreciation is 4583.33. Done. Next is what, sir? 12 lakh rupees is what we should depreciate, which means per year 1 lakh. Per month it is divided by 12. 8,333.33. This is your cost of depreciation per month. Next is what, sir? Fuel cost. Fuel cost. How many kilometers we are traveling in a month? 1,500. So 1,500 kilometers we are traveling, which means how many kg of CNG is required? 20 kilometers per kg means we need 75 kg of CNG, and each CNG will cost us 60 rupees, which means 4,500 is the fuel cost. When it comes to electricity, 1,500 kilometers we are traveling. Each charge gives you 240, which means 6.25 times you have to charge the car. And each charge will take 30 kilowatt into each will take 7.6 rupees per this thing. 1425 fuel done. Next, annual maintenance. 8,000 is annual maintenance, so 8,000 divided by 2, sorry, 8,000 divided by 12, 6,666.67 annual maintenance charges, whereas this one would be 5,200 divided by 12. Per month it is 433.33. Annual insurance cost 7,600 divided by 12, 633.33 per month. This one it is 14,600 divided by 12, 1216.17. Done. Next, tire replacement cost. Here it is only one time we are replacing. Here we are replacing twice. Here we are replacing twice. Because 15 years means at the end of 5 years once we replace, at the end of 10 years once we replace. So here the tire replacement cost is 32,000 in total. But here the tire replacement cost will be 16,000 only, because here we are replacing it only once, there we are replacing twice. So 32,000 divided by 15. Per year it is 2,133 divided by 12. 177.77. Tires it is 177.78. Done. What about this one, sir? 16,000 for the whole 10 years. So 1,600 per year divided by 12. Per month it is 133.33. Per month it is 133.33. That is your tire replacement cost. When it comes to battery, 15 years car, 8 years once we should change the battery, which means first week battery came with car only. So after 8 years we are changing the battery. Next the replacement will be in 16th year where the car only won't be there. So we are going to take it 12,000, and here it is 5,40,000. Only once it is, because in 10 years car will be scrapped. So now per month it is how much, sir? 12,000 for the whole 15 years. Per year it is 800. Per month it is 66.67. Done. Here it is 5,40,000 for 10 years. Per year it is 54,000 divided by 12. 4,500 is the battery cost per month. Driver salary 20,000 per month, whichever the car it is, 20,000, 20,000. Garage rent is 4,500. Administration cost is 1,500, whichever the car it is. $4,583.33 plus 4,500 plus 666.67 plus 633.33 plus 177.78 plus 66.67 plus 20,000 plus 4,500 plus 1,500, 36,627.78. When it comes to here, 8,333.33 plus 1,425 plus 433.33 plus 1,216.17 plus 133.33 plus 4,500 plus 20,000 plus 6,000, 42,041.16. $36,620,000. Next one is 42,000. 833.33 plus 1,425 plus 433.33 plus 1,216.17 plus 133.33 plus 4,500 plus 20,000 plus 6,000, 42,041. Why the difference is coming? Depreciation, how much we took? $12 lakh divided by 12 divided by 10. Oh, okay. 12 lakh divided by 10, 120,000 per annum. So per month it is 10,000. I think there we have taken mistake. Like we have done some mistakes there. Yeah. Depreciation here is 10,000. Which means for this 42,041.6, we should add around 1,667, 43,708. This is how you are going to do it. This one question was different, the tire computation and all. And one more thing is this one, decision making. For our sales team, should we take the car on the higher basis, or should we buy it, or should we ask them to use it? So whatever the cost they have given, based on that you are going to compute the total cost. Whichever gives me less cost, I am going for that option. Okay. With that, we have completed our discussion on service costing. Not much things are there. Okay, fine. Now we'll do one thing. We'll take a quick break of 5 minutes and we will be starting with process costing, one of the important chapter. Okay. Yes. Guys, now we'll be starting with process and operation costing. Okay. So what do you mean by process costing, sir? Very simple. It is a method of costing, that is a method in which we ascertain the cost where that particular unit before getting produced involves lot of processes. That kind of costing what we use to ascertain the cost of such kind of units, that we call it as a process costing. That we call it as a process costing. Okay. For example, ghee. Ghee goes through different processes before it becomes ghee. That is, starting from the milk, milk to curd, curd to butter, curd to butter, butter to ghee. Sugar, sugar cane to sugar juice to the solid form, and then sugar. Alright, like this, wherever the different processes are involved, that time we are going to use something called as process costing. Then what is operation costing, sir? Operation costing is nothing but, guys, process costing plus job costing. Process costing plus job costing. What do you mean by that, sir? Guys, process costing will be there. At the same time, certain customization also will be done. For example, if you take car, generally car manufacturing will happen in the process. Agreed. But after some point, it will be done as per the customization of the customers. Few people might go for the sunroof, few people might not go for sunroof. Few people might go for your ADAS, few people might not go for ADAS, like that. So automatically few people might go for 360-degree camera, few might not go for 360-degree camera. So to some extent it is a process, to some extent it's a job. So that we call it as operation costing. Okay. And always remember one thing, output of the one process is the input of the next process. Output of one process is input of the next process, and output of the process are treated as work in progress till finished goods are produced. So till the finished goods are produced, outputs are treated as work in progress or work in process. Losses could be two, guys, normal loss, abnormal loss. Normal loss, what we should do, sir? Add it to the cost of good units. Abnormal loss, charge it to costing P&L. Scrap recovery, if it's relating to normal loss, reduce it from the cost. Whereas if it is relating to abnormal loss, credit it to costing P&L. Or you can adjust it to the abnormal loss and then remaining you take it to the costing P&L. You can do this way. And you know that yesterday also I told you how to compute the cost per unit. That is total cost you should take minus scrap recovery of normal loss divided by total input minus normal loss. You will get cost per unit. Done. Now, sir, what do you mean by abnormal gain, sir? If the actual loss is less than the normal loss, that is abnormal gain. For example, we gave an input of 10,000 expecting a normal loss of 1,000, which means we are expecting an output of 9,000. However, what is happening, sir? In 9,000, we are getting the output of 9300, which means 300 extra units we are getting more than expected. Now this 300 we are going to treat it as abnormal gain. We are going to treat it as abnormal gain. Okay, one thing, and see how it works. Process 1 will give input of material labor overhead. From process 1 output will be there, that will go to process 2. There also will give some material labor overhead, that will go to process 3, material labor overhead, then it will go to finished goods. Like that, that's how it is going to work. However, keep one thing in mind. Once we input the main material here, that is finish. That's what the maximum you can produce. You can't add any more materials, that is main materials here. Of course, which are the material required to complete this main material, that you can give it in the different processes. However, in the second process onwards, you can't input the main material. So unit column max to max is what you are going to input in the first process, that is the maximum. Okay. So cost per unit is total cost minus scrap recovery from normal loss, units introduced minus normal loss. Sir, how the process account will look like? Process account will be something like this. Process account will be, generally we take unit column, generally we take amount column, units column, amount column. Now, first, process account is the work in process account. There is one of the process account only. Now, whatever the expense is incurred, we are going to debit it. Whatever the other things, we are going to credit it. That is, first, let's say we introduce the material. To material, unit column something will come, amount column something will come. To other material we might, but unit column nothing. To direct labor, to direct expense, to overheads. Okay, and by normal loss, if there is any normal loss, units column it will come, guys. How much is the normal loss? Because that's what we are doing now. If you see the cost per unit, what we are doing, units introduced minus normal loss. So units introduced minus normal loss. However, amount column only and only will come if there is a scrap recovery of normal loss. It will come only and only if there is a scrap recovery of the normal loss. And by next process and by closing stock. If at all we are receiving from the different process, here it will come in the process. To process. As simple as this. If there is an abnormal gain, it will be to abnormal gain. Will be to abnormal gain. This is how the process account looks like. Sir, how the normal loss account will be? Normal loss account will be coming only and only if the scrap recovery is there. If the scrap recovery is there, first is what? By bank, some amount. This will be charged to process. To process. However, if there is abnormal gain, guys, try to understand. In our earlier question, 1000 rupees what we thought normal loss as. And per unit we thought 10 rupees is what scrap recovery will get. 1000 into 10. 10,000. We thought here 10,000. However, actually scrap recovery was not 10,000. Why, sir? Because scrap was just 7,000. 3,000 units were abnormal gain. So only 7,000 is what we recovered. 700 into 10. Only 7,000 is what we recovered. So this 3,000 what we didn't recover, that I am going to reverse it to abnormal gain account. That is, scrap value relating to abnormal gain shall be reversed in the normal loss account. Going to the abnormal gain loss account, here what we are going to do, sir? First it is to process account, how much ever it is, by bank account, that is the scrap recovery, and whatever the balance is there, that is charged to costing P&L. That is charged to costing P&L. That is abnormal loss account. Abnormal gain account, guys, we are going to, of course, by process account, right? and 2 normal loss account, that is reversal of the normal loss related to abnormal gain, that is abnormal gain units into scrap recovery, and whatever the balance is there, that shall be credited to costing P&L, that is to costing P&L. These are your different accounts. These are your different accounts. Okay, this is one basic thing which is there, that questions we'll see later. Now one more thing is, sir, equivalent units. Sir, why we want equivalent units, sir? We want equivalent units because, guys, there will be opening stock and closing stock. There will be processed. We don't know exactly what is the cost of the units transferred to next process. We don't know exactly the cost of closing stock. We don't know the exact cost of abnormal loss and all. So in that scenario, we are going to compute the equivalent units. How we can compute the equivalent units, sir? FIFO method and weighted average method. FIFO method and weighted average method. Sir, in FIFO method, what we will do, sir? Opening stock will be there. Newly introduced units will be there. Now, whatever is got completed, processed, in that first we are going to assume whatever was there in the opening stock, that got completed first, and later balance is of newly introduced. Okay, there we'll get to know how many equivalent units compared to current year cost. Sir, try to understand. If we get the cost for 2025-26, few units were there in the 2024-25, few opening stock units were there. Now the cost is relating to 25-26. You can't charge it so many also to the units which was there in 24-25. Why, sir? Because this already incurred few costs. In this year, it's not going to incur the same cost as whatever introduced in this year and 100% completed in this year. Whatever it takes, let's say it takes 100 rupees. Whatever was there in the beginning, that might not take so much. That might take only rupees 60 because 40 is already incurred in the last year. In that scenario, we want the equivalent units. Now what we will do, sir? We got to know how many equivalent units. Current period cost, we are going to divide with the equivalent units. We'll get to know how much is the current period cost per equivalent units. Now, transfer to next process is there, no? In that, what we are going to do? Current period cost per equivalent units relating to opening stock plus what we already incurred in the previous period, that total cost, and whatever newly introduced into equivalent cost. Because this, there was no opening cost, this will be transferred to next process. Like this we are going to do. Anyhow, I am going to show it with one question. You will understand clearly. Okay, done. Sir, what if it's a weighted average, sir? If it's a weighted average, whatever we have processed during the period, we are not going to differentiate between how much is of opening, how much is of introduced during the period. We are going to take the total. We are going to take the total. That is, everything is processed during the year, and for the current period cost, we are going to add the opening stock cost, then divided by equivalent units. So the cost will get distributed to each and every unit, including closing stock. That is your average method or a weighted average method. Okay, and few things you have to remember here when computing the equivalent units. That is normal loss to be considered as 0% of equivalent unit, because if we consider it as some percentage, then the cost will get distributed to that also. If the cost will get distributed to that also, then the main principle is gone. That is, normal loss should be apportioned to good units. That concept itself is gone now, because you are apportioning it to that itself. So normal loss, always remember, will be considered as 0% equivalent unit. If the question is silent, about abnormal loss and abnormal gain, then always consider abnormal gain and abnormal loss are 100% completed. If the question is silent about abnormal loss and abnormal gain, always remember abnormal gain and abnormal loss are 100% completed. And if the question is silent for materials, about how much is completed in opening, how much is completed in closing. Always remember, we assume material is introduced in the beginning only. 100% of the material is introduced in the beginning only. So opening stock, this year we need 0% material because last year only we introduced everything. Closing stock, whatever 100% is there, everything is introduced during the period. That's what we are going to assume. Sir, abnormal gain is there, then take it as a negative amount, 100% if the question is silent. Take it as negative amount, 100% if the question is silent. These are the few things. And one more thing is there called inter-process profit. What we do, sir, there we will consider each and every process. We consider each and every process as a profit center. So we will analyze, we will try to ascertain performance of each and every process by transferring their units at a profit to the other departments. Examiner's favorite question might be. So now other department will send to other department by adding their profit, like that. At that scenario, how to solve it? There is, once they have asked in an examination, and also there is a study material question also, we are going to look into it. Now we'll slowly look into questions of the process costing, so we will get a clear idea about it. Okay, we'll see. First illustration you can ignore. Look at the second one. A process passes through three processes. Sorry, product passes through three processes. The output of each process is treated as a raw material of the next process to which it is transferred, and output of the third process is transferred to finished goods. Material used in process 1 is so much, process 2 is so much, process 3 is so much. Labor, manufacturing overhead. 10,000 units have been issued to the process 1, and after processing, the output of each process is as under. Output is how much of the process 1, process 2, process 3, and how much is the normal loss in each and everything. No stock of material or WIP was left at the end, which means they are telling there is no opening stock, there is no closing stock. If at all it was there, we were supposed to do the equivalent units and all. Luckily, that is not there here. They are asking you to calculate the cost of finished goods. Now, process 1, unit column, you have introduced 10,000, correct? At the cost of 40,000 of material, and labor 6,000, overhead 10,000. Your total cost is 56,000, where we have inputted 10,000 units. Okay. Now, normal loss is 2% of the input. So 2% of the input means normal loss is 200 units. If the scrap recovery is there, the amount column will be there. Otherwise, no. There is no scrap recovery, nothing. Okay. How much we transfer to the next process? We transfer to the next process 9750. Okay. What is the value of that? That we will compute. And how much is the abnormal gain or abnormal loss, sir? Try to understand, we have given an input of 10,000 units, but output we are getting only to the extent of 9950. That is 9750 plus 200 normal loss, which means 50 loss is more than what we expected. Done. Now, how much is the value of the abnormal loss, or how much is the value of the next process? Very simple, guys. 56,000 minus 0, because scrap recovery from the normal loss is 0, divided by units given as an input 10,000 minus normal loss is 200. That is 56,000 minus 0 divided by 9,800 units. Per unit it is 5.71428. So into 9750. And always remember one thing, If you want to do any rounding off, that rounding off better to go for next process transferred units because the spread will be more. Spread will be more. So what you can do, divide by 9750 into 50. Here it is 285.71. I will take it as 286 for the ease of computation, but in examination you should take up to 2 decimals unless and until they ask you to round it off. Done. Next is what, sir? Out of the 56,000, 286 is abnormal, which means 55,714 is your next process. If you divide it by 9750, we'll get that much only. Done. Process 1 is done. Next, going to process 2. In process 2, what happens, sir? From the process 1, we are receiving. How much we are receiving? 9,250 units we are receiving. Sorry, 9,750 units. 9,750 units we are receiving at the cost of 55,714. And we are introducing a material of 20,000. Introducing a labor of 4,000. Introducing the manufacturing overhead of 10,000. So total of the debit side is coming to 55,714 plus 20,000 plus 4,000 plus 10,000. 89,714 to produce 9750 units. Now, how many units are normal loss? Normal loss, they are telling 5% of input. Input is 9750 units. Always remember input, normal loss is calculated on whatever is their input in that particular process. It's not about how much we should have received. Not 9,300. It's about, 9,800. It's only 9,750. How much input is there? That is 9,750 into 5%, no? 5%. 488 units. And scrap recovery is not there, so nil. And how much is transferred to next process? 9,400. Guys, you had 9750 units. In that, 488 was normal loss, which means you should have transferred 9,260 to next process, but you are able to transfer 9,400, which means there is abnormal gain of 138. There is abnormal gain of how many units? 138 units. Done. So what we should do, sir? Listen. What we should do? 138 units. What should be the value, sir? Very simple. How much was the cost, by the way? 55,714 plus 20,000 plus 4,000 plus 10,000. 89,714 minus 0 divided by 9750 minus 488. That is units introduced minus normal loss units. So it is 9750 minus 488, 9262. 89,714 divided by 9262. 9.68. So it is into 138. 1337. So now it is total 9750 plus 138, 9888. Cost is 55,714. That is 89,714 plus 1337, 91,051. So it is 91,051. Here it is 9,888, and here the balancing figure is 91,051. 91,051. Same way we are going to do it to the process 3 also. End of the day we get to know how much we transfer to the next process. So this would be my cost. This should be my cost. Now in this question, there is a scrap recovery. When the scrap recovery is there, what we are going to do, sir? When computing the cost, we are going to reduce the scrap recovery from the unit, and we are going to do it. Now, forget about WIP. We'll come back to this equivalent units later. We'll see this inter-process profit question, where I'm feeling this might come in the examination this time. Inter-process profit question. One of the important one. Look at this question. A Limited produces a product AXC which passes through two processes before it is completed and transferred to finished goods. The following data is given. They have given opening stock, direct material, direct wages, factory overhead, closing, and how much is the inter-process profit included in the opening stock. Output of process 1 is transferred to process 2 at 25% on the transfer price. What do you mean by transfer price, sir? Price at which one department will transfer to other department. Now, which means here it is transfer price means including profit, basically sales price kind of thing. Output of process 2 is transferred to finished goods at 20% of the profit on the transfer price. Stock is processed. Stock in process is valued at prime cost. So they are telling closing stock is getting valued at what cost, sir? Prime cost. Finished stock is valued at a price at which it is received from process 2. Sales during the period is 140,000. Prepare a process cost accounts and finished goods accounts showing the profit element at each stage. So now listen, I will start with the process 1 account. Very simple and very important. This particular question is very simple and very important. See, what I should do is I should take the 3 amount columns. One is total, one is profit, one is cost. Total, profit, cost. Now listen. First, and here profit means what profit, sir? Here profit means profit of our whole company. Here profit column represents profit of your whole company. Only and only if it is relating to your process, then only it will come in the profit column as a to process profit. Otherwise, total of the profit column will be our whole company's profit. You will understand that. Now listen. First, we are introducing the material in the process one. To material. What is the cost, sir? Sorry, opening stock was there. To opening stock, there was no other department's profit involved in this. So straight away, no profit will be there in this. Straight away, it is 7,500. To material. Material. How much is the material, sir? 15,000. No other department's profit is involved in that. So it is 15,000 only. Next, to wages 11,200. 11,200. To factory overhead 10,500. Factory overhead is 10,500. 10,500. Closing stock is 3,700. As there is no profit involved in any of the stages, even this is also 3,700. Cost 3,700, which means process 1 so far no profit. By process 2, now the fun starts. Guys, by process 2, how much you are spending, sir, or how much you are sending, sir? Very simple, guys. 7,500 plus 15,000 plus 11,200 plus 10,500. 44,200 is our cost of the period minus 40,500 minus 3,600. We got to know we sold the or we transferred a goods costing rupees 40,500, and we also know that it is transferred at 20% or 25% of the selling price. Now guys, if the selling price is 100, profit is 25, cost is 75. So can I tell 75 means 40,500, 25 means question mark, so that I will get a profit. So into 25 divided by 75. 13,500. 13,500. Now total at what price we sent, sir? We sent it at 54,000. Total we sent it at 54,000. This is what the process 1 account is. Very simple account, no much special adjustments here. Now we are going to process 2. In the process 2, first there is a opening stock. To opening stock. How much is the opening stock, sir? Opening stock is basically 9,000. Also they are telling in the opening stock there is a inter-process profit of 1,500, which means for the company cost is 7,500. Try to understand. For the process 2, cost is 9,000 only. In that, for the process 2, in that opening stock, cost is 9,000 only. But for the company, that 9,000 is not 9,000. 9,000 cost is just 7,500, which means process 1 incurred a cost of just 7,500 to arrive at that 9,000. Done. Next is what, sir? To process 1, we received a goods 54,000. Guys, For process to cost is 54,000 only. But for the company in this, profit of 13,500 is there. And 40,500 cost is there in this. So for a company, cost is just 40,500, not 54,000. But for process 2, it is 54,000 only. Done. To material. 15,750. No company profit because we are purchasing from the outsider. To wages. 11,250. Guys, here keep this thing in mind. They are telling you to value the inventory at a prime cost, which means we need a prime cost. So I'm taking the prime cost here. The prime cost here, that is 9,000 plus 54,000 plus 15,750 plus 11,250. 90,000 is the cost. For which one? For process 2. But for a company, is it so much cost? No. Why? In this already 15,000 profit is there for the company, which means only 75,000 is a cost. Okay, sir, done. 2 overheads. How much overheads they are telling? 4,500. Again, to some outsider. So company has no profit in it. 4,500. Now the thing comes very important. Closing stock is 4,500. Closing stock is how much, sir? 4,500. That is, by closing stock, 4,500. For the process 2, cost is 4,500 only. But as a company, is it 4,500? The answer is no. Which means we should find out how much for a company as a cost. Very simple. Guys, when the prime cost was 90,000, for a company, 75,000 was the cost of that. Now 4,500 is the cost of a process 2. For a company, how much is the cost in it? Very simple. 4,500 into 75,000 divided by 90,000. 3750. Which means 750 is the cost, profit involved in it as a company, not us, as a company. Which means by finished goods. By finished goods, very, very, very important. Listen. Guys, try to understand this. We had total goods costing 94,500. Correct? I'm talking about process 2 account. From the point of view of process 2 account. 90,000 prime cost, overhead of 4,500. So total we had goods costing 94,500. Total we had goods costing 94,500. But in that 4,500 is with us only. Which means we are selling. We are selling goods costing 90,000. We are selling goods costing 90,000. Costing 90,000, not selling price. Costing 90,000. Okay, sir. Okay, done. Now, as a process 2, in process 2 only how much profit we are making, sir? Not a company. Process 2 itself, how much profit we are making? See, boss, my cost was 90,000. My cost was 90,000. I'm sending it 20% of the sales price, which means this is 80, 100 is question mark, or profit I want to ascertain, so 20 is question mark. 90,000 into 20 divided by 80. 22,500. So as a process 2, I'm having a profit of 22,500. I'm having a profit of 22,500. So I'm going to send it at 90,000 plus 22,500, 112,500. I'm going to send it at 112,500. Now listen. Here how much it is, sir? 112,500 plus 4,500. 1,17,000. Total is 1,17,000. It is matching. Profit is how much? 37,500. 37,500. In that 750 is the profit which is there in the closing stock, which is unrealized. I mean, everything is unrealized, but still 37,500 minus 750, which means in the transfer to next process, 36,750 is the profit of the whole organization, whereas process 2's profit is 22,500. Done. So the cost will be how much, sir? 112,500 minus 36,750. 75,750. 75,750. Hope you understood this. Next is finished goods account, that I will show it here only. Opening stock we had 22,500 and in that profit was 8,250. Okay. So the cost is 14,250. From process to so much we received, profit was so much, cost was so much. Now listen. They are telling we are maintaining a closing stock of 11,250. We are maintaining a closing stock of 11,250 and try to understand that should be valued at a cost what we received from the previous process. So when the 112,500, the cost was 75,750. Now it is 11,250. Cost should be how much? We get 7575. So the difference is the profit. Now they have given that we have sold the goods at 140,000. They have given that we have sold the goods at 140,000. Guys, how much is my cost? 90,000. In that, how much is closing stock? 7575. Which means what is the cost of goods sold? 82,425. Correct? Which means remaining is what, sir? Whole organization's profit. So here I am going to take it as balancing figure. This is how I am going to do the finished goods account. This is how I am going to do the finished goods account. Simple. This is inter-process profit, one of the important question. Now I will take you guys through this equivalent things. Okay. In the equivalent things, always remember this thing. Sir, if the scrap recovery is there, what we should do? Scrap recovery is there from the total cost. If we should reduce, if the cost segregation is not done. If the cost segregation is done into material, labor, overhead, then you should reduce it from the cost of material. Okay, sir, cost of material is fine. From the opening stock cost or from the cost of the period, you should reduce it from the cost of material from the current period's cost. You should reduce it from the material cost of the current period, scrap recovery, from the normal loss. We'll look into this one, fourth one. Listen here, equivalent unit computation. Following details are relating to work done in the process 1 by XYZ company during the month of March. Opening WIP, 2000 units were there. Material in that was 80,000. Labor was 50,000. Overhead was 45,000. Material introduced during the period was 38,000. Whereas costing rupees 14,80,000. Direct labor was so much. Overhead was so much. Units scrapped were 3,000 units, which means units got scrapped are 3,000 units. Degree of completion, material wise it is 100%, labor and overhead wise it is just 80%. Closing WIP is 2000 units, degree wise material 100, labor and overhead 80%. If they don't give these things also, you should assume it as 100 only if they don't give. Unit finished and transferred to process 2 is 35,000 units. Normal loss 5% of the total input including the opening WIP. Scrapped units fetch rupees 20 per piece. You are required to prepare using average method, statement of equivalent production, statement of cost, statement of distribution of cost. I will do one thing. I am not only going to use the average method. I will show this question. In FIFO as well as weighted average. Okay. First, equivalent unit. What we should do, sir? The format is like this. Input, particulars, output, equivalent units. Equivalent units in the given question, it is material, labor and overhead. However, labor and overhead equivalent units will be same because the percentage are same. So I am not going to do it separately. I am going to take it here percentage and equivalent unit, percentage and equivalent units. If the overhead and labor percentages are same, then you should take the two are different things. Then you should take material, labor and overhead. Done, sir. Now what we should do, sir? Nothing. Fill in the blanks. Fill in the blanks. What is it, sir? First, see, I am using a FIFO method first. FIFO. Now, opening WIP. Opening WIP, how much was the opening WIP in this? Opening WIP in this were 2000 units. 2000 units. Done, sir. What about introduced during the period? Introduced during the period. We are introducing 38,000 units during the period. Correct? Huh? Now, transfer to next process. Transfer to next process. Actually, total how much we are transferring to next process, sir? They are telling units transfer to next process is 35,000 units. So try to understand. As I am using the FIFO method, what is my assumption? Whatever 35,000 is transferred, first we transferred what was there in the opening stock. Next we transferred what was introduced during the period. Correct? Now, out of 35,000, we assume that we transferred opening stock of 2,000, remaining 33,000 out of introduced during the period. First 2,000 is of opening stock. Next 33,000 is of how much is introduced during the period. Now, they are telling opening stock before coming to this process only, material is 100% complete, which means this time it takes 0% of material when compared to what is introduced during the period. So material widthwise it is 0. So equivalent units is nil because we are not consuming material at all. So cost should not get segregated to us, distributed to us. Done. Labor and overhead they are telling it is 80% complete last year only, which means remaining just 20% is required when compared to currently introduced one. So it is 2000 into 20% will come to 400. Equivalent units are 400. Done. Introduced during the period is 33,000 and material wise it is consumed during the period only, of course, because from 0 to 100 means 100% of material is used. Labor and overhead also 100% is used because otherwise it won't become a finished goods. I mean next process ready product. Done. Now closing stock. Closing stock, how much they are telling? Closing stock they are telling 2000 units. And they are telling material wise 100% complete. What we are going to assume under FIFO was whatever was produced, that is during the periods only. Remaining whatever is there, that is during the period only, because opening whatever is there, that is already processed and transferred to next process. But In this closing stock, we are going to assume whatever is introduced, that is only getting processed. So when we introduced material wise, it was 0. So now it became 100%. So which is 2000. And labor and overhead wise, it is 80% complete, which means we have taken 80% of the process this time. So it is 1600. Done. Next is normal loss. They're telling normal loss is 5% of the units introduced during the period plus opening WIP. Unless and until they don't tell opening WIP, don't consider opening WIP for computation of normal loss. Now, 40,000 into 5%. Normal loss is 40,000 into 5%, which is basically 2,000. Nil, nil, nil. Now try to understand. Total we introduced 38, 40,000. How much is the number like count we are getting? 2,000, 33,000, 35,000, 35,000 plus 4,000 is 39,000. 39,000, which means 1,000 is what, sir? 1,000 is, guys, abnormal loss. 1,000 is abnormal loss. And I told you one thing in question. Already I told you, whenever the question is silent about abnormal loss, I mean the scrap percentage of completion, you should always and always take it is completed in terms of 100%. Just check here, have they told anything? Yes, degree of completion they are telling. Otherwise, you should have taken 100% and 100%. However, it is 100% and 80%, which is 1,800. Now I will get a equivalent units. Equivalent units in terms of material are 33,000 plus 2,000 plus 1,000, 36,000. 36,000. Done. Labor and overhead wise, what is it? Is 33,000, 34, 33,400, 35,000, 35,800. Labor and material equivalent units are 35,800. Now this is your equivalent table. Now we have to distribute a cost. As we use the FIFO, you know what to do. First, computation of cost per equivalent units. Okay, we have three different kinds of cost. Which are those, sir? Material is there, labor is there, overhead is there. Cost incurred during the period. Cost incurred during the period. How much is the cost incurred during the period, sir? Cost incurred during the period are, for material, 14,80,000. 14,80,000. For labor it is 359,000. For overhead it is 10,77,000. Minus scrap recovery. From normal loss. You should reduce only scrap recovery from normal loss. How much it is, sir? Normal loss was around 40,000 into 5%, 2,000 it was, and each and every unit fetched you 20 rupees. That is 2,000 units into rupees 20 per unit, which will come to 40,000. You should reduce it from the material cost, as I already told you. So it is, now the final cost is 14,40,000, 3,59,000, 10,77,000. Equivalent units. Equivalent units for material is 36,000. And for the labor and overhead it is 35,800, 35,800. Labor and overhead it is 35,800, 35,800. Now, how much is the equivalent cost per unit? Equivalent cost per unit will be 14,40,000 divided by 36,000. 40 per unit. That is cost per equivalent units. This is 359,000 divided by 35,800. 10.03 rupees, 10.03. Next is 10,77,000 divided by 35,800. 30.08 rupees, 30.08. 359,000 plus. Done. Now, these are the different costs per unit. These are the different costs per unit. Now, what we should do, sir? Now we should distribute the cost. We should distribute the cost. Distribute the cost among what, sir? We should distribute the cost among how much is transferred, how much is towards abnormal loss, how much is towards closing stock. Okay. Now material cost, labor cost, overhead cost, total. Done. What and all, sir? First one is transfer to next process. Transfer to next process has two things. One, out of opening stock, out of introduced. Out of opening stock, out of introduced. Now, opening stock, very important, try to understand. Material wise, how much equivalent units? Opening stock, 0. Material wise, it is 0. However, whatever the cost was supposed to be incurred, that was already incurred in the previous period itself. So, opening material 80,000 is already there. So, I am going to take it here. Labor wise, 10.03. How much is the equivalent units? Equivalent units are 400. Opening 400. So 3,59,000 divided by 35,800 into 400. That is 4,011.17 plus whatever we have incurred last time, 15,000. So can I write it as 19,011? Can I write it as 19,011? See, I'm not taking the decimals just for the ease of computation, but in examination you should take it. Keep that thing in mind. Done. Going to overheads. Again, equivalent units are 400 and rate is 30.08 per unit plus whatever opening was there to the extent of 45,000 plus 45,000. So total it is 57,037. 57,037. So my opening stock cost will be 57,037 plus 19,011 11 plus 80,000. These are my opening cost 156,043. And introduced during the period, how many equivalent units? Material wise 33, labor wise 33,000. So 33,000 into 40, which will come to 13,20,000. Labor wise also 33,000 into 10.03, which will come to 330,990. And overhead wise it is 30.08 into 33,000, 9,92,640. So the total will be how much, sir? 13,20,000 plus 3,39,990 plus 992,640. 26,43,630. This is what introduced during the period. May I know the total here? Total will be plus 156,043. Total is 27,99,673. This is what the total amount we should take it as by next process account. By next process account. Done. Second one. Closing stock. Closing stock, we know that everything is of the current period only. How much is the equivalent of units of closing stock? Material wise it is 100%, that is 2,000, other 1,600. So 2,000 into 40, material wise it is 80,000, labor wise it is 10.03 into 1,600, which works out to be 16,048, and 30.08 into 1,600, which works to be 48,128. So 80,000 plus 16,048 plus 48,128, 1,44,176. This is what I should take it in my closing stock, in my process account. Done, sir. Next is what? Next is abnormal loss. Next is abnormal loss. Abnormal loss wise, material how much? 1,000, labor how much? 800, overhead how much? 800. We have computed here if you see. 1,800. Done. For material, 1,000 into 40. 40,000. Labor, 10.03 into 800. 8024. 30.08 into 800. 24,064. Total 40,000 plus 8024 plus 24,064. 72,088. 72,088. This is your abnormal loss. Now if you prepare a process account, how it will be, sir? One is units, one is amounts, one is units, one is amounts. First, we are introducing to opening stock or previous process. How many units were there, sir? 2,000 units were there. And what was the cost of that? 80 plus 15, 95, 95 plus 45, 140,000. Opening there were 140,000. 2. Material. During the year we introduced 38,000 at the cost of 14,80,000. 14,80,000 done. To labor 3,59,000. To overheads 10,77,000. Done. Done. Next, by process 2 or by next process. By next process, how many units you are going to transfer, sir? To the next process, you are transferring basically 35,000 units. Correct? What is the value of that? We computed here 27,99,673. 27,99,673. Okay. By next process is so much. By abnormal loss, how many units, sir? 40,000 units. No, it is 1,000 unit at 72,088. Correct. By closing stock, how much, sir? By closing stock, it is 2,000 units at 1,44,176. Done. By normal loss, how many units, sir? 2,000 units were the normal loss, whereas remember one thing, only if the scrap recovery is there, that you should take. There is a scrap recovery of 20 rupees per unit, so 2,000 into 20 will come to 40,000. It should match. Bit of variation might come, that will be relating to rounding off. So 40,000 units, 40,000 units, here it is 140,000 plus 14,80,000 plus 3,59,000 plus 10,77,000, 30,56,000. Here it is 27,99,673 plus 72,088 plus 27,99,673 plus 72,088 plus 144,176 plus 40,000. Around 30,55,937. Around 63 rupees something difference is coming. Okay, just round it off somewhere. You can add it to the next process only. Here only you add around 63 rupees. You will arrive at a correct answer. This is when we are using FIFO. This is when we are using FIFO. Now, what if you use weighted average, sir? What if you use weighted average? That time how to do it? See, if at all abnormal loss comes in the equivalent unit table, you should take it as negative. Abnormal gain. If you get abnormal gain, equivalent unit computation, you should take it as negative number. Now, input opening, it was 2,000 units, and introduced, it was around 38,000 units. Transferred, listen very carefully. Transferred, here we are not going to segregate. Whole 35,000 I am taking as one. Now, material wise it is 100% complete, no doubt in that. Otherwise it wouldn't be transferred to the next process. Next, labor and overhead wise also it is 100% complete. Correct? So that is also 35,000 units, equivalent units, which is 100% complete. Done, sir. Next is what? Closing stock. Closing stock, they are telling 2,000 units. That is also material wise 100% complete, it seems, which is 2,000. Labor wise it is 80% complete, which is 1,600. Next, abnormal or normal loss. Normal loss, that is also 2,000 units. nil, nil. Abnormal loss. Abnormal loss, guys, 1000 unit. Material wise it is 100% complete, so it is 1000. Labor and overhead wise 80% complete, it is 800. Now total is how much, sir? Total, guys, material equivalent units are 38,000. Labor and overhead, it is 36,000, 37,400. 37,400 equivalent units. Equivalent units are so much. Now computation of cost per equivalent units. Cost per equivalent units. Now cost during the period. Cost during the period, we got three cost: material, labor, overhead. Material cost during the period was somewhere we calculated, no, 1480, 14,80,000, 3,59,000. Overhead incurred is 10,77,000. 10,77,000, that is cost during the period. For that, add the cost of opening stock. Add the cost of opening stock. How much is the cost of opening stock? Material 80,000, labor 15,000, overhead 45,000. It is 15,60,000. Three lakh 59,000 plus 15,000. 3,74,000. 10,77,000 plus 45,000, because we are not segregating opening and during the period here. So every cost should be added and total equivalent unit shall be considered. Minus scrap recovery from normal loss. Minus scrap recovery from normal loss, which was 40,000. That is 2,000 units of 20 rupees each. So here it will be 15,20,000, 3,74,000, 11,22,000. Number of units, equivalent units. Number of equivalent units are 38,000. Okay. And 37,400, 37,400. So cost per equivalent units will be 15,20,000 divided by 38,000, 4T, 3,74,000 divided by 37,400, 10, 11,22,000 plus, sorry, divided by 37,400, 30. Now distribution of cost. First to the transferred units: material, labor, overhead, total. Material 40 rupees is per unit, and how much is the equivalent units transferred? 35,000. 35,000 into 40, 14 lakhs. Labor wise, equivalent units are 35,000. 35,000 into 10, 3,50,000. Overhead wise, 35,000 into 30, which will come to 10,50,000. Total is how much, sir? Total is 14,28 lakhs. Done. Next is relating to closing stock. Closing stock equivalent units are 2,000 and 1,600. 2,000 and 1,600. 2,000 into 40 will come to 80,000. 2000, 1600 into 10 will come to 16,000 and 48,000. Total is 80,000, 96,000, 104, 144,000. Closing stock is 144,000. Done. Next is what, sir? Transferred units are done. Closing stock is done. Abnormal loss. Abnormal loss. Equivalent units are 1000 and 800. So 1000 into 40, 40,000. 800 into 10, 8,000. 24,000. Total is 48,000, 52,000, 72,000. Now these are my amounts which I should take to process account. Now if I take the process account, guys, how it will be there, sir? See, debit side nothing changes. Credit side only value wise it will change. Next process we are transferring 35,000 units and the value is how much? All these things will change, that's it. Okay, listen. Next process 35,000, value we are transferring is 28 lakhs. Abnormal loss, value wise it is 72,000. Closing stock, value wise it is 144,000. Normal loss 40,000 is what we are recovering as a scrap. So now if you see the total, 28 lakh plus 72,000 plus 144,000 plus 40,000, 30 lakh 56,000. Now it will match. Now this is as the weighted average. So this is how you are going to do. Guys, this is what the equivalent units are there for, and this is how you are going to do it also. Hope it is clear. With that, we have completed the discussion of the process costing, one of the easiest chapter, but yet students feel some difficulty in it. I don't know why. Okay. With that, we have completed process costing. With that, we have left with only 3 chapters: marginal, standard, budget and budgetary control. Now, immediately after break, we'll do budget and budgetary control. Hardly it will take half an hour to 1 hour because nothing much is there. And then we'll go for marginal, then we'll go for standard. Fine now? Yes. Now, we'll take a break of half an hour and we'll continue in a later. Okay. Yes. Guys, now we are starting with budget and budgetary control. Budgets and budgetary control. That is, what do you mean by budget, sir? Budget is nothing but, guys, it's a blueprint. It's a blueprint of the future projects, of the future periods, which are in a quantitative terms and for a specific period of time. So, sir, is the budget and forecast same? The answer is no, it is not same. Why, sir? Guys, try to understand. Forecast means we determining or we trying to understand what might happen in future. Whereas forecast is we trying to understand what might happen in future. Whereas when it comes to budget, budget is all about, boss, what should happen. Budget is what should happen. That is, based on the forecasted information, we'll fix one plan. We'll calculate few things. This much must be my sales, this much must be my production, this much must be my purchase. All these things will plan. Now that plan, that blueprint, which is expressed in quantitative terms for the specified period, now that is your budget. So you can tell it just like budget starts where the forecast ends. Okay. What is budgeting, sir? Designing, implementing, and operating a budget is known as budgeting. Okay. So, how the steps are there, or what are the different steps in the budgeting, sir? Very simple, guys. We should specify the objective, exactly what we want to achieve. Based on that, we will set our goals and targets, and we will prepare the budgets. We'll monitor the actual results, then compare the actual results with the budgeted figures, and we will identify any deviations are there. If any deviations are there, we are going to take the corrective actions. We are going to take the corrective actions. What do you mean by budgetary control, sir? Budgetary control is nothing but, guys, it's a management control accounting in which all the operations are forecasted and planned in advance to the extent possible, and actual results are compared with the forecasted result. Basically, budgetary control is nothing but preparing a budget, comparing it with the actual figures, and finding out why the deviations are coming, and taking the necessary step for that deviations to correct those deviations. That is your budgetary control. And there are two kind of controls, budgetary control. One is feedback control, one is feed forward control. Theory point of view, these are important. What is it, sir? Feedback control, also known as ex post corrective control. Here what happens? Here we'll prepare the budget, we'll implement the budget, and we will get the actual results. That is after the end of budgeted period. Now we'll compare the actual result with the budgeted results, and we will check for the deviations. Can we correct those deviations? The answer is no. Why, sir? Throughout the year, for example, if I prepare it for 25-26, now I will wait till the year end. In the year end, I will take my actual results. I will compare it with the budgeted one. Then I will take the corrective actions. I can't take the proactive actions. I can take max to max corrective actions. That is, it should not happen in future. Whatever happened, that is done. That you can't change. That is your feedback control. Whereas feed forward control means opposite of this. That is ex ante preventive control mechanism. Here what we will do, budgeted period will be happening at the same time. We will be monitoring at the same time. We are not waiting till the year end and all. We'll be monitoring on an immediate basis, regular basis. Now that whenever there is any deviation on the regular basis, that time only we keep on correcting it. Now that is feed forward control. Feed forward control. Here you need a solid system, because if you want the information immediately, then you need a proper solid system of for the budgeting and controlling. Budget committee and budget officer, sir. What do you mean by budget committee? Budget committee is nothing but, guys, here the managers of each and every department will be considered, and they are also involved in the decision making as to while doing a budget, because you can't do it on your own, no, because each and every budget is depending upon other budget. For example, sales budget, based on the sales only our production is depending, based on the production our procurement is dependent, like that. So each and every budget is depending upon the other departments, so we are involving the head of those departments to prepare a budgets. And the officer, the person who should take care of the deviations and budgets, everything, is CEO generally. However, CEO can't do all these things. He might delegate this work to someone else. Now the person who takes that work, that person is known as budget officer or budget controller. Budget officer or budget controller. Okay. Sir, what are the different budgets? Physical budgets. Here we will be talking about budgets in terms of quantity, number of units to be sold, number of units to be produced, number of units to be purchased, all those things. Cost budget. Here we'll be talking about cost in terms of amount. Profit budget. Here we'll be ascertaining the profit by considering the cost and income both. Financial budget is those financial item statements like cash budget, capital expenditure, all those things are there, no? Those budgets. And different types of budgets are there. Capacity wise, we can tell there is a fixed budget, there is a flexible budget. Whereas function wise, we can tell sales budget, production budget, plant utilization budget, material utilization budget, material purchase budget, labor budget, factory overhead budget, production cost budget, ending inventory budget, cost, like this. So many budgets are there. Whereas period wise, it is long term budget, short term budget, current budget. Short term means for the less than 1 year or so. Long term means for more than 1 year and all. Current budget means for a few days or few months and all. Now, sir, what do you mean by fixed budget? Guys, here the budget is fixed. Here the budget is fixed. Here it won't vary with the your activity. That is, it won't vary with the level of your activity. Sir, I budgeted for 60%, but right now I'm planning only 40%. Can I change the budget? In case of fixed budget, no. It won't change along with your activity, level of activity. That is your fixed budget. Whereas if it changes with the level of activity, then that we will call it as flexible budget. If it changes with the level of activity, that we will call it as what, sir? Flexible budget. That we will call it as flexible budget. See, fixed budget is a budget designed to remain unchanged irrespective of the level of activity actually attained. Whereas flexible budget is defined as the budget which, by recognizing the difference between fixed, semi-variable and variable, is designed to change in relation to the level of activity attained. That is, change in the level of activity, change in the budget. That is which budget, sir? Flexible budget. How we can do that, sir? Very simple. We are going to divide the cost into 3. We are going to divide the cost into 3. What are those, sir? Fixed cost, variable cost, semi-variable cost. Semi-variable cost, again, will be having 2 things: fixed amount and variable amount. Fixed amount and variable amount. Now we know that fixed cost won't change with the level of activity, no doubt in that. Fixed cost won't change. However, your variable cost will change, no? Per unit we know. Along with the activity, it will change. Semi-variable, again, we are going to divide into fixed and variable. Fixed will not change. Variable will change. That is your flexible budget. See here. A department of company X attains a sales of 6 lakh at 80%. So at 80%, if they are able to achieve 6 lakh, 100% how much they would have achieved? That is 7,50,000. So 100% they will achieve the sales of 7,50,000 of its normal capacity. Okay. So listen here. Administration cost, office salary 90,000, general expense 2% of sales and all. What they are asking here, flexible budget operating at 90%, 100%, 110% of the normal capacity. So now 80%, 6 lakh. If it's a 90%, then how much will be the sales, sir? That is 6 lakh divided by 80 into 90. 6,75,000. If it is a 100%, 7,50,000. If it is a 110%, 8,25,000. Okay. Now, office salary. Guys, they have given 90,000, nothing else, which means it is fixed in nature. So, for the 3 levels, that is 90, 100, 110%. Office salary will be 90,000, 90,000 and 90,000. General expense is 2% of sales. First, in case of 90%, sales is 6,75,000 into 2%, 13,500. It is completely variable. At 100%, sales will be 7,50,000. So it will be 15,000. At 110%, sales will be 825,000. It will be 16,500. Depreciation remains same. 7,500, 7,500, 7,500. Rates and taxes also remain same. 8750, 8750, 8750. Salaries, 8% of sales. Sales selling team salary 8% of sales. In 90% the sales is 7,50,000. Sorry, 6,75,000 into 8%, which is 54,000. In case of 7,50,000, it is 60,000. In case of 110%, it is 66,000. Travel expense is 2% of sales, just like your general expense, 13,500, 15,000, 16,500. Sales office expense is 1% of sales, which is basically 6,750, 7,500, 8,250. General expense again 6,750, 7,500, 8,250. Wages, have they given directly? I am going to take 15,000, 15,000, 15,000. Rent is again 1% of sales, 6,750, 7,500, 8,250. Other expense 4% of sales, 6,750 into 4, 27,000, 30,000, 33,000. This is how you are going to do your budget. Okay, just go through all those things. Here, this is nice question. Here they have given expense for a normal month, planned for January, actual in January. So expense for a normal month means here they have given normally will be producing 8,000 units. So this budget is to produce 8,000 units. Whereas planned for January, in January we planned for 10,000 units. January we planned for how many units? 10,000 units. But actually it became how much? 6,000 units. Now what you should do is you should calculate the budget for 6,000 units and you should compare the cost. See here, for example, first one, salary of foreman. When you budgeted for 8,000 units also it was 1,000, 10,000 also it is 1,000, which means for budget for January, budget for Jan, but updated one, that is for 6,000 units. So this is 1,000. Indirect labor 720, 900. So try to understand, when it was 8,000 units, it was 720, which means per unit how much? 0.09. It was 900 when it was 1,000, 10,000 units, which means that is also 0.09. So it is variable in nature. So 6,000 into 0.09, this will be 540, which means here excess 60 rupees we are incurring. Actually excess 60 rupees we are incurring. Done. Indirect material 800, 1,000, 700. Now for 8,000 it is 800, for 10,000 it is 1,000, means per unit it is 0.1 in both the situation, which means it is completely flexible in nature, no doubt in that. This is 600, but we incurred 700, which means 100 rupees extra we have incurred. Adverse. Next, repairs and maintenance 600 and 650. So 600 for 8,000 units. So 600 for 8,000 means 0.075. 650 for 10,000 units, that is 0.065. Which means it is semi-variable in nature, not fixed for sure, but it is semi-variable in nature. That time what we should do, sir, we should divide up. Try to understand how much is the increase in cost. Increase in cost is 50,000. How much is the increase in units? Increase in units is 2,000. So 50 divided by 2,000. Variable cost per unit is 0.025. Variable cost unit is rupees 0.025. Now try to understand, we can apply this to something like 8,000 units, let's say 8,000 into 0.025. So in this variable cost is 200, but at 8,000 repairs and maintenance were 600, which means fixed is 400. So can I tell for 6,000 also fixed will be 400 only, but variable will be 0.025 into 6,000, which will come to 150. Total will come to 550. But actually we incurred is 600, so negative 50. I incurred more. Going to power 800 and 875. So 800 for 8000 means 0.1, whereas 875 for 10,000 means 0.0875, which are not same, semi-variable in nature. So how much is the difference in cost, sir? Difference in cost is 75 rupees. Difference in cost is 75 rupees. And how much is the difference in units, sir? 2000 units. So how much it is? 75 divided by 2000. 0.0375. 0.0375 per unit it is into 8,000. 300. So 300 is the total variable cost in this 800. So 500 is fixed. So for 6,000 it will be 500 plus 0.0375 into 6,000, which will come to 225. Total will come to 725, which means here we have incurred 740, which means negative 15. Done. Now for 8,000 it is 320, that is 0.04. For 10,000 it's 400, which means completely variable. That is how much it is, sir? 0.04. Now 0.04 into 6,000, it will be 240. But what we incurred is negative 60. Next, rates and taxes fixed it is, because everywhere it is same. Depreciation also fixed it is same, no deviation. Insurance also same, fixed, which means we are having adverse of this much. So whatever our foreman is asking for bonus, it is completely wrong. He is not entitled for any bonus. And all other budget, guys, always remember one thing. Everything is depending upon sales. See, try to understand. First, what we should do is we should find out how many units we should sell. How we get to know, sir, how many units we can sell? That they will only give. If they don't give, they will give opening stock, closing stock, and production and all. Leave that. Now, using the number of units sold, we can find out how many units are required to be produced. How many units are required to be produced? Very simple. During the year, I am planning to sell 1000 units. Okay. I want to keep the opening stock of 100 units. I want to keep the closing stock of 50 units. Can I tell, boss, I need to sell 1000 units? I agree, but I don't have to produce 1000 units. Why, sir? Because I already have 100 units, which means I have to produce only 900 units during the period. However, are we going to go with the zero stock? No, which means I want a closing stock, which means I have to produce that also. So 50 units I have to produce. In total, during the year, I should produce 950 units. During the year, I should produce 950 units. Now, guys, try to understand how we arrived at the units to be produced. We arrived at the units to be produced as sales units minus opening stock plus closing stock will give you units to be produced. Now, okay, units to be produced. We got to the 950 units to be produced. Each and every unit, let's say it takes 3 kg of raw material. Each and every unit takes 3 kg of raw material. So how much raw material we are going to consume? We are going to consume 2850 kgs of raw material. However, there is already opening 200 kgs of raw material. Closing we want 75 kgs of raw material. Now tell me how many units to be purchased. Same logic. Sir, I agree I need 2850, but I already have 200. Great. So you are telling that to produce, you have to just purchase 2650. Yes. However, I want to keep the closing stock of raw materials, sir, to the extent of 75. That also I am going to take now only, which means I have to purchase 2725 units. How to purchase 2725 units. Keep this thing in mind. This is how you are going to do the purchase budget, sales budget, and production budget. Okay, that is how you are going to do. That is the format, simple format. And there is something called as Master budget. Sir, what do you mean by master budget? Sir, master budget is just like, guys, your this thing. See, this question is there now. ACB and all. This you will understand after we do the limited factors in marginal costing. Okay, that we'll see. Going to this one. Master budget means what, sir? Master budget is nothing but, guys, your projected P&L, you can tell. That is, in the same budget you are discussing about your purchases, in the same budget you are discussing about your sales, production, everything. Basically, how much profit you want to earn, that you are planning at that time only, which means how many units, how much you are planning. So you can ascertain how much profit I want to earn. That is your master budget. That is your master budget. Okay. Sir, zero based budget, what do you mean by that, sir? Important one, guys. Important one. That is, for the theory, zero based budget is very important. What do you mean by zero based budget, sir? Very simple, guys. Zero based budget means every time we are going to start from the scratch. What do you mean by that, sir? Guys, we won't start budget. We won't be doing the budget on normal previous year based terms. For example, in the 2024-25, my sales I was expecting to be 1 lakh. Now 25-26, generally what I will tell, I want to increase 10%. So for this it will be 1,10,000. This is what normally we do the budget, plus or minus to the previous budget. However, zero based budget means we are not going to do this. We are going to start collecting the information from the base. From the zero we will start working. We are not going to collect, we are not going to check whenever is required. Guys, try to understand. We are not going to add less all those things. We are not going to do that. We are going to start from the scratch, from the zero. Each and every activity will be carried out again. Each and every manager should tell how much money they want and why they want. For each and every rupee, they should give the information. If at all they don't give the information, that budget will be cancelled this time. That is your zero-based budgeting. Each and every manager should give you information about where they want to spend a rupee, each rupee, and they should justify it. If they don't justify it, budget will be cancelled for them. That is your zero-based budgeting. That is, every time you keep on preparing a new budgets. You are not going to do plus minus to your existing budget. Okay. And in budget, the important aspects are here. That is ratios. One is efficiency ratio. How to find out efficiency, sir? Sir, I was supposed to take 10 hours for that work. I have taken 8 hours. Am I more efficient or less efficient? Of course, more efficient. Which means to get the more than 100%, my numerator should be more. Which means I should take 10 by 8. What is 10, sir? 10 hours is standard time allowed. 8 hours was what, sir? 8 hours were actual hours taken. 10 hours was standard time allowed. 8 hours is actual hours taken. That is your efficiency ratio. When it comes to activity ratio, boss, I am least concerned about how many hours you actually worked. Here in the activity ratio, I am concerned about how much work you have done. How many hours work you have done. Here I am not concerned about how many hours you have taken. Here I am concerned about how many hours you have worked. That is, how many hours work you completed. That is standard hour by budgeted hours into 100. Calendar ratio. How many days are available divided by how many days you are budgeted. Whereas standard capacity is how many budgeted hours you decided, but maximum how many budgeted hours you might have worked. Actual capacity is actual hours how much you worked divided by maximum budgeted hour. Actual usage to budgeted is actual working hours divided by budgeted hours. See here one question. Standard working hours are 8 hours per day for 5 days a week and maximum capacity is 50. So can I tell my maximum available hours were 50 employees working for 5 days a week each for 8 hours for a 4 week, because the data is given for 4 week. So 50 into 5 into 8 into 4, 8000 hours. This is your maximum hours. This is your maximum hours. But actually they are working only 40 employees. They are working only 40 employees. Now 40 employees, 5 days a week for 8 hours. If they work for 4 hours, 40 into 5 into 8 into 4, 6400 hours. This is your budgeted. This is what you budgeted based on your actual these things. Actual hours expected to be worked is 6400 and 8000. These are these two things. Actual hours worked is 6000. Actual hours worked is 6000. Standard hours earned in this one is 7000. They are asking you to calculate efficiency. That is, efficiency is very simple, guys. Standard by actual. Standard is 7000, actual is 6000. Activity ratio, that is how many hours work you completed. Standard by budgeted. Standard is 7000, budgeted is 6400. Calendar ratio, how many days were available. Here you see there was one special day holiday as a national holiday, which means total you budgeted for 20 days, 5 days a week for 4 weeks, 20 days, but you are able to work only for 19 days. Standard capacity ratio, you are planning to work for 6400 out of the maximum available of 8000. Actual capacity, you are actually working for 6000 hours out of 8000 hours available. Actual usage to budgeted, actually you are working for 6000 when you budgeted for 6400. This is how you are going to do it. And here this one is important. Which one, sir? This case scenario based. Here actually they will tell if the sales will increase by 5% and all, but it won't increase by 5%. It is just 4%. So accordingly you are going to take that way. Okay. No other things are there. No other things are there. Here you can see there. Sales growth is 12%. So 420,000 is there. Plus 12%. Sales will 420,000 plus 12%. Sales will be 4,70,400 units. Now what they are telling here about the employees, 85% of the employees are permanent and getting a salary of per 5-year wage rate. The earnings of the man shift is rupees 3,000 per day. They are getting 3,000. The new wage agreement will implement from 1st July. It is expected to 15% increase in the pay will be given. Now try to understand how much they are earning now. 3,000 per hour. So from January to June you should calculate 3,000. From July to December it will be plus 15%. And whereas these people 850, and that is based on this index. So 850 into 173.59 divided by 165.17. That's what you are going to do. Okay. And power cost, you know, this hiring charges thing, reverse RCM. Yesterday when doing a cost sheet only, I told it what adjustment you should be giving. These are the things. With that, we have completed our budget and budgetary control. Nothing much in this. Please concentrate on this chapter's theory, and also whatever they have given in the question, if you are able to understand the question, easily you can score it in budget and budgetary control. And budgetary ratios are important here. Ratios are important. Efficiency ratio, activity ratio, calendar ratio, standard ratio, actual capacity, actual usage. Okay. This is how you are going to do. This is your budget and budgetary control. With that, we have completed almost all the chapters except last 2 chapters, important chapter, students' favorite chapter, that is marginal and standard. So now we will be starting with the marginal chapter. Yes. Now we are starting with marginal costing. Sir, what do you mean by marginal costing? Sir, guys, try to understand marginal costing is not a method of costing. Marginal costing is not used to ascertain the cost of the product. In fact, marginal costing is a technique. Technique of what, sir? Technique which helps the management in decision making. Marginal costing is not the method of costing. Instead, marginal costing is the technique which helps the management in taking the decisions. Okay. So here to take the decision, management is going to use marginal cost. In fact, variable cost. Here fixed cost will be ignored to determine the cost or determine the decision or make the decision. Fixed cost will not be considered, only variable cost will be considered. Sir, what do you mean by marginal cost? Sir, marginal cost is nothing but, guys, additional cost incurred to produce one more unit. In simple, we can tell it as marginal cost is nothing but a variable cost. Marginal cost is nothing but variable cost. Now, you can segregate a cost into two: variable cost, fixed cost. Variable cost always has a impact on decision making, because as per decision making, now you want to produce more or less. If you want to produce less, variable cost will reduce, total variable cost. If you want to produce more, total variable cost will increase. So automatically variable cost has an impact on decision making. When it comes to fixed cost, we should check whether it is relevant cost or sunk cost. Relevant cost, sir, it has impact on the decision making. For example, let's say now we are producing 10,000 units. We are planning to produce 2,000 more units. To produce 2,000 more units, we have to take the new machinery. For the depreciation is 20,000. Now, this has impact on decision. Why? Because if you want to produce, then only we are going to incur this. Otherwise, we are not going to incur this. So, this kind of fixed cost, I will call it as relevant fixed cost. Whereas, if the fixed cost is already incurred, it has no impact on what decision we make. That is sunk cost, and it has no impact on decision making. Okay. So, only, and in marginal costing, remember one thing: to ascertain the cost per unit, we are going to consider only and only variable cost related to production. We are going to consider only and only variable cost related to production. We are not going to consider the fixed cost related to production. Under which one? Marginal costing. Whereas in the absorption, what happens, sir? In the absorption, we are going to consider both variable and fixed production cost to arrive at the cost per unit. So, only variable costs are considered for the computation of the cost of production under marginal costing. So, the value of inventory includes only variable cost. Generally, marginal cost income statement, how it will look, sir, when there is no opening stock, closing stock things, then we are going to take sales. From the sales, we'll reduce the variable cost. We'll take the sales. From the sales, we'll reduce the variable cost. We'll arrive at the contribution. From the contribution, if we reduce the fixed cost, we'll arrive at profit or loss. Now, sir, sales we understood, sir, number of units sold into selling price per unit. Variable cost also per unit, how much into number of units sold. What do you mean by contribution, sir? Contribution is nothing but, guys, portion of the sales. Contribution is nothing but portion of the sales which contribute towards recovery of the fixed cost and profit. Contribution is nothing but the portion of sales which contribute towards recovery of the fixed cost, and the balance of that contribution after recovery, that is your profit. Okay. Now, sir, sales variable cost percentage is what, sir? Variable cost percentage is nothing but, guys, variable cost by sales into 100. Whereas contribution percentage is nothing but contribution by sales into 100. Best part is this contribution percentage, we will also call it as PV ratio. This contribution percentage, will also call it as PV ratio. So contribution ratio is equal to contribution by sales into 100. Contribution by sales into 100, whereas variable cost is variable cost by sales into 100, or you can tell it as 100% minus PV ratio, that will give you variable cost. 100% minus PV ratio, that will give you variable cost. Now this one is very important thing. Try to understand this. Variable cost will vary with the sold units, but not with the selling price. Total variable cost will increase or decrease along with the number of output, guys. Number of output, not with the price of the output. For example, let's say variable cost per unit is 100. Now I am selling 1000 units. How much will be my variable cost? 1 lakh. Correct? Now I am selling 1000 units only, but earlier my sales price was, let's say, 200. Now the sales price I am reducing it to 150. How much will be my variable cost? My variable cost will be 100 into 1000 only, guys. Why? Here 50 rupees selling price I am reducing. 50 rupees selling price I am reducing. Why will the variable cost will decrease? Per unit 100 rupees we are incurring. Now also 1000 only. Earlier also 1000 only. So it will be 1 lakh only. So always remember this point, very important. Variable cost will vary along with the units, but not with the price. Done. Sir, what do you mean by break-even point or break-even sales? Sir, break-even point or break-even sales means, guys, level of sales at which there will be no profit, no loss. There will be no profit, no loss. That is level at which sales is equal to cost. Level at which sales is equal to cost. So level of sales, it is a sales. If you make so much sales, we'll end up making no loss, no profit. No loss, no profit, which means your sales amount will exactly be equal to the variable cost plus fixed cost. Variable cost plus fixed cost. And at break-even point, contribution will be equal to fixed cost. Why, sir? You only try to understand. Let's say sales was 1000. Variable cost was 400. Contribution is 600. Fixed cost was 600. Then only we'll get 0 as a profit. Profit or loss is 0 means that is break-even point. So can I tell at break-even point? Can I tell at break-even point my fixed cost is equal to contribution? So this point you have to remember. Break-even point could be in terms of units or in terms of amount. In terms of units means how many units you should sell to achieve the break-even sales. Okay. So, sir, what is the formula, sir? Very simple, guys. Now, let's say selling price is rupees 100. Okay. Variable cost is rupees 70. Fixed cost is, let's say, rupees 6000. Now we want to know how much is your break-even point. Very simple. Can I take my sales units as X? Break-even sales units as X. If I sell X number of units, I will be able to achieve no profit, no loss. So can I consider it as X? Okay, sir. So sales will be how much, sir? Sales will be 100 into X. 100X. Minus variable cost will be 70X. That is 30X. 30X minus fixed cost. How much is fixed cost, sir? 6000. That should give me profit of 0 because I started with X. X means what, sir? Break-even sales. We know that break-even sales means sales at which profit is 0. So profit is 0. Now can I tell it as 30X minus 6000 is equal to 0. 30X is equal to 6000. X is equal to 200 units. That is, if I sell 200 units, I will end up making no profit, no loss. How did you arrive at 200, sir? X is equal to 6000 divided by 30. Now, what do you mean by X, sir? X is nothing but break-even point in terms of units. 6000 is what, sir? Fixed cost. 30 is what, sir? Contribution per unit in terms of rupees. Contribution per unit in terms of rupees. So can I tell that my break-even sales is nothing but fixed cost divided by contribution per unit? Fixed cost divided by contribution per unit. Sir, what if I want to find out, what if I want to find out cost per, or what if I want to find out break-even sales in terms of amount? What if I want to find out break-even sales in terms of amount? In that scenario, what it is, sir? Guys, very simple. Very simple. What we are going to do is break-even sales in terms of amount. Guys, we are going to take the sales as X. Can I tell variable cost is 70% of sales? That is 70 by 100 into 100. Can I tell it as 70%? Variable cost is 70% of sales. So can I tell if my break-even sales is X, my variable cost will be 0.7x. My contribution will be 0.3x. My contribution will be 0.3x minus fixed cost of 6,000. That should give me 0. Now 0.3x minus 6,000 is equal to 0. 0.3x is equal to 6,000. X is equal to 6,000 divided by 0.3, 20,000. So my break-even sales is 20,000 in terms of amount. So what was X, sir? X was, I will write here, X is equal to 6,000 divided by 0.3, which gave me rupees 20,000. Now what was X, sir? X was break-even sales in terms of rupees. What was 6,000, sir? Fixed cost. What was 0.3, sir? Not contribution per unit, guys. It is 30%. That is nothing but PV ratio or contribution percentage. So one more formula of break-even sales. When you want to ascertain in terms of amount is fixed cost by PV ratio. Fixed cost by PV ratio. That is your break-even point. That is your break-even point. Now, sir, break-even sales is what, sir? Done. Break-even sales, break-even point, it could be in terms of units or it could be in terms of rupees. Sir, what do you mean by cash break-even sales? Here, ditto like break-even point only, but here we will be covering only cash expenses. That is, how much sales is required? How much sales is required to make sure all the cash expenses are recovered, which means after recovering the cash expenses, my profit should be 0. That is, sales at which revenue will be equal to cash expenses. So instead of fixed cost, I will take only cash fixed cost in the formula. That is your break-even sales. That is your break-even sales. Now, there is something called as margin of safety. Now, what do you mean by margin of safety, sir? Margin of safety is nothing but, guys, sales over and above the break-even sales. Margin of safety is nothing but sales over and above the break-even sales. For example, if my actual sales is 10 lakh, my break-even sales, let's say it is 6 lakhs. Actual sales is 10 lakh, break-even sales is 6 lakh. Now, my margin of safety is rupees 4 lakhs. My margin of safety is rupees 4 lakhs. So now this is my MOS, margin of safety. That is sales over and above the break-even sales, that we will call it as margin of safety. That is nothing but sales is equal to break-even sales plus margin of safety, or margin of safety is sales minus break-even sales. But can I tell like this? Like what, sir? Listen very carefully. can I say one example like this? Selling price, let's say rupees 200 per unit. Variable cost per unit, let's say rupees 80. Sold units, let's say rupees sold units, let's say rupees around or sold units, let's say around 1000 units. Fixed cost, let's say around 60,000. Fixed cost is 60,000. Now, can we calculate a break-even point or break-even sales? Easy, sir. How, sir? Sales, I can tell it as 200x. That is, number of units sold is x. At break-even, sir, you know 1000 is actual sales. Try to understand. 1000 is actual sales. Break-even is something should be less than that if profit is there. So 200x minus variable cost. Variable cost per unit is 80. So it will be 80x. Contribution at break-even point will be 120x minus fixed cost, which is 60,000. So profit should become 0. Now how much is x? 120x minus 60,000 is equal to 0. Therefore x is equal to 60,000 divided by 120. 500 units. That is, I will be able to achieve my break-even point at 500 units. I will be able to achieve my break-even point at 500 units. Now 500 into 2000 is how much? 500 into 200, 1 lakh. So 1 lakh is my break-even sales. Actual sales is how much, sir? 1 lakh units. For the ease of computation, otherwise you will get confused. Let's make units sold as 900. So actual sale is how much, sir? 900 units into rupees 200, which will come to rupees 1,80,000. Which will come to rupees 1,80,000. Therefore, guys, try to understand. Margin of safety is nothing but rupees 1,80,000 total sales minus rupees 1 lakh break-even sales, which will come to rupees 80,000. Can I do it like this? Can I show the statement of sales like this? So then you will be understanding it in a different way. How, sir? I will segregate my sales into two parts. What is that, sir? I will segregate my sales into two parts. That is, here first I will sell 500 units and remaining 400 units. First 500 units at break even, remaining 400 units. Sales 500 into 200, which will come to 1 lakh. Here 400 into 200, which will come to 80,000. That is, one is break even sales, one is margin of safety. Minus variable cost 500 into rupees 80, which will come to 40,000. 400 into rupees 80, which will come to 32,000. 60,000 and 48,000. 60,000 and 48,000 minus fixed cost. Guys, here it is 60,000, here nil. Why, sir? Whatever the fixed cost we had, whatever the fixed cost we had, everything was recovered in the break-even sales itself. Then only it will become break-even sales. No, all the cost is recovered. Now here the profit will be 0. Here the profit will be 48,000. Here the profit will be 48,000. Now, if you see the whole organization's profit as a one thing, sales will be how much, sir? 900 into 200, 1,80,000 minus variable cost is how much, sir? Variable cost is 900 into rupees 80, 72,000, which will come to 108,000 minus fixed cost, which is 60,000. So profit is 48,000, which means always try to understand profit is nothing but contribution of margin of safety. Profit is nothing but contribution of margin of safety. Profit of the organization is nothing but contribution of margin of safety. Can I write it like this? Profit is equal to contribution of margin of safety. Yes, sir. Can I also write it like this? Profit is equal to, how to arrive at this 48,000? Can I tell PV ratio is, when the selling price is 200, variable cost is 80, which means contribution is 120. 120 divided by 200 into 100, which is 60%. Can I tell my contribution is nothing but sales at MOS. MOS is how much? For 80,000. Can I tell it nothing but 80,000 into 60%? That is contribution at margin of safety. 80,000 into 60%. Yes, sir, we can tell. Can I also tell this is MOS, this is profit, this is PV ratio. Now listen here very carefully. Can I tell profit divided by PV ratio is equal to MOS? That's the formula. MOS is nothing but profit by PV ratio. MOS is nothing but profit by PV ratio. Hope it's clear. Now I want to tell you one more thing. I want to tell you guys one more thing. What is it, sir? What is it, sir? I will take two sales level. One I will take 10,000 units. The other one I will take 15,000 units. One I will take 10,000 units. Other I will take 15,000 units. Now, let's say selling price is rupees 10. Variable cost is rupees 6. Fixed cost is rupees 20,000. Fixed cost is rupees 20,000. Now try to understand. Sales 10,000 into 10, 1 lakh. 15,000 into 10, 1,50,000 minus variable cost 6 into 10,000, 60,000. 6 into 15,000, 90,000. Now we'll get a contribution. Contribution will be 40,000 and 60,000. Contribution will be 40,000 and 60,000 minus fixed cost. Here also fixed cost will be 20,000 only. If you sell 15,000 units also, it will be 20,000 only. Can I tell profit is 20,000? Here it is, profit is 40,000. Profit is 20,000, profit is 40,000. Guys, I will show you a magic here. See, How much is the change in the profit? Rupees 20,000. How much is the change in the contribution? 20,000. So always remember one thing, change in the contribution will be equal to change in the profit. Always remember this point, change in the contribution will be equal to change in the profit. Can I tell change in the profit by change in the sales is profit percentage? How, sir? Can I tell like this? 50,000 increase in the sales, yes, which led to 20,000 increase in the profit, correct? Can I tell profit percentage is equal to 20,000 divided by 50,000 into 100, which will come to 40%. Yes, what I did for computing the profit percentage, I took change in the profit divided by change in the sales. Automatically, I got to know how much is my profit percentage. Now try to understand. I also told you one thing. Change in the profit will be equal to change in the contribution. Can I take the change in the profit itself as the change in the contribution? Yes, sir. Change in contribution divided by, can I take change in sales as change in sales only? Yes. That will give me profit percentage. Here, as I have taken contribution, that will give me PV ratio. So always remember one thing, PV ratio can be computed as change in the sales, change in the profit divided by change in the sales. Change in the profit divided by change in the sales. Sometimes what they will do is they will give two sales, two profits. That's it. They won't give any other information. That time, how to compute PV ratio, sir? Change in sales, change in profit. Both you take. Change in profit divided by change in sales will give you contribution percentage, that is PV ratio. That is your PV ratio. This is how you are going to do it. These are the few formulas what we have discussed. Now, listen here, how the absorption costing is different compared to marginal costing. In the marginal costing, try to understand, in the absorption costing what is happening. For computing the cost of production, what we will do is, we'll consider the direct material, we'll consider the labor, direct labor, we'll consider the variable overhead, variable production overhead, and we'll consider fixed production overhead. And we'll consider fixed production overhead, which means here we will consider fixed production overhead also. But best part is this will be absorbed. This will not on actual terms. This will be based on the absorption. We'll find out the cost of goods produced. Using that, we are going to find out cost of goods sold. For that, we are going to add the selling and distribution overhead, administration overhead, etc., which are general in nature, not related to production, both variable as well as fixed. Then we will get to know the total cost. Whereas in marginal costing, what we will do, sir, we'll take the direct material, we'll take the direct labor, we'll take only and only variable overhead of production. We'll take only and only variable overhead of production. That will give us how much is the cost of production. Direct material, direct labor, variable overhead of production will give us how much is our cost of production. For that, we are going to find out how much is unit sold, opening minus closing, etc. Then whatever fixed is there, that will be added later part. That is fixed factory overhead, admin overhead, etc. will arrive at our total cost. See the statement. Under absorption, we take the sales, from that we'll reduce the cost. How do we arrive at the cost, sir? Direct material, direct labor, variable manufacturing overhead, fixed manufacturing overhead absorbed. Fixed manufacturing overhead absorbed will arrive at a cost of production. For that, add the opening stock less the closing stock. Add the opening stock less the closing stock. We'll arrive at cost of goods sold. We'll arrive at where, sir? cost of goods sold. Now, if at all you have under absorbed, you have taken expense as less. Now what you should do? Increase your expense. If at all you over absorbed, you have taken your expense as more. Now what you should do? Reduce. So if the under absorption is there, add it. Over absorption is there, reduce it. Then whatever your admin, selling and distribution is there, everything you consider, you will arrive at a total cost. From the sales, if you reduce the total cost, you will arrive at a profit. From the sales, if you reduce the total cost, you will arrive at what, sir? You will arrive at a profit. That is under which method, sir? Absorption method. Marginal, what we will do, sir? Sales, let it be. Cost, you check. Direct material, direct labor, variable overhead, which is relating to production. We'll arrive at cost of production. For that, add the opening stock minus the closing stock. We'll arrive at total cost of goods sold. From the sales, if you reduce the cost of goods sold, you will arrive at a gross profit. From the sales, if you reduce the cost of goods sold, you will arrive at gross profit. From that, if you reduce your variable admin, selling and distribution overhead, you will arrive at a contribution. Will arrive at contribution. From that, if you reduce the fixed cost on the actual basis, all the fixed cost including the production fixed cost, you will arrive at a net profit. Here, your variable cost, absorption costing profit and marginal costing profit will differ. Reason being valuation of stock. Here, in the absorption costing, to value the stock, you have taken direct material, direct labor, variable overhead relating to production plus administration overhead related to production. Whereas in marginal costing, to value the production, you have taken direct material, direct labor, variable overhead to production. That's it. You haven't taken more than this. So automatically the valuation of the units will change. Automatically your profit will change. The reason is only and only due to valuation of the stocks under absorption, under marginal. Now, sir, you told about break-even point. When there are only one kind of units are there. One unit is there. One type of unit is there. But what if factory has different type of units plus only one fixed cost? In that scenario, how to find out break-even, sir? Very simple, guys. That time, instead of the contribution, you should take the combined contribution. Instead of the PV ratio, you should take combined PV ratio. That is, you know that you will consider contribution per unit in the formula. If you want to compute numbers in terms of units, you are going to consider the PV ratio if you are going to find out in amount. Now, if you want in amount, you take the combined PV ratio. If you want in units, you take the combined contribution. Now, sir, how to arrive at a combined contribution or a combined PV ratio? Now try to understand. Let's say there are two products, A, B. Or we'll do one thing. I'm not going to take the examples like this. We'll do the question only. Because after this only one more concept is there. Okay, I will tell that concept, then we'll go to the questions only. The next concept is, two more are there. Shutdown cost. That is, here it is a decision making question as to whether organization should shut down or not. Guys, always remember one point. I agree, our organization is making loss. That's why you guys are thinking about shutting down. But one thing you have to remember, if you shut down, there will be few costs called as shutdown cost. What do you mean by that? If you shut down also, you have to incur this cost. You don't have choice. You can't avoid this cost. Those are known as shutdown cost. Now what you will do, you should check, boss, if I run the business, how much is my loss? Let's say rupees 1 lakh. If I don't run the business, still I have to incur one cost called as shutdown cost. How much is my shutdown cost? Rupees 120,000. Guys, if I run I will make the loss of 1 lakh. If I don't run, I will make the loss of 120. Better to run or not to run? Better to run. Better to run. When it is better to stop? It is better to stop when your loss exceeds your shutdown cost. When your loss exceeds your shutdown cost. That is, you produce, okay sir, will produce and you produce, yes sir, will produce, and your loss is going beyond 120,000. Instead of that, instead of going for that, better do one thing, better close the business. Better close the business, just don't do it, so that your loss will be restricted to 120,000. For example, by running the business, your loss is 150,000. Then stop the business so you can restrict your loss to 120,000. Whereas, sir, what if my loss by running a business is just 1 lakh? In that scenario, better run the business so that you will be restricting your loss to 1 lakh instead of 1 lakh 20. You will be restricting your loss to 1 lakh instead of 1 lakh 20. So shutdown cost decision making is like this. Now one more very important thing is there. That is key limiting factor. Key limiting factor. What do you mean by key limiting factor, sir? Also known as constraint factor. What do you mean by constraint factor, sir? Guys, there will be few resources. There will be few resources. Although you want more, so much it won't be available. Although you want more, so much it won't be available. For example, let's say we have a machine. We have one machine. Okay. Now, that machine can run for 10,000 hours. This is available machine hours. This is available machine hours. That machine can run for 10,000 hours. Now we are producing product A and product B. We are producing product A and product B. Selling price of product A is rupees 200. Selling price of product B is rupees 100. Variable cost of product A is, let's say, rupees 140. Variable cost of product B is rupees 60. Rupees 60. Now, machine hours required to produce a unit of A. Machine hour required to produce a unit of A is 4 hours. Machine hour required to produce a unit of B is 2 hours. Production capacity. Production capacity. Let's say A, you have a capacity to produce 10,000 units. Or leave, not 10,000 units. Production capacity, let's say you can produce 2,500 units. Whereas B, you can produce, let's say, 5,000 units. Okay. Demand. For A, you have 2,000 units demand. For B, you have 4,000 units demand. For A, you have how many demand? How much demand? You have 8,000 demand. For B, you have 4,000 units demand. Now my question is, which to produce? Whether to produce A or whether to produce B, or both, in what proportion? Straight away one thing comes to our head. What is it, sir? What is it? That is, sir, A contribution per unit is how much, sir? A contribution per unit is 60. Awesome. B contribution per unit is how much, sir? B contribution per unit is 40. Great. A 60, B 40. Sir, A is giving you more contribution, B is giving you less contribution. So produce A first. See guys, whenever the limiting factor is there, better you can't take a decision like this. Then what, sir? Sir, produce both also. No, what problem you got? Try to understand. To produce 2000 units of A, I agree I have a capacity of 2500, but demand is only 2000, which means how much I will produce. Always remember, guys, you are going to produce lower of capacity or demand. You are going to produce lower of capacity or demand. So here you guys have to try to understand. Here A, you have a capacity of 2500, I agree, but demand you got only for 2000 units. So max to max you will produce is 2000 units. If at all you produce 2000 units, how many machine hours are required? 8000 machine hours are required. 8000 hours are required. Okay, sir. B, let's say you produce 4000 units. B, let's say you produce 4000 units. 2 hours is required per unit. Here also you need 8000 hours. To produce both as per the demand, you need 16,000 hours. Awesome. Do you have a machine hour of 16,000 hours? The answer is no. Then here in this situation, machine hour is a key constraint. Machine hour is a key limiting factor. Machine hour is a key limiting factor. Okay, sir. In that scenario, what we should do? In this scenario, what we should do? Very simple, guys. In this scenario, what we should do is we should calculate contribution per unit of limiting factor. Contribution per unit of limiting factor. What do you mean by that, sir? Guys, how much is the contribution of A? 1 unit per unit. Contribution of A per unit is how much? Rupees 60. B is how much? 40. Immediately what we think? Boss, you produce A to the maximum extent. If at all any R's are remaining, in that you produce B. Guys, try to understand. That's not how you should take a decision. Contribution is 60 and 40 per unit. Now my question is contribution per unit of key limiting factor. Contribution per unit of key limiting factor. Guys. A 60 rupees you are able to achieve by using the machine hour for 4 hours. Correct? 1 unit takes 4 hours. So 60 rupees you are able to achieve by taking machine hours as 4 hours, which means contribution per hour of machine is rupees 15. Contribution per hour of machine is rupees 15. Whereas we were able to achieve 40 rupees by considering or by using machine hours for just 2 hours, which means contribution per hour is rupees 20, which means per hour of machine, which is giving me more profit, more benefit. Of course, B is giving me more benefit, so I should rank B first, A second, which means I should produce B to the maximum extent possible, and if any R's are remaining, then I should produce A. I should produce B to the maximum extent. If any R's are remaining, then I should produce A. Now what I will do, sir? I will produce B first. Maximum how many units of B I can produce? 4000. And it takes how many hours? 2 hours. So 8000 hours. Now 2000 more hours are remaining. In the 2000 more hours, how many units of A can be produced? In that 500 units of A can be produced. So my mix will be 4000 units of B. B how many units, sir? 4000 units. A how many units, sir? 500 units. A how many units? 500 units. Sometimes in the question they will also tell minimum you should grow so much, or minimum you should produce so much. A and B both you should produce. Maximum is so much, minimum is so much. In that scenario, what you should do, sir? First, you calculated rank A and B. For example, they have given here minimum. Here you should produce 800 units. Minimum. Here you should produce 1000 units. Now what you should do? Now, first what you should do? You can't produce B directly. You can't produce B directly. First you should check for the minimum production. for the minimum production, you are going to calculate how much is required. That is 800 units. Each unit takes 4 hours, which means 3200 hours. A will take 3200 hours. Whereas remaining is how much, sir? Remaining out of 10,000, remaining is 6,800. 6,800 hours. In that, how many hours, how many units of B can be produced? We can produce 3,400 units of B. Like this you should do. That is, first you should check how many hours required to produce a minimum requirement. Then you should go for the remaining things. Guys, for this the best question is previous attempt question, previous years. I'm not sure which examination it is. There is one question for like wheat, rice and maize. Wheat, rice and maize. So there, that is the best question for the practicing. For the practicing, that is the best question. Wheat, maize and rice. How much rice to be grown, how much wheat to be grown, that one. So that is the best question for practicing. When the key limiting factor is there, also minimum factor is there. Key limiting factor is also there, also minimum factor is also there. For that is the best question. Okay. So go through that question. With that, conceptually, almost everything is done. Now we'll see few special questions of marginal costing by taking enough time for looking at those questions, because now we have enough time. Okay. Before that, we'll take a break of 5 minutes. Then we'll start with the questions of marginal costing. Okay. Now we'll see few questions from marginal costing. Nowadays, in examination, marginal costing, it's clearly a decision-making questions. How much price to be charged? All those things. See, MNP Limited sold 2,75,000 units of its product at 37.5, whereas variable cost is 17.5, which means rupees 20 is contribution. Fixed cost incurred uniformly throughout the year as 35 lakhs. There is no beginning and ending inventory. Compute the break-even sales, quantity and cash break-even. So they wanted in quantity. So guys, try to understand how much is fixed. 35 lakhs. We know that contribution at break-even will be equal to fixed cost. So fixed cost divided by contribution per unit will give me units. How many units? So divided by contribution is 20. So 35 lakhs divided by 20, which will give you 175,000 units. Here it is. Cash break-even means 15 lakh is depreciation, which means 20 lakh is your fixed cost, cash fixed cost, divided by 20. Here it is 1 lakh units. Simple. They're asking here, calculate the break-even point. So sales and variable cost they have given. Rupees 15 is a contribution. 1,50,000 divided by 15, which will be around 10,000. 10,000 is the break-even point in terms of units. If you multiply it with 30 rupees, you will get 3 lakh. That is in terms of sales. Sales to earn a profit of 20,000, to make a profit of 20,000. So contribution will be 15x minus fixed cost is 150,000. That should give me the profit of 20,000. Correct? So 15x is equal to 1,70,000. X is equal to 170,000 divided by 15. 11,333.33 units into 30. Around 3,40,000 sales you should make. Here you should take few numbers as an example, 1,000 and 100. Accordingly, you should compute instead of using different formulas. Here PQR has furnished the following information. Here guys, try to understand. They are telling fixed cost is decreasing. Fixed cost decreases means break-even point also will decrease. The company could maintain its sales quantity. Sales quantity is remaining same, they are telling, by reducing the selling price. So guys, try to understand how much is the variable cost here. Variable cost is 50% because PV ratio is 50%, variable cost is 50%. Guys, if here 4 lakh is the variable cost, here also variable cost will be 4 lakh only. Sir, what are you talking? You don't know sales. But I know sales quantity level remains same, which means number of units sold remains same. If the number of units sold remains same and variable cost per unit won't change, then total variable cost remains same. This is your 62.5% of sales. 37.5 is question mark. Like that you are going to do. All these things you see once. Look at this question. MK Limited manufactures and sells a single product X whose selling price is rupees 40 per unit. So it is manufactures a single product called X, selling price is 40 rupees and variable cost is 16, which means contribution is rupees 24 per unit. Contribution is rupees 24 per unit. If the fixed cost for the year is 4,80,000, annual sales are at 60% of the margin of safety. So break-even sales is how much, sir? 40%. Calculate the rate of net returns on sales, assuming an income tax level of 40%. Guys, try to understand. You know the fixed cost. You know the contribution per unit. Can you find out a break-even point? Yes, sir, we can find out. How, sir? Fixed cost is 480,000. Contribution per unit is rupees 24. units. 20,000 units. Now we know that 20,000 units means 40% because margin of safety they are telling 60%, which means break-even sales is 40%. 100% is question mark, which will come to 50,000 units. So we are selling 50,000 units. By selling 50,000 units, how much contribution we will do, sir? We will do 50,000 into rupees 24. 12 lakh. Contribution what we make is 12 lakh. Fixed cost is 480,000. So profit before tax is around 7,20,000. Tax they are telling it is around 40%. So 720,000 into 40% will give you 2,88,000. So if you reduce 2,88,000 from 720,000, net returns what you are going to get is 432,000. Sales was how much, sir? Sales was 50,000 into rupees 40. 50,000 into rupees 40. So 20 lakh. Sales was 20 lakh. So 432,000 divided by 20 lakh will give you 21.6 percentage. Will give you 21.6 percentage. Guys, now the important factor is there, that is combined sales thing. Listen here. For the next year, it is proposed to add another product line Y whose selling price would be rupees 50. Variable cost is rupees 10. How much is selling price, sir? 50. How much is variable cost? 10. The total fixed cost is 6,66,600, whereas sales mix is 7:3. What do you mean by this, sir? For each and every 10 units sold, 7 units of X will be sold, 3 units of Y will be sold. Determine at what level of sales next year would MK Limited break even. Give separately both for X and Y in rupees as well as in quantity. First we can find out in quantity. Why, sir? Guys, try to understand. We know the contribution per unit for both. How, sir? Contribution of X is how much? Contribution of X is rupees 24. Contribution of Y is how much, sir? Rupees 40. Contribution of X is 24, contribution of Y is 40. Now, as I already told you, in this kind of scenario, only one fixed cost but different, so many contributions. What you should do, sir? All you have to do is you should find out combined contribution. You should find out combined contribution. How, sir? Very simple. X, how many units we are selling, sir? 7 units at the rate of 24 plus, contribution of 24. Y, how many units? 3 units. Rupees 40 rupees. Rupees 40 per unit. So divided by how many units? 10. So 7 into 24. 3 into 40. 288. 288 divided by 10, which will come to rupees 28.8. So the combined contribution from both the units are 28.8. 28.8. Now what I should do? I should take the fixed cost as usual, 6,66,600 divided by 28.8. 23,146. 23,146 units we have to sell. In this, how much X, how much Y, sir? It is in the ratio of 7:3. That is 23,146 into 7 divided by 10. Around 16,202 units, and 23,146 minus 16,202, around 6,944 units of Y. This is in terms of units. If you tell it in terms of sales, but just multiply it with the sales price. That is, here you multiply it with 40, here you multiply it with 50. That's simple. 16,202, 6,944, you will get it in terms of rupees also. This is if you do it. This is if you do it in terms of sales mix, units ratio. Now, sir, what if I want to find out using the contribution percentage, PV ratio? Then go to the last practice questions. Last practice question of your syllabus, this one, study material. Twentieth one, Prisha Limited. So listen what they are telling. Prisha Limited manufactures 3 different products and the following information has been collected from the books of accounts. Sales mix 40%, 35%, 25%. They are talking not in terms of units. In fact, they are talking about how much is the percentage of sales in this 60 lakh. Okay. So now what I should do? I'm going to do this simple task. What is it, sir? How much is my PV ratio for each and every unit? I am going to calculate. Here 150 is contribution, here 200 is contribution, here 80 is contribution, which means here it is 50%, here also it is 50%, here it is 40%. 50%, 50%, 40%. Now, sales I am going to divide. Sales I am going to divide. 60 lakh into 40%. 60 lakh into 40%. 24 lakhs. A, rupees 24 lakhs. B, 60 lakhs into 35%. 21 lakhs. B is rupees 21 lakhs. C, 60 lakh into 25%. 15 lakhs. 15 lakhs. Now this is my sales. A, B, C. How much is my sales, sir? 24 lakhs, 21 lakhs, 15 lakhs. Now, how much is my contribution, combined contribution? Guys, first one 50% is the PV ratio, which means in first one contribution is 12 lakhs. Second one 50% is contribution percentage, which means 10.5 lakhs is my contribution. Third one 40% is my contribution percentage. So 15 into 40%, 6 lakhs is my combined contribution. Now total contribution is how much, sir? 12 plus 10.5 plus 6. 28.5 lakhs. How much was the sales, sir? 60 lakhs was the sales. So 28.5 divided by 60, which means my PV ratio is 47.5%. That is, combined PV ratio is 47.5%. My fixed cost, if I divide it by 47.5%, I will get to know the total sales to achieve the break-even point. Total sales to achieve the break-even point. This is how we are going to do in terms of PV ratio. And by the way, I forgot that to tell one more thing. There is something called as indifference point. There is something called as indifference point. What do you mean by indifference point? Guys, indifference point could be two. Indifference point could be two. One, profit indifference point. Next is cost indifference point. What is profit indifference point? What is cost indifference point, sir? Profit indifference point means, let's say there are two sales level, X and Y, where some units, let's say Z number of units, if X and Y sells, Z number of units, profit will be same. That is, at one sales level, profit of X, profit of Y, both will be same. Then cost indifference point means what, sir? Same X and Y. Same X and Y at some units of sales, their cost will be same. Both of their cost will be same. So indifference point is that unit. Indifference point is that unit where profit indifference point means if you sell so many units, your profit of the different level of activity or different units are same. For example, if the output are X and Y. Now, if you sell Z number of units, profit of the X and Y are same means that Z level is there, no? That is your indifference point in terms of profit. Now, if at X and Y, if the Z units if you sell, then the cost will be same for X and Y means then that Z level is known as cost indifference point. And always remember, indifference point will exist only and only variable cost is better in one thing and fixed cost is better in the other thing. If the variable cost, if your variable cost is less in one, fixed cost is less in the other one, then only indifference point will exist. If at all, variable cost is lower in the same thing, fixed cost is lower in the same thing, then there is no indifference point at all. For example, product X, variable cost per unit is rupees 10, fixed cost is 2 lakhs. Product Y, variable cost is rupees 5, fixed cost is 3 lakhs. Now variable cost wise Y is better, fixed cost wise X is better. Then your Y is better in terms of variable cost, X is better in terms of fixed cost. If at all Y's fixed cost is 1 lakh, which means variable cost also Y is better, fixed cost also Y is better, then there is no point at all, there is no intersection point at all where both the cost will meet, because one will be going low only, one will be going high only. There is no intersection point. So try to understand, indifference point will exist. Indifference point will exist only and only when there is a variable cost less in one, fixed cost less in the other one. Done. What else we should remember in this, sir? Indifference point, always remember, if at all your sales is less than indifference point, better go for the option with the less fixed cost. If at all your if at all your production is more than indifference point, better go with the less variable cost one. Okay. So if at all your variable cost is, if at all your production is less than indifference point, go with the option with the lesser fixed cost. If at all your production is more, then go more than IDP, indifference point, then go with the level in which variable cost is less. That way you should do it. These are the few things in the marginal costing. That limiting factor I haven't showed you guys, no? I will show it. This one you see. Wonder Limited manufactures a single product, Zest. The following figures relating to Zest for a 1 year period. Sales and production are 400 and 800. At 50% you will be able to produce 400, 60%, 100% it is 800. Sales is 8 lakh and 16 lakh, which means 8 lakh divided by 400, 2000. Here also it is rupees 2000 per unit. Here also it is rupees 2000 per unit. Production cost, variable is so much, fixed is so much, variable is so much, fixed is so much. Here they haven't given a difference like material how much, labor how much, variable overhead how much and all. They directly gave the production cost. In this only, variable means direct material, direct labor and factory overhead, which is variable in nature, is there. Selling and distribution also they have given. The normal level of activity is 800 units. Fixed costs are incurred, which means if any absorption is done, that is done on the basis of normal level of activity, that is 800 units. That's the reason why they give this. Throughout the year, and actual fixed costs same as budgeted. So actually same as budgeted it seems. There were no stock of the Zest at the beginning, so opening stock is not there. Now, in the first quarter, 220 units were produced and 160 units were sold, which means 60 units are closing stock. Compute the fixed production cost absorbed. Guys, always remember one thing, as per the marginal costing, fixed costs are treated as periodic cost. Fixed costs are treated as periodic cost. So find out the fixed production cost absorbed by the absorption costing method is used. Now, how much is the production cost, fixed production cost? 1,60,000. How much is the normal capacity? 800 units. So per unit, how much we are planning to recover? 160,000 divided by 800. Rupees 200 per unit. This is my absorption rate. My absorption rate is rupees 200. Now compute the fixed production cost absorbed by zest. How much we are absorbing, sir? How much we are producing? 220 units we are producing, and absorption rate is rupees 200 per unit. So the absorption is rupees 44,000. Sorry, absorption is rupees 44,000. Calculate the under recovery or over recovery. Now, guys, how much we are incurring? We are incurring 160,000, but that 160,000 is for the whole year, 12 months. But now we have taken only 1 quarter for the observation, first quarter. So for 3 months, actual cost is how much? Periodic cost 40,000. Every quarter 40, 40, 40, which is 160. Now actually is 40,000. Absorbed is 44,000, which means over recovery of rupees 4,000. Over recovery of rupees 4,000. Calculate the profit using absorption. Very simple, guys. First, I will take the sales. Sales how much, sir? 2,000 per unit, 160 units. So 160 into 2,000. 3,20,000 is sale. Let it be. Now, computation of cost. Computation of cost, I should take direct material, direct labor, variable overhead related to production, plus fixed overhead related to production while computing the cost of production. Now, how much I am going to take, sir? Guys, variable 320,000 for producing 400 units. Now we are producing 220 units. How much for us? 320,000 divided by 400 into 220. 1,76,000. Done. Fixed. It is absorbed. How much we have absorbed? That we have checked here. 44,000. So my cost of production is 176,000 plus 44,000, 2,20,000. My cost of production is 2,20,000. However, I should reduce my closing stock. How to reduce, sir? 2,20,000 I can achieve by producing 220 units. Whereas 1,000 rupees per unit is my cost of production. Whereas now I am selling only 160 units, which means 60 units are closing. So 60,000 rupees is not the cost for the period. So my cost of goods sold is 160,000, correct? And selling and distribution, I will take as it is. Variable 160,000 for selling 400 units. For selling 160 units, how much it is? 64,000. Fixed 240,000 for a year. So for a quarter, it is 60,000. So my total cost will be 64,000 plus 60,000 plus 160,000. 2,84,000. My sales was 320,000. My cost is 284,000. And listen here, try to understand. We have over absorbed 4,000, which means that should be reduced from the cost. Over absorption we should reduce from the cost at the end. So we'll be arriving at 2,80,000 as a cost. Now my cost is how much, sir? 40,000. Under absorption my cost is 40,000. Under marginal, how much it is, sir? Very simple, guys. I will take variable cost only for the computation. So variable cost per unit is how much, sir? 6,40,000 for 800 units. Per unit it is 800. Per unit it is 800. Now 800 into 220. My cost of production is 1,76,000 minus add opening stock minus closing stock. Opening stock is there minus closing stock. Closing stock is how much, sir? So 800 only per unit into 60 units are closing stock, which is 48,000. 1,28,000. 1,28,000. For this, we are going to reduce other variable cost like semi-variable, selling and distribution, which is basically 3,20,000 for 800 units. Per unit it is 400. So 400 into 160, 64,000 we are going to add. Done. How much it is? 128, 132, 192,000. That is my variable cost. Now from the sales, how much is my sales? My sales is 320,000. From the 320,000, I am going to reduce 192,000. 1,28,000. Now this is my contribution. From the contribution, I will reduce the fixed cost. Fixed production cost, which is 40,000 periodic basis, and this one, which is 60,000. So my profit is 28,000. My profit is 28,000 under marginal. So this is 40,000. This is 28,000. This is how you are going to do. Now listen, this shutdown question. Mr. X has rupees 2 lakhs investment. Great. In his business firm. Good. He wants a 15% return on his money. From an analysis of the recent cost figure, he finds that his variable cost of operating is 60% of sales, which means PV ratio is 40%. His fixed cost is 80,000 per year. Show the computation. What would the sales? All these things you do. Listen, Mr. X estimates that even if he closed the door of his business, he would incur 25,000 rupees as an expense per year. Shutdown cost is 25,000. At what sales would he better off locking his business? Which means at what sales it is better to close the business. That is when the loss is going beyond 25,000. When the loss is going beyond 25,000, that time it is better to close the business. That time it is better to close the business. Now, let's see at what sales we will be able to reach 25,000 loss. Listen, can I take that sales as X? Yes, sir. Variable cost of that sales will be 0.6x, correct? Contribution of that sales will be 0.4x. And my fixed cost is 80,000. Now, after doing all this, I should get a loss of 25,000. Now, can I take it as 0.4x is equal to 25,000 minus 80,000, which is 55,000. X is equal to 55,000 divided by 0.4. 1,37,500. That is, if at all you are able to achieve the sale of 137,500, then better don't shut it down. If at all you are able to achieve 137,500, then better don't shut it down. Or if you achieve 137,500, it's your call. If at all it's more than 137,500, then your loss will be less. Don't shut it down. If at all your sales is less than 137,500, then your loss will be more. Better shut it down. Better shut it down. This is how you are going to do the shutdown question. This is how you are going to do the shutdown questions. Okay. These are the few things you have to remember. And few nice questions are there, as I already told you. We'll see few previous year papers of this marginal costing quickly. Give me a second. Yes. Now we are continuing with the past year papers questions. Quickly we'll see few marginal costing past year papers questions. 380. ABC Limited is a well-known company for producing baby care products. They produce shampoos, baby rose and baby lily. Okay. Current demand is there 4,000 and 3,000 bottles. Production capacity is 7,500 and 6,000. Selling price is 600 and 750. Variable cost is there. Direct material 20 rupees per liter of material. So 160 means how many liters of material we are using here? Here we were using 8 liters. Here we are using 10 liters. Other variable cost is there. The fixed amount is 5 lakh and 4 lakh 50 for baby rose and baby lily. The production manager is informed that 1 lakh liters of material is available. A dealer has approached the company and proposed to purchase both the products at the existing selling price, which are to be produced by the utilizing the remaining unutilized material. However, he has insisted that all the bottles must be packed in the eco-friendly packaging with the additional cost of 10, which means this 10 will be additional cost. Variable cost. Presently, the company is not using that one. Prepare a detailed statement showing the overall contribution and profit of the company after acceptance of the offer. Now the question is, which one will you produce? Are you going to produce everything, sir? How, sir? 7,500 bottles demand is there. Yes. Capacity is there. In that 4,000 we are already producing. So listen, how much we already used, we'll see. 4,000 bottles we are already producing by using 8 liters per bottle. 3,000 bottles we are already producing by using 10 liters of material. So how much material we are using? We are using 4,000 into 8, 32,000 liters. 3,000 into 10, 30,000 liters. Total 62,000 liters. Total 62,000 liters. This is the material. Done. Next. How much is remaining, sir? 38,000 liters are remaining. Now, whatever supplier is telling, boss, if you are able to produce the thing, remaining things, remaining material and all, I am going to buy it. Okay. So, I have the ability to produce 3,500 more bottles of baby rose, 3,000 more bottles of lily. But the thing is, To produce 3,500 bottles, we need 28,000 of material, 28,000 liters of material. To produce 3,000, we need 10, 30,000, which means we need 58,000 liters. But the best part is we are having only 38,000 liters. In that scenario, sir, how to make the decision? Very simple, guys. How much is the contribution of Baby Rose? Sir, he is going to buy at a selling price of 600 only. Variable costs are 160, 270, and additional packaging cost of 10 rupees. So from per bottle, we are going to make 600 minus 160 minus 270 minus 10. So 160 rupees is the contribution per bottle. Whereas if you go to Baby Lily, selling price is 750, direct material is 200, other variable is 350, and 10 rupees is packing cost. So that is 550, 550, 560, 190. Here 190. Now contribution per liter, how much it will be? Contribution per liter will be, guys, here 8 liters we are going to use. So 20 rupees per liter. Here 10 liters we are going to use, 19 rupees per liter. So which is better? I am going to this as rank 1, this as rank 2, which means first I am going to produce Baby Rose because that is giving me more contribution per liter of material. Then I will produce Baby Lily if anything remains, because out of 38,000, 28,000 liters I can produce the Baby Rose. Remaining 10,000 liters I am going to use to produce Baby Lily. How many bottles I can produce? 10,000 divided by 10, 1,000 bottles of Baby Lily I can produce. This will be my sales. Accordingly, I will take. This is when the key limiting factors are there. One more question you see, one of the nice question here for 4 marks they have asked. JC Limited has production capacity of 80,000 units per year. Presently, a company produces 60,000 units. Its cost structure is as under. Material 6 rupees, labor 4 rupees, variable overhead 2 rupees, which means our variable cost per unit is rupees 12. Total fixed cost, see, try to understand, 80,000 is a capacity, but we are using 60,000, which means 20,000 idle capacity is still there. 20,000 idle capacity is still there. Total fixed cost is 3 lakh. Present selling price is rupees 20 per unit in the month of January. Company received an offer from the Japanese client to supply 20,000 units at 14 rupees. Now, one of the Japanese client is telling, boss, listen, send me the units, that is 20,000 units at 14 rupees. Now, whether to accept this order or no, that we should decide. With the additional shipping of 8,000, we have to incur additional shipping of 8,000 rupees also. On the basis of the changes in profit, advise company whether the offer should be accepted or no. Guys, try to understand, if we accept the offer, how much revenue we will make? 20,000 into 14. Revenue we are going to make is 2,80,000. Revenue we are going to make is 2,80,000. For this, how much variable cost I am going to make? 12 rupees per unit. So 20,000, 2,40,000. Which means net revenue I am going to make is 40,000. However, to make this net revenue, 8,000 rupees of shipping will be incurred, which is 32,000 rupees additional profit I will be making. So I will accept the offer from the Japanese client. I will accept the offer from the Japanese client. Will your advice be different if the customer is local one? Yes, if the customer is local one, my conclusion will be different. Why, sir? Because in local, we are able to sell 20 rupees. If at all one customer tells 14 rupees, then of course I won't accept, because if I give one customer 14 rupees, then one more local customer will also ask me for 14 rupees, which means then at the end, I will not be able to sell it at 20 rupees to anyone. So if the local customer, I won't accept it. If the Japanese client offers to supply 30,000 units at a price of 14, Part supply is not accepted, which means you can't tell, boss, I have idle capacity of 20,000 units. I will sell you only 20,000. No, you can't do that. Either you have to take the full offer or you have to leave the offer. And the shipping cost is treated as a variable cost. That is 8,000 is there for 20,000 units. So per unit how much? 2 by 5, 0.4. Rupees 0.4 per unit. If you treat it as a variable, analyze the impact on the profit if the order is accepted. Guys, try to understand, if the order is accepted, one thing you have to remember here. What is it, sir? Right now I am selling 60,000 units to local market. I won't be able to sell it. Why? Total is 80,000. In that 30,000 I am going to send it to Japanese client itself, which means 50,000 is max to max what I can do for the local client. So 50,000 into rupees 20, rupees 10 lakh is my sales. My variable cost will be how much? 12 rupees for 50,000, which is 6 lakh. So my contribution is 4 lakh. Done. Japanese client 30,000. They are ready to pay us 14 rupees. 4,20,000. Variable cost will be how much, sir? 12 plus 0.4. That is shipping charges. 12.4. 12.4 into 30,000, which will come to 372,000. Total will come to 48,000 as a profit. Total profit will be 4,48,000 before fixed cost, whereas fixed cost is how much? 3 lakh. My profit will be 1,48,000. My profit will be 1,48,000 if I accept the offer. If I don't accept the offer, my profit will be how much, sir? I will be selling 60,000 bottles to my local customers at rupees 20, which will come to 12 lakh. From the 12 lakh, I am going to reduce the variable cost of 60,000 into 12. 7,20,000. So I will be having the contribution of 4,80,000 from that fixed cost of 3 lakh. So 1,80,000. So if I don't accept, I will be able to make 1,80,000. If I accept, I will be able to make 148. Better not to accept. Better not to accept. Better sell it to the local customers only. That offer you can let it go. So if at all, if I accept the offer, then 32,000 is the loss what I am going to incur. 32,000 will be the loss. That is one. 344. For you guys, the question papers which I have given so far, that is from which year to which year? I think from 2021, no? Now I have made this analysis sheet as well as new this thing from the May 2018 itself. At the end, remind me to share it to you guys. Okay, I will ask them to share it. Okay. Where, in which chapter, in which page of that material the question is there, that we are going to see. 344. Here they have given question ditto like study mat question. They have given two different profit, two different sales, which means you can find out a PV ratio very easily. Difference in profit, that is 11,20,000 plus 3,80,000, not minus, because now in the sense for the ongoing batch, because I have taken these guys batch in the month of November. 11 lakh 20 plus 380. 15 lakhs. Whole divided by change in the sales. 60 lakhs. Which is 25%. PV ratio is 25%. Calculate the break-even sales. Very simple. Fixed cost divided by PV ratio will give you break-even sales. Or you can just go for, first you should know the fixed cost, no? So what you are going to do? Sales you are going to take 2,40,000. If the sales is 2,40,000, contribution will be how much? 25% of it. 60 lakhs. Correct? 60 lakhs minus fixed cost gave me the answer as 11 lakh 20,000. Correct? Now, how much is my fixed cost? My fixed cost is 11 lakh 20,000 minus 60 lakhs. 48 lakh 80,000. Now, break-even sales is very simple. 48 lakh 80,000 whole divided by 0.25. 1 crore 95 lakh 20,000. If I am able to make the sales of 1 crore 25 lakh 90,000, then I will be achieving the break-even sales. It is estimated that variable cost will go up by 5% and fixed cost will reduce by 480,000. Selling price will remain same. Calculate the sales volume to earn the profit of 15 lakh. So now variable cost, what they are telling, it will go up by, right now in this 2 lakh 40, variable cost was how much? 75%, which is 18 lakhs. Sorry, 180 lakhs. 1 crore 80 lakhs is your variable cost. Now, variable cost will go up by 5%, it seems. And fixed cost will reduce by 480,000. So, if the variable cost will go up by 185%, what you should do? 180 plus 5%. That is for 240. Now, for the new sales, how much? New sales, you don't know. Okay. X you will take it as a sales minus variable cost minus fixed cost. You will get a profit as 15 lakh. So, X is you are going to determine that way. Nothing special in that. And as I already told you, I am coming up with the separate video for special questions. Let's say 50 or 60 questions of all the chapters together, where those are different kind of questions compared to all other study material questions. That questions, that recording I will do and I will upload it in a YouTube. Fine. 312. This is shutdown question. How to decide whether to shut it down or no? Very simple. If at all your current loss is more than the shutdown loss, better shut it down. If the current loss is not more than the shutdown loss, don't shut it down. See here, Noida plant, how much is a fixed cost? Right now, fixed cost is 420,000. They are telling it will be reduced by 250,000. 1 lakh 70,000. Also, they are telling additionally will incur 25,000, which means net 195,000 is will be your shutdown cost. Now I should check whether I am making the loss of more than 195 or less than 195. If it is less than 195, better continue production. More than 195, stop it. Let's see. Now we are selling 60,000 units at rupees 15. Sales is 9 and they are telling variable cost percentage is 80% of selling price, which means contribution is 20%. 1 lakh. Fixed cost is 420,000. 2,40,000 loss I am making. If I shut down, I will make 195,000. Not shutting down, I am making 240,000. Better shut down. Better shut down. Find the shutdown point units. That is, if you get how many unit sales, you will shut down. Very simple. I will take that units as X. Selling price will be 15x, sales will be 15x. Variable cost is 80% of selling price, that is 12 rupees. Can I take it as 12x? Will give me contribution of 3x. 3x minus fixed cost 420,000 should give me loss of 195,000. Now 3x is equal to minus 195 plus 420. Uh, 225,000. So 225 divided by 3. So if I am able to sell 75,000 units, then my loss will be exactly 195,000. If I sell more than those many units, then I will be able to achieve the loss less than shutdown cost. If at all I am able to sell less than that, then I will be incurring the more loss than shutdown. So if at all the units produced is less than 75,000, units sold is less than 75,000, better shut down. If at all it is more than 75,000, don't shut down, continue in the business. This is that key limiting factor. That is, you should calculate how much is the contribution per key limiting factor. See, they produce two. A is so much, B is so much, this one is so much. May I know the variable costs here? 35, 55, 90, 90 plus 40, 130. Here it is 60, 20, 80, 125. Correct? So here the contribution is how much, sir? Contribution is 50 here. Here also it is 50 only. The availability of the machine hour is limited to 55,000 hours. The monthly demand for A is 5,000, B is 6,000. Now, can you be able to produce so much? That we have to check here. How to check, sir? The fixed expense is 140,000 per month. Variable factory overhead is rupees 4 per machine hour. Now, here if it is 40 means, how many hours of machine hours you are using? 10 hours. Here if it is 20 means, how many hours of machine you are using? 5 hours. Now try to understand, to produce 5,000 units of A, you need 5,000 into 10, 50,000 hours of machine. To produce 6,000 units of B, you need into 5, 30,000. Total you need 80,000 machine hours. Do you have 80,000 machine hours? No, you have 55,000. Now it's a key limiting factor. In this scenario, how you should do, sir? Very simple. You should find out how much is the contribution per unit of limiting factor. Product A, product B. How much is the contribution per unit? 50, 50. Contribution per unit of limiting factor is how much, sir? Guys, here 10 hours of machine we are using to make 50 rupees profit. I mean contribution, which means per hour how much? 5. Here we are using just 5 hours to make 50 rupees, which means per hour we are making 10. So I will rank B first, A second, which means I will produce B first. How much units of B offer is there? 6,000 units, and it takes 5 hours. 30,000 hours. Remaining is how much? 25,000 hours. In the 10 hours per machine, 10 hours per unit means I will be able to produce 2,500 units. So my production will be 6,000 units of B, 2,500 units of A. This is the better mix. So according to you are going to find out the profit is how much for this mix. Key limiting factor, I am expecting this kind of questions in the examination this time. 263. Here they have given PV ratio, here they have given MOS, they have given fixed cost. Fixed cost you know, PV ratio you know, using that you can find out the break-even point. Using the break-even point, you know the MOS, using that you can find out a break-even point you know, amount you will get to know. Now you know that MOS is 25%, so break-even sales will be 75%. because break even plus MOS is total sales. So we'll get the break even, we'll get the total sales. If the company wants to earn the present profit after reduction of 10% in fixed cost, proposed sales value, if the company wants to earn the present profit, we'll calculate how much is present profit, but while calculating fixed cost, you should take minus 10%. Sales value to be made to earn the profit of 20% on sale, assuming fixed cost remains unchanged and new margin of safety. This simple question, this we are not going to solve now. Only one more question I am going to solve here, that paddy those questions. I mean rice, wheat and maize. Different question was there, no? This only. This is your examination question, November 2022. Now, they have a 210 hectares and they are telling here, try to understand yield of the crop per hectare how much? 2000 kgs, 500 kgs, 100 kgs per hectare. Selling price is 20, 40 and 250 per kg. Now they are telling variable cost is how much? Per kg. To grow per kg, how much it is? So for this one, wheat it is 8 plus 2 plus 4, 14. 10 plus 2 plus 3, 13. 120 plus 10 plus 20. This is your variable cost per kg. Done. Company has the policy. Here it is also key limiting factor question only. But the problem here is you should produce minimum also. Key limiting factor, generally what we will do, rank wise we will go, no. Here you can't do that. Here you should do minimum also. Minimum also they are telling. Now what I should do? I should calculate which crop is giving me highest contribution per hectare. Because here hectare is a key limiting factor. So per hectare how much we have to calculate? How to calculate, sir? Selling price. Wheat, rice, maize. How much is selling price? 20, 40, 250 minus variable cost 14, 13, 150. 6, 27, 100. Now this is per kg, not per hectare. Per hectare how we can do, sir? Very simple, guys. You know that in each hectare how many kgs of wheat can be grown? 2000 kgs. So how much is the contribution per hectare? 2000 into 6. 12,000. 27,000 into 27 into 5. 500. 100 into 100. Now rice I am going to grow more. Next will be wheat. Next will be maize. But here first what you should do is rice I know I am going to grow more, but I should make sure maize I am going to grow minimum and wheat I am going to grow minimum. So minimum these only need 110 hectares. Correct? Out of 210, how much is remaining? 100 hectare. Now we should check to grow rice, how many hectares is required? Maximum rice, how much hectare we can grow? 50 hectares. So one is sorted. Rice is 50 hectares for sure. Wheat minimum 100 I should grow. Maize minimum 10 I should grow. But here the best part is still 50 is there. That I am going to grow wheat or maize. Wheat, because that is giving me second highest contribution. So wheat how much maximum I can grow? 160. Now we decided how much? 100. 50 space is there or not? So I am going to grow 150 of wheat. So whenever minimum thing is there, first you should consider for the remaining minimum how much we need. 50 we need here only. So in that we are going to calculate that way. Okay. This is how we should do. Sorry, here 10 plus 100, 110. In 100 we grew rice first. Remaining whatever is there, we grew wheat. If still remaining is there, then it will be given to maize. Like this we should do. Okay. Accordingly, you should calculate. These are the important factors of marginal costing. Of course, there are special crazy questions that we are going to discuss in that video. Okay. I mean that might come like 1 or 2 weeks before your examination, not before that for sure. Your May examination. Okay, done. Yes, now we'll take a quick break of half an hour and we'll start it. Fine, half an hour and we'll start. Okay. Now we are starting with standard costing. Last chapter, that is, what do you mean by standard costing? It is not a method of ascertainment of cost again, just like your marginal costing. It is one more technique which will help in controlling the cost. Why, sir? Because before incurrence of the cost, as per this method, what we will do is we will predetermine the cost. We will predetermine the cost before incurrence of the cost itself. Boss, how much must be my cost? So after predetermining, we are incurring. So basically, whoever is incurring that cost will be having that thing in mind that it is already predetermined. I should make sure the cost should not exceed beyond that particular point. So it is going to restrict the cost to the extent of predetermined cost. What do you mean by standard cost? Standard cost means nothing but a predetermined cost. But always you should remember, standard cost means for actual output. Standard cost means how much for the actual output. Standard for the standard output is known as budgeted cost. Budgeted output. Budgeted hours. Okay. Sir, what are the different processes involved in that, sir? First, we will keep the standards. That is, first we will predetermine the amounts, cost. Then we will incur the actual one. Then we'll compare the actual with the standards. And we are going to check any deviations are there. If any deviations are there, we will analyze why the deviation is coming. And accordingly, we'll take the corrective actions. Now, deviations could be favorable, adverse. Deviations could be favorable and adverse. When we tell it is favorable, when what cost we incurred is less than what we planned, that is favorable situation. That is, when your actual cost is less than standard cost, that is favorable. Where your actual cost is more than standard cost, that is adverse. So for this particular chapter, cost we are going to divide into material, labor, variable, fixed overheads. Material, labor, overheads could be again variable and fixed. Basically, we have done it on the basis of variability as well as element based. Now, first, material. Guys, material cost variance. What do you mean by material cost variance? Material cost variance means for our planned quantity, how much was our planned cost, that is predetermined cost, also known as standard cost, how much is our actual cost for material. If at all our standard cost for material is more than actual cost, that is favorable because our actual is less than standard. So how to arrive at a standard cost, sir? Nothing, guys. For the actual units produced, always remember standard quantity means for actual units produced, for actual output. So standard quantity into standard rate. Standard quantity into standard rate. That will give you standard cost. That will be compared with the actual quantity into actual rate. Okay. So material cost variance, what is the formula? Standard cost minus actual cost. Standard cost means standard quantity into standard rate. Actual cost means actual quantity into actual rate. Now for this cost variance, two people could be responsible. One, the person whom we sent to purchase at the predetermined price, he might have purchased at the more or less price. Two, the person whom we asked to use, he or she might have used less or more of quantity. Now, the person whom we sent to buy, to check how much is due to his mistake, that we are going to calculate it as price variance, whereas the person whom we gave to produce, that is his variance, we are going to tell it as a usage variance. Now, first price variance. Very simple, sir. We ask that person to buy at 100 rupees. But let's say he's buying at 110 rupees. Each and every kg is buying at 110 rupees, which means 10 rupees per kg. We are going to multiply it with actual quantity, because our purchase manager has nothing to do with whether we consumed more, consumed less, nothing. His work is only one thing. Make sure whatever you buy at the price which we told. Because if you buy at the same price which we told, then there will be no variance only. You buy 1000 kg, you buy 1 lakh kg, 1 lakh into 0 is also 0, 1000 into 0 is also 0 only. As a purchase manager, you will not have any problem with that. So you will have problem only and only when you buy at a different rate. So price variance is nothing but actual quantity into standard price minus actual price. Standard price minus actual price. So what is the price variance formula? Standard price minus actual price into actual quantity. And when it will be adverse? When the standard price is lesser than actual price, it will be adverse. Now usage variance. Usage variance, guys. We are going to check, boss, how much is the standard quantity we asked you to use, how much you actually used. That is standard quantity minus actual quantity into price. He is least concerned about at what price our purchase manager is buying. We told our production manager, boss, 10 rupees will be the value of that. So we'll be ready to take it at 10 only. Irrespective of what we bought it in actual price, he is concerned about the price which we told earlier. Because his work is what? Not to buy at the exact price. His work is to make sure usage. So he is least concerned about whether you are paying more or whether you are paying less. Which means here we will be calculating for the standard price, not for the actual price. So it is standard quantity minus actual quantity into standard price. Actual quantity minus standard quantity into standard price. That is your material usage variance. Now, material yield variance, also we call it a sub-usage variance. That is, here when we ask our production manager, boss, why you are consuming more? What he will tell? Whatever you bought, no, that is not up to mark. Whatever you bought, that itself is not up to mark. For example, sometimes you might have heard this conversation in your home. Sometimes mom will be like, so far I used to use 1 teaspoon of chili powder. Now for the same taste, I have to use 1.5 teaspoons. Correct? Why? Because of the quality of the chili powder. She will tell that is due to quality of the chili powder. I have nothing to do. Now that is yield. That is, you thought first. You told them, boss, you use 10 kgs. But now he is using 15 kgs. And what he is telling, I am using 15 kg because this 15 kg is equal to your 10 kg. Now we should check, no, how fair he is, how true he is. For that, what we will do, we'll find out new standard. How we were going to find out? Okay, boss, we'll assume that whatever you are consuming, no, that itself is a standard. Alright, that itself is your usage, required usage, new total standard. Now what they will do, we'll take the total of the actual quantity and we'll divide it in the standard ratio. Whatever actual quantity, that itself we are going to consider it as new standards, total, in the standard ratio only. Now that we call it as revised standard quantity. Revised standard quantity. Okay, boss. Now total was 20, let's say. You must have used in the ratio of, let's say, 4:2 or 3:2, which means you must have used 12 and 8, but you are using 15 and 5, which means it's not only because of yield. Your mix also is wrong. So what we will do first, due to yield, if it's only due to yield, how much it would be? That is, we are going to compare the standard and standard. That is, revised standard quantity minus standard quantity into standard price. Now, when it will be adverse? When the new standard is more than the old standard, it is adverse. When the new standard is less than the standard, favorable. So yield is what, sir? Standard quantity minus revised standard quantity into standard rate. Whereas, okay, new standard is RSQ, no. Are you using exactly in the same proportion? No. Which means you are changing the mix. That we call it as material mix variance. That we call it as material mix variance. That is RSQ minus AQ into standard price. RSQ, revised standard quantity minus actual quantity into standard price. That is when it is favorable, when it is adverse. When AQ is lesser than RSQ, favorable. When AQ is greater than RSQ, peace. Clear? See here. Few examples. Material quantity is 50, material price is 1. Actually, we consumed 45 at the rate of 0.8. So, cost variance is how much, sir? Cost variance is standard cost we assume to be 50, but actually it was 45 into 0.8. 30, which means rupees 14 is favorable. Rupees 14 is favorable. This could be due to price variance or a usage variance. How much is due to price variance? That is standard price minus actual price, 0.2 into actual quantity, 9 rupees, and it is also favorable because your actual price is less than the standard price. We thought we are going to buy at 1 rupees, but we are buying it at just 0.8, 1 rupees, correct? Now usage variance, usage. We asked you to use 50, but you are just using 45. Rate, whatever we told you earlier, 5. Favorable. So 5 plus 9, 14. Clear? See here. NXE manufacturing concern furnishes the following information. Material for 70 kg of finished product is 100 kg. Price of material is rupees 1 per kg. Now, this is standard. Output 2,10,000 kgs, which means here standard what is there for 70 kg. For 2,10,000, how much we should calculate standard? Standard we should revise now. Material used is 280,000 kg. Cost is 252,000 kg. Now they are asking material usage variance, price variance, cost variance. First, we want to know the standard quantity. Correct? Guys, when it was for 70 kg, we thought we are going to use 100 kg. Now we are actually producing 210,000 kgs. How much is the standard? A. It should be more than 210. Hey, 210 into 100 divided by 70. Oh my God. 300, no. 300 lakhs. 3 lakhs. 3 lakhs, huh? So 3 lakh kg is the standard quantity. Got it? Standard quantity is so much. Standard price is how much, sir? Rupees 1. Actual quantity is how much? 280,000. Actual price is how much? 252 divided by 280. Rupees? Point? Round figure. Oh. Now, material usage variance. Usage means standard quantity minus actual quantity into standard rate. How much is standard quantity? 3 lakh. Actual quantity 280, which means 20,000 into standard price, rupees 1. So material usage variance is how much? Rupees 20,000. Favorable or adverse? Favorable. Why? You are using less quantity compared to standard. Price variance. Guys, price variance means standard minus actual. Standard rate is how much? 1 rupees. Actual rate is 0.9. So 0.1 into actual quantity 280. 28. Favorable or adverse? Favorable. Because you are using, you are buying at less price. Material cost variance, it is nothing but standard quantity into standard rate. 3 lakh. Actual quantity into actual rate. 2 lakh 52,000. What is the difference? Favorable or adverse? Favorable. If you check total, that is also matching. Correct? Look at this. Standard cost of chemical mixture is 40% of A 20,000, 20 rupees per kg, 60% of material B 30 per kg. Standard loss is 10% of input is expected in the production. Cost record for the period showed that 90 kg of material is used at the rate of 18, 110 kg of material B at the rate of 34. Quantity produced is 182 kg. Now try to understand standard loss is how much? 10%. Now my question is input minus 10%, if at all you have used in a normal way, if at all you didn't use in a different way, then input minus 10% should have given you 182. Correct? Now my question is how much is standard input? 182,000 divided by 0.9. Basically 182 means 90%. 100% is question mark. 20.222 kgs. Now this is my standard. In which ratio it is? 40 and 60. 40% of A, 60% of B. How much is 40% of 202? 80.89 kgs and 121.33 kgs. Now this is my standard quantity. Got it? Actual quantity anyhow here they only have given 200 kgs. Here the best part is there is no 10% loss actually. Input is 200 kgs. Output was supposed to be 180, but it is coming as 182. Quantity produces so much, they are asking you so much variances. 202. Accordingly, you are going to calculate. Sir, how to compute the revised standard quantity? All you have to do is total of the actual quantity in the ratio of standard. Total actual is 200 in the ratio of 40 and 60. If you divide, you will get a revised standard quantity. Accordingly, you can compute. Here I have computed for yield variance also. Price variance, mix variance also, although they didn't ask. I hope you understood. Next, ABC Limited produces an article by lending two basic raw materials. It operates a standard costing system and following standards for raw material. A mix is so much, this is so much. Standard loss in the process is 15%, which means normal loss is how much? 15%. Company produced 1700 kgs of output. For that, input should be how much? Calculate. Input minus 15% is giving 1700, which means 1700 is 85% of the input, 100% of the input is question mark. 2000 kgs is the standard input. Ratio is what? 4:6. That is 800, 1200. 800 for A, 1200 for. Clear? This is your standard quantity. Now, the position of the stock and purchase for the month of April is as under. Opening stock is there, closing stock is there. Purchases are also there. Opening stock of material is valued at a standard price. Now, material price variance. Guys. Price variance means you are going to consider, what is the formula? Standard price minus actual price into actual quantity. For A, if you take, standard price is only 1. How much? 4 rupees. but actual price for opening was 4 rupees only, but actual price for purchase during the year is 3400. We purchased 800 kgs by paying 3400. 4 point, which means here you are paying extra. Anyhow, this opening is nothing to do, has nothing to do, but closing, I mean, during the period, see, try to understand how much we are using. Calculate how much we are using. Opening 35 was there. We purchased 800, 835, but closing 5 is still there. 830. Actually, we used how much? 830. In this 830, we used 35 kgs of opening, remaining 790 of purchase, new purchase. So opening was at 4 rupees, new purchase was at 4.25. So material B also, opening 40, purchase 1200, closing is 50, which means we used 1190 kgs, 40 kgs and 1150 kgs. Opening 40 at the rate of 3 rupees, during the year 1150 at the rate of 2.5 rupees. Now, A, standard quantity. Actual quantity, we are going to take two things because we have a different actual prices. Revised standard quantity, what you are going to do, sir? 2020 in this ratio. 2020 in this ratio. Then standard price, using that you are going to compute. See, 0 and this one is 795 into this one. 40, that is 0 into this one. Because standard price of opening stock and introduced during the period both are same, which means price variance won't be there relating to that opening stock. Remaining what we use during the period, in that the price will be there, variance will be there. Usage variance has nothing to do with how much is of opening, how much is of closing, because we are going to take only one price, standard price. So we are going to take standard quantity and actual quantity, yield variance also, mix variance also. This is about your material, but still in the practical problems, two different nice questions of materials are there that we are going to see later. Okay. First we'll discuss other things. Now again, if you want me to revise material guys, cost variance, that is actual cost minus standard cost, or standard cost minus actual cost. When the standard cost is more than actual, that is favorable. When the standard cost is less than actual, now how to arrive at standard cost? Standard quantity into standard price. Actual cost. Actual quantity into actual price. How to arrive at the standard quantity when the loss is there? Whatever the output, for that reverse the standard loss, you will arrive at a standard quantity that you should divide in the ratio. Now, that is your standard. Actual. Then that is divided into two parts, usage variance, price variance. Price variance is standard price minus actual price into actual quantity, whereas your usage is standard quantity minus actual quantity into standard rate. That usage variance could be again divided into mix variance, yield variance. Yield variance is standard and standard. Mix variance is revised standard and actual. That is standard quantity minus revised standard quantity into standard price. Yield variance, also known as sub-usage variance. Mix variance is standard hours, that is revised standard hours minus actual hours into standard price. Next is labor cost variance. Labor cost variance is nothing but, guys, how much extra we are paying for a labor or how much less we are paying for a labor compared to what we planned. What we planned is standard hours into standard rate. Now my question is, will standard hours include the idle time or not? It will include, but which idle time? Normal, abnormal? Normal idle time. Because we have to, for example, one work takes 8 hours. Let's say this costing marathon takes 15 hours. Which means, don't you think they are considering the breaks in between and telling 15 hours? Yes. Or if the net is 15 hours, then they will be paying for more than 15 hours. Let's say 18 hours. 3 hours break. If I don't teach for 15 hours, then it is abnormal idle time. Idle time is what? Paid for it, but not worked, being not productive. And if at all it is due to normal course of business, then it is normal idle time. If at all it is abnormal reason, abnormal idle time. Now, cost variance could be divided into three guys. One, due to rate variance. Two, due to efficiency variance. One more is idle time variance. Here, idle time variance means not the normal idle time, instead, abnormal idle time. Okay, done. First, rate variance. What is rate variance, sir? How much standard rate we are planning to pay and how much actual rate we are paying into labor hours actually paid for. Rate paid for. Okay. Efficiency variance is what? Boss, how many hours we asked you to work? Standard hours minus actual hours worked into standard price, standard rate. Idle time is how much ever is the idle time into standard rate. Idle time, how to arrive at idle time? Actual hours paid minus actual hours worked. Actual hours paid minus actual hours worked. So try to understand rate variance, labor rate variance, that is standard rate minus actual rate into actual hours paid, not worked, actual hours paid, including abnormal idle time. Now efficiency variance is standard hours minus actual hours worked into standard rate. Now idle time, labor idle time is actual hours paid minus actual hours worked, which is idle time, into standard rate. Now efficiency, guys, it could be due to two reasons again. What are those? One, we are not using the manpower in the same proportion for which we bought for. One reason. One more reason is whoever the man power we have bought, that is not working as per 100% efficiency. Now in the efficiency we have yield, we have mix. Yield means the thing which we should have completed, they are not completing on time. The quality is not that good. There what we are going to, same like material. Standard is compared with standard. That is actual standards compared with revised standards. If the revised standards are less favorable, if the revised standards are more adverse, into standard rate. Whereas one more is labor mix variance. I am not using the labors in the proper proportion. Now that is revised standard hours minus actual hours worked. Paid won't come at all because paid got adjusted in the idle time as well as payment. So it has nothing to do with the work. So that is not work. So that won't be considered. That is actual hours work minus revised standard hours. Where what we will arrive at? Labor mix variance. So come again, guys. Labor cost variance could be divided into two. Labor cost variance is what? Standard cost minus actual cost. How to arrive at the standard cost? Standard hours into standard rate minus actual hours into actual rate. Standard hour for actual output. Standard hour for actual output. Now that could be divided into three. Rate variance, efficiency variance, idle time. Now rate variance is standard rate minus actual rate into actual hours paid. Efficiency is standard hours minus actual hours work. Actual hours work into standard rate. Whereas idle time is actual hours paid minus actual hours work. That is idle time into standard rate. Now efficiency variance could be further divided into yield and mix. Yield means revised standard hours minus standard hours into standard rate. Whereas mix is revised standard hours minus actual hours work into standard rate. That is your labor mix variance. Now again go to the material. Material cost variance. Standard cost minus actual cost. Standard cost is standard rate into standard input. actual units into actual price, actual rate. Now that could be divided into two: price variance, usage variance. Standard price minus actual price into actual quantity, that is your price variance. Standard quantity minus actual quantity into standard price, that is your usage variance. Now usage variance could be again divided into two: yield and mix. Yield is RSH minus revised standard quantity minus standard quantity into standard rate or standard price, and your mix variance is revised standard quantity minus actual quantity into standard price. How to arrive at RSQ? Total of the actual quantity taken in the proportion of standard. Labor cost variance is standard cost minus actual cost. Standard cost is what? Standard hours into standard rate. Your actual is what? Actual hours paid into actual rate. Now that could be further divided into three: rate, efficiency, idle time. If the idle time is not there, only two: rate and efficiency. Rate is what? Standard rate minus actual rate into actual hours paid. When you go to efficiency, it is standard hours minus actual hours work into standard rate, and your idle time is actual hours paid minus actual hours work into standard rate. Efficiency variance could be two: labor yield variance, labor mix variance. Yield variance is what, sir? Standard hours minus revised standard hours into standard rate. Mix variance is what, sir? Actual hours worked into revised standard minus revised standard hours into standard rate. Why and all I have explained in a regular classes. I hope you guys remember. If you don't remember, don't worry. We have given you access now. Sir, I did the self-study, sir. Okay. I am watching your classes in YouTube, sir, now, marathon. Okay. I am not having that confidence in few chapters, sir. Marginal law, standard, process, service. What I can do, sir? See, your exams are very near. However, if at all your other preparations are done and you are scared in this preparation, don't stress your this thing much. So do one thing: you can go to recorded regular classes for a month access or so at a very nominal amount, and you can watch it. You can watch those chapters which you want: marginal costing, standard costing, process costing. Simple. Sir, no sir, I am ArivuPro student only. Then anyhow you will be having access. You can watch it there. Done. Now listen. Look at this question. The standard and actual figures of the firm as under: standard time 1000 hours, standard rate 50, actual time 900, actual wage paid is 36,000. So 40 rupees is a actual rate. Now cost variance, that is standard hours into standard rate 50,000, actual hours into actual rate 36,000, which means around 14,000 favorable or adverse, because we are spending less. That could be divided into two here, because idle time they are not talking, only it could be divided into two, that is rate variance, efficiency variance. First, rate variance. Standard price was 50, actual price is 40, rupees 10 into, you should multiply it with actual hours paid 900. That will come to, and it is favorable. Correct? Next, efficiency. 1000 hours is what you planned, but actually we have taken 900, which means 100 hours you have taken less, into standard rate 50. Favorable, adverse? Because you have taken less time. So rupees 14,000 favorable. It should be matching. 14,000 favorable, it should be matching. Look at the sixth one. Standard output is rupees 25 units per hour in a manufacturing department having 100 workers. So 100 workers are working for 1 hour means in 1 hour how many man hours will be there? 100 man hours will be there. Remember that. 100 workers are working together means for 1 hour if they work, they will complete 100, one person working for 100 hours, that everyone together can complete in 1 hour. The standard wage rate per labor hour is rupees 6. In a 42 hours week, the department produced 1040 units of EXE despite 5% of the time being is lost due to abnormal reason. So idle time is there. The hourly wage is actually paid was 6.2, 6 and 5.7 respectively to 10, 30 and 60 workers. As a standard, we are not going to separate it. As a standard, everyone is same only. But as per actual, they are changing. Now try to understand. How many units we have produced? 1040. What we have decided, in 1 hour we can produce 25 units. To produce 1040, how much it is? 41.6 hours. That is your standard is how much? Standard for actual is how much? 41.6 hours. $41.6 means 4,160. Try to understand what is happening. 25 units you are able to produce in 100 hours. 100 workers, if they work together, then you are able to produce 25 units. But now you are working, or you can produce, you are producing 1040 units. For that, how many hours of employees required? 4,160 hours. Standard I have only one, but actual we have 3 kind of labors. They have different idle time. Accordingly, we are going to calculate. Not much in labor cost variance. Much difference are not there. You can do that, right? Yes. Here, NPX uses a standard costing system, follows the budget given here. Skilled 2 hours, 3 hours, 5 hours. Total 10 hours is required to produce 1 unit. Now, skilled here actually working for how much? In the month of January, total 10,000 units were produced. Following are the details. Skilled 18,000, 33,000, 58,000, 109,000. Rate is also there. Amount is also there. Actual idle time during the month. Skilled worker 500 hours, semi-skilled 700 hours, unskilled 800 hours. Now listen here. Standard hours. Have they given standard hours? Have they given standard hours? Or no? They have given 10,000 units. So to produce 10,000 units, skilled worker is required for 20,000 hours. Semi-skilled is required for 30,000 hours. Unskilled is required for 50,000 hours. Accordingly, actual hours paid. Idle time. Actual hours work, standard rate. Using that, you can find out the cost. Nothing much special things are there. But here, this question was nice one. 8th one. Because see, what they are telling. Standard labor employment and actual labor engaged in a week of a job is given below. Skilled 32 are there, 12 are there, 6 are there. But actually they are employed is 28, 18 and 4. So we are least concerned about this. This is what our actual is. Correct? Standard wage rate per hour is 321. Actual wage rate per hour is 4, 3. During the 40 hours week, the gang produced 1800 standard labor hours of work. What do you mean by this? It means, try to understand guys, they are producing 1800 hours work, which means they are not working for 1800. Yay! They are producing one work which will take 1800 hours. They are producing one work which will take 1800 hours. Now, what we should do? We should take the actual number of workers employed into 40 to ascertain how much is actually they have worked for. That is 28 into 40, 18 into 40, 4 into 40. See here. Labor, skilled, semi-skilled and unskilled. Now, total how many hours they have worked? I mean, how many hours work they have completed? Standard hours. 1800. That in the ratio of their output. Which output? I mean, which one? Standard ratio. Because whatever they have given is 32, 12 and 6 is maximum what you can do. But we are not doing so much. So in that ratio only I will take. Standard. Standard hours, I am going to divide it in standard number of workers ratio. Whereas actual hours are 28 workers working for 40 hours, 18 workers working for 40 hours, 4 workers working for 40 hours. Then revised standard quantities, if this is 2000 in this ratio, we'll arrive at a revised standard quantity, standard rate, actual rate. We are going to do the things. What is the labor cost variance formula? Come on. Standard cost minus actual cost. Labor rate variance, standard rate minus actual rate into actual hours paid. Actual hours paid. Efficiency, standard hours minus actual hours worked into standard rate. Mix variance, mixo, revised standard hours minus actual hours worked into standard rate. Yield is revised standard hours minus standard hours into standard rate. This question, majority of the students will get confused by looking at the ICI material answer. Try to understand one thing. Here 1800 what they have given is a standard hours. Whatever work we have completed, that generally takes 1800. This is standard hours. Divide it in the standard number of workers in the gang, that ratio. Then you take actual workers and multiply with the hours per week. You will get actual hours, how much they have actually worked. Paid. If there is idle time, it would be considered as paid, not worked. Here idle time is not there, so it is like this is your material variance, labor variance. Now to revise again, come on. 1. Material variance. Cost minus cost. Standard cost minus actual cost. Standard cost. Standard price into standard rate. Sorry, standard quantity into standard price. Minus actual quantity into actual price. Now that could be divided into 2. Price and usage. Price is standard price minus actual price into actual quantity. Whereas usage, standard quantity minus actual quantity into standard rate. That could be divided into 2. Yield, mixo. Yield is revised standard quantity minus standard quantity into standard rate. Mix. Revised standard quantity minus actual quantity into standard price. That will give you material cost variance. Going to labor cost variance. Standard minus actual. Standard is standard hours into standard rate. Actual is actual hours paid into actual rate. That could be divided into 3. Efficiency, rate, idle time. Efficiency, standard hours minus actual hours worked into standard rate. Rate, standard rate minus actual rate into actual hours paid. Idle time, actual hours paid minus actual hours worked. Idle time into standard rate. Now efficiency could be divided into two. Mixer, yield. Now mixer, revised standard hours minus actual hours worked into standard rate, yield. Revised standard hours minus standard hours into standard rate. That will give you mix variance. Okay. We have seen few sums based on that. Yes. All these are already there in your notes if I am not wrong. So I am not going to tell about it again. Okay. All the sums, all those sums and all we are not discussing because we have a nice sums in the practical problems itself to discuss. There we will discuss accordingly. Now we'll take a break of 2 minutes and we'll start with the overheads. Told in November, December, January, February, March. 5 months you guys wasted time. And now you tell you told. You prepared. Then you prepared. Then what? No time. Hey, what nonsense you guys are talking. Life is like that. July, August, 2 months you are getting. How much you want? You want more time, huh? Skip the attempt. Don't skip the attempt and all. Try to understand. 2 months. Because you are revising every day, no? Then why you want? Whatever you will be doing, that will be, if I am not wrong, that will be your second, third revision.
We are writing on a daily basis.
So second revision. Enough. What nonsense you guys are taking. Don't take much stress. Now listen. Huh? Hey, test series and all you can attend. Time is there. 2 months is not simple thing. 2 months means 2 months we take 3 batches. So, still 2 months basically now you feel 2 months is less because now your half day will come here. By the time evening you will start there and you think okay in one day I am able to study only so much. But in study leave you will be reading from the morning till the evening. So the coverage will be 3x. So now if you are able to study let's say 0.75 chapters per day, that time you will be able to study 2.25 chapters per day. So chill. Now listen. Overhead cost variance. Guys, this is one of the examiner's favorite part. Overhead variance. In that, overhead cost variance. Sir, overhead cost variance is what, sir? Overhead cost variance is nothing but whatever we did under absorption, over absorption, also known as under recovery, over recovery, that itself is a overhead cost variance. Under recovery means adverse, over recovery means favorable because you incurred less cost, recovered more cost, over recovery, over absorption, favorable. You incurred more cost, recovered less cost, under absorption, adverse. Now, sir, how to arrive at under absorption or over absorption? Compare the absorbed overhead with the actual overhead. Compare the absorbed overhead with the actual overhead. Now, absorbed overhead, how to compute, sir? Guys, on the basis of units means absorption rate per unit into number of units actually produced. How? If at all it is unit based means actual units produced into absorption rate per unit. Whereas if at all it is hours basis means it is standard hours for actual output. Not actual hours for actual output. Standard hours for actual output into absorption rate. Sir, why standard hours not actual hours? Regular class I have explained, you can go and see there. If at all you had forgotten already. Now always remember absorption means what? In unit terms. Actual unit into absorption rate per unit. Hours basis means standard hours for actual output into absorption rate. Now, sir, how to arrive at absorption rate? Budgeted overhead divided by budgeted output or budgeted overhead divided by budgeted hours. Budgeted overhead divided by budgeted hours. Now, sir, is the standard hour and budgeted hour are same? No. Standard hour means standard hour for actual output. Budgeted hour means standard hours for standard output. That is budgeted. Done. Overheads could be two. Variable overhead, though fixed overhead. Variable overhead is nothing but just like your employee labor variance only. So overhead cost variance is overhead absorbed, that is variable overhead absorbed minus actual overhead incurred. So if the actual overhead incurred is more than the absorbed, under absorption, adverse. If the actual overhead incurred is less than the absorbed, over absorption, favorable. Now that could be divided into two. Cost variance could be divided into two. Expenditure variance, efficiency variance. Hey, expenditure variance is nothing but just like your labor rate variance. Standard rate minus actual rate. Here. Standard rate means nothing but your recovery rate. Standard rate means nothing but your recovery rate into actual hours. Here idle time and all won't be there. Variable, no. Overhead it is. Now efficiency variance means standard hours minus actual hours into standard rate. Standard hours minus actual hours into standard rate. Now again, how to arrive at a variable cost variance, variable overhead cost variance, under absorption or over absorption. That is how to determine under absorption, over absorption, absorbed overhead minus actual overhead. Absorbed overhead is nothing but actual units into absorption rate or standard hours for actual output into absorption rate. Got it? Yes. And standard, and that could be divided into two. That is efficiency, expenditure. Efficiency means standard hours minus actual hours into standard rate. Hey, standard rate means nothing but your absorption rate, recovery rate. How to arrive at recovery rate? Budgeted overhead divided by budgeted hours or budgeted units. Whereas your expenditure variance is standard rate minus actual rate into actual hours. Clear? From the following information, calculate variable overhead cost variance, expenditure variance, efficiency variance. Budgeted variable overhead is, budgeted production is 6,000, variable overhead is 120,000. So they have given budgeted cost, budgeted output, and standard time for one unit is 2 hours. So always remember, whenever hours is possible, go for hours only, better than units. Okay. Now rupees 120,000 divided by how many budgeted hours? 12,000, because one unit takes 2 hours and 6,000 units means 12,000 rupees 10 per hour. This is your recovery rate or a standard rate. Correct? Next, actual production is 5,900 units. We have nothing to do with this. Actual overhead incurred is 1,22,000. Actual hours worked is, now first cost variance. Cost variance is nothing but how much you absorbed. Guys, absorption is 11,600 hours. We should take that? No, that is actual hours. You should take the recovery rate 10 into actual units produced into standard hours per unit, because we want standard hours for actual output. So 5,900 into 2, 11,800 into 10. This is your absorbed overhead. Actual overhead is how much? 1,22,000, which means rupees 4,000 is what? Adverse. Rupees 4,000 is adverse. Clear? Done. Next, what they are asking? Expenditure variance. expenditure variance is nothing but standard rate minus actual rate into actual hours. Now, can I write it as standard rate into actual hours minus actual rate into actual hours? Yes, I know actual rate into actual hours is 122,000. This can I take it as 122,000 minus standard rate is how much? 10 rupees. Actual hours are how much? 11,600. 1,16,000. Now, how much it is?
6,000.
Rupees 6,000. Because actually we are incurring 122, we budgeted was 116. Here also it is adverse or favorable? Adverse. Done. Next, it is efficiency variance. Guys, standard hours were how much? To produce 5,900 units, 5,900 into 2, 11,800. But actually we have taken just 11,600. Standard rate is rupees 10. 200 into 10. Rupees 2,000 favorable. So I will arrive at 4,000 adverse. 6,000 adverse, 2,000 favorable. Together it is 4,000 adverse. Sir, unit wise if you want to do what we can do, sir? Listen here. Cost variance is very simple, guys. Cost variance is very simple. Units, how many units? Actual units 5,900. And per unit how much is the cost? Per unit cost is rupees 20. Correct? Recovery rate, standard rate is 20. No. Now listen. We are recovering 5,900 into 20. How much?
1,80,000.
Where we incurred 1,22,000. 4,000 adverse. Correct? Now, first one what they are asking. Expenditure variance. Actual rate minus into actual hours. Now, actual rate into actual hours minus standard rate into actual hours. Now try to understand here cost variance so very simple to calculate on unit based, but when it comes to expenditure and efficiency, here it is based on how much you should have worked and how much you actually working. How much you should have worked, how much you are actually working. So better for your expenditure and efficiency, take the hours only. You can easily convert it into hours and convert it into hours and you do it. Now, guys, your fixed cost variance. Fixed cost variance, one of the examiner's favorite topic. Favorite in the sense, two favorite. Fixed cost variance, fixed overhead variance, basically majority of the students will do mistake. But here it is very simple, you have to understand, that's it. First, cost variance, again, it is a overhead variance is under absorption or over absorption. Hey guys, listen. Variable, material, labor and variable, all these are variables, correct? Variables per unit will, variables, total variable will increase, more and more you produce, total variable will decrease, less and less you produce. But you know what is the beauty of the fixed? More and more you produce, better it is. Less and less you produce, worst it is. Why, sir? Yes. Because it is fixed. We are not paying anything extra. For example, this classroom, let's say, has the capacity of 200 students. Now we budgeted 200 students. Rent, let's say for the ease of computation, 2 lakh. Per student, how much is the rent now? 1000. Now, if 1000 students comes, how much we can recover? Just 1 lakh we can recover. Imagine if 300 student comes, then sorry, if 100 student comes, 1 lakh. If 200 student comes, 300 student comes, 3 lakh. But cost remains same, no? Cost remains same, no? So try to understand, for the fixed overhead, always remember, more and more hours we work, more and more better it is. So if we work for more hours, it is favorable. If you work for less hours, that is adverse. Here, conclusion is where students will get confused. Okay, first, overhead, fixed overhead, cost variance. Guys, cost variance is nothing but under or over absorption. Under or over absorption, how to arrive at it? How to arrive at under absorption, over absorption? Absorbed overhead minus actual incurred. Actual incurred, you know that, no doubt in that. Absorbed, how to absorb the fixed overhead, sir? Very simple. If it a unit wise, actual units produced into recovery rate. If it's a hours wise, standard hours for actual output into recovery rate. Into recovery rate. Now, fixed overhead cost variance, reasons are two. One is your expenditure. That is, you are incurring more or less than budgeted. You are incurring more or less than budgeted. One more is volume. That is, you are producing less or more. Because here, try to understand absorption. I mean, here the variance reason only could be two. In my classroom example, if at all my 2 lakh rupees rent, I'm under recovering or over recovering, reason could be only two. One, I budgeted my rent to be 2 lakhs. I might be paying 2,50,000. That is one reason. Second reason, I expected number of students to be 200, but I am getting less or more number of students. This could be the only two reasons. Anything else could be possible? Now, expenditure variance means what, sir? Guys, how much you have budgeted though minus actual, how much you incurred. That is budgeted minus actual. If at all you budgeted more, actually you incurred less, adverse, favorable. Favorable. You budgeted less, actually you incurred more. That is which variance? Expenditure variance. Whereas variable overhead expenditure variance formula, standard rate minus actual rate into actual hours. Why there, sir? Rates and all, here no rates, nothing. Hey, there per unit it changes. Unit to unit total will change. Here total won't change. So I can't find out the rates here. So here fixed overhead expenditure variance is nothing but, guys, actual minus budgeted overhead. Done. Sir, volume variance is what, sir? Guys, volume variance. How many students I have expected? 200. How many students have really come? 150 keep, let's keep 150. Now, let's say I am bringing one faculty. To this institute, we are bringing one faculty. Let's say to that faculty, we are paying 2 lakh rupees per month. How much we are paying? Fixed, not based on number of students, fixed it is. Now, we expected how many students? 200 students, and we expected per student that faculty is going to spend 1 hour. Actually, students came are 150. Now, recovery, what I will do? I will do on the actual number of students with the standard hours. That is 150 students. We thought 1 hour. Whereas we thought 200 students 1 hour. So we divided by 200. How much it was? 1000 per student, correct? We thought of recovering 1000 per student as a cost, but here only 150 students came. For standard R it is how much? 150 into 1, 150 into 1000, 1 lakh. But how much we have budgeted? We have budgeted to recover from 200 hours. We have budgeted to recover from 200 hours, 1000 rupees. That is 2 lakhs. Try to understand. If this you take it as a total cost, somewhere here budgeted overhead will be there. Assume it is more than actual. Somewhere here actual overhead will be there. Somewhere here absorbed overhead will be there. Now actual minus budgeted is there, no? That is sorted already. Expenditure. Whereas now these differences we are trying to find out. Now volume variance was how much I plan to recover. I plan to recover from the budgeted hours with the recovery rate, but I am able to recover only and only for the standard hours, for the actual output. That is volume variance is budgeted hours minus standard hours into recovery rate. Now next you should check in the question, calendar information is not given, calendar information is given. If the calendar information is not given, this volume variance could be due to two reasons. Volume variance could be due to two reasons. What are those two reasons, sir? One, due to efficiency. That is, you are working. I am not telling you are not working. You are working, but you are not working in the pace I am expecting you to work. That is, efficiency is not there. Or capacity. That is, either you are underutilizing it or overutilizing it. Now, efficiency variance means what, sir? Guys, same work, in how many hours I was expecting you to complete, in how many hours you actually completed. How many hours you are expecting to complete, how many hours you have taken. That is standard hours minus actual hours into recovery rate. If at all your actual hours are less than standard hours, which means you have taken less number of hours to complete the more work, which is favorable. If at all your actual hours are more than standard hours, which means you have taken more time to complete the less amount of work, that is adverse. So efficiency variance is nothing but standard hour minus actual hour into recovery rate. Capacity means what, sir? Boss, how many hours I have given you already minus actually how much you have taken. That is budgeted hours is what I have given to you guys, but actual hours is what you guys have worked. Budgeted hours is what I have given you to work, but actual hours is how much you have actually worked into recovery rate. Now, if at all you work for less than allowed hours, adverse, no. I have asked you to work for 1000 hours, but you are working for 900 hours. Adverse, no. Why adverse, sir? Because I have to pay the rent of 1000 hours only, no. I have to pay the expense of 1000 hours only, no. Sir, you told us to work for 1000 hours, we are working for 1200 hours. Awesome, favorable. Why? End of the day, I will pay the rent of 1000 hours only, no. So, your capacity variance is budgeted hours minus actual hours into recovery rate. That is your capacity variance. Come again, guys. Fixed overhead cost variance. Whoever is not able to process this formula, don't worry. When we see 2-3 questions of this one, you will understand easily. Okay. Now, first one, cost variance. Under or over absorption, you have to calculate. How to calculate under or over absorption? Compare the actual with the compare the actual overhead with the absorbed overhead. Actual is actual, absorbed is what? Recovery rate into actual output, or recovery rate per hour into actual output into standard hour. That is standard hours for actual output. If it's under absorption, adverse, over absorption, favorable. This could be due to only two reasons. One is due to expenditure, one more is due to volume. Expenditure means how much you actually incurring, how much you budgeted. How much you actually incurring, how much you budgeted. Whereas your volume variance means how much you budgeted to recover. That is budgeted R into recovery rate. Minus how much you are actually recovering. Standard hours into recovery rate. Volume means how much you budgeted to recover. That is budgeted into recovery rate. Minus how much you are actually recovering. Standard into recovery rate. Now that could be due to two reasons. One, either you are working more efficiently or less efficiently, or you are underutilizing capacity or overutilizing capacity. Efficiency, how to calculate, sir? Very simple. Standard hours for the production what you are producing minus actual hours you have taken into recovery rate. If at all you have taken more hours than standard hours, adverse. Less hours than standard hours, favorable. Sir, what if it is capacity? That is, you are either underutilizing capacity or overutilizing capacity. Underutilizing capacity means what, guys? What is underutilizing? How much budgeted hours you had, how much you actually worked. You are actually working less than the budgeted. That is adverse. If at all you are working more than the budgeted, favorable. That is, if the actual is more than budgeted, favorable. If the budgeted is more than actual, adverse. Where you go to other things, if the budgeted is more than actual, favorable. But here you should try to understand why it is. Because here I am paying the fixed cost. If I gave example of barbecue nation, if I am not wrong, when taking class.
Yes.
Yes. Let's say you go and pay 800 rupees. You eat more. Forget about health factor. Financial factor only. You eat more and more and more. You are recovering more and more and more. Favorable. You pay 800, go and eat like a... I was about to tell girls, but who are sitting are girls. What? You go and eat like a girls. I'm full.
We are recovering this.
You are recovering less. So that is the fixed one. But if you go to other restaurants, not unlimited one, where you have to pay for each and everything, there you eat more, you pay more. Adverse. Now, what if calendar information is given? In that scenario, one more variance will get added called calendar variance. One more variance will get added called calendar variance. Guys, efficiency variance remains same. Standard hours minus actual hours into recovery rate. Whereas capacity variance, now it is not the old capacity, it is a revised capacity. That is, we are not going to compare the actual hours with the budgeted hours. In fact, we are going to compare the actual hours with the revised budgeted hours. We are going to compare the actual hours with the revised budgeted hours. Done. Done. That is your capacity. When you go to calendar, boss, earlier how much I had? Capacity to produce, budgeted hours, minus new budgeted hour is how much? Revised budgeted hour into recovery rate. That is your calendar variance. Now, earlier you thought you were going to work for 200 hours. Now you are working for 220 hours. Better or adverse? Better. Both thinking only. You thought 200. Now you are thinking 210. Favorable. That is, if the revised budgeted hour is greater than the budgeted hours, favorable. Revised budgeted hour is lesser than the budgeted hours. But when it comes to other chapters, other this thing, labor, opposite to this. So this conclusion is where students will make mistake. So you should understand why it is so. You work more, it is better in fixed. Whereas in labor, if you work more, it is worse. Now, so I hope you guys understood this. Try to understand again. Fixed cost variance, absorbed minus actual. Absorbed is what? Actual output into recovery rate, or standard hours for actual output into recovery rate. That could be divided into two reasons: expenditure, volume. Expenditure is how much you budgeted and how much you actually incurred. Whereas your volume is how much you budgeted to recover, that is recovery rate into budgeted hours, minus how much you are actually recovering, standard hours into recovery rate. If you go for unit wise, then budgeted output into recovery rate minus actual output into recovery rate. Because standard hours means what? Standard hours for actual output. Unit means that will be recovered, revised by. Unit means standard hours for actual output. Unit means it is actual output, no? Actual output into recovery rate, unit wise. Now that could be divided into two: efficiency, capacity. Efficiency is what? Standard hours minus actual hours into recovery rate minus, that is this one, efficiency. Capacity is budgeted hours minus actual hours into recovery rate. Budgeted hours minus actual hours into recovery rate. Now, if at all calendar information is given, efficiency, capacity, calendar. Efficiency remains same, standard minus actual into recovery rate. Whereas your capacity is revised budgeted minus actual into recovery rate, and your calendar is budgeted minus revised budgeted recovery rate. Revised budgeted is if it is lesser than the budgeted hours, adverse. Revised budgeted is more than the budgeted hours, favorable. Guys, go through all the formulas once again from the material. I will be revising once again all the formulas. Then we'll see the remaining questions. Then whole marathon will be dumukku, 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 dumukku. When we started marathon, it was dumukku, 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 dumukku. When we end it, it will be amukku, dumukku, amukku, dumukku. Go through the material cost variance formulas. This is your labor cost variance. Why? Take a photo now. Heart rating. Done. Shall we revise all the formulas once again? And we'll start. Yes. Material cost variance. Come on, what is it, guys? Standard cost into nothing. How do I write standard cost? Standard quantity into standard price minus actual quantity into actual price. That could be divided into two, that is price variance and usage variance. Price variance is nothing but standard price minus actual price into actual quantity, whereas your usage variance is standard quantity minus actual quantity into standard price. The usage variance could be divided to yield and mix. Yield is nothing but revised standard quantity minus standard quantity into standard rate, whereas mix is revised standard quantity minus actual quantity into standard price. Now, if the revised standard quantity is more adverse, less favorable. Done. Going to labor variance. Cost variance is nothing but standard cost minus actual cost. Actual cost, standard cost means standard hours into standard rate. Actual cost means actual hours worked into actual hours worked or actual hours paid? Actual hours paid into actual rate. That could be divided into two or three. Three. Rate variance, efficiency variance, idle time. Now, rate variance is standard rate minus actual rate into actual hours paid. Efficiency is standard hours minus into standard rate. Idle time into standard rate. Guys, when idle time is favorable, when idle time is adverse? Idle time can never be a favorable, idle time is always adverse. Remember this point. Now, your efficiency could be further divided into yield and mix. Yield is revised standard hours minus standard hours into standard rate. Mix is revised standard hours minus actual hours work into standard rate. That is your labor. Going to variable overhead variance. Variable overhead cost variance is nothing but absorbed minus actual. Absorbed is nothing but standard hours for actual output or actual output into recovery rate. Minus this one, that one. That is given to 2. Expenditure variance, efficiency variance. Expenditure variance is standard rate, that is nothing but recovery rate minus actual rate into actual hours, whereas efficiency variance is standard hours minus actual hours into standard rate. Going to fixed overhead cost variance is absorbed minus actual. Absorbed is what, sir? Standard hours for actual or actual output into recovery rate. Now, that could be divided into two. Expenditure, volume. Expenditure is nothing but how much is budgeted overhead minus how much is actual overhead, whereas volume is nothing but, guys, budgeted hours minus standard hours. That is how much we plan to recover minus how much we are actually recovering. That is budgeted hours minus actual hours. Correct? See. Actual overhead, budgeted overhead, absorbed overhead. Budgeted and actual will give you expenditure variance. Actual and budgeted will give you, absorbed and budgeted will give you volume variance. Good. Got it? Huh? Now, absorbed and actual will give you cost variance. As simple as that. Now, actual overhead is what? Absorbed overhead is what? Units produced or standard hours per unit into recovery rate. Budgeted is what? Units planned to produce or budgeted hours into recovery rate. Now, that could be divided into two. When the calendar is given, calendar information is not given. When the days information is given, days information is not given. If the days informations are not given, the reason could be only two. Either you are working less efficient or more efficient, or you are using less capacity or more capacity. Now, if at all you are working less efficient or more efficient, how to arrive at that, sir? Actual hours minus standard hours into recovery rate. Whereas your capacity is budgeted hours minus actual hours into recovery rate. What if the calendar variance is given? Then your efficiency variance remains same, that is actual minus standard, whereas capacity variance is revised budgeted minus actual, and your calendar variance is budgeted hours minus revised budgeted hours. Correct. Shall we see this question? The cost detail of the J&G Limited for the September budgeted. We budgeted 15 lakh and unit production plant 7,500. Standard is 2 hours, which means we budgeted 15,000 hours. Budgeted hours are how much? 15,000 hours. Actual, we took 16,000 hours where we produced 7,800 units. So standard hour is how much for actual output? 7,800 into 2. Standard hours for actual output is 15,600. First, cost variance. How much we are absorbing, sir? Absorption rate is how much? 15 lakh is the budgeted overhead divided by 15,000 is the budgeted hours. Rupees 10 per hour, correct? Or 100? Rupees 100 per hour. Now, how much we are recovering? Guys, we are recovering standard hours for actual output, that is 15,600 into recovery rate 100. 15 lakh 60 thousands. 15 lakh 60 thousands is what you are recovering. Correct? Actually, you are incurring 15 lakh 60,000. No variance only. Awesome. Nothing like that. No cost variance is there. No cost variance is there. Cost variance is nil. Nil, no. Expenditure variance is what, sir? How much you budgeted? 15 lakh. How much you incurred? Moral of the story, 60,000 rupees adverse. Expenditure variance is 60,000 rupees adverse. Fixed overhead volume variance. How much you actually plan to work? You plan to work for 15,000 hours. Correct? How much you are actually recovering? You are recovering from 15,600. Oh my God. Good news or bad news? Good news. Because you thought of recovering from 15,000 hours, but you are recovering from 15,600 hours, rupees 100 each. 60,000 favorable. See, here adverse, here favorable. That's why it became 0. 60,000 favorable. Clear? Now, that could be further divided into efficiency and capacity. Efficiency means, guys, how many hours you must have taken? You must have taken 15,600 hours. But how many hours you are actually taking? The work which you are about to take 15,600, because you can recover only to the extent of 15,600. But you work for 16,000 just to recover 15,600. Adverse, no? Into recovery rate of 100. 40,000 adverse. 40,000 or 4,000? 40,000 adverse. Capacity. Guys, you thought of working for 15,000 hours, budgeted. But wow, great, you are working for 16,000 hours. 100. Favorable or adverse? Favorable. You thought of working for just 15,000 hours, but you are actually working for 16,000 hours. How much? 1 lakh. 1 lakh favorable. So 1 lakh and 40,000, 60,000 favorable. Got it? Look at this. A company has a normal capacity of 120 machines working at 8 hours per day for 25 days in a month. So using this, we can find out budgeted hours available. That is, we have 120 machines. Correct? And we thought of working 8 hours a day for 25 days in a month. So how much is budgeted hours? 24,000 hours is my budgeted hours. The fixed overhead budget is 1,44,000. This is budgeted overhead. The standard time required to manufacture one product is 4 units. This is standard hours for standard output, not actual output. In April, company worked for 24 days IIO of 840 machine hours per day. So, how many hours we actually work, guys? 24 into 840. 20,000 hours. This is what? Actual hours. Produce 5305. So standard hours is how much? Standard hours per actual output. Actual output is 5305. Standard hours per unit is 4. 21,000. Actual overhead is 1,42,000. Hey, now listen, no. Listen, no. We want to know the revised budgeted hour. How to compute revised budgeted hour? Guys, 24,000 we planned for how many days? 25 days. But now we are working for only 24 days. How much it is? So your revised budgeted hour is 23,040. Sad or happy? Sad. Why? I have to pay 1 month rent only. Either I work for 25 days or either I work for 24 days. End of the day I have to pay how much? Rent of 1 month only. Now it is sad. First they are asking efficiency variance. See here they are mixing and asking. Efficiency means very simple, standard and see. Shall I give you one code word? I hope you remember that code word. Yes. Volume variance, capacity variance, efficiency variance. Correct? Now, volume variance means budgeted hours minus standard hours into recovery rate. Forget about recovery rate. For everything, recovery rate is same. Now, I told you one keyword to remember. What is that? Guys, that only. That is, who treats a animal? The doctor is called as what? Veterinary doctor. And the degree done by him or her is what? Bachelorate in Veterinary Science, BVS. BVS, volume variance, B minus S. Done. Next, capacity. Budgeted, actual, CAB, CAB. CAB, efficiency, standard, actual, C. Correct? Or we have taken in this way also. Bat used by Dhoni is which? BAS, once upon a time. Correct? And we are going to do the triangle here. If you know or you don't know, I don't know. Once upon a time, Dhoni used to use bat. Correct? Now, doctor will do which degree? BVS. Volume variance, budgeted minus standard. Efficiency variance, standard minus actual. Capacity variance, budgeted minus actual. You can remember this way. Now, efficiency means C. Correct? C is what? Standard minus actual. Standard hours minus actual hours into recovery rate. How much is the standard hours? 21,220 minus how much is actual hours? 20,160. How much is the difference? 1,060 into recovery rate. Ayyo, we didn't calculate recovery rate only. Calculate no guys. How much is the total overhead? 144,000. How much is the hours we are planning to work for? 24,000 hours. per unit, sorry, per hour. 6 per hour, that is your standard, correct? So how much is the 63? Standard R is 21,220, actual is 20,160 into 6. 6,000. Adverse or favorable? Favorable. Why? The work which you should have taken 21,220, you are just taking 20,160. You are working very fast. Efficient you are. Capacity variance, cab. Budgeted hours minus actual hours into recovery rate. Budgeted hour is how much, sir? 24,000. Actual hour is how much, sir? 20,160. What is the difference, sir? 3,840 into recovery rate is 6 rupees. Sorry? Adverse or favorable? Budgeted is how much? 24,000. Actual is how much? 20,160. You are using less number of hours. Adverse. Got it? Calendar variance. Budgeted hours were how much? Budgeted hours minus revised budgeted hours into recovery rate. Budgeted hour were 24,000. Revised budgeted hours 23,040. Oh, here we did one mistake. What is it? Capacity variance, not budgeted hours. Revised budgeted hours. Calendar is there, no, here. So, how much is revised budgeted hours, by the way? 23,040. How much is actual? 20,160. What is the difference? Into 6. End of the day, adverse only. Even if you don't work for one day also, you are not working how much ever you work for 24 days. Done. Here, budgeted is how much? 24,000 minus revised budgeted is 960 into 6. 5,000. Adverse, favorable. Expenditure variance is what? How much is your budgeted? Budgeted 144,000. Actual 142,000. 2,000 is favorable or adverse? 2,000 favorable. No, guys. You budgeted how much? 144,000. Actually, we incurred how much? 2,000 rupees. Less you incurred. Favorable. Volume variance. BVS. That is budgeted minus standard. Budgeted is how much? BVS it is. If anyone is watching from Mangalore, Udupi, BVS. Volume variance. Hey, budgeted is how much? 21,000, sorry, 24,000. Standard is how much? 21,220. What is the difference? 2,780 into 6. 16,000. Adverse, favorable? Adverse. Because we are not working for so many hours. Total fixed overhead variance is how much you absorbed? 21,220 into 6. How much you actually incurred? 1,42,000. Difference. Adverse, favorable. Just check things are matching or not. First, overhead variance is nothing but your expenditure variance plus volume variance. Is it matching? It is. Correct? Next, your volume variance is nothing but capacity plus efficiency plus calendar. 6360 or let's say 17,280 plus 5760 minus 6360. matching. As simple as this. Hope you guys understood. Yes? These are the small things are there. Just go through it. Okay. Here, standard mix to produce 1 unit they have given. How much of X, how much of Y, how much of Z. Actually, here you are producing 2460 units. For this, how much you have to compute? See, to produce 240 units, you need 60 units of X. For 2460, how much you need? Like that, you are going to compute and you are going to calculate all the cost variance of material and all. Okay. Here, few unknown figure question. These are the nice question. Third question is there that we are going to, third question and fourth question. These are the two things we are going to discuss now, and we are going to wind up the session. We'll do one thing. 3, 4, 5. These are the 5 questions we are going to discuss and we are going to wind up. We'll do one thing. We'll take a break of 10 minutes and we are starting with the remaining questions 3, 4 and 5 and we'll wind up the session. Yeah. Look at this question. If I'm not wrong, this is done now. This we have discussed. Third question of your institute material. Practical problem. Cap Limited operates a system of standard costing in respect of one of its product which is manufactured within a single cost center. Following details are there. Material A, material B, 60 and 40, prices are 20 and 30. This is budgeted data. That is, if you give an input of 100, there is a normal loss of 20% where you will be able to get 80 rupees as a output. Actual data, actual output is 80 units. Awesome. Which means whatever budgeted they have given, that will become standard. Got it? Now, material. To produce this 80 units, we are using 70 units of A. At what price we don't know. At what amount we don't know. To produce the same, how much quantity of B we are taking we don't know. Price we know, 30 rupees. Material price variance is 105. Material cost variance is 275. They are asking you to calculate material actual price, quantity, price variance, usage variance, mix variance, yield variance. All the variances they are asking. To calculate all the variances, we should know exactly how much is our actual price for material A and standard quantity of, actual quantity of B. Now, how we can do that, sir? Price variance they have given. Price variance of A, they are telling 105 adverse. They are telling price variance of A, 105 adverse. Guys, what is the formula for the price variance? Standard price minus, correct? By any chance, you know standard price? Yes. How much it is? 20. Actual price you don't know? You don't know. Actual quantity you know? 70. That is giving you adverse 105. A negative. Sir, how you got to know it is negative? Standard minus actual. Adverse means actual is more than standard, which means actual is more than, then only I will get negative. If at all I have taken in formula actual price minus standard price, then I should have treated it as positive. Because again, when it is adverse, when actual price is more than standard price. Now, can I tell it as 20 into 70? 1000 minus 70 AP is equal to minus 105. Minus 70 AP is equal to minus 1505. Actual price is equal to 20?
1.5.
21.5. Correct? We will get the actual amount here. Now, they are telling material cost variance is 275 adverse. Guys, what is the standard? What is the standard cost of A? 60 into 20,200. What is the actual cost of A? 70 into 21.5, 1,505. What is the difference between 1,200 and 1,505? 305 adverse. Correct? How much they are telling total? 275 adverse, which means A is giving 305 adverse. B we don't know how much. Total will be 275 adverse, which means B should be 30 favorable. B should be 30 favorable. Correct? Now, you know the how much is standard of B? Standard cost is 1,200. Actual cost, do you know? Units I don't know. I will take it as actual quantity into price I know 30 and answer I know positive 30. Correct? So 1,200 minus 30 AQ will give me 30. That is minus 30 AQ is equal to 1,1170. AQ is equal to 30. So quantity is 30. 117. Now you got to know the actual quantity. Using that you can find out a RSQ. How, sir? Total input is how much? 109. Now 109 in the ratio of 60 and 40. You will get a RSQ. Simple. Hope it is clear. No doubts. Okay, shall we proceed then? Pakka no? Now, this one is one of the different question. I don't know whether it's a mistake of institute or what. So far they haven't rectified it. So I think they are keeping it as it is. Here we have to assume few things. What do you mean by assume few things, sir? You will understand. See, 1 kg of product A requires 2 chemicals A and B. So here we are discussing about A and B now. The following were the details of the product. Standard mix of chemical A is 50%, chemical B is 50%. Standard price for chemical A is 12, chemical B is 15. Actual input of chemical B is, actual price per kilogram of A is 15. Standard normal loss is 10% of the total input. Total material cost variance is 650 adverse. Total material yield variance is 135. Guys, tell me here, what could be the mistake if mistake is there? If mistake is not there, what assumption we should do? Shall I write whatever they have given here? Yes? AB. Standard mix. Standard mix. 50%? 50? Now, I want to know the standard quantity. Correct? Have they given standard quantity? No. Sir, generally they don't give, sir. They will give the actual quantity. You know the normal loss. Reduce it, you will arrive at a standard quantity. Have they given actual output? No. That's why this question is different. Done. Last 1 or 2 questions. Another half an hour. That's why this question is different. Why, sir? Now see, as they have given here B as 70 kg, we should assume our input as 100 kg. We should assume what? Our input as which input? Standard input. Here mix they have given 50-50, but here B they have given 70. So we should assume our total standard input as 100 kg. What if the similar kind of question they will give and here they will tell 700 kg? Assume it as 1000. Assume it as 1000. See, standard input is 100. So standard quantity is 50. Now I will take standard quantity as 50-50. Correct? You understood what I am trying to tell? So we'll fill in the blanks, shall we? Standard quantity, actual quantity, standard price, actual price. In between we might have revised standard quantity. Correct? We might have revised standard quantity. Now, standard quantity. Guys, standard quantity of A we assume to be 50 kgs. B assumed to be 50 kgs. Actual quantity of B we know how much? 70 kgs. A do we know? Can I take it as A? Revised standard quantity, let it be. Standard price of A is how much? 12. B is 15. Actual price of A is how much? B is how much? Can I take it as B? Can I? Now we'll do one by one. Total material cost variance is 650. Total material cost variance is 650. Now see here, you should remember one thing. You should assume 100 kg as input, not output. You should assume 100 kg as input, not output. First, material cost variance is 650 adverse they are telling. Now, can I fill this also once? Can I take it as A plus 70? Actual quantity. A plus 70 into 50%, 50%. How much it will be? 35 plus 0.5A. 35 plus 0. Correct? Correct, no? Done. Now, first, material cost variance is there. 650. That is nothing but standard quantity into standard rate minus actual rate or actual price. Correct? Now, A, B. Guys, A. How much is the standard quantity? 50. How much is the standard rate? Crazy. Actual quantity is how much? Actual rate is how much? Pisa. Can I tell it as 600 minus 15A? Can I? Done. This one. B. Standard quantity 50. Standard rate 15 minus actual quantity 70. Standard price. Sorry, actual price. Can I tell it as 70? This plus this will give me minus 650. Minus 650. Can I write that equation like this? 600 minus 15A plus 750 minus 70b. Sir, why minus, sir? Plus into minus is equal to minus 650. Can you simplify it further, guys? Minus 15a minus 70b is equal to minus 650 minus 600. Minus 1250 minus 750 minus 2000 minus 650 minus 600 minus 750 minus 2000. Can I simplify it by taking ulta sides, like 15a plus 70b is equal to 2000? Peace, no? Can I take it as one equation here? Can I take it as one equation here? Done. Next, what they are telling, material yield variance is 135 adverse. Guys, what is the yield variance for? Revised standard quantity minus standard quantity, or I will take standard minus revised, because if the standard quantity is more than revised standard quantity, it is favorable. If the revised standard quantity is more than standard quantity, it is adverse, into standard price. Correct? A, B. Can I take it here? Can I? First, how much is the standard quantity of A? Standard quantity of A is 50 minus revised standard quantity of A is how much? Revised standard quantity of A is 35 plus 0.5 A. 35 plus 0.5 into standard price. Standard price is 12. Correct? Done. B is how much, sir? Standard quantity is 50 minus 35.5a into 15. Now, how much is this? 12 into 50, 600 minus 12 into 35, 420 minus 6a. Minus only, no? If it comes out of the bracket. Done. Finally, you tell me how much is this? 180 minus 6a. Next, this one. 50 into 15. 750 minus 15 into 35. 525 minus 7.5 is equal to 225 minus 7 point. Guys, this plus this will give me negative or positive? Adverse. Adverse means your revised standard quantity is more, which means negative 135. If at all I have taken the formula as the first what I wrote, revised standard minus standard, then I should have taken 135 as positive number, because RSQ is more. RSQ is more. Done. Is that clear? Can I write it as 180 minus 6a plus 225 minus 75a is equal to minus 135? Yes. Can I write it as minus 81a is equal to minus 135 plus minus 225? Minus 135 minus 225 minus 180. 5 minus 5. A is equal to 540 divided by 81. Rupees Rupees or kgs? Actual quantity, no? How much you are getting? Sorry, this is not 75. This is 7.58. Correct, no? 75 or 7.5? So how much it will be? Minus 1.5, no? Sorry, minus 13.5. A is equal to 40 kgs. Now A is sorted out. How much it is? 40 kgs. Please now. Now total is how much? 110 kgs. So revised standard quantity 55, 55. Correct? B we don't know. B, shall we use this equation? 15 into 40 plus 70B is equal to 2000. 15 into 40 is how much? 600 plus 70B is equal to 2000. So B is equal to 1400 divided by 70. 20 rupees 20. Now if the table is ready, all these things you can calculate. But here they are asking actual loss of actual input. Guys, how much input you are giving? 110 kgs. How much output you are getting? Standard you taken it as 100 kg means, standard input you have taken 100 kg means, actual output should be how much? 90, no? Because standard for actual, standard for actual. If you taken standard as 100 means, that should be standard for actual. Which means, if the actual is considered as 90, then only you are getting standard as 100. Which means actual output we are going to assume as 90. See, according to me, still I believe that they have missed that line. Actual output they were supposed to give 90, they might have missed it. But leave, because nowhere in the question they are telling assumed and all. So leave. But if it comes in the examination, I hope you guys can do it now. So 90, and how much is actual? 110. How much is output? 90, which means how much you are losing? 20. 20 is what you are losing. I hope it's clear. Last one question we'll see and we'll wind it up. Shall we? The following standards have been set to manufacture a product. 2 units of A at rupees 4, 3 units of B, 15 units of C. Direct labor is 3 hours at the rate of 8 rupees. Total standard prime cost is so much. Company manufactured and sold 6,000 units of the product during the year. Direct material cost, this much of A, this much of B, this much of C. The company worked out 17,500 direct labor hours during the year. 2,500 of these hours, the company paid at 12 rupees per hour, while the remaining they are paying at a standard rate. Which means if the rate variance is there, that rate variance will be only and only to the 2,500 hours. Because other 15,000 hours, what is happening? Standard rate. Now, first what they are asking, material price and usage variance. Material price and usage variance, I don't think so there is a problem. No problem, no. Next, labor rate variance. Labor rate variance, for how much it is applicable? Just for 2,500 hours. How much we are paying? 12 rupees. How much we thought of paying? 8 rupees. 4. Which will come to 10,000 adverse. Correct? Efficiency variance. How many hours we budgeted? 3 hours per unit. So standard is 18,000 hours. How much we are taking? 17,500 into standard rate. Standard rate is 8 rupees. Got it? Actually, that was not a special one. Guys, this thing and all, do it once again, okay? Same ditto question only. Fixed overhead variance. This also. This is along with the calendar. This is also along with calendar. This is also along with calendar. All these are easy. This is that kind of question what we have already solved. Material cost variance they have given, price variance they have given. Using the difference will be what here? Usage variance, no. Yes, accordingly we have to find out the cost. You can do it, right? Discussed a lot about it. Look at this question. 15th one. Paras Synthetics uses a standard costing system. Okay. Direct material is 0.5 meters at the rate of 60 per meter, 30 rupees per unit. Correct? Direct labor 1 hour at the rate of 20. Variable overhead 1 hour at the rate of 10. Total. During the month of August, 10,000 units of mask were produced. Direct material consumed is 5,700 meters at the rate of 58. Direct labor, we don't know how many hours. We don't know how much rate. Variable overhead incurred they have given. Variable overhead, that is, they are telling how much is the actual variable overhead. Variable overhead efficiency variance they have given 2000 adverse, and they are telling it is based on the direct labor hours, which means it is absorbed on the basis of direct labor hours. Now, guys, what is the formula for efficiency variance? Efficiency into standard rate. Expenditure variance, standard rate minus actual rate into actual hours. Now, do you know the standard hours? Of course, we know the standard hours. Variable overhead, labor overhead are same. Variable overhead 1 hour we take per unit. And here how many units we are producing? 10,000. Can I take standard hour as 10,000? Yes. Minus. Do we know the actual hours? We don't know actual. Standard rate do we know? 10 rupees. That will give you negative 2,000, which means we are taking more number of hours. Now 10,000 into 10, 1 lakh minus 10 AH is equal to minus 2,000. So can I tell 1 lakh 2,000 divided by 10 is equal to AH? 10,000 hours. 10,200 hours. So one thing is sorted out. How much we paid we know, right? So can you divide 2,24,400 divided by 10,200? 20? Please no. These are the things we have discussed in the class last time, if you remember. Correct? I think this we discussed in the last day. No, standard we discussed before budgeting. So budget is what we discussed last. No, budget is what we discussed last. Is it? Standard we discussed last. Fine. With that, we have completed our marathon. Guys, I hope you guys learned something. So always remember one thing. Don't hold the things for a long time. Just whatever the situation it is, you just try to give your best in that pressure situation. I understand time is not there, blah 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 blah, but if you keep on thinking that, then you will be wasting time on thinking that. Instead of thinking that, if you use that time in revising or something you will learn. Always remember, if you feel, hey, 5 minutes is there, what I can do? Revise anything. You never know. That might come in the examination. So please, 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 if you are in the urge of examination, please don't waste your time. Study well. Don't keep anything for the long time, and never even think of skipping the attempt. Once you skip the attempt, it will become a habit for you guys. So please don't skip the attempts. One thing. See, if at all you are sports follower and cricket, let's say, then you will understand this thing. Recent match, RCB versus MI. Literally, there was no possibility that MI would have reached that. Hardik Pandya came and hit really hard. Now, then he gave the hopes for MI. Now, after that, Hardik went out. Then there was no chance that RCB would have pulled it back. But they pulled it back. Which means if you see their spirit there, both the teams were not ready to leave. So your spirit of the examination should be same. ICI though they are not ready to leave. At the same time, you also should not be ready to leave. See, end of the day, it doesn't matter whether you will pass or won't. Because anyhow, in 3 months, in one more attempt you will get. But what matters is whether you had put the efforts or not. If you had put the efforts and if you aren't able to pass, then next attempt surely will pass. Why, sir? Because you already put attempt, efforts. That was just not your attempt. No, sir, I didn't put attempt. Then you are not deserving to be a passing one. So please, please, please don't ignore anything. Even if you think that 1 mark I can get somewhere, try that, do it and come. And in examination, reading question is very, very, very important. Please read the question. And when you are practicing now for the examination, use the pen which you are planning to write in the examination. Don't take and go the new pen by keeping in front of God and all. It's not going to help. Because new pen means it will be difficult to write. Make sure you will take and go the pen which is 40% empty. Okay. So all the best. And please keep me updated about your results. Bye bye. Thank you so much. See this. I think here it is working. In that class it used to work or not? Hey, today it's not working. What is this? Hey, zoom. Peace balloon will come. Oh. Nothing is coming. These guys turned it off. Smart people. Yesterday it came. Chala. Bye. Thank you so much.